financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview.
You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open.
Very good morning. You're watching India Market Open, and the sheen seems to have come off from the excitement around the US-Iran deal. I suppose we go back to what we were saying a couple of days ago, guys, that we'll believe it when we see it. And all of the mixed commentary, mixed signals coming in from both sides really is confusing for everyone at large.
Yeah, I mean, I think the moment they come to an agreement on something, or even if they do, the next point is already ready. I mean, you don't know where it's going.
Yeah. No, so mixed signals why? You have the Supreme Leader saying that there was a violation of ceasefire and we'll react. But at the same time, you have Trump saying we're very close to a peace deal. At the very same time, you have Iran finally lifting its internet restrictions, which show things are moving. There's one report that 23 ships made it through the Strait of Hormuz in the last couple of days. So, ho kya raha hai? I think no one is figuring it out.
Yeah, so, well, since there's uncertainty and there's so many people saying that, hey, maybe it's in the interest of both sides that oil stays higher. So, why not let it prolong? So, who knows what the truth is? But within that ecosystem, I think individual names continue to rise and shine and fire, because now we have two more entrants in that $1 trillion club, which I'm sure Tamanna is talking about. But one other interesting thing that happened in the US last night was as the SpaceX IPO is driving things crazy. Look at the kind of gains that came into some of those stocks, and I just want to point them out, just bring up what happened to Redwire, AST Space Mobile, Firefly Aerospace. This is what a very interesting IPO could do per se. But now, before we kind of talk about the globe and talk about everything else, here's some very interesting development that happened overnight.
And the award goes to
Tamanna Inamdar, Managing Editor, NDTV Profit.
List of 50 women, and it strikes me that most people on this list would be second generation, many of them first generation women who have walked out of the house to make a career, which is not a side hustle but a real career. And look at what's happened in just 20 years of women getting that opportunity. Look at the position sitting in this room and what we are able to do right now. Now imagine another 10, 20 years of that opportunity, and you're going to have a much bigger list than just 50. It makes me extremely proud to be on this list.
You know, for a change...
Congratulations,
yes,
Tamanna.
Congratulations.
Thank you guys.
And for a change, we had Tamanna and not Trump.
What does that mean?
I don't know if that's a compliment.
I don't know what it's a compliment. It's such a sigh of relief to see Tamanna and not Trump on the screen. I mean, people must be
start the
just
show.
delighted. Exactly.
Because he said overnight development.
Exactly.
No, thank you
but
guys.
heartiest congratulations and well deserved is all what all of us can say, and it's a true privilege to anchor alongside both of you today. Tamanna, special kudos to you for being such a fabulous co-anchor.
No, thank you so much, guys. But you know, not to sound too cheesy, but this is truly testament to the opportunities NDTV as a group gives us. NDTV Profit gives us as a platform, our leader and editor-in-chief Rahul Kaval, and that's a fact. You get to shine when you get a platform like that, and this fabulous team, guys. I mean, the way they really pull their might day and night, it's passion, it's a calling for everyone who works here at NDTV Profit. It's not just a 9-to-5 job, and that's really what is reflecting. That influence is coming because of what all of you guys do. Should we get on with the business of the day? Okay, now talking about what US markets have done overnight, they've maintained momentum as tech stocks have powered the rally. Micron has surged 19% and has hit the $1 trillion market cap. Indices, if you pull them up, were looking good as far as US markets are concerned. On the NASDAQ, the Dow was a little depleted. We'll pull up futures as well. And you know, more and more, the US marketplace is becoming about tech stocks. Now, one could always argue that will this really sustain, etc., but that's where we are right now. Oil prices, meanwhile, rose slightly as mixed messages came out of both Washington and Tehran, and we talked about a bit of those in terms of the commentary that's coming in. So no clarity on when that deal is. But if you just look at Brent as that lead indicator, you're still under the $100 mark at 98.72 at this point. Want to pull up Asian markets as well and look at what's happening there. It's a mixed bag, and India is going to be a mixed bag as well this morning, with a little bit of a muted take as far as India is concerned. I want to pull up the India implied, please, if we can, before we get to the trade recap and show you what's happening there. It's about 85 points down. But it's just following on what we saw at closing yesterday, isn't it, Hiral?
Absolutely. I mean, it was expiry. So, you know, the assumption was that there will be some bit of elevation in terms of the wicks, but that didn't happen. There was a cool off in terms of the wicks, which is somewhere a positive side. However, you've ended in a slightly negative note. There has been selling pressure at higher levels, which is intensified in the second half of the trading session yesterday. And if you see where the pressure is coming on, it's in the heavyweight stocks, and that's what actually dragged Nifty below that 24,000 mark in intraday trade. If you see the Sensex, we ended with cuts of around 0.6%, 120 points cut on Nifty 50, and we closed at 23,913. So what is important is that we've ended above the 23,900 mark. We've not given up those levels, so there is good support coming in there. And on the sectoral front, weakness largely witnessed in consumer durables, private banks, and real estate. However, selective buying interest that did come in names from the metal pack, FMCG, and auto stocks. And despite the kind of weakness that we've seen in the frontline indices, your broader markets have continued to witness the buying interest as well. And the mid-cap index, if you pull up that one on the screens, it touched a fresh all-time high, closed with gains of around 0.5%, and the recovery that did come in the last 15 to 20 minutes of trade was spectacular. However, your small cap index was trying to make that attempt to recover, but really could not. Just stayed pretty much stagnant with gains of around 0.3% to 0.4%, and that is telling you that there is continued participation that's happening in the broader markets, and this has been a trend over the last couple of days as well. So clearly, Neeraj, if you think about the texture of the markets, that positivity somewhere is coming in, but you're seeing selling that's increasing at higher levels, and the broader markets is the space where there is that little strength versus your large caps.
Yeah, I think it just goes in with what we've been saying now for the last 3 months, right? Nifty ko bhul jao. Kuch nahi ho raha hai. At higher levels it gets sold, at lower levels it gets bought, and therefore if you can really time that well, awesome. But if not, well, maybe just ignore that. Though we do talk about market-wide levels, and I think because there was expiry that ended, the market-wide rollovers were in line with the previous month. So there is no big surprise that has happened or any different positioning that the market is taking for yet another month. there's just not enough conviction out there if you look at the market-wide rollovers, and that's the true testament, isn't it? I would think that because it's so choppy, you kind of take a level-based trading position, and once those levels are achieved, either direction, just be happy to take the money off the table if you indeed making it, because frankly, it's very difficult to call trends these days, especially on indices. Individually indices, though broader markets could be interesting. Now, and therefore you try to look for cohorts and what is data saying, and two, what is it that people on the street are saying. So if you look at telecom, for example, the open interest in telecom is down the most. At the end of the series, down by about 14%. What does this tell you? There's been some bit of a rally that has happened in the previous series for telecom. People have taken some money off the table. Not everybody is comfortable taking longs across on the next series as well. Whether it's a right strategy now is separate, but this is what data is telling you. That is part one. Part two, I wonder what both of my colleagues think about it, but auto seems to be now becoming a tricky call for a positional trader, simply because the commentary that is coming in from managements is looking very, very solid. We spoke to an auto OEM yesterday, or rather the auto ancillary yesterday. We're talking to JK Tires today. It would be interesting to see that. But at the same time, you know that what is in the offing is fuel price hikes and therefore possibly lower demand, and the GST base effect getting discounted from November. Since the market discounts things 4 or 5 months in advance, you'd probably believe that at some point of time the market will start saying that this volume growth numbers, YOY growth, will start petering off. So it becomes a really tricky call. I'm glad I'm not an auto trader.
It will be, because, I think Puneet is going to do that story for us as well today with regards to, to add to what you're saying, guidance is very strong from what the auto companies have given out, right? Especially the OEMs. But if you see the trend in the month of May, you're going to be probably at an 8-year high in terms of the volumes in the month of May. And if you have to look at that trajectory, it seems that this might be the peak of the cycle. And from here, you will see that tapering. So in 2018, we reached a peak like this. Then you had 2 years of downtick that did come in. Then you had something which was flattening, and then a peak again right now in this year.
So you've hit the peak is what you're saying?
It seems you've hit the peak. But if you have to add the commentary that the auto OEMs are giving you, they are still not calling it out.
I would actually veer on the other side on this. I think that there is something cooking. There's something happening in that sector which we're not quite understanding, despite the fuel hikes. And common logic dictates exactly what you're saying, Neeraj. Very, very apt that fuel prices are going high, input costs are high. But the Vahan data, what that is telling you, the commentary that we're hearing, and these are not the kind of managements who will just say it because they want to. It's very, very believable. They're coming out and sticking their neck out there. You're seeing that with Bajaj Auto Exports also, for example, a whole host of companies. So beyond a point, you will have to give cognizance to what you're seeing on the ground. So
100%.
I think it's maybe if you had, luckily we're not auto traders who have to take that bet, but it would be more towards the positive, at least from my end, I would say.
Yeah, just so underlying that point is just this, that let's assume that the data is very strong for the next 5 months as well. But if we are starting to hit those peak because of the higher base from November because of GST cuts coming in, then does the market start discounting it? So even if the numbers are okay, do the multiples come off a little bit? I think that's the caveat, which is why it becomes a very tricky call. I completely agree. And the commentary is super, as we spoke to the management of
Sandhar Tech.
And I think the EV play is also coming in. So for these AEMs, is it going to be the EV share which is going to get them the gains?
Because of fuel price hikes. The government has to give some more incentives for people to go and buy EVs. Otherwise, it's not going to push that way. Seth R. Freeman with us this morning. Okay, we're going to be talking about global views with him. Seth, very good morning to you. Thank you so much for speaking with us. What are you making of this blow hot, blow cold commentary coming in from Tehran and Washington? Do you think at the end of the day they are inching steadily towards a deal?
Well, my initial reaction is, what's new? We're supposed to be having a truce. And the president has told us many times that he has eliminated Tehran's military capability. But then we're told that we have to attack southern Iran for defensive purposes, which means that they must have some military gear left. So it's very hard to tell.
From the point of view of market sentiment, Seth, you think that what we're seeing in the US markets can continue? Because it seems very concentrated on the tech play.
Yeah, very much so. We're experiencing inflation. It's measurable. Yet, we're getting record highs in the indices, but it continues to be driven mainly by AI companies and companies that sell to AI companies. So that's pretty much where the action is. I think we're still some weeks, if not months away from seeing the real impact of the war, higher gas prices, and particularly sustained higher food prices.
Seth, the question is, what would be the beneficiaries and what would be the losers in such a scenario, right? So we're seeing concentration of another magnitude 1 in the US markets too, but a SpaceX IPO coming and getting the space tech companies excited. Micron, SK Hynix, etc. in the $1 trillion club as well. Could we see money continue to be concentrated in these buckets even if inflation were to bite and overall market levels were to come off?
Well, money chases money, and there's always the fear of missing out. So I believe that's part of what we're seeing today. But it just depends on it's really hard to say, frankly. These IPOs are going to suck up a lot of liquidity. These are very big IPOs. So what does that mean? That means it might be harder for mainstream companies and basically less exciting companies to raise capital, especially at the time that they're going to need it.
Okay, how are you seeing emerging markets like India right now, Seth?
Well, I think this whole situation is basically negative. I've been reading and seeing. We all know about FII outflows. The good news, of course, is that with savings plans in India, that the market's been propped up quite a bit by domestic investors, which was not the case, even 7 or 8 years, 10 years ago. So, it's going to take some time, I think, for all of this to work through. There's also serious political issues that have to be resolved.
Okay, thank you so much, Seth, for speaking with us. Okay, let's go across some factors in today's markets as well. And I'm going to just pick up this note from Lawrence Blanco of CLSA, who's talking about price action. He's saying Nifty is in a mid-range, but mid-caps are on the cusp of a major breakout. Nifty remains range-bound within the 2024 to-date trading range that has formed, and that range is between 21,743 to 21,800 and 26,270 to 26,340. The NSE Mid-Cap Index, on the other hand, is on the cusp of confirming a breakout from its 2024 to-date consolidation pattern. Such a move would support an upside target of 77,687 to 78,000. Dixon Technologies is highlighted as a buy candidate by Lawrence Blanco. By the way, we're speaking to the management on the show today. A close above 11,845 would confirm a breakout from the January-May base, reinforcing the turnaround setup and supporting an initial upside target of 15,000. He's talking about Dixon over here. Nifty 50, meanwhile, coming to what we see as a setup, Nifty 50 snapped its 2-day winning streak by failing to hold the 24,000 mark. The broader bias does remain cautiously bullish, but the market is still trapped in this 24,000 to 23,800 consolidation band. The Nifty failed to sustain above the 50-day exponential moving average and the 24,000 mark, but it still holds above the 20-day EMA. Options data shows aggressive positioning around 24,000, making it the key battleground. Resistance zones now are 24,040 to 24,050, 24,100, 24,200 to 24,250. Support zones at 23,900, 23,800, 23,840 to 23,750. For the Bank Nifty, it closed at 55,093, keeping the critical 55,000 psychological mark intact. despite a steep 500-point retracement from its intraday high. Resistance zones at 55,415, 55,535, 55,800. Support zones at 54,990, 55,000, 54,700 and 54,600. Let me go across to Puneet for the FNO setup this morning. Puneet.
Well, thank you for that, and good morning to all three of you. We've seen, yesterday, of course, the end of the May series, and largely, a forgetful one to say the least compared to what we saw the price action in May. But at 23,900, we ended the month, or at least started the last day of the May series at 24,000, just a tad below that at this point of time, but continues to be an important level for the markets. Of course, 24,000, we've been speaking about it quite a bit over the last few weeks, as well as for the Bank Nifty, where we saw early indicators of some up move from those lows of 53,800 odd to the current level of 55,000, 55,500. So you continue to monitor this index very closely at this point of time. Earnings weren't too great as a key trigger, at least for the Bank Nifty. So monitor all of those moves led by macro factors essentially in this month. When you also look at the cash numbers, yet again a selling number from foreign investors, 2,400 crores, and the index long will be something to watch. Across May, we've seen just 11 to 12% kind of an index long by foreign investors. It's essentially the longs, the calls that they have, at least in the markets right now. And this has slipped from the 20% mark in April. So what does June entail will be something to watch. In terms of open interest distribution, though, we've seen 24,000 as a key level now, which has continued to consolidate with the highest open interest for the calls. Now, there has two indications. One, that we could be in a near-term consolidation at this range, because the higher up ranges don't have any kind of higher open interest, barring 24,500. But this continues to be as the index moves forward as well. But also that, you're seeing active interest at that key level. So hopefully we should be able to maintain this near-term consolidation at 24,000. For stocks, Keynes Tech was an interesting one yesterday, where longs are starting to build up. If this trend continues, will be something to watch after a weak FY26 for the company. While Concor was impacted by shorts being built up by the guidance cut in midday Concor as well. And in terms of losers, there's not too much open interest change yet to form a trend. But overall, yet again, a very important session as we start through for the month of June, both for the markets as well as what foreign investors do as well this month.
Okay, thank you for that, Puneet. Let's start with stocks on our watch list. First on my watch list is ONGC. Not a great set of numbers. It's a thumbs down. An operationally weak quarter. Revenue, though, was up 14% to 35,928 crores. EBITDA up 3% for the quarter. Margins dropped fair bit actually, from 54.9% to 49.5%, and net profit was down 21%. Importantly, total production was down 4% to 9.83 MMT versus 10.21 MMT. Crude oil realization was up 24% to $78 per barrel versus $63 per barrel. Remember, all of this in the current quarter would change dramatically. We're talking about Q4 now. Factors, though, there was a missed EBITDA estimate for the 7th consecutive quarter. This time, the miss was owing to higher statutory levies and higher other operating expenses. Production was also weak. Company said that geological surprises arising out of reservoir complexities affected the production from one of their fields, which is the 98-2 field in Eastern Offshore. More clarity really is required on this statement and what it means for future production. Have these geological issues been sorted or not? Net profit was also lower due to higher exploration write-off. So all in all, not a great set of numbers. That's not the case for JK Tyres, though. Revenue was up 12.4% for the company. For the quarter, EBITDA up a healthy 48%. Look at the margins as well, popping from 9.7% to 12.7%, and net profit up 94.4%. The India business continues to show growth momentum, benefited from the GST rate cut in that quarter as well. The trucks and bus segment contributes 50% of overall revenues. Has been a good set of numbers. This is something that you've also looked at closely. Neeraj, any take on JK Tyres to add on?
No, I mean, in line with what almost all the tire companies have done per se, they are hopeful of being able to pass on. But I think all of them, Tamanna, have spoken about price hikes in the offing, and the belief that the demand, the OEM demand will obviously stay, but the replacement demand also will not get impacted. remains to be seen.
Okay, watch out for that conversation with JK Tyres at 9 a.m. this morning. Let's also talk about Brainbees. That's the third stock on my watch list. Good set of numbers. It was expected, some of those metrics were expected, so I would say in line, but it's a consistent improvement. Their gross merchandise value, which was an important metric for this kind of company, grew at 10%. The India multi-channel revenue growth also improved to 11.4%. India margins were lower due to competitive intensity in diapers. And that's one big segment for this company. Margins also got impacted to some extent due to higher manufacturing costs from INR depreciation and crude inflation. International revenues grew 9% year on year, but impacted by sustained elevated promotional activity. Let's look at the actual numbers. Revenue up 12% for the quarter. EBITDA at 70 crores versus 15.9 crores, so healthy growth there. The margins have gone from 0.8% to 3.2%. Net loss has reduced from 76 crores to 30 crores. And there was a one-time loss of 24 crores versus 37 crores year on year. Morgan Stanley has maintained an equal weight on the stock, target price of 300 rupees, saying the Q4 is broadly in line, but they otherwise are fairly positive on the company. They say the management is confident in improving top line growth, but it's diapers which is turning out to be expensive because of the rupee and because of crude. Look
Very
at
interesting.
the kind of impact across the board. I suppose material that is used in it.
Material, but you know what I'm concerned, what I was thinking about is, we're talking about diapers, but as a product basket that they have, I don't think so. We knew, I did not know that diapers was something that could impact it to this extent, because they sell a whole host of
You've just
things,
stopped
right?
needing diapers at home. That's why you don't have the impact yet, fairly recently compared to others.
Yeah, but I mean,
for your baby.
But it's interesting. On my list, you know, a couple of companies that I have is PNG Health. Your revenues have seen 20% growth, so across parameters is a double-digit growth. I mean, the expansion that we've seen in the operating margins is also very strong. EBITDA has up around 67-68%. Your margins, that number has come in at 36.6% versus a 26%, and profits have gone up by 54%. So overall, top line, bottom line, very strong numbers that the company has reported. However, if you see in terms of the margin expansion, there is a disproportionate jump that has come in terms of the EBITDA relative to the revenue growth, and that highlights a massive improvement when you talk about operational efficiencies, and this is post the cost optimization strategies the company has looked at as well. So good numbers coming in there. The second one on my list is Phenolics. Now, if you see in terms of a Phenolics Industries go, revenues are up around 12%. Your EBITDA again, a 93% jump coming in there. Margins 25% versus a 14.6%. And the profits are up around 58%. Now, again, this is an exceptionally strong quarter that the company has delivered, and it's stellar operational efficiency once again for this one. And the surging profitability, if you go to look at both of these parameters, they have outpaced the top line revenue growth as well. Apart from that, the aggressive margin expansion is because of the shift in terms of highly lucrative product mix during the quarter, and the company has strong pricing power in the pipes and fittings market, and that is why they are able to command these kind of margins over here. The growth was slightly tempered off in terms of the profits as compared to the EBITDA, and this was mainly on the back of the higher tax provisioning or the depreciation that you saw, and the overall earnings quality that has continued on the positive side. Lastly, I have AstraZeneca. Now, this is interesting. Revenues are up 20%. However, this is the reverse of what we saw in the previous two. Your EBITDA is down 30%. Margins have also squeezed in, and that number has come in at 10.5% versus 18%, and the profits are down 23%. Now, you know, the growth is at the cost of the scenario. That is what you're looking at over here, because robust double-digit expansion when you talk about the top line, but that has been offset by the sharp contraction that we've seen in terms of the operating margins and the profitability, and this is something that could, impact the stock price as well. So watch out for AstraZeneca, and this is a one-off that we are seeing, right? Because the way we've seen pharma companies report numbers as well, specifically when it comes to the US business, the biosimilars business. All of that has been very strong. Here, you're seeing severe margin compression, and that is what could be impacting, and that's what the street is going to watch out for, Neeraj.
Yeah, I mean, interesting stock list, and there is so much news flow today, by the way, that I'm sure we'll miss some or the other between the three of us, and then we'll of course present them later. But I chose a smaller stock per se relative to some of the others as the first one because the numbers seem very good. Ram Ratan Wires. So Ram Ratan Wires came up with a quarter wherein the revenue growth was 83% at 1753 crores versus 957 crores. EBITDA at 93 versus 45 crores. What a blockbuster EBITDA performance. Margins moved up from 4.7 to 5.3. On that base, that's a 60 basis point jump, which is actually pretty good. And net profit as a result, 39 crores versus 18 crores. Now the winding wires and the strips revenue jumped about 9 to 1392 versus 791. But it's the copper tubes and pipes, which is a smaller piece, but which really gave a fillip to the margins and the revenue front as well. 347 crores versus 141 crores. I'm guessing they had some inventory out there. So pretty good going for Ramratna Wires on that quarter. That is the positive. Now, I wonder if this overhang stays on Coal India because there is a 2% stake at a 10% discount from the government in the OFS. And does that really hit Coal India? I think it remains to be seen. But I would suspect that in today's session at least, Coal India will see a bit of a pushback. So keep an eye out for that stock. Parallelly, a management that we spoke to on Monday, which is KR and Heat Exchangers, they've put out a release saying that promoters are going to sell about 10 lakh shares or thereabouts. So maybe that stock too could be under a bit of pressure today. The last stock on my list is Entero Health, and I'm using the Jefferies note here because the numbers came out a couple of days back, and while the reactions were mixed, I think what Jefferies note is noting is interesting. They have hiked the target price, of course, to 1500 from 1350. So they say the company is presenting a robust outlook for FY27, 23% organic growth and 100 basis points YOI margin expansion. The growth will be driven by consolidation of the acquisition that they've done. They're cutting the FY27 EPS on a higher tax rate and depreciation, but raising FY28 EPS on this whole improving margin trajectory. So do watch out for Entero. Could be an interesting one.
Okay, let's take a very short break, and it's exactly these individual companies from the broader markets which are going to give you opportunity, if at all. So we're going to be focusing a lot on it on the show. 77 points down on the Nifty implied. We're coming back with a host of more ideas on the other side. Stay tuned.
And the award goes to
Tamanna Inamdar, Managing Editor, NDTV Profit.
Leading the newsroom, shaping the narrative. From stories to impact, a voice that matters. Tamanna Inamdar, among India's most influential, power, purpose and perspective recognized. NDTV Profit's editorial force gets industry-wide acclaim.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editors Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From government.
Back with India Market Open right here on NDTV Profit. We'll have a small dip on Open. The question only is, does it get extended or will it get bought into? I think remains to be seen. And we'll talk about that too. But just a special focus on autos before we kickstart the main conversation around what the trade could be like today. And for that, I'm going to get my colleague Puneet in, because what's happened, viewers, is that the auto retail momentum has possibly remained strong in May because the Vahan registrations have risen YOYS. So Puneet, we've spoken to a bunch of managements who expressed this as well, but what is the hard data telling us?
Well, thank you for that. As you rightly mentioned, it's been a strong month for the auto sector and it's still not over. So it's already crossed that 19.7 lakh mark, and this is the highest sales that the whole sector has done essentially in May of 2026 compared to the last 8 May. So we've analyzed data over this time frame, almost since May 2018. This is the highest record figure at 19.75 lakh units. This, of course, includes all categories, all company vehicles that are registered and actually sold to the consumer. So this is actual retail sales and not the one that goes to consumers. And the trend is visible on your screen as well. The last time this number came through was way back in May 2018. Since then, we saw the dip during the COVID years of May 2020 and 2021. Then that recovered through yet again. So last was also May 2023 was also a strong number, but a very, very strong session yet to end the month, of course. But already signs showing of continuous momentum in the auto sector yet again, despite 8 months post the GST rate cuts. I also just want to highlight the category-wise data as well, because two-wheelers continue to dominate the news flow at this point of time. And that's the comparison that we've done for both April and May for 2026 compared to the last year. So that trend is showing for both two-wheelers, for passenger vehicles also a very strong number at 8.78 lakh units, as well as for the CV makers, where you've seen that number being higher compared to the last year, despite 3 to 4 days more left for May. And finally, in terms of what we've seen on specific players, now when you look at, of course, the next 3 to 4 days will be crucial in terms of registration, but most players have already achieved 85 to 95% of their last year May 2025 sales. So when you look at the number, barring Hero MotoCorp, which is at 81%, all other players at 89 to 80%. What this means is, in the month of May 2026, the last 27 days essentially, they've already achieved 85 to 95% of the sales of the whole month of May 2025, and the trend visible for each player on your screen right now. Notable ones are Maruti Suzuki, which is at 95%. That's one of the highest ones that they've seen. And for Mahindra & Mahindra, that continues to be at 80%, and Hyundai at 87% as well. So this is just a trend of the retail sales, the actual sales visible, and the player-wise data that we're presenting for 4 more days yet to go for the month of May.
Okay, thanks a lot for that, Puneet. I really appreciate. Let's get in our guests on this conversation, and maybe, like he said, first start with autos. Avinash Gorakshekar, founder and Head Research of Avinash Mentor Research Services with us on the show. In a bit, we'll of course talk to Kush Bohra on the charts as well for the market, right? But since we're on the topic of autos, Avinash, good morning. Great talking to you as always. What do you make of autos? Is there merit in trying to own them? Do you like the data that has come out, and is that good enough for you to make fresh investments?
Yeah, good morning, Neeraj. I think, looking at the trend in the month of May, I think markets continue to remain strong because on ground, demand has not come down. And despite the fact that steel prices have gone up, there could be a little bit of margin pressure in the quarter 1 of FY27. But I think overall, volume growth has been very strong. And I think noticeable players like Maruti, Mahindra and Mahindra, Tata Motors, PV, these are the companies where I think the quarter 1 should be reasonably good. I don't think you're going to see any letdown in demand. And overall, I think, Mahindra and Mahindra is sitting on a very strong order book of its electric vehicle portfolio. The tractor business is also doing well. And plus with a good monsoon, hopefully, I think rural demand is also going to benefit them. So I would say that, yes, I think Mahindra and maybe, Tata Motors PV could look interesting at these levels. Mahindra stock has corrected from highs and I think definitely looks attractive from a medium to long term kind of time frame. So I think gradually one can take positions here because as I see the quarter 1 is going to be very selective for few sectors, and auto is one of the sectors where possibly we could see the strong momentum continuing even for the Q1 of FY27.
Okay, I want to come to Kush on what he's seeing on the charts. 24,000 to Delhi dur hai and 24,000 is becoming a pain.
I'm not starting with all of that today. Not a chance. Did you guys hear? Tamanna won an award last evening.
Which one? What?
आप लोगों ने नहीं सुना?
Good morning.
Good morning. कौन सा वाला? There is a list of them, is it? ऐसे कौन celebrate करते? There is no confetti. I thought there'll be a big Tamanna poster, in the background.
We thought you would make that entry.
If I knew I could have, I would have. And at the very least, मतलब एक coffee तो होना चाहिए, right?
Your coffee is
We've
coming.
been promised that.
Your coffee is coming thanks to quick commerce and food delivery apps. Your coffee is on the way.
We've been promised that अगर 9:30 तक मुझे thank you करने के time मेरे हाथ में coffee cup नहीं हुआ तो you know कि वो promise fulfill नहीं हुआ है, ठीक है?
It's on its way. It's on its way.
But all of that on a lighter note, thank you so much, Tamanna, for the coffee. But many congratulations. And I know for a fact that this is 200% very well deserved. And this is just the first of many to come. So congratulations once again.
Thank you, Kush. Thank you for that.
Now over to markets. Mixed cues ना सिर्फ geopolitics में नहीं है. Nifty में भी mixed cues आ रहे हैं फिलहाल, right? You asked me yesterday, is there a big rally in the offing after hitting the 24,000 mark? Let me just give you a flavor of those mixed cues, right? So yesterday's consolidation was very much on expected lines. We've had a good run for the last couple of days and then a brief pause, right? But look at this, a bearish engulfing pattern, which typically signifies exhaustion, at higher levels. That was made on the daily charts, but the 20-day moving average was respected. Nifty fell down, but so did the wicks. Again, contrarian signals. The indicators, the technical indicators are largely neutral to positive, right? But nothing rara to say that, this is a big breakout rally, in the offing. So from a very near-term perspective, I think the range play on the Nifty will continue. Of course, the good thing is that the range has shifted higher, right? So now you've got supports at 23,600, 23,700 and immediate resistance at 24,100, right? So maybe you could play the range, on the Nifty for the day. But, as the saying goes, when in doubt, stay out. So I really wouldn't suggest trading on the Nifty, from a positional standpoint. Intraday trades are fine. Bank Nifty, that's the one that we've been talking about for a while, has done rather well. Yesterday consolidation was very much on the cards. But just a quick question, guys, on something related to Bank Nifty. Of course, you speak to so many people. Have you heard anyone put out a banking stock call of late? Does it sort of ring a bell?
Apart from Parag
Bhai, of course. Apart from Parag
Bhai. Makes up for everyone else, but yeah, he's gung-ho on banks.
Especially ICICI and HDFC, like we know, right?
And Kush has been gung-ho on banks too, right?
On Bank Nifty.
Yes.
But see, here's the thing. Even I, have not really, with all the enthusiasm and optimism that I have on Bank Nifty, and it's run up 2,500 points in the last 5 sessions or so, haven't put out a single banking call out. The reason is that the structure, when you look at the components, isn't all that great. The private banks rebounded from oversold levels.
No, so then what is pushing the Bank Nifty? Yeah, you like the index, but you don't like the individual counters.
Counter logic, but somehow that's what it's played out. See how fragmented the move is. One day you've got the private banks doing their thing. and then the next day the PSU banks take over. The leadership is also changing there. So like I said, since the structure on the bank Nifty itself technically is positive, we will remain positive on bank Nifty for higher targets of 56,200, 57,400 until one of the big boys, HDFC, ICICI or SBI, gives you that big breakout and that big moves and takes charge. But like I said, the move is still fragmented, but the structure on the index remains positive. So we remain constructive on bank Nifty. If you have a position, you could trail your stop loss to 54,200, 54,400 levels. So that's the word on the indices.
Okay. Since we have been speaking about auto as well, and you're not so excited about banks, what is the view on auto on charts? Because a bit of a debate there as well.
Yeah, and I don't think I'm going to help clear that debate up. I'm probably going to bring in more confusion. But I have a tilt towards the bullish side now for a very simple reason. Neeraj, I'm sure you'll recall, there is one auto OEM that I'm actually short on, or like, my view.
Hyundai, yeah?
Hyundai, absolutely. The view is starting to turn constructive because there is a higher high, higher low formation that is on the cards. Moving averages being crossed, and there's a falling trend line resistance that is being crossed. So when a prime shorting candidate, and a big one at that, starts to turn a corner, you might want to perhaps reconsider that view. So hence I'm considering that, short trade on Hyundai, it may not be really valid anymore. Like I said, there is a good traction that is building up in the OEMs, but the auto ang space has been doing very well. I will keep an eye out on some of the big names on the auto space, especially the OEMs, but I still favor the auto angs.
Mm-hmm. In fact, there's a brokerage note today. I think JP Morgan has come out with a note on Hyundai, and their target prices are higher as well. So interesting bunch of data out there on autos today.
Yeah, interesting bunch of data on autos, but on auto ancillary, you have been positive as well. At the moment, with the kind of run-up that's already come in, anything specific that you like?
Hiral, that's the beauty. They just continue to do well. In fact, one of the picks that I have today, and I'll share those as well, Samvardhana Motherson, remains a buy call despite having hit the target 1 and target 2. The kind of momentum and strength that there is, there's a good possibility that it might actually continue this run. Gabriel India, Bellrise, some of these are anyway stocks that we've discussed, and like I said, there is still strength in a lot of these names, so I continue to remain bullish, and I'm a big fan of following strength, not momentum but following strength, and there's definitely strength in some of these names. Now just to complete the discussion with the stocks today, the 3S calls today I have incidental: SAIL, Samvardhana and Sammaan Metallics. One of them is an update, by the way. So SAIL did well. We've seen the stock resist around the 200 mark, but yesterday the closing was comfortably above this 200 level. The momentum could well continue, and metals anyway have been doing well. So 209, 214 are your targets. 199 is where you keep that stop loss. Samvardhana Motherson, the reason I mentioned this again is because 135, 139 were our targets before. 135 was hit comfortably. You could still stay on or get into a fresh trade for targets of 140 and 144. Stop loss at 132. Sham Metallics is a call that we discussed yesterday. First target 985 hit. Again, good momentum, volume action, day on day getting better. So 1008 and 1035 are your revised targets. Bump up the stop loss to 955. One quick update on a stock which did phenomenally well yesterday, which is Marksans Pharma. Now the reason I mentioned this is because 2 weeks ago, this was our weekly pick. उसी हफ्ते में target 1, target 2 सब hit हो गया था, but I think yesterday was a result impact because of which the stock did what it did. If you have a position, not a bad idea to at least now go out and book profits. I think our second target was 225.
Okay. Meanwhile, the other big story, of course, is the Coal India OFS. And in case you missed it, this is news that you heard first on NDTV Profit. It is a khabar confirmed. We reported this from our Delhi bureau as well. Coal India has launched an offer for sale with an issue size of 5,000 crore rupees and an additional green shoe option of 2,500 crore rupees. Samit Sarkar joins in with more details. Samit.
Well, yes, 5,000 crore is the total OFS size. Base issue is 2,500 crore, while there is an additional green shoe option of 2,500 crore. The price is at 412, which is at a discount of nearly 10% compared to the current market price. So this big discount could be an overhang as per Morgan Stanley. Now, this is not the first time where government of India is looking to sell stake in Coal India. They have done it multiple times, including the IPO amount. So far, the government has mopped up nearly 47,000 crore rupees by selling stake in Coal India over the last 16 years. And if you add this 5,000, the total amount would increase to close to 52,000 crore rupees. Now, the IPO of Coal India came in back in 2010 at a price of 245, while the current market price is close to 450, 460 rupees. And the biggest OFS in Coal India was back in Jan 2015, where it was close to 22,000 crore rupees, where the government sold close to 10% stake at a price of 358. After that, the couple of OFS that the government had done were at a lower price. In 2018, they did it at a price of 266. In 2023, they did it at a price of 225, 226. And right now, they are doing at a price of around 412 rupees. 5,000 is what they're looking to mop up. 2% is the equity that the government will be selling via this OFS, and this OFS will open for non-retail shareholders today and for retail shareholders a day later on 30th of May.
Okay, so thank you, Somit, for that. In fact, a question I want to take with Avinash also on this. If you talk about the OFS, it's at a steep discount to the current market price. What you're talking about, a 10% discount. And that's what Morgan Stanley is also highlighting, that this could probably be an overhang in terms of the stock price. And if you see in terms of the way the stock has moved upward around 20-21% in the last 6 months, Avinash, do you think this could be a major overhang in the near term where you could see heightened volatility when it comes to the stock price, but fundamentals still remain intact because lots brewing when you talk about gasification as well?
No, I think Hiral, you're right that normally whenever OFS is announced, you see that in the near term the stock price trend becomes relatively weak. I would say that despite the fact that the stock is going to be offered at a reasonably good discount, there could be a little supply overhang in the short term. In fact, you could see a little bit of selling pressure ahead of the OFS. My sense is that markets are definitely expecting better numbers from Coal India, in Q1 of FY27. But in the near term, the stock could see a little bit of correction because the OFS actually does not add any value to the company. The money goes back to the government. And I think this kind of supply overhang definitely will have some impact, at least in the short term. So I think, avoidable for investors as of now. I think let the stock settle down once the OFS is complete. And then I think one can take a, call, hopefully, on the hope of better Q1 numbers.
So, similar to what Coal India is saying, Morgan Stanley is saying on Coal India, similar to Avinash's view, they've maintained an equal weight with a target price of 420 rupees, less than the current market price. They're saying that the floor price is at a material discount to CMP. It should act as an overhang, and we expect the stock to remain volatile in the near term. Anything exciting on the charts to write home about on Coal India?
I think this dip should be bought into, maybe not immediately.
Oh, interesting.
I'll tell you why, because this stock is no stranger to a dip of anywhere from 10 to 15%. Even now, if you see from the recent highs, it's already down about 8-9% or so, right? If it comes to the price that is just mentioned here as the OFS price, the drawdown could be about 15 to 18%. Like I said, the stock has a tendency of dropping 10 to 15% and then rebounding. So still has that rising trend line support. Close to the 420, 425 mark, I agree with that view. 420, 425 mark, this does become an interesting buy. Keep your stop losses just under 400 in that case.
Okay. But Somit Sarkar is still with us. Somit, that is one cover confirmed. What else do you have on your list today?
Well, firstly, couple of aluminium names, Hindalco and Nalco. There are buy flows on the institutional desk. Both foreign and domestic institutions have been accumulating this counter, and dealers indicate some aluminium capacity curb might come in China, which in turn will benefit the prices and will benefit aluminium producers as well. For Paytm, there are buy flows on the large HNI and PMS desk. Dealers are expecting some positive news flow here. And then when it comes to PG Electroplast and GMR Airports, there are sell flows on large HNI desks. Dealers are expecting weak Q4 numbers. Specifically for PG Electroplast, they're expecting a big miss compared to what the street has been anticipating. So keep an eye out for PG Electroplast as well. And lastly, when it comes to NMDC, multiple dealing rooms are recommending buy calls to their clients based on charts. So keep an eye out for NMDC as well. And Coal India, as you mentioned, we did this in our cover segment on May 14th, where we did indicate to you first that the OFS will be launched anytime soon. And yes, the OFS has come out today.
So that is definitely a cover confirmed from Somit Sarkar. Somit, you can smile about it. That was a good news break that you got in place. Okay, there you have it. Pulling that smile out of Somit is very, very difficult. But yeah, it goes
2 rubber bands on each side.
no, but a small one goes a long way in terms of his smile. Okay, JP Morgan on Hyundai. Since we had so much conversation around auto, I thought this was interesting, and you know, we're talking about sustenance, etc. JP Morgan has maintained an overweight on Hyundai with a target price of 2,135 rupees. They're saying domestic demand is likely to remain strong in the near term. Multiple drivers of exports in the near and medium term. Ambition to have an EV mix at least in line with or higher than the industry. The company has multiple levers to protect margins and capex to support new model cycle and capacity expansion. Hybrids need more time to become mainstream in their view. Avinash, Hyundai is a stock that you like?
See, I think looking at the trend in the passenger car sector, I think Hyundai is now coming back with a stronger kind of volume growth trajectory. So I think, yes, I think from a longer term perspective, you know, I think one can definitely look at it at the current level. I would believe that the financial year FY27 should be significantly better. Most importantly, you know, I think new product launches have also boosted the volume growth. So clearly at 1800 odd rupees, one can take a long-term call, but I think Maruti definitely looks better. I think Maruti could possibly outperform Hyundai in terms of volume growth, margin expansion. So I think within the given choice, I think Maruti could be a better choice.
Okay. You know, the other cohort of stocks which has done so well is Adani Group stocks, and standard disclaimer, of course, the Adani Group owns NDTV and you're watching NDTV Profit. But Adani Enterprises hit a level of 2959. And you know, this is the point that we were making the other day, right, when Parag Thakkar was here, that at 2700, people may not feel, oh, 1850 se chala hai, to ab kya lenge? But the momentum was in favor. Now, my question is the momentum still in favor for you to create fresh positions? Because, I mean, even if you're carrying an existing position, Kush, you're effectively saying what? Betting on the position continuing. So, no, I'm making a fresh position or continuing an existing position. So, that argument is gone. Should people bet on any of the Adani Group stocks, or is it time to take some chips off the table if you have longs?
So just yesterday, incidentally, I was looking at this cohort and this group of stocks, and just for the first time I was wondering कि काश इसका weightage index में थोड़ा ज़्यादा होता. Look at the kind of stellar moves that they've made, all of them, right? And you know, I think Adani Enterprises was close to about 1900 or so, or 2000 or so when we said कि यहाँ से breakout है, और वहाँ से you're looking at about 3000 odd levels right now, right? Near term में Adani Enterprises पे overheating, and I'm speaking specifically about Adani Enterprises right now. Near term में overheating है, but the trend has changed after a long period of consolidation, and when that happens, the breakout also is bigger, right? So I think this move is here to stay. अगर आपने बहुत नीचे से position बनाई है, not a bad idea to partially book and then maybe re-enter. But the interesting setup is on some of the other names. Adani Ports, Adani Power. You know what happened here? The stocks fell about 4 to 5%, maybe 6%. But the excessive cooling or excessive overheating just cooled off. And then you had this next leg of up move in the last couple of sessions. I think if you want to consider positions even now, you should look at Adani Ports, you should look at Adani Power. These are some of the names that have strength even from these levels. Adani Enterprises, like I said, if you do get a pullback, close to say about 27, 25, 2750 odd levels becomes a good entry point. So I think this is a big breakout after a long period of consolidation. Moves could very well continue.
What about Adani Total Gas with the surge that we've seen in yesterday's sessions? Very smart moves. They have got a new CEO, so I mean that could be one of the triggers. But what are charts indicating for this one?
So the move on this one hasn't really been as one way as it has been in some of the other names. It's had its fair share of ups and downs. My suggestion right now, if you did have a position, you could book profits partially, but even this one's gone above that resistance level of about 685, 690. So from a medium term perspective, it could do well. Near term, there is overheating on this one as well. Hence, I'm suggesting partial profit booking in a lot of these names and not a complete exit. So Adani Total also looking good. My preference still remains with Adani Power and Adani Ports, and Adani Enterprises on declines.
Okay. In fact, there are a whole host of other results as well that we're focusing on today. And of course, standard disclaimer on the coverage that we just did. You're watching this program on NDTV Profit, which is a part of the Adani Group. It's a subsidiary of AMG Media Networks, which is an Adani Group company. Let me go across to Mahima now, who's talking about all of the other earnings and stocks that should be on your radar. Good morning, Mahima.
Good morning, Tamanna. So I'll start with what earnings fared well. So there's Senco Gold, strong Q4 numbers on the back of good festive season demand plus top line driven by gold prices. In terms of Phenolics Industries, revenue was largely aided by better realization. So this stock could also see some positive action. PNG Health, very good set of numbers, beat in terms of all four metrics versus the estimates. Carraro India is the other one where strong export performance has driven the Q4 numbers and aided the top line as well. In terms of landmark cars, after sales, strongest ever quarterly performance is what this company has seen in Q4, and Gandhar Oil has seen a turnaround quarter for Q4 FY26. Just Engineering is the other one where there has been improvement in terms of where operational profits go. And lastly, in terms of where stock that could see some negative action, there is Equus where losses has increased on a year-on-year basis, and that's why it could see some pressure in trade today. So this is an entire list of some stocks that you could keep your eye on the back of numbers.
Okay. Thank you for that, Mahima. And, so maybe a video that has been doing the rounds for the last few days and has become very exciting is of Vector Technics. It's India's largest indigenous drone motor manufacturer, producing 5K motors a month. Now, why we thought this story was important and interesting is because we're speaking so much about Atmanirbharta at this point, and this sort of leads into that. So we've got a great conversation lined up because we have with us not just Vector Technics, which has become India's largest indigenous drone motor manufacturer, producing 5,000 motors per month, but also Zentech, which holds 51% stake in the company. So Ashok Atluri, Chairman and Managing Director of Zentech, with us on the show now. We also have Prudvi Raj Pakalapati, please pardon me, Mr. Prudvi, if I've said your name incorrectly, of Vector Technics, who is joining in to talk on this. I'm actually going to go to Mr. Prudvi first to explain why this is an important landmark.
Oh, thanks for getting my name correct. So
fair enough, close enough, and apologies if I didn't.
No, it's perfect. So coming back to your question, it's such a landmark because when the world was looking at drones, and majorly when we are becoming a drone hub for the world, we need to have our foundation solid, and we are fortunate enough to become the solid foundation underneath the drone company. So we are the subsystem company specifically focusing on propulsion, which accounts for about 40% of any drone. Because the entire industry was primarily being very import driven because of lack of subsystems in India, that's where the focus point was for us. And we did a lot of research since last 7 years. And with recent funding and mentorship from Zen, we were able to make that a reality. And whatever you see in the video is just built in last 10 months. And we have huge traction. We have to thank all of our Indian customers and few of our export customers elsewhere. So yeah, we are truly being the part of the global manufacturing hub for the world. India not just being a service export, but will be a product export country very soon.
Okay, Mr. Atluri, you've been talking about this subject for a while now. Multiple conflicts across the world have showcased the importance of this ecosystem development as well. Talk to us about what, of course, Prithvi just mentioned, and what are your thoughts on what this particular company does, of course, Vector Technics, or the ecosystem is doing right now?
Yeah, I mean, we have always held the view that, it should not be just make in India. It should be design, develop, and make in India. This is the company that is completely ground up built. They famously say from metal to motor. So, so I think we invested in this company and we are very, very impressed with what they are delivering. And Prithvi is being a little under not overstating it, but the reality is that the product that they are making, there is a lot of inquiries coming from Europe, from America, and the team from Prithvi and his partner, they have been to US and they have said that there is nothing, what we are making in India is, way ahead of what's there in other parts of the world. So I think this is a very, very big story, and I think, these guys will be expanding rapidly now, scaling up rapidly.
Okay, thank you so much, Mr. Atluri, for joining in today on this, and of course, best of luck Prithvi as well. But let's talk about JK Tyres, and that's the big one this morning, isn't it, Neeraj?
Yeah, Tana. And as the markets start up as well, but JK Tyre, the stock should come up because it's 9 a.m. And I wonder if there is a bump up there. Yes, there is a bump up here. It reported a strong fourth quarter numbers. Let's get in Anshuman Singhania, Managing Director at JK Tyre, for a quick conversation. Let's start with whether Anshuman, thank you so much for joining in. Congrats on a good quarter. Let's start with whether whatever happened in quarter 4, is that continuing on the ground in quarter 1 as well?
Well, we are very happy to report that in terms of our consolidated revenue, we've had the highest revenue for FY26, and we've had an 11% jump. Even our absolute EBITDA for quarter 4 jumped to 42% on a year-on-year basis. And right now, we are seeing that the momentum of demand is quite intact. And we are seeing that even in the OE and the replacement market, there has not been much disturbance. And this is all led by the reforms of the GST, thrust on infrastructure led, and the consumer sentiment. I hope this holds on, but we don't see any much disruption right now.
Because we had a CEO yesterday who said, Sandhartek, I think, that May is superb, and if it continues, it could actually be really good as a record year of sorts. Would you second that? Is the India business continuing to do well and outperform on the current scenario on the ground?
Well, current scenario is good right now, and I would say that there has not been any major cuts by OEM, be it the CV, be it the passenger radial, in terms of our tire inwarding. So that momentum is good, and any which way, April, May, June is the highest month of selling for tire industry, and even in the replacement market, which is the aftermarket, we are not seeing any much of disruption or the demand slowdown.
All right, Anshuman, I repeat my question though. Could this turn out to be the best year for autos? There are managements who are saying this. Would you second that?
Well, this year was very strong for the OEM segment across the sectors, in the trucks and in passenger, even tractor. With such a high base of double-digit growth coming in, this year could be little muted. I would say it will be a strong single-digit coming in this year.
Got it. Anshuman, the other aspect is the raw material cost, right? What is the impact of raw material cost for you? And have you taken any price hikes? Would you need to take more price hikes to offset that?
So in quarter 4, there has been a 1% price increase compared to quarter 3. And now we are seeing going forward in quarter 1, there is a price increase of almost around 18 to 19% price increase. On that, we have already increased our price in the aftermarket to 4 to 5%. We have another 4 to 5% price increase going forward. And we have already increased our price to about 5 to 7% in the export market. And OE is always linked to raw material prices, so that's always a lag effect which we will get.
Got it. Anshuman, and one is, of course, the raw material impact, but two is the overall impact that you're seeing, right? Shipping, costs, so on and so forth, disruptions, etc. What is the impact of the US tariffs as well as this conflict that is on right now, and what does that do to your business strategy?
Yes, you are absolutely right. Because of the West Asia crisis, the export to Middle East is definitely hampered, but there are still export which is going on at a low volume to the Middle East. There has been disruption in the supply chain, And so we are taking care of the supply chain, making alternative arrangements and price corrections. There has been also, we have also shifted to a lot to East in terms of our raw material sourcing, and even using alternative sourcing materials in our product lines. So in a whole, I would say that right now we are fine, but if this goes on, quarter after quarter, then definitely there will be some kind of a disruption which will be across the board for everyone.
Got it. And Anshuman, I would just love to know, COVID taught us a lot of things. What is the biggest learning from these times? What are the measures that you're taking in place, keeping in place to, move the continuity of the business? And if there is a guidance that you're giving for FY27?
Well, you are absolutely right. In every crisis there is an opportunity to learn, an opportunity to retrospect, and I think the most important thing is the agility to adapt to this changing environment. And our use of alternative raw materials, approving sources of east from the east very swiftly has definitely helped us and is going to continuously help us in strengthening. And I would also say that there has been a degree of uncertainty which lies in terms of how things will pan out going forward. But with some demand which is there already in the domestic market, underlying demand, because the structural reforms have definitely helped in this momentum. And I think that the silver lining is going to be that the domestic demand should be on a positive outlook. So that should definitely help us in navigating through these difficult times.
Yeah, well, all the best for that and more. Thank you so much, Anshuman, for joining in and giving us the perspective. Really appreciate your time. The stock at the end of 8 minutes seems to be doing okay. 5.5%, actually better than okay. 5.5% higher, so not bad going. I wonder if some of the other tire stocks are doing the same. Chandan Taparia, Head of Technical and Derivatives Research at Motilal Oswal, joins us on the show. Chandan, great having you. Thanks for joining in. Before we talk about the markets, and frankly, talking about the Nifty seems to be almost pointless these days. But since we're on the topic of tires and JK Tyre just finished their interview, I wonder if you're constructive that bucket. Apollo Tyres, JK Tyres, Seat, what have you?
Yeah, good morning. Thanks for having me. So yes, most of these counters are forming the bottom. Earlier, we have seen some profit booking when the crude prices were surging upwards. If I specific on JK Tyre, it witnessed a corrective move in last 4 months, corrected from its high of 610 to 357. But in last 3 days, it has bottomed out and forming the higher top, higher bottom. Even on the weekly chart, the stock has turned with bullish divergence, which indicate that some recovery could be there in the counter. So as of now, with support of 383, it can head towards 424, 45. If I look at the other name, whether C8 or counter like Apollo Tyre, same kind of setup is visible. But given choice, I think JK Tyre is well placed and all set to see the movement of 10 to 15% altogether if someone is looking for 1 week to 1 month kind of point of view.
Space is going to be absolutely interesting because if you're seeing some good momentum in terms of OEMs, your ancillaries will also tend to move. But moving on to a big brokerage call for the day, you have Jefferies, which has maintained a buy on Hitachi Energy. And Hitachi Energy, if you just look at a 5-day chart of this company, you'll see the kind of moves that have come in on this counter. Sharad joins us with more details on their rationale. Sharad, good morning. What are you picking up and why Hitachi? Because we've seen a good run up in terms of all of these energy companies.
Well, interestingly, Hiral, the target price is something which is very surprising. They have maintained a buy rating, but look at the target price hike coming in from 25,000. They're increasing it to almost 43,145 rupees, and they have given a very large range of EPS growth, for the next 2 years between 10 to 27%, and a structurally important growth story. Overall, the demand trends are important, and also the HVDC projects. That is where it's going to get margin accretive going ahead as well. They recently announced an additional capex as well, because to meet the higher industry demand coming in, data center and exports, that is where the bullishness is coming from the broking houses, and also add your transmission and distribution demand to it as well. A 58% EPS CAGR expected next 2 years, and also a 35% CAGR expected in terms of earnings going ahead as well. And because of these lofty outlook going ahead, they have increased the target price significantly to almost 43,000 plus.
Okay, Hitachi Energy showing some action today, but obviously some of the run-up has already taken place. Look at what else is buzzing. I want to pull up a Finolex Industries. Look at a Coal India. We talked about that OFS and how it could have been an avoid. According to Avinash Rakshakar, Kush Bohra said that on dips, look at it as an opportunity. In the pre-open session is closed about 6% down. I wonder what you think about Coal India on the charts, Chandan. You're going to see pressure because of that OFS. Is it a buy?
Yeah, so if you look at the counter like Coal India, yes, some sort of decline could be there, but the good part is that supports are intact. In fact, we have noticed some recovery in last 5-6 months. It took really well from 370 to 490, but from last couple of days it has been consolidating, holding above 50 DEMA. Due to the corporate action, if it comes down towards 420, 430, I think that could be the best zone to buy for an upside target towards 480 to 500.
Okay, the other winners, Finolex Industries, in back of a good set of numbers, about 6% up. And you're seeing this now as a trend where mid-cap companies that are performing well in this quarter are being rewarded robustly by the street because the underlying corporate performance has improved. JK Tyres, we just spoke with JK Tyres exclusively. You heard how positive the management is. That's also about 6% up. Brainbees on our watch list, despite the high cost of diapers and competitive intensity there. That stock about 3% up. They've performed well this quarter. There's a order win on KEC International, which is showing some excitement there. So those are some of the winners this morning. But otherwise, a fairly muted view. Chandan, any of your picks that you'd like to highlight, once now that the pre-open session is closed, and what is on your radar?
Yeah, so if you look at my preferred name, then positive view on almost all the power companies, especially entire the Adani group of companies. So I'll recommend here to go long on Adani Energy Solution, one of the strongest counter, which really did well in last 2 months, and given a consolidation breakout of last 20 trading session. Yesterday it headed higher, has been making higher top, high bottom on the daily chart with surge in the trading and delivery volume. So Adani Energy Solution could be on radar with support of 1445, looking for an upside target towards 1540. Vogue Pharma is one of other name which looks quite decent for the next leg of rally. On monthly and weekly chart, it has given a consolidation breakout. Just a couple of days back, it headed towards 1778, then remained range bound. Now again, giving a positive momentum with bullish crossover on the mechanical indicator. So one can buy with support of 1685, and this pharma counter can rally by 4 to 5% to head towards 1770.
Okay, so, a couple of pharma names that we're talking about, just a couple of minutes away from pre-open, but a few stocks that come to my radar. Finolex Industries is up 6%, JK Tyre we've already spoken about, Procter & Gamble reacting to numbers little over 4%, Brainbees Solution as well. Chandan, any of these earnings that you like from a Brainbees to a Procter & Gamble?
Yeah, let me first comment on the Finolex cable, where I see the positive price pattern. In fact, a consolidation has completed. Major trend is positive. We have seen a decent run up in last 2-3 months, and now this pause invites the fresh leg of rally. So even if opens positive, use any small decline to buy with support near 183. It can head towards 195 to 200. So one should focus on the same. If I add one more name, that will be the PNB Housing Finance, where I see a major consolidation breakout with support of 1065. It can head towards 1140. So I think these are the couple of names. And KEC Internet also could be on radar where we are witnessing a supportive trend line.
All right. Well, a lot of ideas, but let's talk about what the markets will do this morning. And we'll start off lower. The question only is, can we build on from there, or will we have some pressures? I think that's the key question. Well, we're starting off flattish, about very, very flat, with the bank nifty 0.19% or 0.24% lower, but the mid caps are doing okay. I wonder if the small caps are doing fine, because the market breadth is looking fine too, 0.2%. So no complaints with the breadth. Again, goes to show the nifty may do what it does. There will be individual movers and shakers which will actually could do well. Let's put it that way. But it's a flat start, at least for the headline indices. Let's get the heat map up on the screen and show you what's moving on the Nifty 50. More green than red, so which means that some pressure points, and HDFC Bank has that news flow, which is why it is down about 2%, and we'll talk about it a bit. ITC down 2%. Coal India, obvious pressure points here, 5% lower. There is weakness in ONGC, down about 3%. Some profit booking maybe in Adani end. But you know, look at this. There are 4 names which are cracking, and then the list of losers isn't too bad. So, and there are a lot of winners too, by the way. Hindalco up 3%. There is strength in JSW Steel or Tata Steel today. Eternal, some gains, etc. So pretty interesting. This market behavior is interesting. If you can just pull up the points contribution on the Nifty 50, because it will show you what's happening. It is essentially 4 stocks and the pressure that they are putting for having that stress on the Nifty. Otherwise, the rest of the market on the Nifty 50 is not doing all that badly, by the way. More winners than losers. And Tamanna, I reckon that's the case at the broader end of the spectrum as well. So, interesting beginning. It is not a simple market open. A lot of pressure points here, particularly by HDFC Bank and Coal India and ITC.
Okay, in case you're wondering what's happened with HDFC Bank, the Indian Express has put out a story this morning saying that an internal probe found that some amount spent on marketing to the tune of about 45 crores was camouflaged by the bank. We don't know if this is true or not. This is a report by another publication, but that is one of the reasons you could see some pressure on HDFC Bank. Having said that, if you look at the Nifty overall, now in the green, so not as bad as what the indicative open or the implied open was telling you. It's flat, and the advanced decline ratio is not bad at all. I want to pull up the mid cap and the small cap index, about 0.25% up. On the mid cap 150, a little more than that. Small cap 250 is actually doing much better, and this is in line with what every analyst is saying. Look at just what Lawrence Blanco is also saying this morning, and he's saying that the breakout is going to happen in the mid cap. It's the small cap that's roaring right now. Let's pull up the sectoral heat map if we can, and look at what's happening there. Metal stocks are firing. Everything else is just along for the ride and slightly muted. Oil and gas seeing some pressure. That's largely ONGC, I'm sure, and that's possibly the case for the CPSE index as well, and the energy index as well. So big weightage of an ONGC overall. I don't know if you can pull up a chart of just the ONGC before we get to some of the other stocks that we're looking at, and look at what's happening there, because it's results, it's lower production in the last quarter, and ONGC with its presence on 2 or 3 indices would pull everything down. It's about 4% down right now. But let's look at some of the other stocks that we have on our radar this morning and what's happening with that. I'm going to look at the results first. Right, JK Tires. We spoke to the management exclusively. You heard them on the channel at 9 a.m. Just doing very well, 6% up. Finolex Industries, good set of numbers. Brainbees actually inline set of numbers, but they have indicated that higher costs might hurt further. That's why about 2% down. Stock was doing well in the pre-open session. Senco, I want to look at Senco Gold. It's been a rather decent set of numbers for all jewelry companies, but I think the impact of the government coming in and not really encouraging, or should I say discouraging, gold imports would be wearing down. 2% down there. Landmark Cars, another robust set of numbers. I want to look at Aegis, which is a relatively recently listed company, not a great set of numbers. Ion Exchange, adding that in terms of the impact that you're seeing for earnings, and these were not a good set of numbers, so you're seeing that kind of an impact. Let's pull up KEC International. An order win has come in, about 0.5% up on the stock. Coal India, I want to look at as well. And OFS has been announced. It's weak, about 6% down. And let's see if we can look at Delta Corp, or maybe Hiral can pick up Delta Corp. Supreme Court has ordered a order on states ban on online games played for wager, bet and money. So there is going to be some maybe relief there coming in for Delta Corp, 6% up this morning. So those are some of the movers, but it's a very individual kind of a move, isn't it?
Absolutely, Tamanna. Very stock specific, and that's what I think all of us have been talking about over the last couple of days, that there is no particular trend that's emerging in any of the sectors. You're seeing absolute stock specific movement that is coming in there. Transrail, a 6.5% downtick coming in on that one as well. AstraZeneca, we've already spoken about, which is reacting to the weak set of numbers. So few of these names are interesting, but with regards to HDFC Bank, as Tamanna was mentioning as well, let's just put up that one on the screens once again. A 1% downtick, but the kind of impact that is having in terms of Nifty 50 and Bank Nifty, that is the key concern here. Where the bank has, the news media reports are indicating that the bank has camouflaged crores as marketing spends, and this is to pay higher interest to State Farm. In March, you had the HDFC Bank chairman who actually quit, citing ethics. And what the bank didn't reveal, they're saying, is its probe found that violating RBI bank's norms, they paid 45 crore extra interest to Maharashtra State Road Development Corp, and this was given out as sponsorship to for road safety norms. So that is probably the reason why you had a HDFC Bank react, but from the opening levels, it's recovered quite a bit as we speak. Let's just once again pull up the broader markets as well and see what's happening in terms of the indices, if any momentum picks up there as well. Mid-cap, 0.5% uptick. So clearly, mild bit of outperformance coming in on that front, and the small cap index, which is up 0.7%. Chandan, with the way markets have opened up, what would your top pick be at this moment?
So two topics I've given. Apart from that, I discuss about 3 to 4 ideas, and all the stocks are firing up. If I talk about the Adani Energy Solution, I think this stock is up by more than 3%. Given the target of 1540, I think that is on the way. Those who have bought can trail the stop loss to 1475. One of a classical breakout here we have seen. Apart from that, I've given the recommendation on the Vogue Pharma. The counter is up by around 3%, has given a fresh consolidation breakout. The target was given 1770. It can head towards the target as well, but one can trail the support to 1715. Apart from that, positive view on entire power space. CZ Power is one more name where I see a major consolidation breakout with coal unwinding and put writing at 900 strike. So with that, it can head towards 925 with support of 885. So these are the name one can focus, and PNB Housing all set to start the next leg of rally with support of 1075. It can head towards 1140. Cummins looks good. So I can see this is the market where you are getting so much idea where the headline index is consolidating in a range, because the Nifty mid-cap index itself has given a major breakout. So it's good time for the stock, those who are having the ideas in the mid-cap, small pick, and the selective sector and stock specific. I think party is there even after the major momentum in headline index.
So interesting names there. Kush, anything on your radar once the markets have opened up? Because a lot of individual stocks are firing. Are you seeing any opportunity of profit booking in any of the names, or further momentum?
Yeah, I think I'll go with the latter, which is the further momentum bit. A lot of names that have opened, opened with perhaps a flat to negative bias, and then are now starting to pick up some ground. So I think it's a good idea to focus on the stock specific action. SAIL, Samvardhana, in fact even Shyam Metals, all the 3 stocks that we spoke of are holding on to their opening gains, or probably just building on to some. Not a bad idea to maybe consider a long trade. Do you want to take these overnight because tomorrow's a holiday? That's the only question. Structurally, they look good, and Nifty consolidating with a mild positive bias, I'll take that.
I think the point about a bit of nervousness before a market holiday is definitely something that's playing out, because otherwise there's no real reason for how muted the Nifty is right now.
In fact, Tamanna, who would have thought that the Nifty mid-cap index will be hitting fresh all-time highs when the Nifty itself and even the Bank Nifty is so far away from those levels, right? So I think there is a bit of faith and the confidence that's already there in the markets. It's just not translating into the big boys' names. That's all. Otherwise, the stock-specific action is beautiful. I mean, you have to focus on that side of the market. Let the big boys do their own thing for now.
Big boys and big girls.
And big girls, my.
at least
for today, I should not have.
Let's talk about it. Okay, now stay on with us. The next story is an exciting one. You may not be seeing too much happening on the stocks right now, but it's all over, and I think it's worth being highlighted. Eli Lilly is testing a path-breaking drug to cure cholesterol, because this is not a goalie that you have every day. It's a one-shot injection. If it works, there would be no need for regular medication. It's truly path-breaking. Varsha joining in with more details. Varsha, why is this such a big deal?
Absolutely. So India may become, or rather the world may become free of cholesterol, I would say, because this injection will actually cure your cholesterol, which is being, developed by or currently tested by Eli Lilly, which is the global pharmaceutical company. Well, the company is testing a new one-time injection to reduce bad cholesterol permanently. Now, how this is going to work is it switches off a gene in the liver that makes cholesterol. And this is done once, no need for regular medicines. Results so far, well, they've tested in 35 patients with genetic high cholesterol. The cholesterol dropped by 62% at highest dose. Effect lasted for up to 18 months. Current drugs, if you see, reduce cholesterol by 50 to 60%. This drug is slightly better and long lasting. Now, why this matters is, of course, many patients stop taking regular medicines over time. This one-time treatment can avoid that problem. Talking about the safety, earlier version had liver issues. New version, which is being developed, looks safer so far with better delivery. Now, this is for, of course, mainly younger patients with lifelong high cholesterol. Older patients may still use regular medicines. What's the next step? Well, Eli Lilly plans next big trials this year. Now, talking about the impact of on Indian company, because that's where investors are interested. So currently, no impact as of now. Why? Because this will take at least 5 to 6 years for US FDA to approve, and once approved, this will be priced very expensive. I mean, analyst or street is expecting $50,000 of that injection. Why? Because the cost of manufacturing is also high, and this is just a one-time injection. You don't need to take again and again, and hence that expensive price that we may see. Also, this is a cure and not treatment. But US FDA, is cautious when it comes to these things, considering this will change your genes, and hence this will take 5 to 6 years. But yes, a path-breaking drug, I would say.
Yeah, no, it's a big deal. It's a big deal, and this is not something where you might see stock impact right now, but can change lives. Avinash, just a quick word before we wrap up your session and get to our corporate conversations. We have some very exciting corporate conversations coming up next. But on the direction for the market, and what would be one big idea you would look at the way the markets have opened today?
I think, Tamanna, clearly the markets are going to remain range bound, and I think largely stock specific. I think, something which we like from the mid cap space is a company called Diamond Power. The company came with a very strong set of numbers. I think, the financial year FY27 is going to be much better. Sitting on an order book of almost 2,000 to 3,000 crores. And I think within the power and cable industry, this is a very strong player which has emerged in the last 2 to 3 quarters. So I think clearly a 60 crore profit in one quarter clearly indicates the kind of traction the company has recorded. So I would not be surprised that this mid cap stock could actually get re-rated significantly over the next, let's say, 12 to 15 months.
Okay, some interesting calls over there. Kush, what is your big call? And you have received your coffee, as you can see, and as promised. What is your big call after the opening session?
My big call is I'm going to enjoy this coffee. My early weekend has started. So
you have to tell something for the viewer.
Promise delivered. I am telling it for the viewers.
Early weekend, we are here back Friday, no?
हाँ तो ठीक है ना एक दिन तो ज़्यादा मिल गया. See, there's someone else behind the camera raising his coffee. Thank you so much, Tamanna, for this. Like I said, promise delivered. No, but I will go stock specific. Index not doing much. That's a good thing. That's not a bad thing. And it's respecting a lot of these support zones. Even the Bank Nifty supporting, looking at this 54,600, 54,500 support zone. Nifty also 23,800 being respected. So I'll take this as long as it gives that permission for the rest of the market and the stocks, to fly the way they are. So focus on stocks, index, let them consolidate.
Okay. Chandan, what about you? Your big call after the opening session?
Yeah, so recommended so many ideas and most of the stocks are really doing well. If you ask me the first one, I'll focus on CZ Power, one of the strongest counter, all set to head towards new all-time high or almost trading at all-time high. It surpassed 2024 high of 874. So now 874 will be support for next move towards 930, 940.
Okay, thank you so much, Chandan, for speaking with us today. Avinash, have a great day. Kush, you too, have a really good day. Let me go across now to Shivam, who's joining in to set up the next conversation. It's a big development for MobiKwik, and we'll be speaking with the management in just a bit. But MobiKwik is accelerating its offline merchant payments push after securing an RBI approval for a payment aggregator license. The company is targeting aggressive growth across small businesses, organized retail and fuel outlets over the next year. Shivam is joining in with why this is significant for the company. Shivam.
Well, yes, MobiKwik has received approval from RBI for its offline license for its offline payment merchant business. Now, the company is targeting a growth of around 10 times in its merchant payment business. Now, the three segments that the company has identified are the small businesses, oil and gas outlets, and organized retail. And the company targets to expand its market share in all these three segments over the period of 18 to 24 months. Now, the company also aims to significantly ramp up the Soundbox and EDC deployments, as the company believes the offline merchant payments is a large and under-penetrated opportunity. In terms of outlook, the company has given for FY28 is that the company is targeting 10 times gross merchandise value ambition by FY28. And in terms of UPI transactions, the company is targeting around 4 times the transaction growth over the next 2 years. And also the company is looking forward to scaling up the core operations and few growth engines such as offline and online merchant acquiring, lending through its NBFC arm, and AI powering remains in key focus.
Okay, Shivam, thank you so much for that. Upasana Taku with us, co-founder, CFO and executive director at MobiKwik. Upasana, thank you so much for coming in, speaking to us exclusively this morning. Just tell us why this is such a big deal. How does this payment aggregator license push and propel your strategy further?
Yeah, hi. Thank you so much for having me here today. I think that we've been talking about earlier in our earnings for Q4, that we want to increase the pace at which we expand in the merchant payments business. Merchant payments business specifically in terms of physical offline merchants, which of course consists of small businesses, kirana stores, petrol pumps, oil and gas outlets, and also some amount of regional organized chains. Now, this business is something that we've been developing for the last 1 or 2 years, but this license is actually required if you want to do your own acquiring for these merchants, as in you want to go and acquire the merchant and either deploy a QR, Soundbox or EDC. This license did not used to exist before. It has come into the play in the last couple of years itself. And, we had also made an application for this business. I think our vision is very simple. We want to build merchant payments as a pillar of growth for MobiKwik. We are already very strong in consumer payments, which delivers 75% of the revenue of the company. We also have a lending credit distribution business, which delivers 25% of the revenue of the company. Our aim is that this merchant payments business can also become a sizable vertical in the next 2 years, which is why we have said that we aim to scale this merchant business in terms of revenues, 10x in financial year 27 and 28 combined. And our main aim is to get to the under-penetrated, markets, which are outside of the key urban centers, the big cities. And I think this license really strengthens our ability to do that and sets the right foundation for us to scale in a consistent manner so that it can compound for long term.
Got it. Okay. Upasana, how does, in some sense, good morning, this is Neeraj here. How does this shape up? Because I think in the past when we've spoken, there have been times or two wherein you've spoken about how a development or two that has happened has actually been a landmark development and much more important for MobiKwik than what the markets realize. Could you tell us, therefore, what is or how do the next 6 months look from a development perspective and events perspective, and what it does to what is the impact that it has on the underlying growth trajectory for MobiKwik?
No, absolutely. I think that, regardless of how people perceive it, I'm a fintech entrepreneur and have been building this for the last 17 years. I can tell you that every license that is approved or granted by a regulator in India is an extremely important milestone in the development of any fintech company. So to that extent, we are very grateful that RBI has been reposing faith in us, and it also definitely sets the tone in terms of the governance standards and the compliance standards of the company. I'm also happy to inform you that from last April till now, this is the fourth license that the company has received. April last year, we received the payment aggregator online, which is for e-commerce merchant acquiring, which is the payment gateway business. Then we received the broking license, sometime in July. I think just few weeks ago, we received the NBFC license, and now we have received the PA physical license. So it is definitely a big shot in the arm in terms of the ability to be dependent on your own license and not be dependent on anybody else to expand this business. It validates the progress that we have already made in building the right foundation of this business. See, what happens is that when you want to scale this business, people look for credibility. So if I want to tie up with a large oil outlet, whether it is Indian Oil or a BP or HP, they definitely want a licensed and regulated entity to partner with them. If I want to go to any large merchant, and let's say, I'm just saying hypothetically, go to a chain of coffee shops or a large chain of pharmacy, which is a pan-India chain, they definitely want to make sure that, hey, do you have the licenses and everything that is required to scale this long term? Because nobody wants to partner for 6 months or 1 year. And to that extent, this is a massive shot in the arm. It will allow us to scale up our merchant acquiring in a big way. We do expect that we will deploy 5x, 6x device deployments in terms of Soundbox and EDC. And also from a revenue and monetization perspective, let me be very brutally honest. Consumer payments consists of wallet, UPI, and bill payments, out of which UPI is the largest payment method, but it derives zero MDR. So merchant payment as a category is very strong. There is rental income from the devices, there is MDR income, and of course there is the merchant credit income that follows.
Okay, so Upasana, help us understand, two-part question I have over here. The first bit is when you talk about execution and unit economics over here, because there will be a customer acquisition cost for deploying any of these sound boxes, the EDC machines, specifically when it comes to tier 2, tier 3. So what is that going to look like going ahead, number one, and the kind of payback period that you're looking at on this aspect? Then I will take the next question with you.
No, absolutely. See, as part of our IPO back in December 24, we had raised a substantial amount of money for device deployment, and we still have most of that capital available, because we have not yet done those deployments. We were also waiting eagerly to get the final license here before we expand heavily. I think that the manpower cost in terms of reaching parts of every city and state, and especially like you mentioned, our focus is the tier 2, tier 3 market, which are completely underpenetrated right now. So it does cost. It's a few hundred rupees. We've not given the merchant acquisition cost as a quarterly disclosure yet, but in the upcoming quarters, you should expect we will give more disclosures on this business. But typically the device rental as well as the MDR from CC on UPI transactions or RuPay credit card transactions and in EDC all card transactions are able to suffice in terms of contribution level profitability. But of course, the scale up and then further monetization from giving merchant credit to some of these merchants, is really the icing on the cake and delivers very good margins. And to that extent, we have already publicly disclosed in our Q4 earnings that we expect that the business will take almost 18 to 24 months to scale up to a 10x level. And in this time frame, it will also break even. So the way we go at it is very systematic. When we enter a state or a zone, it takes us few months to do the heavy deployment and engagement. And I think within 6 to 8 months of that, those sectors start becoming break even for us. And we intend to replicate this over and over. And on a pan-India and overall category level, we do expect that when it comes to March 28, not only will this be a sizable business in our pie, but it will also be a profitable
business. Okay, Upasana, it will be sizable, it will be profitable, multiple licenses that you've got. You're talking about a payment aggregator now, which is physical. Online came in the past. You've got an NBFC license also, which was in April. Another, I think a small bank license also, which is, the license has not come in, but the approval to apply, I think, has come in, right? If I'm not mistaken. And you had a stockbroking registration as well. So licenses are in place. The question is, when does this translate into revenues? When does this translate into profitability? Because that's what investors want to know.
No, absolutely. We are gunning for growth. And in India, fintech is heavily regulated. Setting the right foundation is what will give us long-term compounding, and therefore will give our investors long-term compounding. I think you should expect growth from MobiKwik in FY27 and 28 both. We have committed that we will intend to be profitable at the bottom line level as we grow through this and build out these businesses in 27. The major reaping of the benefits of these investments will deliver in FY28. So the profitability should go up in FY28. FY27, because our core businesses will be generating margin and we will be burning money in building these new businesses. So while we intend to be profitable, the profitability might be much lower in percentage as compared to FY28, when these businesses would have delivered, and the investments that we are doing this year will definitely start showing up by the 18 to 24 mark, which is by the time we are in the second half of FY28, the profitability gains should go up significantly.
No, so Upasana, 4 licenses that you talked about, and that's very heartening. You talked about investments. Can we put some numbers to these points that you're making? What is the kind of investments you need right now to make the most of these licenses that you've got? How are you funding them? And if we can get as many specifics as possible, when you're saying that you will see profitability coming in by FY28, what is that looking like to you? What is it looking like on the top line?
So firstly, Tamanna, we are profitable in Q3, Q4 already, both at EBITDA and PAT level.
Agreed. I'm talking about the additional tailwind that you're getting from all of these licenses.
Yeah, absolutely. So I think firstly, I want to say that I won't expect anything from the build out of the broking business, because that business will just literally launch by the end of this year. So my expectation from that will be pretty low. That we'll start seeing some impact in FY28. Now coming to both the payment licenses, the payment aggregator online, which we received earlier last year, and this payment aggregator physical, both of these businesses, we are gunning for 10x revenue growth. So if we are doing X crores per month right now in single digits, we are definitely expecting double-digit revenue from both of these verticals. And they will therefore directly impact the revenue as well as the bottom line of the company. Our intention is that merchant payments itself should become 20 to 30% of the revenue pie of the company very soon in the next few years. So that's what I can tell you. Currently, it would be sub 5%. It would be very small, maybe single digits, even less than 5%. In terms of lending, now lending is an established business of the company in the digital credit distribution. And here, we will benefit from the NBFC license substantially. But first, there is a lag time, because first we have to move it, which we are literally doing. We are moving it to a wholly owned subsidiary of MobiKwik, the credit distribution business. We already have capital for all of these businesses. For the payment aggregation business, we've already taken money in our use of proceeds. For the merchant payments device, we've already taken money in our use of proceeds, and we are sitting on 424 crores of cash as of end of March. So we have all the capital available to make these investments. We are expecting FY27 uptake in revenue and profitability.
Perfect.
We are expecting more uptake in revenue in FY28 and stronger profitability in FY28.
Wishing you all the best for that and more, Upasana. Thanks so much for taking the time out and being with us today.
Thank you so much.
All right, from one important conversation to another really important conversation with Saurabh Gupta of Dixon. Now, before we get in, Saurabh, let's get in my colleague Puneet to set up the conversation for us. Puneet.
Thanks for that. Just 4 key points, in terms of the conversation. One, of course, has been the memory chip prices, which have been increased dramatically, how the company is navigating those. Point number 2, on volume guidance for FY27, the company did 32 million smartphones in FY26 and has guided for a flat volume growth, essentially. The growth will be driven by value because of higher memory prices. So that will be point number 2 in terms of discussion of how that navigates through. And this volume guidance is excluding Vivo. So a flat volume guidance for FY27 is something to watch. Third will be on mobile PLI that got ended on March 31st of 2026. That was PLI 1.0. 2.0 is something that the management has also spoken about. A big export opportunity is expected, but nothing yet from the government on that. And the fourth key point is on Vivo. The JV was announced on 15 December 2024. Approvals are still awaited, and management had guided for the deal being very close post quarter 4. So these key 4 talking points at this point of time from this conversation.
Well, thanks, Puneet, for that. Let's get in. Saurabh Gupta, IDN Group CEO, CFO, Dixon Technologies, of course, director on the board as well. Saurabh, great having you, as always. Thanks so much for taking the time out. We didn't get a chance to talk to you on your numbers, but before we do that, your sector and your business in particular, by you guys being in a leadership position, are always in news. Let's try and peel them off and try and understand one news after the other. First, the PLI scheme, right, nearing an end. Is there a sense that the next one could be could happen without there being a gap between the ending period and the benefits accruing to companies like yours? 2, could the PLI come to brand owners, not necessarily to back-end manufacturers? What's happening out there?
Yeah, good morning, Neeraj. Thanks for having me. Absolutely, Neeraj. We feel that the PLI 2 should definitely come in. We are very closely engaged with the government. Government is working on PLI 2 because clearly mobile PLI has been a big success for the government. From a net importer of mobile phones in 2014, India started exporting almost $30 billion plus mobile phones. And we feel that should definitely come in. We feel that it should be linked largely to exports and localization. One has to see the final guidelines as and when it comes out. Not sure about exact contours of what the guidelines would be, but we feel that it should come out and it should be retrospective. It should be prospective, not retrospective. So there will be a gap between the sunset of the earlier PLI and the new PLI.
Okay, so Saurabh, what happens in such a scenario? I mean, again, one hopes that it comes in sooner rather than later. But if there is a gap and if it is prospective and not retrospective, what does it do to players like you versus smaller players who are trying to gain that market share at cutthroat prices? Is there a market share shift in that interim? And even if there is a market share shift, is that a perma shift, or do you believe that somebody who's lost out may be able to recoup that market share once the PLI benefits accrue to them, if they do?
No, Neeraj, I think so. We have maintained our market share. So if you look at this year, because of this memory price inflation and the shortage of memories, which has been there for the last 6 months, and we feel that scenario should continue for some more time because a lot of these memories are getting allocated to AI-based applications. So despite a lot of this reports projecting a 13 to 15% drop in smartphones this year, we are still maintaining an outlook whereby we are maintaining a flat growth. So 33 million smartphones is what we did in 25-26, and we are maintaining a similar number despite the contraction in the industry volumes. So we have 5 deep relationships, anchored relationships with 5 of the largest brands, and we are working towards it, not only sustaining that numbers, we are working with them to increase our numbers with them. We're also working with some more addition of volumes for some large brands, some more ODMs. And we feel that as and when the PLI comes in, there can be an upside of anywhere between 3 to 5 million volumes, which will happen on the smartphone volume, on the export volumes. So clearly, we feel that if you are able to maintain even a flat volume at a much higher selling price, clearly we feel that we have done a good job.
Saurabh, hi, good morning. Tamanna here. What's happening with Vivo? Any visibility there? It's sort of, sort of when we speak to you, sort of striking off all the laundry list because there's so much anticipation and waiting with all of the things you have up in the air. So people want to know where all of those things have landed. So So let me ask you about Vivo. What's happening there?
Yeah, Vivo definitely has been delayed much beyond our expectations. You're absolutely right. Your colleague mentioned that we had mentioned previously it should come in soon. So Tamanna, we still maintain that stance that there is no bottleneck as such. Government is absolutely, we are very deeply engaged with the government, and we still maintain that it should come in soon. And because that's because there is no bottleneck as such, there is no, and all those things have been well settled and agreed with the government. So my sense is it should come in soon.
So, I mean, that is always a hope, and it could or it could not. We don't know. Just want to understand what is the impact that you will see of potential delays and further delays in Vivo being tied up. Because if all had gone as per the plan and as per the timeline, the Vivo opportunity coming in right now, even as PLI scheme and this version of it is ending, would have been ideal, isn't it? So what is the impact that you will see of this delay?
Yeah, as part of the understanding with them, so Vivo is the number one smartphone player in India. They do almost 37 million smartphones out of the 153 million smartphone market. And our understanding with them is the JV that will be formed, almost 67% of the volume should be transferred to the JV. So on an annualized basis, we were looking at a volume of closer to 22 odd million with a much better selling price as compared to the selling price that we have for our existing portfolio. So clearly assuming that it comes in couple of weeks, months, and then we'll take another 45 days to consummate this transaction. So we will have a proportionate impact of those volumes for this financial year. But on an annualized basis, yeah, it should give us almost 25-30,000 crore revenues, which will possibly happen in next financial year.
Okay, Saurabh, just a quick clarification here now. You're saying that the volume will pick up in terms of FY27, and if you have to look at ex-Vivo volume growth, what will that look like in terms of FY27, taking the assumption Vivo is not on the cards right now? Once it comes in, we will see that addition coming in. What will those two numbers look like?
Yeah, so the numbers, as I mentioned, should be on the lower side, should be closer to 33 million, which is flat. Okay. And on the upper side, we feel 37 million, which will potentially get triggered once the PLI 2 comes in, because PLI 2 we understand will be largely linked to exports and localization. So we feel that with some of our anchor customers, we can look at getting those additional volumes for exports. So this should be the number 33 to 37 million. But I feel that the selling prices should be at least 12-15% higher, mainly because of the memory prices going up, and memory prices now constitute almost 20% plus value of the overall bill of material.
Okay, and overall, Saurabh, the other aspect over here is, will there be a change in terms of pricing strategy as well with the clients? Because as Neeraj was mentioning, you have a lot of smaller players who are coming in. We have seen the market share erosion that has happened for a Dixon as well. I think from a 37%, it's come down to 30 to 33%. So is there a strategy shift on the pricing front, number one, with the clients? And two, in terms of the inflation that the semicon industry is facing, the inflation that is coming in over there, what happens on that front? Because both of them are like a double whammy.
Yeah, so this is a prescriptive business for us. So any change in the price of commodities are passed through to the customers. As I mentioned, the revenues go automatically. The margin can optically reflect lower because we get a per piece kind of a conversion charge, or MVA, which we call in our industry. So the margins can optically marginally look lower because of the increased selling price. But we feel that Dixon, being the largest player in this EMS industry, the mobile phone industry, we have the largest capacities. We have a great team, and we have of course, we are now increasingly putting more money and investments in the backward integration strategy of our displays and camera modules, which again enhances our stickiness with the consumers. So we feel that as compared to the competitors, we are far more frugal in our cost structures, and we have been able to maintain our market share, except for something. And we feel that this year we should be able to take our market share up. So we are not worried about the competitive intensity. Of course, competitive intensity is almost is most welcome in any business. But clearly we feel that we should always continue to take higher share of wallet from our existing customers.
Saurabh, one of the beliefs, and because you mentioned backward integration, one of the beliefs is that the backward integration could actually, after this 1 or 2 or 3 quarters period, would actually boost margins for you. So if FY27 margins may come off optically or otherwise, would you believe FY28 to be a year wherein actually there could be a margin recoupment or a margin outperformance?
Yeah, absolutely, Neeraj. So clearly, both this play on camera modules as well as display. Camera modules already will get ramped up by Q3 of this financial year. Display should start from Q4, and then the ramp up should happen from Q1 of next financial year. So next year, Neeraj, we feel confident that we can expand the margins by 50 to 70 basis points from FY 25-26 level, which had a PLI element included as well. So we feel absolutely confident about it. And not only in mobile phones, also in IT hardware, we are focusing on displays, we are focusing on SSDs, power supplies there. That also will have a positive impact on our IT hardware business margins as well.
Just one last point, Saurabh, is about the EMS opportunity. And I think this is something, and actually appreciate that it was a very honest commentary coming in from the management that was a bit of a missed opportunity on EMS. How do you aim to recoup? Because the volumes on the mobile handset business are there, it'll come in with Vivo, but how do you now recoup some of those, I would say, dark spots in opportunities in the larger space?
So what we are doing, we are putting up an infrastructure for that. We have already had a very senior person on that from the industry. We are working with a global consultant. So the idea is to work on this high-end specialty EMS business, which includes your aerospace, defense, space, medical, and the precision components. So we are evaluating some M&A opportunities there. We are also working on some JVs partnerships there. So clearly we feel that we are working towards it, and we feel strongly about it that in next couple of years we can scale up this business, and this business of course will come at a much higher margins for us. Our balance sheet is in a much better shape. We're sitting with a good cash balance. So clearly we feel that we can deploy that cash balance to get into these opportunities.
Sort of a question I have again on the backward integration that Neeraj spoke about is, now the display plant trials, which I'm not mistaken, are slated for June 2026, and there is a Press Note 3 approval which is on the cards as well. So with this, in terms of the display plant trials, what's the kind of margin benefits that you're seeing, and do you think post the trials that integration will happen immediately and start benefiting from FY27 onwards?
Yeah, so that display business for us has been delayed. So as against June 26, now we are looking at a trials in Q3, and the production should happen in Q4 of this fiscal year, and then the ramp up should happen by next financial year. So we feel that the display full impact should come in 28-29, but 50 to 60% of that impact should start reflecting in 27-28. As far as the camera modules is concerned, that would largely get reflected from 27-28. So full year impact should start coming from 28-29 is what we feel.
Okay, and lastly, in terms of the non-mobile segments, Saurabh, I know 90% of your revenues do come in from the mobile segment, but that scale in terms of, say, IT hardware and laptops, your washing machines and consumer electronics, how big a business is the plan? What's the plan in terms of scaling this? And do you think it could start garnering a larger chunk of the revenue pie or the profitability pie over 3 to 4 years from now?
Yes, so apart from mobile phones, which contribute 70% to our business, IT hardware, last year we closed at somewhere closer to 1,500 odd crores. We have acquired all the large 4 marquee brands who have a 60-65% market share in India. And clearly we are looking at almost a 3x growth this year. And we feel in the next couple of years, IT hardware can potentially become a $1 billion plus kind of an opportunity for us. So after mobiles, that should be the second largest trigger for our growth. Also, and then it will be linked and it will be focused more on the backward integration as well, which will help us expansion margins. Our telecom business, which is a JV with Bharti Airtel, has in the last couple of years has increased from 700 crores to last year we closed at closer to 5,500 crores, and this year we are already looking at a 7,500-8,000 crores. So that business also continues to do well. We continue to do more volumes for Bharti Airtel, and increasingly we are now moving to beyond Airtel and beyond the CP products that we do for Bharti Airtel. So that business also continue to do well and will continue to show a double-digit growth for us. As far as the other business is concerned, refrigerator, washing machines, lighting, again we are significantly expanding the product portfolio, getting into more premium products, focusing more on backward integration. So all those businesses will also witness a double-digit growth with expansion in margins.
Okay. All right. A strong track record for this company, for Dixon, and a lot of it came because of the tailwind of PLI. But is that trajectory going to continue is the question. Saurabh, thank you as always for coming and taking all of our questions. We always enjoy our conversations. All right, on to the next one. This is an actually interesting story that we want to highlight. The Ministry of New and Renewable Energy has announced that there will be no blanket extension of the deadline for applicability of approved list of models and manufacturers, list 2 for solar PV cells beyond June 1st. Now, what does all of that mean? That essentially means that after June 1st, 2026, anyone who wants to import solar PV cells will have a tougher time doing it. The idea is to increase or reduce dependence of imported solar PV cells and increase opportunities for domestic makers. We're going across to Varsha first for details on this, and then we'll have a detailed conversation of what this means for various players. Varsha, take it away.
Well, no extension simply means that the solar projects will now have to use domestically approved solar cells. And why industry wanted extension before? One is because developers were of fear that shortage of domestic solar cells and concerns over high cost and project delays were also some of the factors. But government says that India wants to accelerate domestic solar manufacturing and focus remains on reducing dependence on imported solar cell, and hence this no extension. Who will be the key beneficiaries? All the modules and cells players will be the key beneficiaries, including Satvik Green also. You have Wari, Vikram and NV and Premier Energies, which will be benefited from this no extension plan by government.
Okay, Prashant Mathur, CEO of Satvik Green Energy with us, Rupesh Sankhe, Senior Vice President Research Elara Capital, who looks at this space with us. I'm going to actually go to Rupesh first to give us a broader view before I speak specifically to Prashant, so just please bear with me. Rupesh, what is the opportunity for domestic players on one hand and the pain points it will create for those who are importing these solar modules from the 1st of June with this kind of a notice?
Good morning. First of all, it's going to be good move because government has given clear signal that if you are going for backward integration, domestically manufacturing ecosystem, you will get benefit out of that. Because most of the module developers is now going into solar cells, wafer and ingot. So direction is very clear. Now coming to the demand supply dynamics, now the solar cell capacity is ALCM approved is close to 30 gigawatt, and annual tendering related to the net metering projects like PM Surya Ghar, Kusum or some sort of small open access consumers, that is going to be around 20 gigawatt on a SC level. And in the next 6 to 12 months, we can see around 20 gigawatt of capacity addition on the solar cell side. So effectively, solar cell capacity will go to close to 50-60 gigawatt. So we have a very good supply coming in on the solar cell side. But the move is very clear that the wafer ingot will also come in by June 2028. So clearly, the companies with a strong balance sheet, strong operating cash flows, who have entered into solar cell manufacturing like Wari, Premier, Vikram, MV is going to be a beneficiary in the short to medium term perspective. But over a 3 to 4 years time horizon, the supply will come in like a module capacity and margin will come under pressure. But in the near term, if you look at China, we are importing cells at a 6 cents per watt. Now the domestically cells are available at close to 11 to 12 cents. So clearly, this company will get better margins in the near term from next 1 to 2 years perspective. But from a medium to longer term perspective, margin will come under pressure. But certainly, it's a positive for equipment manufacturers.
Okay, so, equipment manufacturers, yes, it becomes a positive. Rupesh, stay with us. Let's get in Prashant Mathur, CEO at Satvik Green Energy as well. Prashant, welcome to NDTV Profit. This is Hiral on this side. My question coming to you is, we're talking about the kind of benefits that do come in on the back of the, structure that we are seeing right now by the government. For a Satvik Green Energy, what are the kind of benefits that do flow in and which segments of business that get benefited?
Yeah, good morning and happy to be on the show. So yeah, it's a very welcome step which the government has finally taken, and from 1st of June, ALMM2 is getting implemented. From a Sattvic point of view, we very much support this move. It also shows that there is a consistency in the policy. So this was announced long back, and the ministry has managed to maintain the due date of 1st of June. Satvik has been in ALMM list 1. We also are starting our cell manufacturing 6 gigawatt in two phases, 2.4 and 3.6. So the first phase is going to start very soon. And so it benefits us because, cell manufacturing is a highly capital intensive project. So, when you have this kind of a consistency, it gives us a lot of confidence to manufacturers like us that we can expect that ALMM3 is also going to be implemented in June 28. So when you have a consistency, we can manage to get our manufacturing backward integration and size of manufacturing investment. So all this couples up and really helps manufacturers, to develop the ecosystem which the ministry is also focusing on.
Prashant, so what happens for Indian manufacturers like you? Because at an earlier point of time when the US levied some additional duties, one of the companies had come in and said that for India, we are using the Indian-made modules. For US, if you are exporting to the US, you can buy the modules in a country which doesn't have such high duties, and therefore it is not subject to the Indian duty but the point of origin duties. Is the market open for both in Indian use as well as exports out there for a company like you?
Yes, the market is open for both US and India market. But if you see, US has other complications as well. There's a lot of local module manufacturing has also come up in US lately, and also there are a lot of traceability document requirements which are there in US. So India market has been quite strong lately. For last few years, it's been consistently growing. And with the current energy crisis which we see, it's a reminder that we need to quickly become energy independent, focus on building our own capabilities, and renewable energy. We have so much of abundant sun and wind energy. We should definitely capitalize on that. So if you see India market last year was about 45 gigawatt AC, which translates to about 57 gigawatt DC. Before that was about 34, 36 gigawatt. This year also we feel that it is going to be in the mid 60s, the kind of demand which is going to, and then over a period of time, AI and data center and electric vehicles, cooking is moving towards electric. So there's going to be huge demand. So for manufacturers like us, India market is our priority. And US market is definitely our second priority. It's important to focus on that market as well, but India market remains very strong now. As
Prashant, in real terms, after this comes into effect on June 2026 and users have to move their requirements domestically, what is the kind of upside it opens up for you, or the potential market size it opens up for you? And are those conversations already starting in the last couple of days?
No, it's the demand is supposed to be huge, both on the top line as well as bottom line. And for last few days, yes, the demand for Indian made cells is getting very high, and it will probably increase the prices for a short period of time. But
to what extent, Mr. Mathur? And if you can give us any specifics, we love numbers over here. So when you say demand is high, what does that mean? You say the potential is great. What does that mean? You say prices could increase by how much?
difficult to say, but as my panelist earlier was also talking, Mr. Rupesh, that there is about 30 gigawatt of solar cell capacity right now. Market, as I said, is going to be 60 gigawatt. Though there is a transition period between the domestic cell and the imported cells, so it's going to continue. And I think the primary reason of putting solar cell ALMM2 from 1st June is that the government is saying to us to scale up our solar cell manufacturing also and create the ecosystem by also setting up ingot and wafer. But
what are the timelines to scale up this manufacturing and the spends?
Yeah, so for the interim, when you have a market which is 60 gigawatt and you have cell capacity which is 30 gigawatt, you're bound to see the demand to be very high for domestically manufactured cell. So the prices, obviously project prices are also, there is a limit how much you can increase the prices, but I think the prices would increase by about at least 5 to 10%.
Is where you see the prices going up. Okay, we finally got a number out of that conversation, because mood is great, but numbers are specifics. Thank you so much for speaking with us today, Prashant and Rupesh, for coming in and explaining to us what this opportunity means. We'll take a very short break, but on the other side, we're coming back with a great conversation. Vinod Karki of ICICI Securities is going to be joining us on Talking Point. Stay tuned.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global.
All right, welcome back. Welcome back. Our markets are doing okay. Broader markets actually better, and some recovery there seen in the Nifty as well. But Vinod Karki joining in, Senior VP Equity Research at ICICI Securities. Vinod, great to have you on. We always enjoy our conversations. What are you making of the ongoing result season? Are you discounting the fact that things have changed dramatically for a lot of companies and around the world after the quarter that is being reported right now, or are you seeing some solid green shoots?
Yeah, thanks for having me on the show. I think two, three things are clearly coming out from this results season, which are in fact encouraging. One is what was expected and what the results are. So clearly there are more beats for sure. But if you look at the fundamentally, is the demand showing up in terms of volume growth, especially. The volume growth has been quite robust across manufacturing companies, and the credit growth has been quite robust overall. And the best part is that the outlook so far given by these companies, both manufacturing and the lenders, where the bulk of, see, if you see when the crisis started, what really sold off big time was financials and some of these domestic cyclicals, industrials and all. But going by how their numbers have panned out in terms of volume growth or the outlook for FY27, things look encouraging so far. Let's see. So I think I remain optimistic about the overall the growth and outlook demand. But what is also helping, I think, can help, which is kind of not looked deeply, is that we had very low inflation earlier, which was bringing down the nominal growth to 8-9% odd overall, which was reflected in earnings growth also, 8-9% thereabouts. So if we have this environment where the volume growth remains reasonable, and you get a kind of some kind of a catalyst from the inflation, nominal numbers will start looking quite robust in FY27. But this all hinges on the fact that demand doesn't collapse. So far, there are no signs that demand is collapsing.
Vinod, good morning. Hiral on this side. Demand is not collapsing. Okay, that's one part of the story. Where do you see that value? Where do you see that growth coming in from? Because that's the next thing that investors want to know, that if there is something positive in the markets from here on, if someone is positive on the markets, where should we look at?
Well, see, as I said, started my opening remarks, it's all about this crisis. The biggest drawdown was in financial companies and industrial stocks, and some of the domestic cyclical consumption stock like auto and all. So I think if you make this argument that demand is going to be reasonably okay and you're going to get some kind of a catalyst from higher inflation, which means that nominal numbers will be good, then it is very clear that opportunity has been created in these spaces where demand is going to be reasonably good. But because of this crisis, there was a big drawdown in stock prices in these areas. Rest of the market more or less remained where it was, So that's how I look at it.
Vinod, good morning, Neeraj here. What happens in that period? Because you look at cycles and multiples very closely, what happens over the course of the next 2 or 3 quarters? I'm deliberately choosing a short-term period where the outcome of the conflict is not quite known. The outcome of or the way funds will move towards the AI trade or away from it finally is also not known. So do markets like India, which at the receiving end of both sides, continue to get the bitter end of the stick, or is there a turn underway? Because already people are talking about how tokenization or using tokens is getting expensive. Can we see the anti-AI trade play out?
So this AI trade, in my view, started when the big tech in US bottomed out in 2022, when the big rate hikes, jumbo rate hikes started in the US, and some of these big tech stocks were in single-digit P, like Meta and all, at one point in time. So it's almost like 3-4 years of continuous performance, and now the Asian AI story is also taking part of in that, and some cracks have started developing on the fundamental and valuation angle on this. But it's very hard to say. I mean, if you see historically capital markets, uh, momentum when it breaks, it's very hard to say basically because these companies still if don't have any bankruptcy risks or thereabouts. The balance sheets are pretty okay that way, and they are able to raise capital. So it's very hard to time it basically. But clearly what is important to note is that the at least the US big tech may be losing steam in terms of their outperformance. So if you see every year 23, 24, 25, now this year the absolute performance of the US big tech is slowly fading away, and this year at least till some time ago the S&P 500 X tech big tech was actually doing better. So yeah. So I think clearly momentum is losing over there, and there are some fundamental cracks developing. But no one can time it perfectly. But whenever that happens, India should get some flows.
Yeah, but usually you time these things very well, which is I was hoping for an answer from you. Chalo, if you also don't have that answer, then it's fine. In which case, the other question that I have is, Vinod, in that ensuing period, what within India do you reckon has both the cycle, the multiples and the flows on its side? Which are those 2 or 3 themes?
Well, see, I think flows angle. If you see the FII flows have been something which is kind of a big problem for India's performance, especially on the financials side, large financial companies. So while the financial space, in my view, because of the Gulf crisis, there was a big drawdown in stock prices across the board. So if the crisis is not going to lead to NPAs for the lending space, and the credit growth and the NIM compression cycle is done, I think this is something which was sold down, and the outlook is better. So that clearly seems to be the one space where I think alpha can be created. And similarly, some of the other stocks and sectors which got beaten down because of the Gulf crisis, be it in some of these discretionary consumption space, auto, and some of the industrial companies, which actually will not get much impacted by this going forward. I think these are spaces where this crisis has created opportunities, in my view. So I think these are the spaces, and discretionary consumption, industrials, and financials. Notwithstanding the FII outflows in some of these areas still continue, at least the large financial space and all. So I think that these are spaces I would be more positive if this crisis slowly fades away.
Okay, so Vinod, what are the spaces that you are finding exciting right now? One thing is for sure, even when this ends, it's not a matter of if, it's a matter of when, there is going to be lessons learned, and this will include getting more self-dependent. We just had a conversation before we got you on solar modules, which will now, need to improve domestic requirements. We spoke with Dixon talking about the next leg of PLI schemes, etc. What are the themes and opportunities there that are investable today, in your view?
Absolutely. So from so we just actually released a note yesterday where post this Q4 results, companies which have given a robust capex outlook for FY27, so obviously if they are giving a robust capex outlook, obviously they see demand. So what we observed was 2-3 themes were coming out very clearly from that. One is that this, recurring geopolitical issues, right from Russia-Ukraine war, then tariffs, and now this, and something else keeps coming up. I think this has resulted in a secular demand for one, defense, second, energy reliability, and ensuring reliable supply of critical minerals, raw materials, and all. So I think these areas, which is basically power, energy, defense, and chemicals and those kind of metals, I think we have clearly seen in this quarter, the FY27, 28, and there and beyond, the capex outlook actually strengthening, getting better. And the other theme is basically the areas where capex is being, the capex has been hiked, is in areas which are autos, EVs, and some of these new age areas like data centers and semiconductors. We've heard of those projects. So I think so that chemicals and all. So I think these are the spaces where I think the growth is there clearly. Growth outlook is improving. And companies are willing to invest, going by their guidances so far during this quarter.
Thank you so much for speaking with us. We hope that enthusiasm continues. We're actually showing it on the screen right now. If you look at the improvement in the markets, there is a bit of an uptick coming in, recovery in the markets, nothing major on the Nifty, but if you see from the lows, it's definitely looking better. But that's pretty much all the time we have on India Market Open. Stay tuned for Ask Profit coming up next.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
And the award goes to
Tamanna Inamdar, Managing Editor, NDTV Profit.
Leading the newsroom, shaping the narrative, from stories to impact, a voice that matters. Tamanna Inamdar, among India's most influential, power, purpose and perspective recognized. NDTV Profit's editorial force gets industry-wide acclaim. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel.
Welcome, you're watching Ask Profit here at NDTV Profit. I'm Mahima Vachharani, and with me as always is Puneet Zaveri, and it's a very range bound trade to say the least, right? The Nifty 50 is trading just about 0.2% higher, just about an uptick of around 49 points is what we're seeing on the benchmarks. Same goes with the Bank Nifty as well, hovering around the 55,100 odd levels and just an uptick of around 0.1 odd percent. Let's try to pull up the heat map for the Nifty 50 and see as to what are the counters that are doing fairly well. It's Hindalco leading that chart up 4 odd percent, followed by Tata Steel, JSW Steel. So metal names shining in trade today. There's Eternal, which is gaining by about 2 odd percent today. Power Grid, Tata Motors, NTPC are some of the other names that are also doing fairly well, but ONGC continues to be under pressure on the back of its Q4 numbers. I think it was the gas part that did not do well for them, and exploration costs have also gone up. ITC down 2.6%, Coal India, HDFC Bank, as well as some names like HDFC Life Insurance and Max Health also under pressure. So that's with regards to where the Nifty 50 goes. Let's try to pull up the sectoral heat map and see as to what sectors are doing in trade right now. Metal, like I said, topping the chart today and shining in trade, up 2.6%. You have media, which is also doing fairly well. Realty, again, has bounced back, seeing an uptick of around 1%, and energy doing also fairly well. But oil and gas, clearly the top losing sector on today's chart. So that's with regards to where the sectors go. And the advanced decline ratio, if you can try to pull that up, because the broader end of spectrum is doing a tad bit better than where the benchmarks go. Let's try to pull up the advanced decline ratio. There you go. And that gap is widening in the favor of the bulls as we speak, Puneet, and almost a 2:1 ratio is what we're seeing.
Yeah, I think that's the one good key part as of now for the broader markets. And what's also interesting, I think that because it's a market holiday tomorrow, I think the market is just in a Friday mood. So you're not seeing any kind of moves as such which are driving the momentum today as of now. Just on the Nifty 50, though, we are up of almost 80 points in the last half an hour. So we've come up from about 23,870 odd levels and gained in the last half an hour or so. Let's see if that sustains. So you're seeing that middle of the range, build up essentially on the Nifty 50, and hence we spoke about the movers, of course, but that's not happening on the Nifty 50 in terms of the mid cap 150, the small cap 250 as well. Those are showing some signs of momentum being continuing at this point of time, and that was also visible on the advanced decline ratio. And finally, the BSE 500 as well. We are at the fag end of the earnings season, so you're not seeing so many reactions on earnings specifically, but PNG Health, Finolex Industries is one of them. Sterlite Tech just continues to be in another stratosphere of its own. Yet another upper circuit. Adani Total Gas for the second consecutive day is up 7% as well. And Delta Corp and Jindal continued their momentum as well from yesterday. Shoppers Stop up 4.8% as well. And on the losers, Polymed continues to be down for the third consecutive day post as a result. So markets not having two bits of this of the company, and this was the result at this point of time as well. But those were some of the individual movers as well. Let's now get into your stock related queries, and if you haven't already, do start sending them. You can also call us on the number that's flashing on the top of your screen. And to answer all of those queries, we're now being joined by Vaishali Parekh, Vice President Technical Research at PL Capital, and Gaurang Shah, Senior Vice President at Georgette Investments as well. Both of you, thanks so much for joining in yet again on this Wednesday morning. The first question coming on Ujjivan Small Finance Bank, and our viewer actually wants to invest into this counter at the current market price, and he's planning to buy 1,000 shares. And this is Shankar. Wants to know, a short-term view. What would you recommend here, Vaishali? Very good morning to you.
Hi, very good morning, Puneet, Mahima, Gaurang. Yes, talking about Ujjivan, I think the stock is shown good consolidation at 52 levels. So at this level, it can be a buy, and this can go, if it's a short-term view, near-term model comes at around 58. Above that, you can look for a target of 64 to 66.
That's the view coming on Ujjivan Small Finance Bank. The next one is from Ekambara, who's writing us from Hyderabad, asking about Varun Beverages. His average buying price is 540 and he's holding 300 odd shares and wants to know whether he can continue to hold, exit on rally. What's the 1 year point of view on this one? Gaurang, your view on Varun Beverages. A very good morning to you.
Thank you, Mahima, for having me on the show. Good morning to all the viewers of NDTV Profit, to Vaishali, to you and to your entire team. A small disclosure, which is mandatory, that all recommendations that I'll be sharing with you this morning on your show, Mahima, they are part of our fundamental research team recommendations from a long-term point of view. Our company, Georgette, or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we share similar investment ideas with our clients. They might have their investment interests. Good morning to Puneet as well from my side. So from a long-term point of view, we have as a disclosure, hold recommendation on Varun Beverages. And recently, I think about 2 days back, Mahima, PepsiCo extended their agreement or understanding with the Varun Beverages for another 10 years, if I'm not mistaken. I stand to be corrected if I'm wrong. And I think summer times are a time when a business for companies like Varun Beverages is looking quite strong. If I'm not mistaken, again, Mahima, there is no listed entity with whom we can compare Varun Beverages. So if you are invested from a long-term point of view, stay invested.
And yes, Gaurang, very good morning to you as well. So yes, as Gaurang has highlighted, the PepsiCo agreement going on till 2049, extended by 10 years, as he rightly highlighted as well. Let's go across and take the next question. This one's coming in from, on PG Electroplast, and continues to be a key stock, in our radar. Today as well. Priyank Ashar from Mumbai is holding 3,100 shares of the company at 521. Now, Vaishali, I think the results are expected today as well, and he wants a 6-month to a 1 year view. What would you recommend? I mean, I know you generally don't trade on the result day, but any view on the charts for the near to medium term?
Yes, so purely on chartical reading, I would say the stock is showing signs of bottoming out at 430 levels. So continue holding. Currently, it's 474. The view gets negated if it goes below 430. But for now, the way I'm seeing the candle formation today, this can give a bounce perhaps up to 550 levels, because the stock has really seen a good corrective move right from 950 levels and to now at these levels. So I think a bounce back at least up to 550 can be expected with a support of 430.
All right, so that's the view coming in on PG Electroplast. The next one is also for you, Vaishali. This is on Tamil Nadu Mercantile Bank. Our viewer has Satish Roy, by the way, has 500 shares bought at the levels of 545. He wants to know the short-term target for this one. Your view, Vaishali?
Just a minute, I'll just have a seat. Look.
Yeah.
So it is 682. I think the stock is quite in a trend. It should continue to do so. So near-term support lies at 660, and once we see the stock goes above 700 odd levels, this can go towards 760 to 800. So for now, it is a positive view. Continue holding with a trailing stop loss.
Got the view, Vaishali, but let's go across to our first call for today, and this one's coming in from Bengaluru. Suhas has a stock query for us. Suhas, very good morning to you. Welcome to Ask Profit. What's your query?
Yeah, very good morning. I hold 278 Karnataka Bank shares.
Okay.
Recently, I had booked around profit for 200 shares. Total quantity I was holding was 478.
Okay.
So right now, my query is whether should I book profit or can I get 300 rupees in the near term? And I saw like the RSI on monthly, weekly, and on daily basis, it is above 60. So just wanted to check in the near term, can I see it reaching 300 rupees?
Got that question, Suhas, and firstly, many congratulations. Bought at a very attractive price, so just 73. But Vaishali, what would you recommend on Karnataka Bank? Because he books some profit at the current market levels. Is 300 on the cards?
Quite likely so, because of course rule out the in-between whipsaws. But right now, the way I'm looking at it, it's on a verge of a weekly chart breakout. So this previous high, what we are looking at is 290, 285, 290. So if it moves past that and sustains, then I think we are looking at 300 plus. So continue holding and look for higher targets.
All right, okay. The next one that we have is on Torrent Power. Our viewer wants to invest, Rishabh wants to invest around 50,000 rupees in this one from a 3-year perspective. Gaurang, would you suggest that?
Well, Mahima, to be very honest, power is something that I'm extremely excited about. And so is our fundamental research team. And the policies that have taken place by the government in the past, present, and likely future, my sense is that power generation is going to be in the spotlight for all the good reasons for a couple of years to come by. That's purely because of the new capacities that are coming up and the power demand that is going up on an annual basis. Extremely positive on Torrent Power. Start at current levels and add on dips would be the strategy.
All right, okay. So that's the view coming in on Torrent Power. I think we've got Anjali calling us from Bengaluru. Anjali, a very good morning to you. What's your query about?
Yeah, very good morning to all of you, ma'am. Thanks for taking my queries. I'm having the 100 quantity Pidilite at the 1370 average. So what is the, I'm holding from almost more than a year. Okay, so what is the target for short term and long term? What is the view on, I wanted to check with Vaishali, ma'am.
Okay, all right, Anjali, got your question. I'll take this up with Vaishali. Then Vaishali, what are the charts suggesting for Pidilite? Overall, fundamentally, this company, despite of macro levels impacting the entire space, has done very well. But in terms of where the charts go, what are the charts indicating?
So the stock has really got into a trend right from 1260 to now 1470 levels. I think now the near-term support lies at 1420, and once the stock gets into new round of momentum, going above 1500 levels, this can give you a target of 1600 plus. So in my opinion, continue holding. You may get good returns because in spite of all the choppiness and all the, I think this also is got to do with crude. So in spite of all the high crude etc., it has sustained. I think it should do well even in times to come.
Got it. Well, thanks so much for the view, Vaishali. But let's go across, take another caller now from Andhra Pradesh. And Man Singh has a stock query for us. Man Singh, very good morning to you. Welcome to the show. What's your query?
Good morning, sir. I'm holding Techno Electric Engineering 80 shares at average price 1200 rupees. Should I stay continue to stay in this stock, or I book profit, book the loss and shift to Jay Bharat Maruti? Recently it posted good results.
Right. Well,
I want a long term from Gaurang, sir.
Got it. Well, of course, tough results there, Gaurang, for Techno Electric. I think stock was down 10%, another 6% today. But even if you don't have coverage, if you by any chance saw the stock, anything that you like from that space?
Well, so thank you so much for asking the question, Man Singh. And well, you're right, Puneet, we don't have coverage on Techno Electric. Numbers were very disappointing. And of course, the question that he has asked is whether he can book his losses and move on to something else. He named one particular company again on which we don't have coverage, so I won't advise that. But if he's open to looking at alternative investment ideas in different sectors, then I can share a couple of them. First one would be from the entire BFSI segment. State Bank of India corrected to about 960 levels currently. post the numbers because there was some disappointment on one or two fronts. So this correction, I view it as a huge buying opportunity from a long-term point of view. As a disclosure, we have positive coverage on State Bank of India. A conservative target, if I can put across right now, it will be about 1250, Puneet. If the numbers are better in the coming quarters, these targets would get revised upwards. So this is the first investment idea. Second one would be from the defense pack, Bharat Electronics Limited. I think the stock is consolidating very strongly between 400 and 430, 440 odd levels. Huge investment opportunity again over here, given the kind of correction. Order book, as we all know, Puneet, is very strong. So is the capability and capacity in terms of execution. And the third investment idea, if I will, from the cement pack would be Dalmia Bharat. Again, consumption of cement is likely to go up, and so is the possibility of cement back prices. So these are the three different sectors and investment ideas. You can pick any one.
Okay, all right. So that's the view coming in on all of these counters suggested by Gaurang. But it's time to take a look at the F&O space, and we have Sharat joining by to give us a perspective on what's happening there. Sharat?
Well, that's a pretty interesting take coming in. A little bit of, you could say, the markets are at that flattish levels. And remember, this is the start of the new June series as well. And today is a Sensex monthly expiry as well. But net, the technical setup is still stronger. If you have a look at it, look at Tata Steel, Power Grid. That's where a good momentum is coming in. Largely a very narrow range bound of movement, but Reliance not giving that support. It's still slightly, you could say flattish on the red side. But ITC and HDFC Bank, that is where that kind of a sell-off is happening, and that's kind of neutralizing the up move which was expected, in these benchmark indices. But net, let's see what the stock-specific moves are happening, which should be on your radar. Long build-up. Let's get those stocks in as well. We have CG Power, interesting in tube investments. I could say Murugappa Group is actually doing well. A very strong rollover data was also there. We had highlighted it yesterday itself, and today we're seeing a fresh positions coming in. Stock is up 4% as well. Apart from this, short covering, we have Motilal Oswal. Interestingly, capital market theme stocks are picking up, and Siemens. Of course, a lot of sell-off already happened before the earnings, so little bit of new positions are coming in this counter as well. Let's focus on the other stocks. This includes the long unwinding names. LIC is there. I've down around 2% and Max Financial also. So largely adjustments which are happening on the trade. Nothing much to do about it. And also for short build-up, ONGC starts again, and of course the street is fearing that there might be a lower crude prices as we move ahead. And Coal India also, some positions are getting reversed. There was a good up move in the last series. So these are the stocks, and remember, fresh positions are being added in the F&O segments.
Thank you so much for getting us those details. By that time, Chaitra, I think, is waiting by. Chaitra, a very good morning to you. What's your query about?
Yeah, good morning, ma'am. I'm having HEG at 200 quantity at 540 average.
Okay.
What is the long term and short term view on this? Shall I average if I want to add further?
So
yeah, ma'am.
So did you see the charts while buying this, Chaitra?
Yeah, ma'am.
Okay, all right. Then I take this up with Vaishali. Vaishali, HEG is the counter that she's talking about. She's bought at the levels of 540. What would you suggest?
It's consolidating right now. So I think if you want to average out 560, 540 would be a good level to start accumulating. And if you're looking for a long-term view, I think the stock is poised for a target of 750 or so. So yes, view is positive. Averaging out would be 540, 556, 560 levels.
Got that view, Vaishali. But let's go across, take another question from Rajesh Maheshwari from Indore, who's a regular viewer of the show. And he's been asking us a couple of times on Ola Electric. He's been holding 1,400 shares at 49, so currently sitting on a loss, and asking if in the current sense of things, does it make sense to stay invested? Gaurang, not sure if you have coverage on Ola Electric, but the recent up move, I think from 22 to 40 odd, and then just a small reversal from there. We put in that perspective yesterday on the show that there has been revival in volumes in Q1, but it's still early trends. And I don't know if you have coverage, but how do you view the current up move in the EV landscape, especially in the two-wheeler space? Is it as good as your pocket square as of now? How would you recommend that?
So, Puneet, we don't have coverage standalone on Ola Electric, but when the IPO was there, we had come out with the IPO note. And in that, we had given a subscriber recommendation. IPO, I believe, Puneet, was at about 76. Stock went up to, I think, what, 140, 150, and then all the way down to 22 sub the IPO price. And a lot of traders and investors have burned their finger. In fact, they've got an electric shock getting into Ola Electric. To answer your question, in the two-wheeler EV space, are there better players? So I strongly believe that there are much better established players compared to Ola Electric, likes of Bajaj Auto, likes of TVS Motors, likes of Hero MotoCorp, and of course, the recently EV two-wheeler launched by Eicher Motors, that is Royal Enfield. So these are investment ideas. Ola Electric, the problem is, first of all, the commentary from the management. Second is huge number of pile of consumer complaints of their vehicle going into the service center and not coming back. We have heard a lot of stories about Ola scooters, electric scooters being set on fire, etc., etc. And there is too much of overcrowding in this particular counter. If you ask me, as an investment idea in electric two-wheeler theme, the names that I've mentioned are fairly better placed from a long-term point of view. No specific comments on Ola Electric since we don't have coverage.
Okay, all right. So that's the view coming in on the entire auto space as well as Ola. The next one that we have is from Satyan. He's asking about KC International. What he's saying is that he bought this counter considering that it was getting a lot of orders, and he bought it more than a year ago at 680. It went up to 940, but he did not sell considering the order inflow and whatever advice that he got. But he's saying that now it's still getting orders, but it's come down to that 505 level. What should he do next? Continue to hold? Gaurang, any view on this one?
Firstly, the advice is that you invest into stock market, Mahima, because you want to earn profits on it. And when you're getting those profits compared to what your expectation is, I think it is prudent to book profits, because if you having greed, then that greed is not going to let you book profits at any point of time or at any levels. Having said that, we have a positive coverage on KC International. We have an accumulated stance. He got in at 680, if I heard that right. Currently, the stock is trading at about 500, 505. If he has investable amount, I think it would be a very prudent and a must strategy to average at current levels in case if he wants to make a profitable exit, because our targets are somewhere close to about 700. So averaging would make sense, and at the same time booking profits regularly also makes a lot of sense.
Got that view. And the company also, as a group, RPG Group, had the investor day yesterday where some commentary was strong on KAC. They're seeing some good commentary on transmission and distribution in terms of order book, but remains mixed on the other vehicles, other verticals essentially like railways. Civil is okay. So that's Gaurang's also view coming in on KC. Satyan, hopefully that answers your question. But viewers, time now for the rapid fire round in this edition of Fast Profit. Vaishali as well as Gaurang, you know the drill. First question, coming in now. This one's from Sunita on MTAR Tech. She's holding 25 shares of the company, and she bought it way back in 2023. So must be in, stupendous gains at this point of time. Is it a good time to book profits, Vaishali, from this one?
Yes, I would suggest book partial profit.
Okay, the next one is on Coal India. Sahil from Haryana wants to purchase 1,000 shares at the current market price for the next 6 to 9 months. Is that advisable, Vaishali?
Yes. Buy now.
Got it. Any short-term targets, Vaishali, on V2 retail? Our viewers bought shares at 210. What do the charts suggest?
So V2 retail currently 235. It would see a resistance at 250. So that is a short-term target.
Okay. Is this a good time to accumulate RFC, Gaurang?
Well, I will give it a pass. We don't have coverage, Mahima.
Okay, Vaishali, quick me on the charts.
Calculated risk, stop loss of 95.
Tanuka from Kolkata is holding BEL at 397. Gaurang, her question being if she can start a SIP for the next 18 months in this counter.
Make it a longish time horizon, Puneet, because defense is the long gestation period. We have positive coverage. Yes, you can add to it.
Okay, the next one is coming in from Srinivasa Reddy from Hyderabad asking about Sarda Energy. He's bought around 100 shares at the level of 620. Continue to hold, add more, Vaishali?
Add more.
Sharda Cropchem Vaishali bought at 1193 by Soumya from Bengaluru, asking if she should average, currently sitting on a loss right now.
Average with stop loss 850.
Okay, the next one is on Piramal Pharma. Akash has bought 200 shares at the levels of 230. Continue to hold for the next 2 years, Gaurang?
A strong player, Mahima, no specific comments.
Next question, that's coming in now. It's from Sriram Raghuruman on Jayaprakash Ventures bought at 7.5. And the reason we're taking this query, he's been holding on for the last 4 years. Vaishali, anything that you would suggest is on the charts?
Well, I'm not tracking this.
Okay, Shipping Corporation of India is the next one. Our viewer Raja from Chennai has bought 19 shares at levels of 218. Continue to hold, book profits. Vaishali, from a short-term perspective?
Hold.
Himanshu has a query on NMDC. Gaurang bought at 81 rupees per share, and he wants to know a 5-year view. If it's a good time to accumulate and hold that for that long term, would you recommend that?
So 5 years is fairly long. Keep track of earnings, but yes, we do have positive coverage on NMDC from a long-term point.
Okay, C Infosystems bought at the levels of 960. Peter says he's sitting on a loss of around 10%. Should he average, hold for a year or exit? Gaurang?
Well, again, a lot of competition, but seems to be a decent player. No specific comments, Mahima, since we don't have coverage.
The next one coming in now, it's from Siva from Hyderabad. He bought into HFCL at 87 rupees. We had a similar query yesterday as well. He's holding 2,500 shares. What would you recommend here, Vaishali? Should he continue to hold or book out?
I would say continue holding. 171 is the resistance level. Above that, it's going to go to 200 levels. So keep a trailing stop loss and hold.
Okay, the next one is on Precall Limited. Our viewer Lalita from Bengaluru has been holding 20 shares at the levels of 670. Continue to hold from a long-term perspective. Gaurang, any view?
Again, a strong player, no specific comments.
Bharti Hexacom held by viewer Murli at IPO price of 570. Gaurang, should he continue to hold? Your view on the telecom space?
So if I recollect right, I think it's been a couple of years since they came out with an IPO. We had a subscribe recommendation, if I recollect right, from a long-term point of view, and this one also in the telecommunication equipments, Puneet happens to be a strong player.
Got it. Well, that is the end of the first round of the rapid fire in this edition of Fast Profit, but a very, very short break. Gaurang as well as Vaishali stay on. Lot more stock-related queries on the other side.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
And the award goes to
Tamanna Inamdar, Managing Editor, NDTV Profit.
Leading the newsroom, shaping the narrative. From stories to impact, a voice that matters. Tamanna Inamdar, among India's most influential, power, purpose and perspective recognized. NDTV Profit's editorial force gets industry-wide acclaim. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New Year, new power panel, India market opening, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth.
Welcome back. You're watching Ask Profit right here on NDTV Profit, and if you haven't already, do start sending in your queries on WhatsApp. You can also call us for the same as well. Let's go across and take another caller now. Padmapriya was joining in for a stock-related query. Padmapriya, very good morning to you. What's your query?
Good morning, sir. My question is to Vaishali, ma'am. I'm holding OFS's 50 shares with an average of 80-100.
Okay.
So I would like to ask short-term and long-term view on this stock and the resistance prices. And can I, at what price can I exit?
Got it. Vaishali, on Oracle Financial, I think we've almost asked you almost every other week on this counter, and it's just making new highs. Is this at 10,200 a good time to book profits or continue to hold for Padmapriya?
So I would say depending on your time horizon that you're ready to hold, because according to me the stock is showing good uptrend. I would say since she's already bought at a lower level, not to be in a hurry. Keep a trading stop loss of 9,500 because what I'm looking at even from a longer period time frame, this is ready to go towards 11,500 and perhaps higher, even up to 13,000 levels. So 9,500 should be a trailing stop loss and continue holding.
Okay, all right. So that's the view coming on Oracle Financial and top targets given by Vaishali. But the next one that we have is on TFS, that is Travel Food Services. V. Murli from Bengaluru is holding 15 shares at the levels of 1253. Says he's acquired this in the first week of May itself. Wants to know whether he can continue to hold this. Considering that the Q4 numbers were decent. I believe that this is from a fundamental point of view. So Gaurang, any view on this one?
Well, Mahima, again, no specific coverage, but no peer competition as well with this one in terms of the sector that it operates. Numbers were decent enough, won't give any specific ideas.
The next question coming in now on Solar World, bought by Mohammed from Dubai, and he bought shares at 233. Vaishali, this one has been a very volatile counter, but from that March end levels saw a very sharp uptick. Anything on the charts that suggests that the up move could continue?
I would say yes, it's gradually showing some strength. There is nothing really happening right now. So it's pretty much range bound. So I would say 200 acts as a support. Unless and until the stock sustains about 240, it's hard to tell. Right now, it's just a range of 200 to 240. So if it goes above 240, please be ready for a target of 260 to 80.
Okay, the next one is on HBL Engineering. Our viewer has bought 1380 shares at an average price of 530. Wants to know whether to continue to hold or sell. Sudhir from Bengaluru is asking this. Vaishali?
I would say continue holding because this is showing some strength. I think long-term horizon, if you look at it, it can go towards 1000 odd levels. So in my opinion, please hold.
Got it. Also, Vaishali, a quick view that you can offer on Central Bank of India as well. We've been getting a few queries on this one. Vijay Kirti actually is holding shares at 40 though. So he's currently sitting at a 25% loss, but he's holding 2,500 shares as well. Is there any up move that you see for next 6 months to a year on this counter?
So, of course, the stock has been on a downward trend, but the contrarian view would be that it's got too corrected and too oversold. So, I think the downside is pretty limited. Keep a stop loss of 29, and I think this can give a bounce at least up to 33, 34 to start with, and from there on we can have a relook.
Okay, all right. Okay, so did we cover Blue Star?
No.
Okay, all right. The next one then is on Blue Star. Manju from Amritsar is holding around 393 shares of this one at the levels of 1800 and wants to know as to what's the outlook for this one. Gaurang, Blue Star, what's the view like?
Extremely positive. Yeah, extremely positive for consumer durable. Yes, there has been a little bit of supply side issues, and because of that, the prices have been increased even in the month of April. There is a price increase likely to come through for specifically for AC manufacturing companies. Continue to hold and take advantage of this price correction. If you have investable amount, you can add to it as well.
Got that view, Gaurang. But let's go across, take another caller now, and from New Delhi, and Sanjay has a stock query for us. Sanjay, very good morning to you. What's your query?
Yeah, my query is for Vaishali Madam, that I am bought LIC 200 shares on 16th of April, birthday of my son. Now it is showing me a very deep correction, say about 780 or so. Today it has something come up. So what would be the stop loss, and will I be able to get some profit on it? 860 is my buying price for 200 shares.
Got it. Well, I hope, Sanjay, you also gifted something else to your son as well. And unfortunately, this LIC not working out. But Vaishali, any reprieve on LIC? Because I think we also have the bonus issue date on 29th, I believe, and hence I think the stock was started to see that up move since then. But should he continue to hold LIC at this point of time?
I would say continue holding. It's already rallied right from 780 to 850, 860 levels. 860 acts as a very crucial resistance. It happens to be the 200-day period moving average. So that's going to act as a resistance for some time. But I would say keep holding with a stop loss of 810. And once it moves past 860, he will be in profit going towards 900, 920. So for the safe side, do ask Gaurang also from the fundamental point of view.
Gaurang, anything on LIC that you have? Do you feel that the bonus issue and I mean the longer term 10% holding that the government has to dilute, I think that continues to be an overhang, right?
Thank you, Vaishali, for that. And yes, I would agree with you that something else would have been better. In fact, I would go to the extent that term insurance would have been better on your son's birthday. But nevertheless, from a long-term point of view, Puneet, we have a positive coverage on not one, but four life insurance-related companies. So LIC, not only the bonus, but the numbers were also a tag better than what the street had penciled down. Along with that, we have positive coverage on SBI Life, HDFC Life, and ICICI Prudential Life. And Puneet, one more thing I would like to add is that the entire thought process has changed in the way individuals like you and me used to take policy before COVID and post COVID. I think the millennials have now got to understand this better. So we expect the run rate of new premiums to go up significantly in the coming quarters.
Okay, all right. The next one that we have is on Tata Capital. Pawan Kumar has bought around 3,500 shares at the levels of 342. Continue to hold or quit? Vaishali? He's sitting on a loss of around 1 lakh rupees.
I would say continue holding. Of course, I have limited data, but I would say continue holding because this has just got nicely corrected and now it's showing signs of reversal. So I would say at least till 335, 340 you may hold.
Got the view. Let's go across, take another caller now from Bengaluru, and Kumar has a stock query for us. Kumar, very good morning to you. What's your query?
Yeah, hi team. Very good morning. It's regarding about Balu Forge. May I know the entry price, at what price we need to enter? I'm a long-term investor.
Got it. Gaurang, not sure if you have coverage on Balu Forge, but do you like anything in that space currently that you also have coverage on that you would recommend, if not a direct stock recommendation on the company?
Well, we used to cover Bharat Forge, but our targets are in place. We have given a sell recommendation over there, Purit. I'm so sorry about this question.
No worries. Anything that that you see on the charts, Vaishali, by any chance?
I would say yes. If you have to buy, I think 460 is actually nothing much has happened besides Bharat Forge. But if you look at Ramakrishna Forging, Balu Forge, these stocks have really not participated right now. So I would say that yes, this is getting better. 460 acts as a support as far as Balu Forge is concerned. The near-term target resistance comes at 560, 570. Above that, one can look for a target of 650, 660. So according to me, these are very attractive levels to accumulate with support of 460.
Okay, all right. So that's the view coming on Balu Forge. The next one is on Vodafone Idea. Our viewer Ramana Reddy has bought 1,000 shares at the levels of 11 rupees per piece. Since 2 years, he's been holding this counter and wants to know whether he should book profits at the current price. Says he's a long-term investor on this one. Gaurang, your view?
So we have a neutral stance, Mahima. That means not much of movement is expected, but a lot of positive has happened over the last couple of months and weeks. And I am of a personal view that you need to have a couple of service providers in the cellular service provider segment rather than having a duopoly. But yes, things have changed. I hope that whatever efforts that have been put in place by the management in terms of improving the balance sheet, number one, and secondly is having more presence and penetration and stop losing customer base. That is visible right now. Won't give specific in terms of buy, sell and hold because we have a neutral stance on Vodafone Idea.
Got that view, Gaurang. But let's go across, take another caller now from Gurugram, and Siddharth has a stock query for us. Siddharth, very good morning to you. What's your query?
Yeah, good morning to all. I have a query related to LG equipment. I bought 300 shares at the price of 500 rupees. Can I keep can I book the profit or can I hold for some more time? Today there may be a result.
Got it. Vaishali, would you recommend that? Would you recommend booking profits? He's already up 80 rupees from his buying price. He's holding 300 shares. A part profit booking, would you recommend that?
Well, I repeat, I will not give a view, any view based on results, but from what I see from charts, I think it is showing a lot of strength. There is increase in volume also, so I think 560 should be taken as a stop loss and continue holding because the vertical presentation is it can go towards 620. So you keep a stop loss of 560 purely on the levels.
Okay, all right. So that's the view coming in on LG Equipments. The next one that we have is on ITC. Our viewer has bought 40 shares of ITC at an average price of 305 and wants a view on this from a 2-year perspective. Gaurang, what do you think?
The stock has gone ex dividend, if I'm not mistaken. Correct me if I'm wrong, Mahima. And from a long-term point of view, yes, we remain positive. There have been certain negative overhangs in terms of prices of revision of cigarettes. First of all, at the higher end segment, and now at a lower end segment. But yeah, ITC has diversified business. We have positive coverage on ITC. Continue to hold.
Yes, and most certainly it's ex-dividend day for ITC today. Hence, you're seeing that downtick of a similar amount as well. But the next question coming in now, it's from a viewer Suraj, and he wants to know a view on Exide Industries for a 2-year perspective. So he wants to buy into this counter, Gaurang. Gaurang, I just wanted to ask you as well, because yesterday was Amar Raja results. I think the con call also wasn't the greatest, and I don't know if that has a direct relation on Exide being up 7% today. But any view that you have on the battery makers?
So positive on both. In fact, Amara Raja Mobility as well as Exide Industries, Puneet, and this is also, like tire happens to be a very important component in a vehicle. Battery is also relevantly important, not only for fossil fuel driven vehicles or CNG, but more so for the EVs. Both the companies have elaborated plans in terms of investing into R&D and increasing their capex. I don't know about yesterday, knee-jerk reaction could be there, but today actually if you go to see both Amara Raja Mobility and Exide are up and running. Have positive coverage on both Amara Raja as well as Exide.
Okay, all right. We've got Murli who is on the phone line with us from Hyderabad. Murli, a very good morning to you. What's your query about?
The query is on Lloyd's Engineering. I have been holding since 4 years, 350 shares, though I booked some profit at the average of 8 rupees.
Okay.
So what is the short-term or a near target upside?
Okay. Murli, just want to understand what was the thinking behind buying this at 8 rupees, because you've bought it at very attractive levels.
Yeah, that was 4 years back when I started small investment. I thought, let me start with a penny share. So I put some money in that and I saw it growing and suddenly it shot up above 40. I thought, let me hold it on.
Okay, very interesting, Murli. So, I mean, you've spotted it at the right levels, you've made profits, you've booked some. So, kudos to that. I'll take this up with Gaurang. Gaurang, any view on Lloyd's Engineering?
Well, he's lucky, Murli is lucky, Mahima, that he bought into a penny stock and it has turned out to be a gold mine.
Yeah.
Not many people who get into a single-digit stock or a low double-digit stock end up making the kind of profits that Murli has made. Unfortunately, we don't cover such stocks. I won't give any specifics.
Vaishali, on the charts, does it suggest that the up move could continue or should he book out?
I would say so. Actually, it has, in fact, as a disclaimer, this was our trading recommendation also. And I think we continue to stay positive on this. 70 now, keep a trading stop loss of 70 because you've really had a lot of patience and have been holding on for such a long time. So I would say keep 70 as your trading stop loss. And this is very likely to retest the previous high of 85 and perhaps go towards 100 levels. So the trend is strong. And it only gets weak below 70. So according to me, please continue holding.
Got that view, Vaishali. The next caller now from Bengaluru, and Shivanand has a stock query for us. Shivanand, very good morning to you. What's your query?
Very good morning, sir.
Good morning,
my query on Reliance Industries. I bought a quantity of 276 at the average price of 1474. Can I hold for 6 to 1 year?
Got it. Gaurang, would you recommend that holding on to Reliance Industries for the next 1 year? Is currently, he bought it at 1454, so in the loss, what would you recommend?
Hold on, have a positive coverage, Puneet, from a long-term point of view, and change your time horizon from 6 to 1 year to maybe a little bit more if you really want to make meaningful return out of your investments in Reliance Industries.
Okay, all right. The next one that we have is on Pine Labs. Ram from Maharashtra wants to know if this is the right time and the right market price to enter into this counter. Gaurang, any view?
Well, so numbers were there, I believe, yesterday or today. I don't really recollect, but don't have any specific coverage, so I won't be able to give buy, sell, and hold.
Right. The next question now coming in on Vikran Engineering. Now, let's pull out the 1 week chart. I think on results, stock had a really strong reaction. And our viewer Rajesh actually wants to know if it's a good time to buy into this counter right now. So there you go, up 15% this week, and you see the sharp jump that you saw on the stock today, I think on Monday and Tuesday, and the momentum continues. But is it a good time to buy, Vaishali, is the question. What would you recommend?
I would say so, buy in trenches, because the stock has already, as you spotted, has given a good run up. 70 should be the near term support, and keep buying at every dip, because what I'm looking at, even the recent development, it's just coming out of its range, and this can go towards 100 levels plus. So according to me, take 70 as your base and continue buying.
Okay, all right. The next one that we have is on KNR Construction. Our viewer Nayan has bought 100 shares at the levels of 134. Wants to know if this is a good time to accumulate more maybe of this particular counter. Any view on this, Gaurang?
So, well, we used to cover KNR Construction some time back, Mahima, but because of the underperformance and deterioration in earnings, we have removed our coverage on KNR Constructions. Currently, we don't have it because of our concerns in terms of performance. If you want alternative investment idea into construction infra play, then HG Engineering and NCC Limited are the other two alternatives.
Got it. Well, the next question now on Concord Biotech, and Jaya from Bengaluru. Actually, before we take this question, let me actually go across and take a quick caller first from New Delhi, and Amit has a stock query for us. Amit, very good morning to you. What's your query?
Yeah, good morning. I'm holding a Yatharth Hospital about 100 shares at cost of around about 820 odd.
Okay.
My plan is to hold hospital stocks. I mean, Yatharth is one of the topics I'm looking into for next 4-5 years.
Okay.
I'm looking good buy, or should I move towards any other hospital and ignore Yatharth in that case?
Got it. Well, thanks for calling in, Amit. But Gaurang, on Yatharth Hospital and anything that you like currently in the hospital space, what's your top pick? Also on Concord Biotech, similar kind of space, not exactly on hospital, of course, but if you have coverage of you on either of those?
Well, so look, I also heard him saying that he's got 4 to 5 years kind of time horizon, Puneet. We do like healthcare, and we also believe, Puneet, that in the ongoing conflict in the Middle East, healthcare is one sector along with some other few sectors which are relatively insulated from external shocks. Apollo Hospital, Narayan Dudalaya, Fortis Healthcare and Max Healthcare. And most of these healthcare related companies have elaborated capex plans, either existing capex into existing facilities or taking over other smaller or weaker balance sheet companies. My sense is that these 4 names are better placed from a long-term point of view.
Okay, all right. So that's the view on Yatharth Hospital, but it's time for our rapid fire round. So keep your answers as short as possible. Vaishali and Gaurang. The first one that we have is on Chennai Petrochem. Masta from Delhi has bought it at the levels of 932 and wants to know if she can continue to hold this one. Vaishali?
Hold for a target of 1200.
Gaurav Jindal wants to make a fresh entry into Senco Gold at the current price. Would you recommend that, Vaishali?
Yes.
Okay, the next one is on Shyam Metallics. Sai Kumar wants to know as to what's the view on this from a 1-year perspective fundamentally. Gaurang, any view?
Well, a strong player, but no specific comments.
JTL Industries, we don't talk about it, Vaishali, too much. Our viewer has bought shares at 80 rupees. And stocks are largely flat today, but any view that you can offer him in the near term?
Keep a strict stop loss of 65. Below that it gets weak, so hold it and it can come back to 85-90 levels.
Okay, Paisalo Digital bought at the levels of 35. This query is specifically for you, Vaishali. Our viewer has bought 100 shares and wants a 6 months view on this one.
Continue holding. It's on a verge of breakout. It can go towards 60 levels.
Dheeraj is holding on to shares of HDFC Bank at 772. Gaurang, should he average now?
Fantastic level to average, and if somebody wants to make a fresh investment as well, Puneet, I would advise that we have positive coverage.
Okay, the next one is on Laurus Labs. Saurav from Jaipur has bought it at the levels of 1058. 25 shares is what he's holding. Continue to hold, book profits at this juncture, Vaishali?
Book partial profit because it's in deep overbought zone.
Right. So Shant is holding on to shares of Apollo Microsystems at 197. So he's essentially doubled his money on his 500 shares. Gaurang, should he still continue to hold looking at the buying price?
Well, the buying price is very attractive. Again, we used to have positive coverage on Apollo Micro. Currently, we are under review, if I'm not mistaken, but a very strong content.
Okay, all right. The next one is on Coforge. 25 shares bought at the levels of 1440. Continue to hold, sell, maybe add from a long-term perspective. Gaurang?
Hold and add would be the advice. Approximate target, Mahima, is close to about 1700.
Is it a good time to enter JK Tyre is the question from Raghava. What would you recommend your Vaishali stocks reacting today on good results? Any view?
Yes, buy with support of 360 and keep it for a long term, and you may get targets of 550 to 600.
Bandhan Bank bought at the price of 190. At quantity is 1100 shares. Continue to hold, sell, Vaishali?
Hold, the near-term target comes to 220. Above that, it goes to 240 and so on.
Got it. A viewer, K. Parthasarthi, who's a senior citizen, is holding on to Engineers India, bought at 200 though. Vaishali, what would your advice be to him? Should he continue to hold?
Keep a stop loss of 220, and if the momentum goes on, this can go to 270, so hold accordingly.
Okay, the next one is from Savio. He says he's a fundamental investor and wants to know as to what fundamentals are looking like for Praj Industries. Any view on this, Gaurav?
Has been a terrible underperformer. Need to be very, very careful. Just because it has corrected 60, 70, 40, 50% does not mean it is a investable candidate. No specific coverage.
Sabish wants a view on Zentech for the long term. Gaurang, any coverage? If not, what do you like in the defense space?
Well, so defense space, three investment ideas, of course. BEL, MTAR Tech, as well as Mazgaon Docks. Would prefer this from a long-term point of view.
And what's your target, Gaurang, on MTAR Tech? Because we started to see a lot of questions on that as well.
I wish you had not asked me this question, Puneet, because it has actually overshot our targets, but we are still maintaining a positive view. Let's see how the earnings are, which we believe will be very, very strong for MTAR Tech.
Got it. But what was your target, Gaurang, which was overshot? Just curious.
Okay, to be very honest, it was somewhere close to about 3,720 and it is more than doubled.
Well, got that view, Gaurang, and of course you know why I'm asking you this question as well. I think this stock has been in its own stratosphere, but thanks so much for joining in, Vaishali, as well as Gaurang, for giving us your views. Always a pleasure having you on the show. But viewers, out of time on Ask Profit. Stay tuned. KYC comes up next, and we'll see you with the rest of the stocks related queries at 2 p.m.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit, for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
And the award goes to
Tamanna Inamdar, Managing Editor, NDTV Profit.
Leading the newsroom.
Hello and welcome to KYC. I'm Sharad Dubey and you are watching one of the best shows in the town, and we get you interesting companies, their stories and the outlook ahead. And today also I've got a very interesting company for you, the company in focus. I'll give you those details, but try to use your mind a bit. I'm going to give you a little bit of hints. The first hint, it's a healthcare tech company. There are 4-5 of them in the listed space. So let me make it easier for you. They recently acquired Arai and TrueBridge. These are some important AI related acquisitions which have been happening in this space. Of course, it's not a recent listing, but I would say that from December 19, 2024, the listing has been there. And if you look at the numbers from the March lows itself, there has been a good up move coming in. That's almost 29% of up move going ahead. But which stock is in focus? Try to guess. And the stock in focus is IKS, Inventurous Knowledge Solutions. This is the company we are talking about. But why are we talking about this company? That's the first question to be asked. First reason is definitely going to be on the acquisitions. इसमें synergies क्या बनती है? दो बड़े acquisitions company ने किए हैं. One is ARIA, another is TrueBridge, and of course we'll try to understand, because last time also the management did speak with NDTV Profit, but we'll try to understand what's the integration looking like for this, what's the addressable market for this outsourced segment. That's what also something which we'll be focusing on. And also if you look at it, the margin and revenue growth outlook going ahead. Remember, fourth quarter was a seasonally weak quarter as well. But question arises is how big this market is and what benefit comes in. Remember, इनका जो सबसे ज़्यादा धंधा है US से आता है, हेल्थ केयर सर्विसेज को ये प्रोवाइड करते हैं, एनेबलिंग प्लेटफॉर्म जो है उसे कहा जाता है. बट लेट्स सी अदर क्वेश्चन ऑल्सो which is important is AI, agentic AI, how much solutions comes in and what are the benefits from this segment. So we'll try to understand the business model, the growth perspective and also the market share. Market कितना grow कर रहा है और company क्या उससे ज़्यादा grow कर रहा है, अगर कर रहा है तो क्या market share gain है. And to put everything in perspective, we'll be joined in by Nitya Balasubramaniam. She is the whole-time director and the group CFO at IKS. But IKS है क्या? What is this company all about? I'm going to give you all those details. No matter how technical a company is in KYC, we simplify it for you. It's a platform as a service, PaaS company. Interesting. Let's understand more about this. And it caters to the US healthcare provider segment. Also focusing on outsourcing routine course of physicians. तो physicians के धंधे को digitalize कर लेते हैं. ये है कंपनी का जो है overall मोटा मोटी definition है. Offerings include of course admin offerings and clinical offerings. पेशेंट के जो पूरी जर्नी होती है, दैट्स व्हाट इज कवर्ड डिजिटली टू पुट दैट इन पर्सपेक्टिव, एंड द कंपनी इज बिहाइंड इट. 700 healthcare organizations, that's one of the important reasons. Let's also talk about the employees. This is the employees number you're looking at, 13,331 of them. And then let's move on and see other key parameters. 90% plus revenue actually comes in from the repeat customers, so that is an important point to talk about. Also, let's look at the other key reasons to be focused. They have almost 450 plus enterprise level customers, and going ahead, if you look at it, there's a seasonal weakness. आप देख रहे हो फोर्थ क्वार्टर में जहाँ पे इम्पैक्ट आया है, वो देखिए, दिस इज कमिंग बिकॉज ऑफ द सीजनल वीकनेस एंड ऑफ कोर्स द विंटर इम्पैक्ट. हेड काउंट लार्जली अप 5%, डिक्लाइन बाय 19% ऑन अ सीक्वेंशियल बेसिस. ऑपरेशनल नंबर्स ठीक ठाक आए हैं. टेक एम्प्लॉय कोहॉर्ट दैट इज एक्चुअली ग्रोइंग गोइंग अहेड, और जिस तरह AI आ रहा है, ये नंबर शायद और ज़्यादा बढ़ सकता है. बट इंपॉर्टेंट थिंग, द फर्स्ट एक्विजिशन, RI Solutions acquisition, this is what we talk about, and over here we see their ontology segment is doing well. Roughly इस पूरे acquisition को $1.2 million ये upfront cash होगी. IP is your integrated property rights, which you are seeing on the screen, and also there will be a discounted ESOPs for the 4 years to align with the long-term interest. Apart from this, there is an $8 to $12 million of a build cost as well. Seems technical, लेकिन ये सिर्फ एक डील है. इसका फ़ायदा क्या होगा वो आगे जाके बताएंगे. एंड दिस इज द सेकंड एक्विजिशन I'd like to talk about. It was done in the month of April, a $565 million acquisition from TrueBridge. This is also a very important one. Why? Because इसमें सिस्टम ऑफ रिकॉर्ड पे फोकस रहेगा. पहले वाले AI पे था, दूसरा वाला रिकॉर्ड पे था. And of course, this will be looking at for the rural and the community segment. The combined pro forma adjusted EBITDA margin, as per the calculations, comes at 26%. So there's a very massive acquisition by the company for this. US healthcare enablers, of course, looking at the industry, that's expected to grow at 12%. That's what the management commentary has been coming. देखा जाए तो $5 trillion का ये पूरा US healthcare expenditure is there. So such a big market, and there is everything for a lot of Indian players, not just for this company as well. The TAM is nothing but total addressable market. That's around $260 billion. And if you look at the outsourced market, that's roughly $34 billion. So there's a lot of coverage left for companies like IKS and its peers. And this is the numbers looking at the growth over the next, we could say from 2023 to 2028. This amount, of course, comes to 8% or 12%. So this is how the industry looks. But what are the key triggers ahead? और इसमें क्या मैंने पॉजिटिव भी रख लिया है, मैंने नेगेटिव्स भी रख लिया है. सबसे पहले, it's cautious but optimistic. That is what I'm going to say about this company. The debt and the return ratios, they are improving, so that is something to look forward to. But yes, it's not fully debt free yet. Integration risk is there of these large acquisitions. इसमें समय लगता है, and that is why clear timeline is very important when you're analyzing this. But the valuation, that seems expensive when it's compared to peers. So we'll be looking at those numbers as well. Analysts are bullish, especially on the the synergistic acquisitions to play out. So yes, Street is hopeful for this counter, but क्या ये भाव में दिखेगा? That's the big question. So let's try to understand, and to put that in perspective, let's get in the KYC ratings to show you 8 ratings where we track a company in the KYC segment. This of course includes your income statement, balance sheet, cash flow, and I'll say the return ratios as well. बहुत important होते हैं. Street cred, shareholding, that also comes in, and valuations, a very interesting take. I have got around 4 peers where we'll judge whether this company is expensive or not, and of course the outlook. What are the numbers looking like, especially the TrueBridge acquisition? We'll try to understand that. But let's start with the income statement and let's see what's happening here. Largely the numbers are pretty strong, but the thing which you need to look at is this: 47 to 45% the growth which is coming in, that is showing a lot of strength. And ये पूरे long term basis पे जो CAGR आंकड़े आप निकालेंगे, वहाँ पे देखेंगे कि इस अच्छी ग्रोथ आ रही है. But let's talk about Q4 numbers. Q4 is seasonally a little bit of weaker quarter. So of course you look at the numbers, it's kind of slight miss as per the broking houses, but net the numbers do show a good strength. आते हैं margins पे क्या movement आई है, and largely it is back to where it belongs, that 32-33% plus margins, and currently it's at 35%. So you're seeing the margins, the way they have moved is pretty much decent and they seem to come back. Remember, दो बड़े acquisitions हुए तो margins में और return ratios में pressure आया था. So it's a strong thumbs up when it comes to the income statement. Balance sheet, I had mentioned you the debt is reducing. That was one of the positive points, and this is what we are talking about. 2 साल पहले IPO आया था, almost 1.5 साल पहले, और अब देखिए 275 crore rupees this borrowings is there, and it's a decent funded 192 crores cash balance is there, and the business model is such that यहाँ पे cash में उतनी तंगी नहीं होती है. They have US clients, they do not have government clients, so balance sheet is quite strong. So it's a strong thumbs up. So we spoke about income statement, we spoke about balance sheet. Let's talk about cash flows, and interestingly, the cash flow conversion has been strong. If you look at these numbers, they seem really pretty good. Almost 120% cash flow conversions coming in, and those benefits are coming in. और याद रखिए, integration का जो benefits है, जो acquire किए, उसके benefits अभी तक आए नहीं है. तो it's expected to improve going ahead in FY27, FY28. Also, it's a strong up move from this segment. Let's talk about the return ratios and see what's happening here. Largely return ratios, a slight pressure is there because of the acquisitions, and that's largely known. But ऐसे business model में भी 30% से ज़्यादा का ROI मिल रहा है, तो यहाँ पे आपको strength देखने मिल रहा है. And look at that. This is the momentum coming in. So I would be giving this, the entire business model itself, a strong thumbs up. So we did 4 ratings. Let's understand the shareholding, and remember shareholding का history थोड़ा कम ही होगा. 2024 के end में कंपनी जो है लिस्ट हुई है. And if you look at it, the promoters have kept their stake around 64%, and it's almost same out there. But FIs and DIs have started lapping up, and this is a good sign. Post IPO also good follow-on buying is happening. And if you look at it, around from 5% has gone to 8%. From DIs also, it has almost jumped 50% to 6%. So this is a very good sign. So I'm going to give this a strong thumbs up as well, and this is how the picture actually looks right now. So it's quite even Stevens, and post IPO also institutional interest has been there, so that ticks mark on my analysis. So of course shareholding is a strong positive as well. But let's talk about street cred. IPO के बाद क्या पैसा बना है, और if somebody has entered recently, have they made money? From March lows everything went up, and of course the company also did well. So if you are a trader on this stock, you must have made 29% if you had come on the March low segment. But if you are an investor post IPO, this stock has tested your patience. 1 year is just 5% returns coming in from this lifetime high levels, especially during its IPO time, where there was a definitely hype on the sector. That stock went up pretty high, but from these levels it's still down 23%, and from the IPO price 1.5 साल हो चुका है, it's around 24%. So it's a decent return if you're holding it right from the IPO, but after that, if you're an investor, the stock is testing your patience. So right now, let's give this a neutral rating from both the sides and keep it balanced. Now my concern comes in valuations. Is it the high priced IPO, or is there some other reason why these valuations are on the higher side? Compare IKS with their FY28 PE numbers. JM Financial के broking house के report से लिए हैं 20.5 times. This is the higher valuations coming in. But let's compare them with others. There is First Source, there is Sagility, there is Indegene. These are also the stocks, but there most of the averages is ranging between 13 to 16 times. And interestingly, other peers are also there if you'd like to focus on, and they themselves are trading on a lower side. So the average is around 15 to 16 is industry. So definitely stock is trading at premium, and it is not cheap. So it's a thumbs down when it comes to IKS. Let's talk about the outlook, what's happening here. The TrueBridge integration, that remains a key monitorable, but the integration इतना बड़ा है कि समय लग सकता है, delays हो सकते हैं. So that risk you need to keep it, and that's of course the execution risk as we call it. Also, let's looking at the operational parameters, they are expected to improve going ahead as well. आपके free cash flow yields में भी improvement आए, and there's a lot of synergies and cross-selling also because of these 2 acquisitions which we are discussing. The company is saying it's growing faster than the market. That means there is market share gains also. The commentary in the con call was strong. Also, let's look at the outlook. Apart from this is the AI-led initiatives, especially जो ARIA का acquisition हुआ है, वहाँ पे agentic layer company के पास already था, but अब जो है एक smart R&D और AI का angle भी आता है, and it comes on the same product stack if you are a technical viewer for this. So this is the entire outlook coming in, but take things with a pinch of salt. Execution risk for these large acquisitions is always there. The finance costing and how things move ahead, that is also something which we'll monitor. So right now, I'm going to give this a neutral rating. The stock has done well in most of the parameters which we have discussed. So let's do a revision. एक revision करते कि इसको कितना मिलना चाहिए KYC के ratings में. Largely, income statement, balance sheet, cash flow, return ratios, all of them have been top notch. I really like the shareholding also, where the DIs and FIs have shown interest in the company. Just the concern comes in is after its IPO, money hasn't been made if somebody has actually entered. So very minor returns have come in as per the expectations. Was the IPO expensive? That's the question. Valuations, that is where the expensiveness still is there if I compare it with with its peers. And outlook, two important acquisitions. Let's see what happens next. That's the big question. So overall ratings for this is 6 out of 8. It's largely one of the higher numbers at an average we give for a company in KYC. But to get more perspective in this, we'll be joined in by Nitya Balasubramaniam. She's the whole-time director and the group CFO for IKS as well. An interesting take. She's 16 years industry experience in Cipla, McKinsey, and also she is of course one of the you could say a larger equity analyst, also a very respected one at Bernstein as well, education coming in from IIM Bangalore. So it'll be pretty much interesting to have a chat with Nitya and try to understand the growth prospects of IKS. Stay tuned to NDTV Profit. We are just coming after a break.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
And the award goes to
Tamanna Inamdar, Managing Editor, NDTV Profit.
Leading the newsroom, shaping the narrative. From stories to impact, a voice that matters. Tamanna Inamdar, among India's most influential, power, purpose and perspective recognized. NDTV Profit's editorial force gets industry-wide acclaim. He has been tracking markets for over a decade, spots the trend.
Welcome back to KYC. Now we are joined in by Nithya Balasubramaniam, Whole-Time Director and Group CFO at Inventurous Knowledge Solutions. Good afternoon, Nithya. It's always a pleasure to have you. And of course, the first question I would like to ask is, a lot of acquisitions are at play and a lot of numbers, it's mind-boggling and a lot of crunching is happening. Just I wanted to understand and simplify it for our viewers. First, the recent acquisition of ARIA, the rationale about it, and what are the key numbers about it. There's a lot of data thrown around. If you could just simplify it for us, and what does this mean for the company?
Thank you for having me, and happy to talk about the acquisitions. So ARIA acquisition was more towards acquiring specific IP as well as the talent that came along with the company. What RI brings to the table is actually proprietary ontologies that the team has actually built. These ontologies are very simply knowledge graphs. And what these knowledge graphs are able to do is able to harmonize the data between EHR, the disease profile of the patient, the genomic profile of the patient. It's able to put it all together in a manner as to enable better clinical decision making. So that's the reason we're very excited about the RI acquisition. Of course, the two founders as well as the two chief scientists will be joining IKS and be contributing to our AI product development. And their technology and their skill set becomes even more important in the context of the other larger acquisition that we've announced, which is of TrueBridge, right? Remember, I said it's able to harmonize data from the EHR and multiple other sources. With the acquisition of TrueBridge, now we actually have a business where TrueBridge, 40% of TrueBridge business is actually selling EMR EHRs in the rural community health segment. So we now get access to the data behind the EHRs.
Right, Nithya, I try to understand the synergies are there, but it's just such a big size of the acquisition you have announced for TrueBridge. And of course, there are some critics, about how the execution plays out. Especially everybody wants to know is what is the timeline looking like, and if any integration, if it happens, by when it happens, and by when we can see that in your numbers also.
So again, TrueBridge is a transformative acquisition for IKS. You will appreciate that it's two very similar sized organizations coming together. We did about $364 million last year. If you look at 2025 numbers for TrueBridge, that's another $347 million. So two very substantial organizations coming together, and any such large transaction, I think there is going to be a lot of work that needs to happen to be able to integrate the two companies. Integrate the systems, the processes, the people, the culture, which is possibly the most important ones here. But when we think about how we think about value creation with the asset now in the hands of IKS, we've actually put out what we believe will be IKS's true north for the next few years. What we have communicated to a street is what we are aspiring towards in terms of EBITDA as well as net debt position. EBITDA, our last trailing 12 months was in the zip code of 1,000 crores. And we are saying by FY30, through the synergy generation and being able to accelerate the growth of the combined entity, we should be able to touch 3,000 crores in EBITDA in FY30. And in the same time frame, while we are starting by assuming a debt of $600 million, we hope to be able to pare that down to net debt levels that we enjoy today. So as of FY26, our net debt levels was about $26 million, and we hope to be able to pare that down to similar levels by FY30 through cash generation.
All right, so that is how you're going to maintain your debt equity ratios. And I was just checking the numbers also. there has been an improvement in your cash flows, operating parameters and KPI as well. But let's talk about something short term. We spoke about acquisitions and long term, but short term Q4 is a largely seasonally mild or a weaker quarter for you or your industry as a whole. Just wanted to understand for the next 2 quarters how things are looking like. New billings start coming in, new clients come in, and of course now AI agentic orders are also coming in. Or is that order flows actually are delayed right now because of so much changes happening? Just wanted to give us a feel about the first or the second quarter now.
Yeah, I think every quarter we actually talk to the street about new deal wins and new client wins that we have acquired. And you will see that the deals that we announced since Q1, Q2, Q3, and more recently Q4 as well, these deals will start to ramp up in the coming quarters. And when it comes to AI as well, I think we're very excited about the kind of products and automation levels that we have been able to deploy in our features. And that is also something that we continue talking to the street about on an ongoing basis. So more recently, we have launched a fully automated front-end platform. We have also launched a fully automated clinical documentation product. And there is definitely more and more to come with the kind of investments that we're making. So again, we don't normally talk about specific Q1 guidance or Q2 guidance. What we've always said is that we should be able to grow faster than the market given the differentiating features in our platform. And I think I will maintain that guidance.
So Nitya, let's just talk about market. Since you mentioned you will be going faster than the market. So by theoretical definition, you gain market share. So just give me 2 numbers, how fast the market is growing and what kind of growth you can expect. Maybe the market is 12%, so are we expecting 15 to 20% from you?
The market is growing at 12%. As I mentioned before, we should be able to grow faster. We really haven't put out a specific number out there. So there is also TrueBridge's the acquisition closure to look forward to in Q2. Of course, several regulatory approvals are now underway. Work is underway, and we're hoping that the closure happens in Q2. And I think once the integration happens, we will talk to you again about what the combined entity looks like and what will be our guidance for the combined entity.
Fair enough. So that gives a lot of clarity because of course a lot of investors are there. They have asked post your IPO, larger acquisitions have come in, institutional interest is there. But definitely the clarity is something which the street still awaits, and hopefully in the matter of some months we'll be able to get it from you as well. But till then a little bit of uncertainty would be there, and maybe for large deals, it takes time. There might be an execution risk also. But let's talk about the addressable market. You have been bullish on your presentation. I was just seeing the numbers also. On the outsourced service provider operations, does new markets open up for you now, or are you looking at something new apart from that? Because I know that your acquisitions quota seems to be full because a lot of balance sheet pressure can't be taken. But I'm just trying to understand, if you have to do something new, what will you do?
So what TrueBridge brings to the table is our ability to expand the addressable market. IKS traditionally has focused on the ambulatory segment or the outpatient segment. Physician clinics have been our primary customer group. TrueBridge, on the other hand, is always focused on the rural and community health hospitals. So with this acquisition, this provides us an entry into the rural and community health segment market, which we didn't address before, right? And also in terms of new products and new features that get added onto our platform, we did speak about how the RI acquisition actually could potentially create, again, new product suites for us. And I think the most important thing with TrueBridge's acquisition is now our ability to create this AI training corpus, which will draw from the data sets that's sitting in the EMR EHR of TrueBridge. This is, of course,
fair enough. Fair enough. Yeah.
Data for us to work.
Right, Nitya. Very nicely explained, and it's a very technical industry, out of which the acquisitions are quite technical, but you have simplified it for our audience at KYC at NDTV Profit. Thank you very much, Nitya, and best of luck for the future. And hopefully we get the numbers which we want going ahead for IKS. It's always a pleasure to talk with you at NDTV Profit. So that's the management of IKS. 2 large acquisitions, but we are still awaiting important guidelines or deadlines or the integrations. So stay put. That this story continues, and keep watching KYC at NDTV Profit.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Benchmarks trade in a narrow range today, with the Nifty as well as Sensex clinging to the gains. Broader markets slightly outperformed the benchmarks. Metals shine and real estate as well as auto eked out gains. Oil and gas on the back foot today. Hindalco Industries and National Aluminium Company led gains in the metal pack as rising global aluminium prices boost the sentiment, pushing the Nifty Metal Index higher, with all constituent stocks trading in the green. Oil prices slipped again as markets weighed hopes of a possible US-Iran peace deal against the fresh military action near the Strait of Hormuz, with traders still cautious as the critical energy route remains effectively shut despite the limited tanker movement resume. It's an NDTV Profit Tech news break. Confirmed Coal India to launch a fresh offer for sale with up to 5,000 crore rupees worth of shares to change hands. Stock under pressure post the announcement. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Podar, and let's take it straight to the market. And yes, there is a tinge of green today on the key indices, but take a look at Nifty 50. And here I would like to spend a little more time because the resistance or the gap between Nifty 50's current trading position as well as 24,000, which is a psychologically, sentimentally important level, that is not getting crossed. And the only reason for that is HDFC Bank, which has come under the cloud of governance issues once again because of some reports, and that's what is shaving off 50 odd points from Nifty 50. So if you really take a look at the constituents as well as the contribution to Nifty 50, barring HDFC Bank, it would have reached that 24,000 levels or closer to that. So keep that in mind. But of course, some of the other constituents like the metal pack, and in that specifically Hindalco, Tata Steel, and from the banking pack, ICICI Bank really doing well. On the downside is Coal India because of the influx of of that paper because of the stake sale coming in. That's really weighing on that particular counter, as well as ONGC. And of course, from the IT pack, Infosys is down. When we talk about the sectoral movement as well, do keep an eye out on that, because metal pack is the one which is really taking the charge. It has a lot to do with the global metal prices and aluminium prices really jumping up in a global scenario where the metal prices are going up, and that's what is the momentum that is being seen in the metal pack. That's a snapshot of where the market is. Let's get discussing more about the market momentum and how you should look at the trading as well as investment journey from here on. Nishchal Maheshwari, the market expert, joins in. Nishchal, always a pleasure to welcome you on NDTV Profit. Now, my first question, it has been a very volatile, past few days and a phase in the trading sessions. How do you keep your focus on the goals and the achievements as an investor and as a trader and navigate this kind of a market, Nishchal?
Afternoon to you, Nisha, and your viewers. I think it is now time basically that people should start focusing on the quality of the earnings which have just got declared in FY26 Q4. I think geopolitical has played its part. Yes, there might be some amount of volatility, but I think after 2 or 3 months of this kind of a prolonged war, most of the businesses, most of the countries across the world basically will start finding ways how to mitigate this issue. Now, I'm assuming here basically this is just going to linger on till we get to a final conclusion. If the final conclusion happens immediately, well and good. But I think in the next quarter, most of the countries and companies will find a way. Market is already discounting, saying that oil is going to remain at $100 on an average for FY26. And I think that is already got discounted. So I think move away. Geopolitics has been a part of the spoiling part has been done. Now you should look at the earnings of the companies. That's the focus one has to be.
All right. So the focus, Nishchal, according to you, now shifts to the earnings momentum, and the global uncertainty has already played its role. But one more aspect in terms of the macros and how it will really impact our overall market momentum, irrespective of the sectors and the fundamentals, is also how now going forward, how long the uncertainty really continues, and therefore our own fuel, shortages, and therefore the kind of burden that it's putting on our macros. How do you read into this situation? Because it is wishful thinking at the current moment that anytime soon the war is ending.
So I don't see any issue basically. I don't think that there is an issue as far as availability of oil is concerned. I think government has found other sources. If you really look at it, it's around 10% of the oil is out of the market, 100 million barrels a day, basically around 90 is already there, 90 to 95. So I don't see any reason basically to be worried about the availability. Now it is coming at a price is what is the issue? That the oil price is higher and you have to pay a higher price. And as you know, basically at $100, obviously some amount of the demand across the world will get curtailed, and it is getting curtailed. So whether by the push of the government or people doing it voluntarily. In India, it has not happened so because we didn't take a price hike, but now we have already taken, I think, 4 price hikes of around 8 or 9 rupees. And I think that should also start factoring in here. Basically, people start finding other ways and means or doing carpooling and all kind of stuff, basically. So I think the demand curtail. So the reality has to strike. We can't just move away and say, okay, no, oil is at 70 and that's the way the economy will work. So it is government is start taking increases. Basically, that will have some impact on certain industries, and that's a fact of it, basically.
All right. So Nishchal, looking at one particular sector, which is the metal sector, and of course, it's the global metal prices which are really impacting. This is one of the few sectors, Nishchal, who gave a guidance of a higher than the present margins for the next earning cycle, and that is because the full benefits of the higher prices will get realized. How to play the sector, because a large part of it is getting already baked into the stock price. Is there any headroom left, and what should be the play when it comes to the metal sector at high valuations?
So I think it's time to move away from non-ferrous to ferrous. Ferrous is still fairly priced. Non-ferrous is already, I think, run away quite a bit basically. And at these prices, basically, non-ferrous is a high energy guzzling sector basically. So the impact on the margins will happen basically of a high energy cost. So I think it's time to move away from non-ferrous to ferrous metals.
All right, the shift from non-ferrous to ferrous metals. And yes, in ferrous metals also the companies have guided for a higher margin and better profitability for the present cycle, present quarter. When Nishchal, we look at the banking space, and of course HDFC Bank is an outlier. It has a different movement today, not quasi-India story and investment story that it is really reflecting because of its own corporate governance issues which have cropped up again. But how do you play the banking sector, which has been the bet on the economy as well, given the pressure points on macro and FII outflows still continue?
So I think fundamentally it makes sense to be in the banking sector, especially on the private sector side. Now you can avoid a few of them. I'm not aware what has happened today or what, because there's nothing which I read in papers. So not aware what kind of issues are there with HDFC. But I think if you really look at it across the private sector, I think they are at all-time low in terms of valuations. I think at least a decade low. So it makes sense basically to be invested. But what you have to be very clear is basically these are all trading plays. So good for a 50 to 20% upside from here. And that's it. So that's the way basically I look at on the banking side.
All right. And just very quickly, Nishchal, any themes that you're picking up which could be good investments at the current levels?
So energy theme still continues to do well. Basically, the current quarter numbers, I've heard a lot of these transformer guys, the cable guys, everybody seems to be very, very positive, saying that there is at least a 3-4 year cycle still on. So I think that energy theme has to play out. Now we have to see basically in India, how does it all play out? But the energy theme still continues to be very, very strong.
Right. So energy theme is what you're betting on. Nishchal, always a pleasure to take your expert view on the markets. Thank you so much for joining us right here on NDTV Profit. And let's take a look at crude, because that has been playing truant when it comes to the Indian equities as well as the currency market. And crude, yes, is a little downtick, a little over 1.5% down from the yesterday's levels, 97.98 when we talk about Brent crude. And that is a level below $100 per barrel level, and anything below 100 is definitely a good news. But remember, a few days back it was down 5%, and from there it has been now inching up strategically. So that's where we need to keep an eye out on, and US-Iran deal, peace deal, is the main aspect and the factor which is going to really impact or soften the crude oil prices. Let's move to another economic indicator, which is the auto sector and the auto demand. So auto retail momentum really remains strong in the month of May, with Vahan registrations really rising over 11% on a year-on-year basis, and also close to the record highs seen in the past 2 years. My colleague Puneet joins us with the key highlights from Vahan registrations data and what it means. Puneet, tell us.
Well, thank you for that. As you rightly mentioned, it's been a strong month for the auto sector, and it's still not over. So it's already crossed that 19.7 lakh mark, and this is the highest sales that the whole sector has done essentially in May of 2026 compared to the last 8 Mays. So we've analyzed data over this time frame, almost since May 2018. This is the highest record figure at 19.75 lakh units. This, of course, includes all categories, all company vehicles that are registered and actually sold to the consumer. So this is actual retail sales and not the one that goes to consumers. And the trend is visible on your screen as well. The last time this number came through was way back in May 2018. Since then, we saw the dip during the COVID years of May 2020 and 2021. Then that recovered through yet again. So last was also May 2023 was also a strong number. but a very, very strong session yet to end the month, of course. But already signs showing of continuous momentum in the auto sector yet again, despite 8 months post the GST rate cuts. I also just want to highlight the category-wise data as well, because two-wheelers continue to dominate the news flow at this point of time, and that's the comparison that we've done for both April and May for 2026 compared to the last year. So that trend is showing for both two-wheelers, for passenger vehicles also a very strong number at 8.78 lakh units, as well as for the CV makers, where you've seen that number being higher compared to the last year, despite 3 to 4 days more left for May. And finally, in terms of what we've seen on specific players, now when you look at, of course, the next 3 to 4 days will be crucial in terms of registration, but most players have already achieved 85 to 95% of their last year May 2025 sales. So when you look at the number, barring Hero MotoCorp, which is at 81%, all other players at 89 to 80%. What this means is, in the month of May 2026, the last 27 days essentially, they've already achieved 85 to 95% of the sales of the whole month of May 2025, and the trend visible for each player on your screen right now. Notable ones are Maruti Suzuki, which is at 95%. That's one of the highest ones that they've seen. And for Mahindra and Mahindra, that continues to be at 80%, and Hyundai at 87% as well. So this is just a trend of the retail sales, the actual sales visible, and the player-wise data that we're presenting for 4 more days yet to go for the month of May.
All right, Puneet, thanks so much for summarizing all the data and also putting that into perspective on what it means for retail sales on auto. Let's get chatting about what this really means for the economy as well as the auto sector. Ashwin Patil, the head of fundamental research at LKP Securities, joins us on the phone line. Ashwin, good to have you on the show. Now, you heard the Vahan registration data numbers being spelt out by my colleague Puneet. What's your sense, and what is it that you're picking up? Of course, record levels when it comes to the registration levels for the month.
Well, I would say that, the trend, the retail sales trend, which was seen in the month of April, it's getting continued in the month of May. But definitely, it is on a low base of last year. So that kind of numbers we are seeing, but definitely the demand is also quite strong as such, despite all those geopolitical headwinds, etc. That's not actually impacting the domestic demand. And if you look sector-wise, like if you segregate two-wheeler, four-wheeler, etc., that within two-wheelers also we can see a very strong demand in the EV space as such, and also in the premium space, because the 125cc space is getting very much crowded. So the growth is mainly in the premium and the EV space, and also because of the GST benefit, the low-end sales is also getting a good trigger. So, and also the marriage season is going on. That is one of the reasons April, May has been good, on that front as well. So that is one of the reasons. And secondly, on the low base, we can see the two-wheeler or, the overall auto industry putting up a very good show. Then coming to passenger vehicles, also the companies like Maruti, Mahindra, etc., they have come out with an array of new launches. They are like Mahindra 700, etc. They are like fetching a very good demand. And that's the reason why I would say that, before the monsoon starts, which is expected to be not that very strong, El Nino comes in. So the second half is expected to be not very strong on demand front. And also on the high base of last year. So I think, therefore the first half will be looking much more brighter than the second half. And the demand wise also, like customers will be looking for, because everybody is aware what is in store for the second half. So, the buying, etc., will be happening in the first half itself. And also on the dealer inventory level also, that has also gone down significantly, which shows that even the wholesale sales will be quite stronger for the month of May. So, on and on, I would say that overall, the entire sector is looking quite buoyant at this point in time. But what's in store for the second half is like anybody's guess. But if the El Nino doesn't pan out, that stronger, then we can see a good growth in the second half also. But at this point in time, things are looking not really very strong for the second half. But yes, first half is very good.
Right. So not looking that strong for the second half, but of course, Ashwin, for all the consumption space companies and sectors, we have seen that the revenues had been strong, the demand had been strong for the earlier part of this particular year. But inflation coming in, and on the other hand, El Nino that you mentioned. And the third factor, let me also say, is the margin impact on the companies, right? Putting all that together, how do you assess this data and give an outlook for the auto companies, and also segregating the winners and losers for the next few months, or at least next quarter?
Well, I would say that, as this inflation is going up, the fuel prices are going up, the companies which are having good, exposure to the EV space, like, the pure EVs like Ather, they will be facing good, they'll be having good times going ahead also in this scenario where the fuel prices are going up. Then companies like Bajaj, TVS, etc., which are having a good presence in the EV space, they are having a good, break-even, and they are getting a break-even in that space. That these companies will be having a good time going forward. Also, if the rupee is falling, then Bajaj, which is having a very good exposure to the exports markets, that will be, one of the stocks to look at. But on and on, if you see overall auto industry, the inflation, the fuel prices moving up, the RM prices moving up, the Middle East conundrum, you never know when it will, till when it will continue, etc. So all these will be the overhangs on those companies. So margins definitely will see some sort of pressure, maybe about 50 to 100 bips going forward in second half as well. But you never know. Like, the strong demand for the vehicles and the new models, etc., at least in the first half, will be making up for the entire year. So maybe like second half will not be that strong, but first half will be still better. So companies like within the passenger vehicle space, we like Mahindra and Mahindra, but yes, I mean the El Nino factor is going to play on them as well.
Yes.
So Maruti is quite strong in that space,
Right.
followed by Mahindra and Mahindra. Even Tata Motors PV is strong. And on the CV front, I think Ashok Leyland and Ashok Leyland is much better placed given its exposure in the export markets and
Sure.
its diversification in the defense space and then
Right.
aftermarkets, etc. So Ashok Leyland is much better.
All right.
within
So
the
M&M, Ashok Leyland,
Maruti, yeah.
and Maruti, some of the winners from this, but lots of factors really impacting. It's not just the demand. Thank you so much, Ashwin Patil, for joining in with your views on the Vahan registration data and what lies ahead for the auto sector. Remember, it's a key indicator for the macro trends also for the economy and needs to be kept a watch on. Moving on to another important development of the day, Byju's founder Ravindran has been sentenced to 6 months in jail by a Singapore court for contempt. Nimit Dixit is here with more details on the latest, his statement and the options available to him now. So Nimit, what are the options first? What's the way ahead? And then, of course, the background. Thank you.
Of course. In a contempt proceeding like this, where 6 months jail sentence has been granted, Singaporean legal experts tell me that a person can only be arrested if they are within the territorial jurisdiction of Singapore. That means within physically present in Singapore. Beyond that, it's very difficult to enforce this. There is, of course, the extradition proceedings, but that usually doesn't apply for small cases like this. India does have an extradition agreement with Singapore, but that doesn't apply for cases where jail time is under 1 year. So Singapore legal experts tell me that it's going to be very difficult, firstly, to put him in jail unless he voluntarily comes and surrenders or flies into Singapore for some other work. So that's that. But to understand why this has happened, this is a case that arises out of an arbitration proceeding. A judgment came in 2024. It was by the Qatar Investment Authority, and an arbitration award came where it froze about $250 million worth of assets of Byju's and Think and Learn, which is their holding company. Now, after that, there was an asset disclosure requirement because these assets needed to be frozen and then liquidated for the purposes of serving this award. Now, once this asset disclosure was required, this asset disclosure is what Byju Ravindran did not adhere to over the span of 2 years. Many requests have been made to disclose these assets, specifically certain different assets over different jurisdictions, but Byju Ravindran has not disclosed those assets, and that's why a contempt of court order has been filed by the Singapore court and is now sentenced Baiju Ravindran to 6 months in jail. Now, what he says is that he's not been attending these proceedings or been making these disclosures because they're actually very close to a settlement, and he's actually shocked that Qatar Investment has approached the Singapore court for this kind of an order.
All right, so that's an important case, but also Nimit, India's online real money gaming industry is caught between a sweeping ban under the Online Gaming Act and also tax battle in the Supreme Court while the verdict is set to be announced today. What are we getting from there? And give us the case as well and what lies ahead for the gaming industry.
Yes, so the online real money gaming industry, while already halted now, this relates to a tax dispute worth 2.5 lakh crore, several higher than the market cap of most of these companies. That's been going on for about 3 years. Now the Supreme Court is ready to give its verdict today at 3 p.m. Now what the dispute is essentially, companies like Delta Corp and Nazara, Gamescraft, Games27 have all been given GST notices from 2017 onwards worth 1.2 lakh crore. Now what the companies say is that this 28% GST is being applied to all the deposits made by players on the platforms, not to the actual revenue earned. Now if I as a player deposit 100 rupees, then that 28% the government wants on that 100 rupees, not the 10 rupees that the platform is making on it. So they say this will essentially shut down the industry completely and not allow them to function as they do. And the impact is already clear. 1/4 of smaller companies have shut down because of this order. It's also very clear to see that the retrospective tax issue here is to be determined, because they say that these tax notices date back to 2017, while the new law for this GST was made in 2023. The gaming companies are hoping for a positive outcome here because they say that their very survival is at stake here. Companies like Delta Corp, which have a 33,000 crore notice, have a market cap only of 2,200 crores.
Yes, so this has been very, very disruptive for the entire gaming industry, and the small ones are already shut because of the pressure that was building. Thank you, Nimit, for breaking it down for us, and of course, an important verdict today to be watched out for. In the meantime, Nifty 50 has lost some more ground. It's also on account of HDFC Bank that losing more ground, shaving off 56 points from Nifty 50, and that's where the market is. But lots to talk about market action on the other show. It's a wrap on Markets at 12. Thank you so much for tuning in.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
And the award goes to
Tamanna Inamdar, Managing Editor, NDTV Profit.
Leading the newsroom, shaping the narrative. From stories to impact, a voice that matters. Tamanna Inamdar, among India's most influential, power, purpose and perspective recognized. NDTV Profit's editorial force gets industry-wide acclaim. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table supply.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Datia, and now again today Sharad and I have the opportunity to be in the studio together because usually, as we know, he's always at the market pit. But interesting start in terms of the June series, right, Sharad?
Exactly, and of course HDFC Bank and ONGC are dragging it out, but nevertheless the technical setup for most of the stocks, especially in the small cap, mid cap, is good. New positions are being added, and of course remember tomorrow is a market holiday also, so there is a Sensex monthly expiry at play as well.
But what's interesting right now is, Sharad, that the markets are giving up the kind of, uptick that we saw in between. If you see from the day's highest levels as well, we are trying to plateau it out, inching lower as we speak, and that's the trend not only in terms of Nifty. A similar chart is what you will see in terms of Bank Nifty as well, and then in terms of broader markets. So that's what we're picking up. But apart from that, what are the cues that you're tracking so far?
Well, Hiral, the thing is that the range which is there for the resistance level for Nifty for the second or third straight day, that 24,000 mark is something where again the markets are seeing a little bit of key resistance coming in. Of course, a little bit of downtick coming in the mid cap and the small cap indices, but nevertheless the technical setup, at least in the medium term, is decent. Looking at the Nifty Bank resistance range, that's around 54,700 to 55,100. Of course, HDFC Bank is the key drag here, and of course we'll be tracking that. Metals are rising, and interestingly there is an angle to it. There's a dollar weakness at play, and overall we had given you earlier also that there are key reasons, the pricing, the realizations, they're expected to go well for most of the sectors, ferrous, non-ferrous in the first quarter. Power, capital goods, industrial, telecom, that's where a good technical strength is coming. And also the rupee, that's another interesting take. And 96 levels is trying to test. It's near the day's low, so that's a bit of concern. But nevertheless, RBI intervention is something we are hoping. Sensex monthly expiry today, remember, on account of holiday, trading holiday, which is there tomorrow. And of course we'll be tracking the earnings. We are at the fag end of the earnings. Largely a lot of mid cap, small caps will be coming, and they have been coming with good numbers. We focus on Cummins India, PG Electroplast and Bata India as well. So these are the important stocks. But Hiral, Apart from this, what are the watch lists?
So, interesting names on the watch list today. You have a JP Power, which is buzzing on the back of volumes. Apart from that, talk about Delta Corp and Nazara, a major overhang where the gaming GST dispute is in the Supreme Court. The hearing is at 3 p.m. So watch out for that one. PG Health, Finolex Industries, you have Adani Total, again, all of them reacting to numbers. In fact, Adani Total, that stock is up 28% in the last 5 trading sessions. You know, a technical view on that counter is a must. Easy Trip, again, a volume buzzer. AstraZeneca, buzzing on the back of numbers. Coal India, under pressure on the back of the OFS because the pricing has been at a 10% discount to the current market price as on yesterday. Hindalco, you know, there's a Morgan Stanley initiation that has come in. You have Tata Steel also, which is in focus, ONGC, Siemens, Transrail, all of these counters that are reporting, reacting to numbers as we speak. So that's on the watch list. But Sharath, quick one in terms of the rapid fire with the guest today.
Well, exactly, and of course we'll joined in by Vishnu Kant Upadhyay. Good afternoon, Vishnu. It's always a pleasure to have you with us, and we start our rapid fire segment. Here and me were discussing, and PNG makes it to the list. PNG Health, of course, a very strong set of quarterly numbers coming in. Do you think that this will sustain going ahead? What's looking at the charts?
Hi Sharath, a very good afternoon. In fact, there has been a two positive development on graph. First, the stock, has started to form a higher high. Second, the stock is now above its 21-day exponential moving average. So, on the basis of this technical setup, definitely the stock is looking, pretty good. And on the higher side, 11,300, 11,400 sort of levels can't be ruled out. One can go long, maintain the stop loss below 9,700 and target. I've already discussed 11,500, 11,400.
Right, and Vishnu, what about Finolex Industries also? We just wanted to see on the charts a very strong set of numbers. Do you think this will sustain going ahead, or a little bit of profit booking is also here at play?
Undoubtedly. In fact, sir, after witnessing such a huge rally as the stock is now up, around 8 to 9% in today's trading session. But in last, few days, 4 to 5 trading sessions, the stock has gained more than 15 to 16%. So we can't rule out the possibilities of some sort of corrective, fall in the stock. But technical setup is looking immensely well, and I believe this winning streak are likely to remain intact with a potential gain towards 230.
And Vishnu, chart check on Adani Total Gas. Of course, we have seen Adani group of stocks is showing a good technical momentum in the day's trade. Just wanted to take your views on this.
Yeah, definitely. In last 2 trading sessions, the stock has, gained something around 20%, in fact. So there is my 2 view. One is a positional and second is a short term. So for positional view, stock is looking quite good on the higher side. 900, 950 levels will be definitely on card. But for a short term, the person one is holding the stock in the counter can trail the stop loss below 680 and can maintain the position.
Right, standard disclosure also coming in for Adani Total Gas, which is putting on screen. But the last one, AstraZeneca Pharma. Is this company showing a signs of a breakout, Vishnu? And if yes, any levels to track here? Or actually break down, to be honest, its stock is down 5% on a weaker set of numbers.
Yeah, definitely. Until today, the stock was doing, immensely well, and we have seen stock, surpassing its the cluster of all key moving averages. But unfortunately, the stock is down around 5% in today's trading session. But technically, still the stock is still trading below its a crucial horizontal support that aligns somewhere around 8,100. So I can say, as long as prices are trading above these set of support areas, one can hold the position with maintaining stop loss below 8,100, and on the higher side, stock has a potential to regain 9,000, 9,100 sort of levels.
Okay, so that's AstraZeneca. Thank you so much, Vishnukant, for joining in and for that quick rapid fire. But one stock that is in focus, Transrail Lightings, Q4. What's interesting is that in spite of the kind of pressure that we've seen in the fourth quarter on profitability and margins, if you have to look at FY26 as a whole, it shows a strong number coming in there. The second aspect is, if you see in terms of the working capital, good improvement. If you talk about the order book, good revenue visibility as well. So things are seeming right fundamentally, but where is that pressure point coming from in terms of the fourth quarter, and what is it looking like in terms of easing out in the first quarter of FY27 or even in the first half? Because across industries, your West Asia crisis, your tariffs, a lot of global factors that have had an impact. So I think there is no one who's been left out of that leak. And to discuss more on this, joining us, we have Mr. Randeep Narang, MD and CEO at Transrail Lighting, joining us in the studio. Mr. Narang, welcome to the show, and it's always a pleasure to speak to you. This is Hiral here. My question to you is, FY26 overall seeming very good, right? The pressure point has been the fourth quarter of FY26. What has gone wrong there? What are the factors that have impacted there? And two, if you have to look at it getting into FY27, how much of it has been a carry forward as well in terms of the pain points?
So thank you for having me over, both of you. If you recall the Q3 guidance we had given, from a 25% growth over previous year, we had made it 27%. And actually we have done 30, which basically means that we bettered our Q4 in terms of revenue numbers. So actually what happened was that around 20 projects, transmission, substation, we've completed by December. So we knew that there will be a startup design engineering approval process in Q3. So that has slowed us down. There's a difference of only 80 odd crores versus what we did last quarter, last year in Q4. And second was the disruption in the marketplace globally. As you know, supply chain got affected, supplies, LPG, labor, our supply chain, backward supply chain got disturbed. So all that, culminated into this. But my guidance was 30%.
So Randeep just a question, just a follow-up. Hiral had asked this. Does this pressure go more? Because March there was a little bit of impact now, but April, May we have seen a larger impact coming in. So will we see that pressure in the first quarter?
So I'll talk about the full year, then I'll come to first quarter. So we are looking at a guidance of 20 to 22% for the full year. And to us, we have an order book of 16,300 odd crores. Which is 40 international, 60 domestic. So we definitely are ramping up the execution of our projects. First quarter, we are looking at a stable quarter. We are not seeing disruption which is beyond control. So we are managing that disruption. And we feel that overall annualized basis, we will be good in terms of our guidance.
What about on the margin front?
A margin, we actually had given a guidance of 11.5 to 12% last year. We did 11.9%, which is very much within the guidance. So 30% growth, 11.9% EBITDA guidance. Now our guidance now, based on the disruption, the cost escalation, the energy escalation, the logistics and the overall energy situation, we made it 11%.
Okay.
Now, if the situation improves globally and locally, we will definitely look at improving this.
So, you're saying margins 11% is the worst case scenario?
I would say around 11%, but look, I can't promise
absolutely.
the geopolitical situation, what happens.
Absolutely. No one's going to really catch you by the neck on this because you're being candid enough to come out and say that, okay.
And that's actually a good form of honesty.
Yes.
But just to put a little bit of perspective, आपके दो अलग-अलग customers हैं. One is international and one is your domestic.
Correct.
How are the demand trends looking like? Are the international ones delaying the orders or it's going as it is? And in Indian also, is there any kind of a delay here as well? Because at times orders get delayed also in this.
Yeah, I mean here, the question is orders are very strong. The question is about execution. So are clients delaying execution?
So I won't say they are delaying. In India for sure, there could be a right of way or some hurdle on the ground, which is a normal way of life in a EPC company. And all our clients are marquee clients, which is, the central utility, all top-notch private clients. So they are themselves wanting to expedite things and we are supporting that process as professional people, partners working with them. Globally, we work with multinational funding agencies. We don't work with anybody else. So we are very clear that those World Banks and African Development Banks are very keen to expedite the project and close it with utility. So the execution may take a little bit of drop because of the geopolitical global situation. But we as a company, as a team, are very confident that we'll meet our 20% and we are good with that.
Okay. The other question I have for you is in terms of the order book. Now, 16,400 odd crores is what I'm looking at. Now, how much of this is actually a L1 pipeline and how much of it is actual orders which have already dropped into your kitty?
So actually all 16,000 is orders in hand.
Okay.
And my L1 is very small, at 50 crores.
Okay. And any further L1s that you're expecting in terms of pipeline?
Yes.
Number one. And two, within that pipeline as well, how is it going to look like between international and domestic?
So we have bid around 6,000 odd crores of jobs in the last quarter, which have yet to be, opened in terms of tenders, and we are looking at least 20% hopefully win ratio. It's pretty much split between domestic and international, 50-50. So let's hope for the best, and at least we should garner 1,500 to 2,000 crores of orders out of this.
Right. Randeep ji, apart from that, just wanted to understand what's your average cost of borrowing and debt levels, if any, and the debt reduction plans for it, because that's also pretty much important in times like this.
So actually we've reduced our net debt from 500 odd crores to around 274. So 274 is the net debt reduction we have done this year. We feel that we can maintain this. Net working capital days has come down from 91 to 81. We reduced 10 days. And our cash flows have improved. Almost year end was 800 odd crores against 400 odd crores last year. So we are very clear that financial strength of an EPC company is what we want to maintain and better, and we're looking at bettering our NWC days, sub 80.
Okay, that's very strong.
An important point.
Capex, what does that look like? Because I think the Butiburi Greenfield plant is something that is awaited as well. So how are you looking at the Capex on that front, or is it already incurred? And what's the peak revenues that you're seeing out of this, and by when?
So we have already started the work at Butiburi. The production has started as of end April. We've announced that. And this year capex, and that was part of last year capex, so there is no need for any new capex there. We have looked at 200 odd crores of capex. There is some plant upgradation equipment in the factories, which is around 30 odd crores. We also have TNP, tools, plants, equipments, to execute our 16,000 crore order book, which is around 150 odd crores. And then there is for our civil business some machinery we need around 20 odd crores. And then we have our IT and other expenses. So that's around 200 crores. But this is staggered. This is not going to happen immediately ASAP. And what is more important is that we are very prudent in terms of how do we look at internal accruals to fund this.
Okay, so good balance sheet strength is what you're seeing as well in terms of visibility, good visibility in terms of order book as well. So I think interesting setup that we're looking at from here on, though I think the markets are reacting to the way fourth quarter numbers have panned out. So I think that's what we need to take with a pinch of salt.
This was actually planned because I had given a guidance of 27%, we did 30.
So, okay, tell me one last quick question. What do you think are investors not happy with according to you?
I think they should look at the year picture, the promise, the guidance on revenue and EBITDA, which we have achieved, rather than just looking at a 3-month horizon, which has global disruptions and delays which have happened. So for us, I would request our stakeholders to look at the annualized numbers and the EBITDA, and we've kept our guidance and we will continue to do so.
Okay, looking forward. Thank you so much, Mr. Narang, for joining in. It's always a pleasure to have you as well. So that was the management of Transrail. In fact, let's get in Sonam Srivastava, founder and CEO at Right Research as well. Sonam, welcome to the show. Always a pleasure. My question to you is, you did hear the management of Transrail speaking to us right now. What is your assessment in terms of the stock and as an investment opportunity right now?
Yeah, I think, like the management was sort of mentioning, they seem to be positive about the particular stock. I really like the segment, right? I really like the segment of power transmission and then heavy machinery sort of sectors where you have real assets. And I think I would be quite interested in that particular segment. We don't have any existing positions as such in this particular stock, but yeah, I think I really like the segment that they're in.
Pretty interesting take coming in from Sonam. Hi, just let's focus on Hindalco also. The entire metal. First, let's just show the entire metal index only. See, a good momentum is happening, and then we'll of course go on to Hindalco as well. If you could just show the constituents of the Nifty Metal Index, look at that. Good momentum coming in most of the stocks. Of course, let's focus on Hindalco. Morgan Stanley initiates an overweight trading with a target price of 13.25. Medium term setting is good. Tighter demand supply balance should support the aluminium prices, and a strong growth outlook is driving investments in the capacity expansion as well. And of course, the free cash flow generation is something which they are bullish on. Hindalco India is also in a structural sweet spot, and we recently understood about the Novelis earnings also, especially on the early restarting of the Oswego plant. That is where the street is bullish, and today also most of the metal stocks are doing well. And there's also one more reason, that is a weaker dollar as well. So that is the why that sentiment is going up. Sonam, your views on Hindalco and of course the entire ferrous and the non-ferrous pack. Out of both of these packs, which would be your choice to look for?
See, I think I definitely do like the metal space, and we have allocated. I think Hindalco is one of the most highly rated stocks in this particular segment. I think recently also we've seen a few upgrades coming in, and like you said, that Morgan Stanley I think has upgraded the particular stock. So I do like Hindalco, Nalco in this space. But even on the ferrous side, I think Tata Steel, JSW Steel, I think we would have a lot of interest. I think why you're seeing this rally in the metal segment, and why that rally might continue, is because of the nature of the whole geopolitical landscape right now. I think there's a lot of focus on hard assets, and I think that's where, and obviously the data center and the AI race is also creating a demand out there. So I would definitely be quite bullish on the metal segment. And yeah, I think these stocks like Hindalco look quite attractive.
Okay, so that's with regards to where Hindalco goes. But moving on, Coal India, that's an NDTV news break that has been confirmed. They've launched an offer for sale with an issue size of 5,000 odd crores. From the days, the stock is down, 2.5–3% as we speak. We have Somit who joins us with more details. Somit, over to you.
Yes, absolutely. It's an NDTV news break confirmed. We had first indicated about this on May 14th. It was part of our Heard of the Street segment where we did indicate that government will be soon launching the OFS for Coal India. Then on May 25th, we indicated to you about the size that could come in the OFS. And on May 26th at 5:22 p.m., we did give you all the details about this Coal India OFS that was launched nearly 2 hours after that. Now, if you look at what a government is looking to do, it's a 5,000 crore OFS, 2,500 crore is the base issue, green shoe option of 2,500 crore. Indicative offer price is 412 rupees, which indicates a discount of nearly 10% compared to the current market price. And this is not the first time where the government is looking to offload stake in Coal India. They have done it multiple times from 2015 till now, and over these years, including the IPO, if you look at, the government has mopped up close to 47,000 crore rupees by selling stake in Coal India over the last 16 years. And with this 5,000 crore, the amount would increase to nearly 52,000 crore rupees. Now, Coal India IPO had come in at close to 245 rupees per share in 2010. Currently, the share price is close to 450, 460 rupees. Jan 15th is when the government has raised the most of the amount via OFS, close to 22,000 crore rupees by diluting a 10% stake at a price of 358. Post that, they have always sold a stake at a much lower value. 266 was the second OFS, 225 was the third OFS. At 226, they had done a small OFS for the employees. And right now, the OFS price that the government is doing is the highest that we have seen in the history at around 412 rupees. So 2% is what government is looking to sell. Close to 5,000 crore is what they are looking to raise from this OFS.
Thank you so much, Somit, for that. Sonam, your view in terms of the Coal India OFS?
See, I think Coal India OFS, like you said, it is a positive sort of a move. I think Coal India as a stock particularly, hasn't been in our universe right now, even though, you can see a lot of rally happening in the commodity space. I think Coal India definitely, is going through a period of consolidation. So I would be interested in the OFS as an event, but I won't have a very bullish view right now on the stock.
What are your concerns, if I may ask, Sonam, with the Coal India?
Coal India, see, if I look at the metrics that I would track, right? I think let me just quickly pull that up. See, Coal India, you're seeing that actually there hasn't been like a lot of revisions in terms of the target price. There's not a lot of attention that the particular stock has been getting.
Sonam, but that's been again on the technical front. From a fundamental perspective, what is wrong with the Coal India according to you?
See, I think the company definitely has a very strong earning quality, and I think it's a high quality stock. But I won't say that it has the most attractive valuations as such, and the growth numbers that you're also seeing are pretty moderate compared to its peers, right? So that would be some of my fundamental concerns for this particular stock. But yeah, I think I can see some movement happen. But yeah, I think right now we would have like a moderate view on this particular stock.
A little bit of technical sell-off also coming, but remember, this is the first day of expiry, so positions are moving around, especially last series there was a good up move in Coal India, so of course positions are getting reversed. But moving on, ONGC has reported an operationally weak fourth quarter on lower production and higher costs weighing on the profitability. Somit is here with the details. Somit, what is it?
Well, operationally quite a weak set of numbers coming in from ONGC, and this is despite the fact that crude oil prices were on the higher side in the fourth quarter of FY26. Revenues were up 14%, EBITDA was up just 3%, margins slid to 49.5%, while the net profit fell around 21% on a Q-on-Q basis. Total production was down 4%, and that was the major reason why we are seeing this kind of a weak performance coming in from ONGC in the fourth quarter of FY26. And as I was mentioning that crude oil prices were higher, realizations were also up nearly 24% on a sequential basis to close to $78.3 per barrel. Now this is the 7th consecutive quarter where ONGC has missed its EBITDA estimates, and this miss was largely on the back of higher statutory cost and higher other operating expense. Production, as I mentioned, was weak, but one of the key concerns that have come in is the management commentary which suggests that which says that geological surprises arising out of reservoir complexities have affected production at one of its field. So what would be the impact of this on the future production plan is something that we need to watch out for, and we need to ask the management, and they will be holding their conference call today at around 11 a.m. And lastly, on the net profit front, that was lower, largely on the back of higher exploration write-offs. Overall, a weak set of numbers, some clarity required from the management on the conference call today.
Okay, thank you so much for that, Somit. So that's ONGC. In fact, some of the conference call highlights are already out. I know this was a recorded toss that we took, which was dated, but completely out of time. With that, it's a wrap on this edition of Trending Stocks from Sharad, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
And the award goes to
Tamanna Inamdar, Managing Editor, NDTV Profit.
Leading the newsroom, shaping the narrative. From stories to impact, a voice that matters. Tamanna Inamdar, among India's most influential, power, purpose and perspective recognized. NDTV Profit's editorial force gets industry-wide acclaim. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth.
Good afternoon, you're watching Lunchtime Trades with me, Shreyanshi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, let's take a very quick look at the markets right now, because when you talk about Nifty 50, you're seeing a little bit of a lackluster day of trade really coming in, and it's now slipped into the red, given up some of those early gains. Same can be said about Sensex as well, so similar picture is something that you're seeing coming in. Let's also quickly talk about the sectoral picture as well, because it is actually metals that are shining bright. So about a 1.7% uptake coming in there. Energy, auto, PSU bank, consumption, all of those sectors doing quite well for themselves. What's not doing so well from the sectoral basis is something like financial services, oil and gas, Nifty, IT, some of those counters, in fact, trading with a downtick as we speak as well. Let's talk about some of the gainers as well. When you talk about the broader markets as well, you're looking at something like a JP Power, Finlex Industries and Adani Gas that are buzzing away in trade, some of those counters. And when you talk about the Nifty 50 pack as well, what's doing quite well for itself is something like a Hindalco, Nalco, all of those counters buzzing away on the back of the aluminium price rise that we've seen up at this point right now. And when you talk about something like a Tata Steel, Power Grid, Bajaj Auto, NTPC, all of those counters in great shape right now. What's not doing too well right now is Coal India. After that OFS announcement, it was in NDTV Profit News Break confirmed also there. And ITC, ONGC, Wipro and some of those other IT counters also a little bit on the back foot. That said, let's also talk about the entire commodity space as well, because that's also quite in focus right now. Let's talk about oil prices that are declining just a tad bit. So you do have the supply concerns that are limiting some of those declines, and looking at volatile trade also coming in. But when you talk about Strait of Hormuz, it remains effectively shut. Also something that reflects really in those elevated price levels when you talk about Brent as well, hovering near that $98 a barrel mark. And that's after an overnight rise also coming in, pull back just slightly when you talk about Brent and WTI. But it's the fifth of global oil flows that's still impacted, and that's also something that you're looking at. Volumes, mind you, are remaining below average levels, and that's also something that you're looking at. Let's also talk about gold as well, because there you do have that decline really being held, not doing all that much, just a negative bias right now when you talk about gold prices. Traders are seeing some of those conflicts remaining largely contained. Inflation fear is also something that you're looking at, down about 15% since the conflict erupted. That's gold for you right now, and holding steady along those levels as well. Let's also get chatting with Vandana Bharti, AVP Commodity Research, SMC Global Securities, as well as Rakesh Arora, founder GoIndiaStocks.com. But before I get to you, Mr. Arora, I just wanted to try and understand, Vandana, what do you think about oil prices right now? Because you do have that pullback really reflecting through right now.
Yeah, hi Shanshi. Thanks for having me on the show. And the thing is that now the countries, they are opting for other routes. India is importing from Venezuela, and we are opting from other routes, other countries as well. So there is no like a big relief for the oil market. But yes, we are getting some of the oil, and it is reflecting on the price. But yes, we are going through a geopolitical binary. I can say that on the one hand, we are talking about ceasefire. On the other hand, US is attacking on Iran. So the peace still, it is in dilemma still, and the prices are showing the impact, because we have seen like a downside in the crude oil prices. Again, the prices are moving up, but yes, we can see a limited upside this time in the prices of crude oil, but expect a kind of level of 90 to 93, 94 if the tension escalates again. And on lower side, we are expecting only 87, $86 kind of level, because on the ground, we are not getting so much oil in real, and in a derivative market, the fall is much steeper.
No, absolutely. And Mr. Arora, I also wanted to take it across to you, trying to understand a little better about some of the surge that we've been seeing for stocks like Hindalco and Nalco right now. You do have global aluminium prices that are very much in the spotlight right now and close to those multi-year levels as well. How are you looking into this entire situation in terms of the REIT coming in for some of those metal counters?
Hi, good afternoon. So, aluminum prices went up on the news that China is likely to curb production. For the benefit of viewers, China had put a cap of around 45 million ton way back in 2017. And given the way, aluminum prices have moved up, all aluminum companies are highly profitable. So they are pushing to the edge of that limit, actually exceeding that limit now. And so China has come to reinforce that production limit stays at around 45 million ton. The result of this, high production and, high aluminum prices, that inventory in China for aluminum has doubled to around 1.3 million ton. And this inventory will find its way back into rest of the world. But currently people are worried about, Middle East conflict and, curbs on production in China. So both these things put together, the aluminum prices have moved up a little. But we are very much closer to a top rather than, a bottom. And the fair price for aluminum remains around $2,600, which is, $1,000 lower than the current price.
No, absolutely. And just in terms of the impact also coming in terms of financials or anything that you're penciling in, because you do have all of this happening against the backdrop of the supply disruptions, also some of those concerns that still linger because of the West Asia conflict. So how are you looking into all of this right now and the resultant impact?
So, this means that, there is supply disruptions going to keep a bottom. At the same time, because the profits are so high and, demand is also getting a little bit destroyed, we are seeing, some negative news flow coming on AI, which is leading to kind of a bubble kind of a situation. So both these things put together, I think, aluminum prices can remain sideways because there's a lot of interest from supply disruption. At the same time, there's limitations from the demand side. So I think they can remain range bound and higher for slightly longer. And that is why all the metal stocks, especially the aluminum stocks, are moving up because analysts and investors are building in a much higher aluminum for longer period.
No, absolutely, and thank you so much for helping us out in terms of understanding the resultant impact as well. And Vandana, I wanted to take it across to you since we're talking about metals. Let's also get chatting about gold as well. Are you looking at levels around the current levels? Are they attractive to you for a fresh buy? Is that the sense that you're gathering here?
Yeah, it is happening in gold ETF because on this correction, they are preferring to buy gold and silver ETF, and they were waited for this moment for like since months, and this is very fair value to go for buying in gold and silver in terms of physical and ETF. But if we talk about the derivative market, still I'm expecting some kind of further correction in gold prices. If we consider the COMEX prices, I'm expecting 4,444 kind of level, and it will reflect near 1,55,000, 1,54,000 on MCX because rupee is depreciating, so it is eating up the downside. And in case of silver, I'm expecting $72, $73 kind of level in silver, and on MCX it should come near towards the level of 2,62,000. So on derivative market, sellers, they are dominating this time. But yes, in ETF market across the globe, the buying has started, and we have seen a better data from as compared to April. And the smart money, it is moving in equity market. So yes, the buying is limited in this counter, and gold silver ratio is depicting that this time gold is going to be dearer as compared to the silver prices.
No, absolutely, and thank you so much, Vandana, for helping us out in terms of understanding that as well. Mr. Arora, I also wanted to take it across to you and try and understand a little better, get your closing comments in when it comes to the entire metal space right now. Given that there's so much uncertainty that is looming large, is there anything about your assumption that stands to get changed here? Anything in terms of the fine print that you're looking at?
So, metal has been a star performer as a sector over the last 1 year. And as we have seen that there's still some momentum left, so probably another last 10 to 15% leg is still remaining. So investors who are holding on can continue to hold on for some more time. But the new purchases should be limited because the risk factors are starting to outweigh at these prices.
No, absolutely, and thank you so much, Vandana, as well as Mr. Rakesh Arora, for taking time out and joining us this afternoon. So there you go, that's the entire outlook coming in, not just for the entire metals pack, that too, but also oil and gold. But let's also quickly take a look at Just Engineering that is standing out on the back of its earnings. So you're looking at a strong Q4 recovery coming in. Margin expansion is something that you should be looking at as well because it's offset some of those global headwinds. And the margins are largely aided by operating leverage, tariff variation, and even improved execution. What you're also looking at is the profit being aided by the higher income. Let's also get chatting with the management. Prateek Patel, CMD Just Engineering, joining us on the show right now. Prateek, first things first, wanted to try and understand what are the key levers that you're looking at when it comes to an operationally very strong set?
See, on the pricing aspect, we were hit hard by tariff. Now that tariff issue is settled and the price of rupee, the rate of rupee also has depreciated, these two have resulted into now a stability in our business. And that gives a very high confidence in moving forward in the next year.
And that makes a lot of sense in terms of how we should be looking at it as well. Just also wanted to try and get a sense of what you think about your international orders as well, that particular confidence as well. Is there any impact that you're perhaps penciling in when it comes to Q1?
No, international business has now stabilized. Whatever shocks we had faced were in the last year, also in the end of March because of the war. Now everything is getting stabilized, and as a result of that, we are quite bullish on this current year. For this current year, we think we'll again be on a path of growth. Rodney Hunt, our US subsidiary, is expecting growth of around 26%. Our UK subsidiary is looking for growth in excess of 75%. So I think we are back to our normal way of operations finally.
Absolutely, Mr. Patel, and point taken there. Just also wanted to try and get a better sense of the US tariff situation as well. Is there any progress coming in terms of the refund? Any timelines that you're then penciling in there?
We do not know about refund. We have filed our claims and we hope to get the refund soon. However, now the tariff issue has been settled. So whatever is there is going in our estimates. And since our estimate covers the increased tariff, now we have no more issues about facing loss on account of tariff.
No, absolutely. And I also wanted to try and get an update in terms of the manufacturing facilities. So US and Saudi Arabia, any update coming in there?
See, they are still on hold. I was in US last week and we have seen that the price of construction has gone staggeringly high. We have started to get the offers. Once we get final offers from our vendors, we will take a call on when to start the production of US plant. As far as Saudi is concerned, we have reached an advanced stage now and we have to go and select the plot and start with the construction of the plant. But both of these would be executed before end financial year 27. So by December 27, I hope to get both of these plants commissioned.
No, absolutely. And thank you so much for helping us out with that take also coming in. I also wanted to get a word in for your margin outlook as well as your outlook for the medium term as well, because the stock is doing quite well for itself. You're looking at some solid margin expansion also coming in. A lot of operating levers that are in the spotlight against this entire backdrop. How are you looking at the medium term growth?
So for the year FY 26 and 27, we are quite clear of achieving a growth of in excess of 15%. For 2026-27, we are confident to achieve revenue of around 875 crore. With gross profit margin of, you can say, between after tax of between 12 to 13%. This is considering that the situation still remains like as it is. There is no great change in the situation. If the situation improves, then I am quite confident of achieving revenue in excess of 900 crore and profitability in excess of 13%.
Absolutely, and just right before we let you go as well, just wanted to understand if you think that the margin momentum from here on, you've given us the medium-term growth guidance, but for the long term as well, do you think that the margin momentum is going to remain sustainable? Is that something that you can provide us some more color with?
See, margin, if you see the past, we have maintained margin between 12 to 13%, and that is easily possible. What affects is only these geopolitical things. If these are all stable and the outlook remains stable as we have seen for last many years, then I am quite optimistic of getting margins, PAT margins, more than 14% in the long run.
No, absolutely. And thank you so much for helping us out with that entire outlook also coming in, not just for the medium term, but also the long term as well. So the margin momentum is really sustainable. That's the word coming in. Thank you so much for joining us on the show. With that in mind, let's also move on and talk about another earnings counter that's in focus. That's TVS Supply Chain Solutions. The company reported a strong fourth quarter with double-digit growth across revenue and EBITDA while returning to profitability on a year-on-year basis as well. In fact, Puneet caught up with the management. Let's go across and listen in to a slice of that conversation.
Being joined by Mr. Ravi Vishwanathan, he's the Managing Director of the company, as well as R. Vaidyanathan, he's the Global Chief Financial Officer at TVS Supply Chain. Gentlemen, both of you, thanks so much for joining in. Just firstly, before we get into the quarter gone by, as well as what's the outlook for the next year, Mr. Vishwanathan, we've spoken to you since the company got listed, and you've been always upfront at a very tough time for the global logistics industries as a whole, and you've put out an exchange filing, of course, via the company. This would be your last quarter as the managing director, and you would be resigning very soon. So firstly, many congratulations on a very great stint at the company. Just wanted to understand what has been some of the key highlights for you as we come to this very, of course, a very good tenure for you at the company, especially given the uncertainty? And of course, wishing you the best, but please go ahead, sir.
Firstly, thank you, and I've always enjoyed my conversation with NDTV. Thank you so much for your wishes. It's been a phenomenal, I would say 6 years in the company. I joined the company, and very soon we were with the world's first COVID situation. The supply chain obviously was disrupted then. We came through a recovery phase, and then we had significant challenges around wars, the Ukraine war, the Red Sea situation, and then more recently the geopolitical environment, which has been turbulent over the last year, and more recently the war in West Asia. But in between all of that, there have been moments of glory, moments of celebration. We listed the company. It was a very important landmark for the company. And, we've had phenomenal success in terms of customer acquisition. We have some fantastic leadership. And most importantly, a fantastic set of colleagues who have been part of this journey. And in many ways, I would say it reflects the character and the resilience of this organization. And today, I'm very proud to say that TVS Supply Chain Solutions is a world leader, a well-recognized supply chain solutions leader. And it comes on the back of the tremendous effort that each and every employee in the organization has put in. And that's reflected in our current year's numbers. In a very, I would say, up and down environment, to turn the company to deliver 100 plus crore profit is something which all of us are very proud of here at TVS SES.
Just one question, because and your presentation talks about quite a few of the aspects that you've given as well in this conversation. In terms of GFS specifically, you've seen the India business do very well. The growth has been almost 38%, while the global business is almost just up about 3%. It's a completely reverse picture for the integrated solution business. Is that something that the nature of the business is such that you are seeing that discrepancy, and do you expect that to continue forward as well, that GFS India business will continue to do well, or do you feel that some aspects will change for both of those businesses in FY27?
So clearly, GFS India will continue to do very well, but we're optimistic that the rest of the world business in GFS will do better than what we did last year. So our outlook for GFS is actually definitely better than our last fiscal, and that's going to come on the back of both India and rest of the world doing better than what they did in the fiscal that just went by. So we are fairly confident of that. In fact, we believe that GFS will definitely be a turnaround for us as we go forward. On the ISCS side, it's important to note that the India growth story is something which is spectacular. If you look at India as a geography, year on year we've grown 31%. The India business has been led, I would say, by both GFS, ISCS first and GFS. We see a sequential growth in India. That's Q3 to Q4. Our revenue has grown by 14.5%. I think that's a clear indication of what we see going into FY27. The third aspect is that if you look at our new business wins, we have about 524 crores of new business wins, and that is a record number. The first time ever that we got 500 plus crores of new business wins in a quarter, which is 20% plus of the quarterly revenue. And again, that's a very strong tailwind. So overall, I think FY27, we have every reason to be very optimistic at this point in time.
Just one final question, because you mentioned about this year being profitable. Of course, you had some of these exceptional items also that helped the adjusted profit number. But if I can look at, if you can give us some perspective of the medium term, because your revenue growth has been 10% for this year. Profit growth, as you mentioned, that it was a turnaround year. But given the contribution for profit to revenue is just about 1%, could we see this business get into that 3 to 4% mark in the next 3 to 5 years? Could that be a fair assessment?
Look, our aspiration is to get to about the 3 to 4% PBT to start with, and we remain very focused. I think what's important to note is that while the business is at 1%, if you look at the trajectory of how we have been climbing, that is an important indicator for us. And we think that's the trajectory that will continue to grow. And I'll let Vaidi answer specifically on what are the things that we believe will make that trajectory continue. Vaidi?
Sure. See, I think what is important to note, as Ravi mentioned, the exit rate of Q4 is almost 524. The new business is about 524 crores. That gives us a very, very strong hit as we enter into FY27, and also a significant improvement in the adjusted EBITDA margin, right? I think we moved the adjusted EBITDA margin, especially the ISCS business, from almost 8.5% to almost 9.3% in this quarter in Q4. So all this bodes well for us. When we look at the PBT margin, I think we should definitely be somewhere around, from an aspirational point of view, 3 to 4% is something which we definitely target from an aspiration.
Alright, so that's the word coming in for something like a TVS supply that's in focus as well. Let's also talk about Hitachi Energy. That particular counter is buzzing away in trade today as well. And when you talk about the brokerage verdict coming in here, you do have Jefferies that has maintained a buy rating. They've hiked the target price by quite a lot. And the multi-year structural growth story is something that they're highlighting. They're also raising the FY27 to 28 EPS by 10 to 27%. Now, in terms of the industry demand trends, they're talking about how these are remaining robust for the HVDC projects. They're talking about how these are margin accretive right now, and that's going to be helping the company going forward as well. They're also flagging how there's an announcement of an additional capex to meet the industry demand in terms of the key growth triggers as well. They're talking about data centers, exports that are high, that are going to be driving some of the demand as well going forward, and that's something that they've highlighted. Lastly, when you talk about the EPS CAGR as well, they're talking about 58% as something that they're penciling it out for FY26 to 28, and that improves some of that visibility as well. Quite the bullish view coming in there, but that's all the time that we have on the show for now. Thank you so much for tuning in.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
And the award goes to
Tamanna Inamdar, Managing Editor, NDTV Profit.
Leading the newsroom, shaping the narrative. From stories to impact, a voice that matters. Tamanna Inamdar, among India's most influential, power, purpose and perspective recognized. NDTV Profit's editorial force gets industry-wide acclaim. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better.
Good afternoon, you're watching Small Cap Bazaars with me, Somit Sarkar. Well, if you look at the markets, not a great day, it's a dull day in fact for the markets. It has been consolidating near the 20,900 level. Not much of an action that we have seen. Yes, the Nifty Bank Index is down 200 points, but that is largely because of just one stock, that is HDFC Bank. That stock is down around 2.5%, and similar is the case when it even comes to the benchmark. It's HDFC Bank that has been pulling even the Nifty and the Nifty Bank Index down. HDFC Bank is down nearly 2.6% on media reports that had come in today early morning which were quite negative for HDFC Bank, though they have come out with this clarification where they are denying all these claims. If you look at the sectoral indices, again, the banking names are under pressure. Surprisingly, the Nifty Media Index has been in trade, followed by Nifty Metal and Nifty Auto Index, both up anywhere between 1 to 1.5%. Nifty Media Index is up nearly 4% in trade. Apart from that, it's energy and the PSU banking names which have been gaining in trade. But when it comes to the small cap names, a lot of stocks have been buzzing on the back of good numbers. Timex Group, that is up nearly 16% in trade on the back of numbers. Max India is up 15%. Gujarat Thymesis, that counter is up 15% after a very long time. We are seeing this counter moving up 15% in trade. Penar Industries, Coffee Enterprises, Delta Corp, all up more than 10% in trade. For Delta Corp, obviously there's a news that is expected to come in related to GST on gaming, and that could be one of the reasons why the stock has been buzzing in trade. On the flip side, we have Skoda Tubes, Lay Merit Exports, Be Right Real Estate, Transpac Industries, Insulation Energies down anywhere close to 8 to 11% in trade. But today, firstly, we'll be speaking with the management of Shriram Properties. Now, the company came out with its numbers in the fourth quarter. Shriram Properties has reported its highest ever revenue and profit, and this was largely driven by the record handovers that the company had done in the fourth quarter of FY26. Apart from that, if you look at the profit before tax was also up nearly 25% on the back of lower finance costs. Customer collections also reached a new high of 1,660 crore rupees. Let's get it, the management, Mr. Murli, the CMD of Shriram Properties, to understand more on what lies ahead for the company. Firstly, to start off with, sir, for FY27, how's the pipeline looking like? What is the gross development value? What are your targets when it comes to pre-sales number and collection numbers?
Fantastic. Thank you. Thank you for hosting us. As you've seen, FY26, we have done a fantastic performance, and we are looking ahead on FY27 from 2,350 crores in FY26. We are looking at growing to 3,500 crores sales value in FY27, which is roughly about 41% growth is what we are looking at. And we have got about 6+ million square foot launches. And the collection also, we are looking at about 1,600 to 2,000 crores collection to reach. So from 4.15 million square feet, we are looking at about 5.5 million square feet growth. So FY27 looks very, very robust, and we are aggressive, and we are extremely optimistic about the market potential what we have today.
And so if you could just also share with us, what is your long-term revenue and profit number that internally the company is eyeing for?
Can you come again?
Wanted to understand the long-term revenue and profit numbers that the company is internally targeting.
We are looking at the growth of, on the revenue side, at least about 30 to 35% growth in the next 3 years' time on the revenue. On the profitability, which will be slightly more than that.
Okay. And any debt concerns that you have, anything you plan to repay on that front, on the balance sheet front?
Ours is the, most appreciated company in real estate space in terms of debt equity profile. Our debt equity profile is one of the lowest in the sector. Ours is about 0.25, 0.28% at this point of time. And there is, in fact, there is a lot of leg space and leg room for us to, raise extra capital, which we are very cautious about it. We have been maintaining this 0.25, 0.3 debt equity ratio for a long period of time. And we also generated good amount of cash flows last year, free cash flow, which close to about 250 crores of free cash flow generated, about 370 crores of free cash flow has been invested into new projects. As an organization, we are looking at generating at least about another 550, 600 crores of free cash in the next 2 years' time. So debt equity ratio is not at all a concern. In fact, we have got a much bigger leg room for us to expand our growth today.
Okay. So in FY27, are you planning to enter any new markets? And given the overall market scenario, the macro scenario, the war, because of which there are a lot of concerns on the economy, Indian economy as well, given the fact that crude is trading around $100 now per barrel and rupee has been depreciating. There is a lot of concerns on the economy as well. Are you seeing any initial signs of slowdown or lower bookings coming in?
Last May, we launched a project in Pune, one single project. That is the first entry outside South India, other than Eastern part, in Western part. As we speak today, we have got close to about 5 million square feet across 3 projects. There is a good growth momentum coming up in Pune. We are an established player in Pune, and our brand is well reckoned in the marketplace. That has given us encouragement to look at maybe Bombay. We should look at soon. We'll start exploring Bombay as a market, because we also wanted to look at Pune established first, then look at other markets. So the results have been very good. On the overall thing, what we feel, government is doing a fantastic job in controlling inflation, controlling managing the oil crisis, and we have an exemplary example of how government has managed COVID, and we hope and expect government to manage this current situation also in the same way and come out with a flying color. With respect to the demand, I don't see demand coming down for real estate sector today, particularly in the space where we are operating, mid-market and mid-premium segment. We don't see the demand coming down at all. Also in the markets where we operate, whether it's Bangalore or Chennai or Pune or Kolkata or Bombay, when we look into it, so I don't see demand coming down at all in this space where we are operating. Demand is only going up further and further. Overall, on the cost is in good control today. On the selling price also, there has been a reasonable increase which is happening today. We, appreciate government, intervention from time to time in making sure that they give this positivity to the sector and as well as to the overall economic situation. We are extremely bullish on this.
And out of all the markets that you're present in, which is the fastest growing market and where we are seeing an highest improvement in pricing?
All the markets are doing good. If you need to prioritize, maybe Bangalore, then Pune, then Chennai, then Calcutta. Calcutta, as you see, we have got a large land bank. Now, new government has started pushing quite a lot of reforms. We are getting good signals. We are all getting good signals as a nation. A lot of new industries are likely to come up is our hope. And a lot of new infrastructure push is likely to happen in Calcutta. So Calcutta is the most important city for the country because that Northeast, Calcutta is an important city. If Calcutta grows well, entire Northeast will take a balanced growth. If Northeast grows well, entire country will have a right balance. So we hope government will push quite a lot of infrastructure growth and employment growth and also new industries to come up, which we are seeing good signs today. So our land bank, what we have in Calcutta, could be a big fortune. We are very bullish about Calcutta also.
And one thing I wanted to check with you on the pricing front, given the fact that you were also mentioning, in fact, it's a fact that retail fuel prices have started to move up, which could also lead to higher cement prices. Steel prices are already moved up on a YTD basis, and even PVC prices are moving up. So in fact, tile pipe prices are also expected to move up, given the fact that gas prices have become expensive. So any impact on the cost side that you're seeing?
Yes, construction cost, there could be an increase. We are conscious about it because of all this, impact on whether it's crude or oil, inflation, whatever the challenges, there is a possibility construction costs can go up. You should also not forget land price also gone up significantly. All that puts pressure on, margin, but growth will not be a challenge. There is a big demand, growth will continue to be there. On the construction cost, yes, there is a challenge. We are conscious about it and we are working towards that. Hope government has intervened in the past and ensured that inflation was in control and construction cost was in control. So it will continue to be in the same way is our wish and desire. And we have a lot of confidence in the government in making sure that this is in good control.
Well, thank you, sir. Thank you for joining us and giving us the way forward for Shriram Properties. Well, that was the management, quite confident on the growth path, and tall guidance is something that the management has given for FY27 and FY28. Now, before we move on to our next management, let's get in Sharad to understand what's been buzzing on the F&O side.
Well, largely we see HDFC Bank has been a drag, ONGC has been a drag, but that momentum has actually shifted. Not a lot, but definitely the metal names, they are doing well. Of course, look at Tata Steel, Power Grid, they are doing well. And we're seeing, of course, a little bit of concern in some IT names, but net, the technical strength is still towards, a positive momentum, at least on the medium-term basis. But yes, it's a stock-specific market, and action is much more there in the mid-caps, to be honest. But Excite, the top gainer in the F&O, and a good volume-based buying happening here. Swiggy also, we're seeing a good up move, with stock jumping almost 6% in the day's trade. If you look at it, short covering, we have Siemens and Sammaan Capital fresher positions are being made here. This is you could say one of the first days for the new series. For emphasis, we have PNB Housing Finance, and to be honest, there isn't much a major trade here. It's just there. ONGC, that concern is there. It's down 4.5%, while LIC also, last time we checked, it was almost 2% down, and now it's more than 3.5% down. So it has intensified a little bit of selling when it comes to that. But it's largely, you could say, a stock pickers market, and overall on the indices, no major trade to be made, honestly.
Thank you, Sharad, for that. Let's slip into a short break and we'll be back with more news and managements on the other side.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
And the award goes to
Tamanna Inamdar, Managing Editor, NDTV Profit.
Leading the newsroom, shaping the narrative, from stories to impact, a voice that matters. Tamanna
Welcome back. You're watching Small Cap Buzzers here at NDTV Profit. The next small cap buzzer that we are going to talk about is Meghna Infracon. Now, to take this conversation ahead, of course, we're joined by Vikram Lodha, the promoter and managing director at Meghna Infracon Infrastructure, joining us now. A very good afternoon to you, Mr. Lodha, and thank you so much for taking out the time. My first question to you is that when I was looking at your Q4 numbers, there's been good top line growth, but in terms of where margins go and EBITDA growth, that's largely been impacted because of higher input costs and in terms of project mix as well, in terms of approvals, and there were one-off expenses as well. Just want to understand as to what has fared in this quarter in terms of what has put pressure in terms of margins, and going forward, when do you think margins will recover and come back to a normative range, and what will be that normative range?
So there were little pressures because earlier it was known as we had a security business. So earlier it was known as NISA Securities. So we had a one-time share profit last year taken into consideration, which this year has not been. So that's the reason. And if you minus that figure, it is the profit is in line with the expectations.
What about margins? What is the normative range that you're expecting in FY27?
FY27, we are expecting the margins around 30% plus.
In terms of your overall development, I think if I'm not wrong, you're taking up the asset light approach. Just want to get a sense as to what is the breakup looking like right now and what is it going to be like in the next 2 years?
So it's going to be the same only. At the same time, we have around by September end, we are having around 4 launches expected. So we are looking at a good pre-sales number at this stage. That's what we are expecting.
Okay. Okay. Talking about FY27, if you could share some guidance on what is the kind of gross development value you're looking at, any new markets you're looking to enter?
So overall, so on June, our team has just confirmed June 22nd, we are launching Thane Meghna 1 IT Park, which is a pure commercial project. And by July first week, we are launching our Juhu project. So we are expecting a good pre-sales number in next 2 quarters.
What is the number again in terms of GDP growth for FY27?
So GDP growth is around total, there'll be total, I guess, in June we are launching 300 crores, and by July first week we are adding another 100 crores, and total value of GDP would be by July as August first week should be in the market around 1,100 crore.
Okay, and then in FY27, what is the top line that you're aiming at? Because in March you've done around 46 crores. I mean, ending March you've done around 46 crores. So where does FY27 top line growth go, and the bottom line number as well, if you can give us whatever internal targets that you have?
So top line number we should look at around anywhere around 400 to 500 crores.
Okay, so.
And by bottom line, we are looking around 40 crores.
This is for FY27 that you're saying, from a 46 crore in FY26 to a 400 crore in FY27.
Yes.
Okay, all right. And if I'm not wrong, you've also said that you plan to do around 3 to 5 new projects annually. Is that correct? You plan to add at least 3 projects or up to 5 projects in FY27?
So right now the GDV is around 1,100 crore. We are expecting in another 1 year or 2 years to double the GDV.
Given that you have such great expansion plans, just wanted to understand, does the company have enough funds, any equity raise that you're looking at, or any debt raise?
As of now, nothing. We want to be as light as possible. We want to keep the company as debt-free as possible.
You fund this expansion?
Now we have not decided. We just not decided to take any debt on our books. We want to keep it as light as possible.
So are you saying that the internal accruals will
all internal accruals
that will be sufficient enough for such expansion plans?
Yes.
Okay.
Yes.
In terms of the South Mumbai market, that's, because a lot of people are taking up redevelopment in that space, especially in the luxury space. Just want to get a sense in terms of competition, what sets you apart?
So our location is always the key factor, and our pricing. So if you see in South Bombay, people, I guess, the Dadar project which we taken up, the rate around other people is around 1,20,000, 1,30,000 per square feet. We coming up with a good pricing where around 80 to 85,000 per square feet, which is, I mean, in that segment is a key benefit for us. The pricing is also a key factor to get our location sold out.
And lastly, sir, just wanted to understand on the costing side, we are seeing an increase in petrol and diesel prices, which will lead to higher cement prices. Tile prices are increasing because of gas prices. Steel prices are already on an uptrend on a YTD basis. So what is the impact on cost side that you're seeing?
Yes, costs have increased by 10 to 15%, but we are trying to absorb as much as possible and not pass on to our customers. So we are our team is well prepared, and in fact, all our orders and everything was all placed beforehand. But yes, 10-15% increase we see right now in the current scenario, and we'll try to get the costing as much as possible to the downside.
Okay, all right, okay. Thank you so much, Mr. Lodha, for taking out the time and giving us answers for all our questions. Thank you so much. So, from a 46 crore to a 400 crore in FY27 is what the company is planning. But moving on to our next management, today's show is packed with managements, and Muffin Green Finance is the other one in focus, which of course did come out with its Q4 numbers. And to talk about it, the stock currently is trading 1% higher. And to talk about this, we're now joined by Gunjan Jain, who's the CFO of Muffin Green Finance, joining us now. Gunjan, a very good afternoon to you first of all. In terms of how Q4 has panned out overall, because on a year-on-year basis, your disbursements have almost tripled. Just want to get a sense as to what's worked here and what's the outlook going forward in FY27.
Hi, thank you, and good afternoon, everyone. So, like, quarter 4 was very good for us in terms of disbursement, in terms of equity raise, in terms of profitability. To start with the disbursement, we had made a disbursement of 700 crore itself in quarter 4, with 300 crore in March itself, through our major disbursement in Mediclaim Premium Financing, which is our primary product at present. And we achieve a PAT of 11 crore in the quarter itself, apart from the equity raise of 265 crore, which we did in last quarter, which came in our account in the month of March itself, which also help us in increasing our profitability. Apart from that, multiple, like one more product which we started in last quarter is the loan to the employees of the state government, which also help us in increasing our profitability.
Okay, so 700 crore was the disbursement that we saw in Q4. Is that run rate sustainable over every quarter in FY27 as well? Or can that number be higher?
So the trend will continue, the number will be sustainable, and we are expecting our AUM to be somewhere around 2,300 crore by end of this financial year. For that, the respective funding is available with us, and all the tie-ups are working properly. Like, we are active in our Mediclaim and the employee loan disbursement, and we'll achieve the target for sure.
So from 1,500 crore to 2,400 crore is the AUM target that you have for FY27, right?
Yes.
Okay. NIs have grown by 50%, and so is that number also sustainable? Is that kind of growth also sustainable in FY27?
The profitability?
Yeah. Yeah.
Yes, so the profitability will be sustainable. Reason being, the major disbursement which we did in March was 300 crore. The profit, the income of that disbursement is yet to come in the next quarter itself. Plus the equity which came in March, that will also help in increasing in our profitability, and the disbursement number, the leverage will also give us an advantage of the same. So the trend will continue. We'll achieve the profitability. If we compare from the previous quarter, we have increased our profit from 7 crore to 11 crore, and that trend will continue from next quarter itself. So yes, there will be a good jump in the net profit for next financial years.
Then overall, your gross NPA as well as net NPA has improved. Do you think these levels will be sustained in FY27? Do you expect further improvement?
Since we have pivoted from the EV financing to the Mediclaim Premium Financing and this employee loan financing, which is entirely digital product, and we are backed by the insurance companies and the government, somehow some comfort is there in terms of the recoverability. So that is why our gross NPA has improved, and it will improve a lot, because we are seeking somewhere around 60 to 70% of our portfolio will be in these two particular products, where like the portfolio quality is 98% zero DPD, and we are getting 100% digital collection. So OPEX and everything is very negligible in these two products.
Just one last question, Gunjan, from my end is your borrowing cost is already reduced to 12.17, and that's almost a 163 basis points cut. You've guided for a 10% in FY27, if I'm not wrong.
Yes.
If yes, what are the levers that are going to help you do that?
So what we are expecting is, so we are going for the rating upgradation. We'll be soon giving our documentation to the rating agencies, which will further help us in reducing our borrowing cost across all the lenders. Apart from that, we did one PTC transaction from Aditya Birla, which was done at 11%, and we are expecting to improve the rate in terms of new PTC transactions going forward.
Okay, all right. Gunjan, thank you so much, for helping us answer all those questions and taking out the time and speaking with us at NDTV Profit. But with that, viewers, we are completely out of time on this edition of Small Cap Buzzers. But if you have stock-related queries, then do stay tuned, because Ask Profit is up next.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
And the award goes to
Tamanna Inamdar, Managing Editor, NDTV Profit.
Leading the newsroom, shaping the narrative, from stories to impact, a voice that matters. Tamanna Inamdar, among India's most influential, power, purpose and perspective
Welcome back. You're watching Ask Profit here at NDTV Profit, and this is the afternoon edition, and this is a show that gets all your stock related queries answered. For viewers who are just tuning in, you can either call us or send us your queries on the WhatsApp number that is flashing on your screen up there. But before we start taking that, and by the time you send us your queries, we'll take a quick look as to how the markets are doing at the moment. The Nifty 50 is trading almost flat, in fact just flat. It's trading around the 23,900 levels is what we're seeing, sustaining the 23,900 levels. Crucial levels, of course, to watch out for. When we'll see the 24,000 action coming in, we'll have to see whether that happens in the next 1 hour or not, but completely off from its day's high point for the Nifty 50. The Bank Nifty, in fact, has turned into the red. Now trading around 0.3% lower, below the 55,000 levels is what we've seen. So almost 180 point of a dip is what we've seen in the Bank Nifty. Let's try to pull up the Nifty 50 heat map and see if things have changed there. ONGC, the top loser, still now losing around 4.3% grounds. ITC is the other one, which is down 3% as we speak. HDFC Bank, yet another 2.5% of a downtick. Coal India, as well as HDFC Life, seeing a downtick of around 1% each. But on the flip side, you have Hindalco still holding up, still up around 3.5%. Power Grid up 2.6%. In a Globe Aviation ahead of numbers on Friday, up 2.6%. Tata Steel, Bajaj Auto, Eternal, Tata Motors, Tata Consumer are some of the names that are doing fairly well. So a lot of Tata names doing well in trade today and holding up the Nifty. But there's still more green on the screen, and that gives you at least some optimism. So let's try to pull up the advanced decline ratio as well and see as to whether things have moved there. Because overall, if you take a look at the broader end of spectrum, it's still holding up. of course, the tides have at least turned. We have narrowed in terms of where the advance decline ratio goes. Now around 1400 odd advances versus that of 1100 odd declines. So that gap between advance and decline ratio has narrowed, but the mid cap 150 is still up by about 0.3% and the small cap 250 is still up by about 0.4%, outperforming the benchmarks. Lastly, the BSE 500 quickly, if you can see that, and a lot of action there is still coming from numbers. There's Delta Corp, which is seeing gains about 11 odd percent. There's Z Entertainment, which is seeing gains of about 11 odd percent after a really long time. Z Entertainment, which is seeing good gains. There's PNG Health on the back of strong Q4 numbers and good top line growth, up 10%. Adani Total Gas also doing fairly well now, 9.2% of an uptick. But on the flip side, you have something like a Sun Pharma Advanced Research, which is down 7%. Easy Trip down 7% as well. GE Shipping, Polymedicure. Polymedicure has been taking a knock since the past 3 odd days since the numbers were out. AstraZeneca is the other one which is also seeing a downtick for around 5 odd percent. So that's with regards to where the markets go. But let's start taking your stock related questions, and to answer them today we are joined by Tapan Doshi, research analyst at catapan.in, and Osho Krishnan, Chief Manager Technical and Derivative Research at Angel One, joining us now. Welcome to both of you, gentlemen, and a very good afternoon to the both of you. I'll start taking the first question, which is from Roshni, who's writing us from Bengaluru. She's got around 200 shares of Fortis Healthcare, which she bought at the levels of 969. Wants to know whether she should sell or hold, and if sell, what other stocks can she look at in this particular space? Tapan, I'll come to you on this one. Any view on Fortis?
Well, Fortis is a good stock. Now, if you see the quarterly results are coming good, and the bed expansion is going to be there in the double digit. Again, average revenue per bed is almost, you can say that 20% and above. Occupancy is expected around 70% from here. But there are not many new hospitals are coming, so capex will be on a higher side, and also higher employee costs will impact the margins. But if you ask me for the long term, I think I'm much more demand on the healthcare demand. And so, of course, one can hold this stock for a little bit longer.
Okay, all right. So that's the view coming in on Fortis Healthcare. The next one that we have is from Rimple, who's writing us from Chandigarh. She has an open-ended question. She's saying she wants to know 2 stocks that she can invest in from a 1-year time horizon. Osho, very good afternoon to you. Any particular counter that you are looking at right now from a slightly long-term perspective where charts are looking attractive?
Very good afternoon to both of you and all the viewers. Yes, some of the counters are looking very positive. Some are having a kind of a reversal kind of a signal. Some are having a kind of a strong momentum. So first counter, which one may look for from a longer term perspective, is HDFC Bank. HDFC Bank has seen a strong correction, and from a longer term perspective at these levels, the counter can see some kind of a strong rebound. So near the zone of 720, it is a very strong valuation company. Right now, it is into a strong corrective zone as well, but 740, 720 will be a decent zone to start accumulating the counter. So this will be the first pick. The other counter which one may look to accumulate is from the defense space. HAL is looking very positive to me. After a very elongated period of consolidation, HAL have finally starting gaining some traction, and the defense overall space is looking very positive to me. So HAL can be seen from a investment point of view. The first upside target is nearly 4850. Once it breaches the zone of 4850, then from there onwards, 5500 can be seen from longer term perspective.
All right, the next one is on Jupiter Wagons. Ashish from Delhi wants a 2-year plus view on this particular counter, and whether right now does it make sense to invest into this or not, Tapan?
It's a good stock now. Suddenly the recovery you can see from in the stock perspective, and also the problem was the execution part, and actually there was a scarcity of one of the raw material, and that was wheel set. Basically, it was a wheel set, and that's why there was a delay in production and all that. But I think that matter is resolved, and brake system growth is accelerating. Again, the wagon demand visibility is quite good. And railway capex support the strong demand. This stock is not so expensive. Of course, it is dependent on the railway, so we have to see the orders coming on from the government on regular basis. But overall, I think strong railway policy is there. So I think much more tailwinds are there. So one can hold this stock. Even he can buy a stock at every dip.
All right, the next one that we have is, by the way, before I start taking the next question, for viewers who are watching us, you can also give us a call on the number that's flashing on your screen up there and ask your queries live to us. Just, you can pick up the phone and call us with all your stock related questions. But the next one that we have is on ITC. Our viewer has 40 shares of ITC at an average price of 305 and wants a view here also from a 2-year perspective. I don't think we have the name of the viewer, but Tapan, any view on ITC for the next 2 years?
Honestly, I'm not too much positive on ITC because much more dependent on the cigarette policy and all that, and we know that how the government is negative towards that segment. Again, the FMCG is one of the segment which is growing, but still it is not substantial. 80% profit is coming from cigarette. Again, we have to because the hotel was one of the segment which was suffering, but now as it demerger is happened, I think that is when ITC is a little bit vulnerable because of cigarette. Again, the paper board demand is also weak comparatively. So looking at all this, it may give a normal return, but I think much more better FMCG stocks available where one can look at it.
Okay, and that's correct, right? Because FMCG is doing all the heavyweights for ITC as we've seen in Q4 as well, and plus FY27 is going to hamper the volumes because of the tax hike and price hikes that they're going to take. So that's something that one needs to know about ITC. Today, of course, the stock is seeing a downtick of 3%. But I think Murli is calling us from Hyderabad. Murli, a very good afternoon to you. What's your question about?
Yeah, good afternoon. I want to have a query on Aeroflex. Is it a good time to add on? I have about 20 shares at the average of 385. I had earlier, I booked profit and got out of it. Now again started adding at 350, 380 level. Is it good to add more at the current level?
I believe this is Aeroflex Industries that you're talking about, right?
Correct.
Okay.
Correct.
And you want a charts view on this one, if I'm not wrong?
Yeah, what is the short term 6 months to 1 year target for it?
Okay, Osho, Murli, I got your question. Osho, I'll take this up with you. Your view on Aeroflex Industries with regards to where charts go?
See, overall, the counter has seen a very strong and vertical rally from the zone of nearly 200 towards 450 kind of a zone. So at current levels, the technical parameters are extremely overstretched. So at current levels, the risk reward is not very much favorable, but still on the higher end, I'm expecting the zone of 445 to 50 to be seen as the first intermediate target on the higher end, while on the lower side, 350, 340 is a kind of a support zone for the counter. So at current levels, it will be advisable not to add more at current zone. If there will be a further breakout or another set of rally above the zone of 450, then one may look to add more positions in the counter. But till that time, I am expecting the counter can see some kind of tailwind or some correction towards the zone of 350. So 350 will be a comfortable zone to start accumulating. 450 will be the first target where one can look for some profit booking at those levels.
Okay, all right. So that's the view on Aeroflex Industries. The next one that we have is on Bharti Airtel. Murugappan from Chennai is holding 100 shares, bought at an average price of 1885. Says it has gone down from 2150 and he's not booked his profit certainly, and wants to know whether he should continue to hold this from a medium term perspective or not. Slight losses, Osho, that he's sitting at. What should he do?
See, overall, the counter is very positive, very strong traction has been there in the counter. But in the short term period, there has been some kind of consolidation around the zone of 1840, 1820 odd levels. So overall, from a short-term point of view, there might be further consolidation that can be seen in this counter. But from a medium-term point of view, one should stay invested. The chart structure is very positive. Tips towards the zone of 1820 should again augur well for the buyer. So one may look for even averaging out the counter around the zone of 1840 to 20. On the higher end, the first resistance and very crucial hurdle is 1940. Once it breaches the zone of 1940, then from there onwards, we can see 2100 zone again at very short term point of view.
Okay, all right. I think we've got Ravi waiting by and calling us from Hyderabad. Ravi, a very good afternoon to you. What's your query about?
Yeah, very good afternoon. I have a query on Jammu and Kashmir Bank. Just want to know at what price is good time to enter, and I can hold for next 6 to 8 months.
6 to 8 months. Okay, got your question, Ravi. Then I'll take this up with Osho again. Osho, J&K Bank, what are the charts indicating?
See, overall, the counter is at very crucial hurdle zone. The zone of 145, 140 has been a kind of a strong correction zone in the year 2024, February month 2024. So at current levels, the counter is again retesting the same level. So one should wait for a decisive breakout. If there will be a decisive breakout and the counter breaches the zone of 145 on a sustainable manner, then only it will be advisable to accumulate the counter, and the target will be near about 40 odd points. So nearly 185 to 190 will be the medium to long term targets for the counter. But at current levels, it will be advisable to keep this counter in the radar list and wait for a confirmatory move above the zone of 145 to 150 kind of a zone.
Okay, all right. So that's the view on J&K Bank. The next one that we have is on Sterlite Tech. Our viewer, Mr. Gupta from Pune, is holding 200 shares at the levels of 160 and wants to know whether he can continue to hold this one or not. Tapan, Sterlite Tech has seen a good rally. In fact, recent CLSA note also indicated an outperform and gave the target price of 655 on this one. But from a long-term perspective, good hold.
Yeah, of course. No, if you see the rally from 88, it has gone over more than 500. So yes, great run. And first of all, congratulations to him now if he's holding this stock. Again, see the telecom capex overall slowdown will be there, but little bit impact will be there. But because of data centers and all that, demand will support. Again, the cost optimization is underway. Of course, there is even their export order from Europe, US, demand recovery is expected, and government broadband projects are also there, which is supportive. So I think overall, I know sentiments are much more positive, but here, the stock has already run up a lot. Again, the debt level is remaining high, and one has to see the quarterly results also. So for me, keep a stop loss, hold on to the stock, but buying at this level is no. But yes, keep a stop loss at least 15-20% down, and go on with the rally.
Okay, all right. The next one is, I think we've got a caller waiting by. Subramaniam is calling us from Bengaluru. A very good afternoon to you. Go ahead, ask your question. Hi, Subramaniam, can you hear me? Okay, I think we have lost his connection, but I think we do have his question. So he's bought HDB Financial 20 shares at the levels of 740. Sitting on a current loss of around 1300 rupees, but wants to know whether he can continue to hold or not. Tapan, I'll stick with you for this one. Your view?
Still, the valuation is on a higher side. Of course, now during the IPO, it was much more higher. It has come down, but still, the growth should be at least 30% and above. Again, the net interest margin improvement should be there, but which is not happening currently. See, consumer finance demand is improving. AUM growth is expected in the double digit. The only thing is GNPA is almost 2.44%, which is a little bit elevated, and unsecured lending stress is also there. So at the current valuation, of course, ROE is improving. I think it is on a higher side. So wait for a little bit more correction, then only get into it. If he is holding the stock, please hold it, but don't add more.
The next one that we have is on Jyotish CNC. Subhajit Roy from Kolkata has purchased 300 shares of Jyoti CNC at the levels of 769. He's saying that right from 3 weeks, it's consistently low, and today it's hit a 1-year low. Should I hold or exit? Osho, do you think it's found its bottom?
See, technically the counter has been into a secular downtrend. There has been formation of lower lows, lower highs. So having a confirmation that the bottom has been made is decisively no. It might plunge further because there has been no respite in the correction zone. So better to exit from the counter. There has been no respite. It is having a very strong rejection around the short-term moving average. So at current levels, it is advisable to exit the counter. The counter has been not performing well, and even there has been a major breakdown around the zone of 750. So better to avoid this counter fund.
Okay, all right. The next one that we have is on HLE Glasscoat. Our viewer, Shweta Kohli, wants to know if this is the right time to enter this counter or not. Osho, your view?
For HLE, I suggest that this counter has been into a corrective phase. The counter has seen a decisive correction from the zone of 640 and has been half from those levels. And again, it is facing very strong rejection from the short-term moving average. But in the recent 2 to 3 weeks, there has been a respite or a pullback, technical pullback from the lower zone. So one can stay invested in the counter with a strict stop loss of 285. Strict stop loss, if it plunges below 285, better to exit position. There might be a technical pullback towards the zone of 380 followed by 410 kind of a zone. So one should again need to review if the counter reverses from here onwards and move towards 410, then whether one should stay invested or exit at those positions. But as of now, put a strict stop loss of 285 and hold the position.
Okay, all right. The next one is on PCBL. Our viewer, Barkha Gupta, has bought at the levels of 458 and 3,600 is the quantity that she's been holding. What should she do next from a slightly long-term perspective, Tapan?
Well, this time now you can see the recovery is coming again. The specialty segment growth is accelerating for PCBL. EV tire demand supports the outlook, and again the capacity expansion is there for next 2 years. The margin improvement is gradually expected, and management is quite saying that they are going to do it. So realization only is the point where the declining stages and margin overall hopefully they are going to recover. So my view is that because the stock has fallen a lot and the valuation looks okay to me compared to what type of performance it has done in the past, so one can hold on the stock, don't add more, but yes, hold at this level.
I think we've got Tyagarajan who's calling us from Vietnam. Tyagarajan, a very good afternoon to you. How can we help you?
Yeah, good afternoon, ma'am. This is Tyagarajan from Vietnam. I'm holding 300 shares of Apar Industries. I bought it at 10,280. I'm willing to hold long term about 12 months. What will be the safe target one can expect if I can continue to hold on?
Okay, first of all, Tyagarajan, heartiest congratulations because you're sitting on profits of over 7 lakh rupees and you've spotted it at the right price and sitting on great gains. So I think I'll take up Osho's view on this one. Osho, do you think there's further upside here from the 13,300 levels, or should he book his profits?
Again, firstly, many congratulations. The counter have seen very strong outperformance currently around the zone of 1300, 400 odd levels. But I'm expecting that in the recent period, there has been a breakout and that has followed a vertical rally. So some cool off can be seen in the counter, but again, on the higher end, till the time it is sustaining the zone of 12,000, there is no concern in the counter. So better to hold this counter with 12,000 as a stop loss from medium to long term point of view. And looking at the momentum and breakout that this counter have seen on the weekly time frame chart, the higher target comes around the zone of 16,000 odd level. So one should definitely stay invested in the counter. 12,000 will be the advisable stop loss, and 16,000 will be the first target that one can expect from a short to medium term perspective.
Okay, all right. So it's time for our rapid fire round. Osho as well as Tapan, try to keep your answers as short as possible. The first one is on Praj Industries. Our viewer wants to know the short term target and stop loss for this one. He's holding it at the level of 318. Osho, your view on the charts?
For 318, it will be advisable to keep a strict stop loss of 370, 372 odd levels. On the higher end, 400 is the first target. If it breaches, then 425.
Okay, one more question your way, Osho. Mazagon Dock bought at the levels of 2530. 150 shares is what Ankit from Gurugram has been holding. Continue to hold from a 3 months perspective?
From a medium term point of view, yes, one should stay invested. I'm expecting that any breakthrough above the zone of 2550 can provide a strong momentum from medium term perspective.
Okay, the next one is on DCM Shriram. From a long term perspective, is this the right time to enter, Tapan?
Yeah, you can enter, but maybe 5-10% below. Overall, for long term, it's a good stock to hold.
Okay, Tanla Platforms is the other one. Srinivas from Hyderabad has bought at the levels of 934. 300 shares is what he's been holding. Continue to hold from a long term perspective or exit, Tapan?
Well, he can average a little bit, but wait for some time, hopefully recover.
Okay, the next one is from Vicky. He's holding HDFC 500 shares at the levels of 910. He wants to know whether he can hold or exit. Tapan, Osho on the charts.
On the charts, it is still looking weak, but from a medium to long term perspective, one should stay invested. 720 is a very strong support zone for the counter.
Okay, the next one is on Auto Anks. Precision Engineering, Sansera Engineering, Sona BLW. Which one is a better bet for the next 3 to 4 years, Tapan?
I think Precision Engineering is a better option.
Okay, the next one is from Mr. Murli Mohan, who's writing us from Bengaluru. He's got 50 shares of Siemens at the levels of 3245. What's the outlook for next few months is what he's asking. Osho?
A very strong technical patterns. I'm expecting that the zone of 4150, 4200 can be retested. So stay invested in the counter.
Okay, the next one is on Chennai Petrochem. 100 shares is what Ramananda has been holding. Wants to know from a long-term perspective, can he continue to hold or sell at this price? Tapan?
Hold it, but you have to review quarterly and the oil prices. So currently it is hold.
Okay, last one on KC International. What's the technical view looking like right now, Osho, on the charts?
For KC, it is looking quite weak as of now. It is having a very strong resistance around the zone of 545. If it breaches above that, then only one should look for buying opportunity.
All right, that brings us to the end of this rapid fire round as well as Ask Profit. Tapan as well as Osho, thank you so much for taking out the time and helping us solve all those stock related questions. The viewers completely out of time on this edition of Ask Profit, but do stay tuned. India Market Close comes up next.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
And the award goes to
Tamanna Inamdar, Managing Editor, NDTV Profit.
Leading the newsroom, shaping the narrative, from stories to impact, a voice that matters. Tamanna Inamdar, among India's most influential, power, purpose and perspective recognized. NDTV Profit's editorial force gets industry-wide acclaim.
Welcome, you're watching India Market Close. You know, if you had missed the last 3 hours of trade and come right back, nothing would have really moved. The market is almost like, have you seen those shows, Alex, where from one episode to the other, nothing moves and you can come back after a whole season and the storyline is exactly there?
So anybody who's watched Japanese anime knows exactly what you're talking about.
Okay, I think Hindi serials as well. But yeah, that's pretty much how one way of describing what's happening in the markets. Pull up the intraday of the Nifty. and I know this is your favorite term, nothing burger.
It's a nothing burger.
Yeah. So I think we have a bit of an overlap here, but if you look at the intraday of the Nifty, nothing much happening. What's maybe a bit of a relief is that your advanced decline ratios at least are not too negative, and you've just been in that very mild range. Do you think we can get the Nifty heat map? That would give us a sense of what's working, if at all. And more, the conversation in the markets is that Nifty mein to story hai hi nahi. That's not what's exciting at all, more than anything else. And I think one of the reasons is because of the composition of that index.
Yeah, absolutely. There are a few big movers though today. Hindalco in the metal pack is doing particularly well. You'll see Tata Steel as well in the top ranks. And a few of those automotive companies, Tamanna, continue to do well. I was looking at the track record of the last few sessions and it's 7 days in a row.
Yeah.
Okay, there are a few sessions where it's just been piecemeal moves, but 7 days of gains for the auto index as a whole, and it's a good reason because you're seeing quite a bit of positivity in the numbers that have come through on Vahan as well.
You know, what's also happening is that a couple of things in auto data. Puneet did a very nice piece today about how Vahan data is showing record buys. You have commentary which is very positive, and good results are really seeing that impact. Hindalco clear winner today, as is Eternal. ONGC on the back of numbers suffering. ITC is ex-dividend, that's why you're seeing that number there. HDFC Bank in that range after that Indian Express piece raising questions about some payments that have been made by the bank to MSRTC. They're saying there's no wrongdoing at all. They've issued a denial, but that stock seeing a bit of pressure over there as well. I want to look at the broader markets if we can, and what's happening with the mid cap and the small cap right now. We'll also pull up Brent at the end of this presentation because that's one lead indicator to watch. Again, in a range, but has stayed positive. Small cap would possibly be doing even better, and that's exactly what's happening, about 0.5% up. So it's the broader markets, that's the story. Should we quickly look at the sectoral indices?
We should, but and perhaps we'll see it in that. But if you can you pull up the Nifty Next 50? After you do this, okay, so is the Nifty Next 50 there? Yeah, you see it on the top. So these are also large caps. There's actually a pocket of strength in the large cap. So while the benchmark Nifty 50 is just flat and the broader markets are also just about 1/3 or 1/4 of a percent higher, the Nifty Next 50, a whole pocket of stocks that are doing particularly well. And I think there are a lot of stories, Tamanna, in individual stocks that are causing 7, 8, 10% gains even for a few of them, and some of those stocks that are losing quite a considerable amount of ground.
One of them is Cummins India. I want to pull up the intraday of Cummins India, and if we can get those lines also right over here. But good set of numbers have come in on Cummins, and a huge spike over there. And look at this result we're talking about right now. Sri Chakra, also a small cap over there, 15% up because of that spike. So you're really seeing that kind of an action move up. Good jumps in top line and bottom line, solid performance, and then the street is excited. So next 50 is where the action is.
It is, and a few more stocks, right? You have, for example, Pine Labs. I was just looking at the screen and seeing what stocks are moving. It had earnings earlier in the week, but the move is today 5% or thereabouts. Exide is doing well.
Very positive brokerage notes on Pine Labs. That could be one of the reasons. And you're right, Exide and Amaraja as well.
Both doing particularly well. And Z Entertainment, on the back of a pretty interesting announcement, the foray into sports again, and it's apparently vying for the FIFA World Cup. It's surprising. We're just weeks away from that tournament, and those rights aren't out yet. They haven't been clinched yet.
Oh wow, so this is going to be exciting. 11.5%. That's why you're seeing that media index up. So here's what's been happening in the markets. If I had to put it all together for you, it's range bound trade. Nifty is consolidating around 23,900. HDFC Bank and ITC are pulling the index down by over 80 points. So if you didn't have these two in a funk, you'd probably see a much better action point on the Nifty. Metals and autos are shining in trade. Aluminum names are buzzing on higher prices as well. That's why that pop in Hindalco. For the Nifty, the 24,000 strike is now the ultimate battleground. Closing above 24,050 could move markets towards 24,160 and 24,250. Avoid aggressive longs in the Nifty if it breaks and sustains below 23,900. And on the Bank Nifty, there's a buy on dip strategy you can look at that's highly favored near the 54,700 to 54,850 mark. For the Bank Nifty, a breakout above 55,550 opens doors for a fast move towards 55,800 and 56,000. Supports at 54,800 and 54,700. Resistance at 55,400, 55,500 and 55,800. Let me go across to Samir Dalal, who's joining us. He's from Nakfar Lal and Sons Stockbrokers. We'll get Nilesh Jain in just a bit to get us the technical view as well. But Samir, I want to start off with you and ask you what you're making of the zoom in autos right now. And the debate that we've been having in our studios and in our newsroom since this morning is that autos are looking good now. But what about when the chickens come to roost from what's happening in West Asia crisis, fuel prices going up, some hit on consumption perhaps? Is that something that the market will start pricing in sooner rather than later?
Good afternoon, and once again, thank you for having me on the show. Yes, I think your question is very apt. And should we be a little concerned about what's happening and what the impacts of that are going to be for the auto sector? Absolutely. Look, we've had the numbers, the way I've been hearing and reading about it, have been really good for the month of May, because of which, you're seeing a rally in a lot of the auto counters. But they're obviously going to be a bit of a dent once you see the full impact of the fuel price hikes coming through, possibly interest rate hike over the next one or two meetings. Quite possible, given the fact that inflation will start seeing an uptake. So given that auto sector could face a bit of turbulence, and that then you could see a correction, but I look at it from a longer term perspective. So if you do get these corrections, which we believe will happen, they actually throw out an interesting opportunity to look at companies from a longer term investment perspective. So can they correct? Yes, they can. Would I be a buyer in some of them? Absolutely, I would. So the ones I would look at would be Tata Motors, PV. It's already rallied quite a bit over the last month, ever since the result came out. But any correction closer to 360, I'd even be buying it now, but closer to 360 would be the ideal opportunity. Hyundai is one of the stocks that has seen a massive correction because of them losing out on the growth and market share. So that is something we believe they will be able to capture back with some new launches, with exports picking up over a period of time. So we think that is an interesting play. Maruti at this point, valuations are a bit stretched, so we'll avoid. And in the two-wheeler space, our top pick remains Hero Motocorp. For the simple reason that we believe that the two-wheeler sales will continue to grow. There will be more traction to electric two-wheelers, and they have their direct play in that. Plus, they have a large investment in Ather Energy, which gives them access, which 30% in that. So as Ather's sales keep growing and the value keeps growing for that, I think Hero will stand to benefit from that. So that becomes our top play in the space there.
You're showcasing your vintage by calling it Hero Honda, because people from a certain generation remember fill it, shut it, forget it, and Hero Honda, right? So it's been Hero Motocorp for quite a while. Nilesh Jain joining us as well. Nilesh, Head AVP Technical and Derivatives Research at Centrum Broking. Good afternoon to the both of you, and good afternoon to you, Nilesh. What are you looking at with regard to the benchmark Nifty 50? Because we've been chop and churn all through the session today. What are the indications that you're picking up, and also for the Bank Nifty?
Very good afternoon, Alex. Good afternoon, everyone. Well, absolutely. This has been the second, in fact, third consecutive session where we have seen some bit of resistance that Nifty is facing about 24,000. So it is finding difficult to sustain about 24,000 mark. Now, today's, candle, it looks like sort of a dragonfly, in fact, gravestone doji kind of candle we can see on the chart. It is making an attempt to test this 21-day moving average that is placed at 23,860. So just in case if it closes below the same, then we may see further downtick to continue. But interestingly, we saw on 25th of May, in fact, at the beginning of this week, there was a gap up opening. Now, Nifty is making an attempt to fill that particular gap. But if you see the volatility index in India weeks, which has already cooled off more than 14% this week in last 3 consecutive sessions. So that is something that is giving more comfort now. So I think this dip should be used as a buying opportunity. If at all you get any levels near about 23,800, that can be a good entry point, keeping a stop loss below 23,650. That's the 50-day moving average support. And keeping that as a stop loss, I think buy and decline should be the strategy in this current market. we may see a gradual uptick towards 24,000 to 24,200 going forward. Coming to the Bank Nifty, no doubt it has been under pressure in last couple of trading session due to the selling pressure. Specifically today, we have seen in the HDFC Bank. So given this kind of a structure, there could be possibility that we may see a follow-up on the lower side towards 54,600 to 54,500. Important support is placed at 54,500. In case if it breaks below the same, that will be considered as a failure of the breakout that we have seen recently. So keep an eye on 54,500 level. That's the very important support.
What about picks, Nilesh?
Well, I have a couple of buy recommendation. Number one, that's the KEI. So KEI, in fact, if you see wires and cable space has been doing good, be it Polycab, RR Cable, now KEI, this particular space is buzzing. And a very good setup can be seen in KEI. We expect momentum to continue on the upside towards 5,550 to 5,600 in the near term. And one can keep a stop loss at 5,340. So that should be the stop loss. Another pick that's again on the long side, that's within auto space. So two-wheeler space is looking attractive now. Bajaj Auto will be my preferred bet. Given the kind of a setup we are witnessing today, it has given a good breakout as well. Good build up on the long side, more than 2.5% Y addition can be seen. So go long in Bajaj Auto, keeping a stop loss below 10,550. Immediate target would be 11,100, followed by 11,500 in the near term.
Got it. All right. Let's get you a first cut on the earnings of Cummins. We marked it for you just a short while back, and the stock spiking on the back of what looks to be a very good set of numbers, still holding at 8.5% higher. Somit here to tell you about what he's picking up in the first cut. Somit?
Well, if you look at the stock, it has moved nearly 6% after the company has reported its numbers. A stellar growth of 20% plus on all front, revenue, EBITDA and net profit. But what is more important here is that it's a beat of 10% compared to what the street was anticipating. Now, if you look at the EBITDA number, street was anticipating the EBITDA to be close to 578 crore rupees, but the company has reported an EBITDA of 641, a clear 11% beat. Margins have beaten the analyst estimates by around 50 to 60 odd basis points. So clear beat coming in on all fronts for Cummins. Now, if you look at the net profit number, that is higher than the EBITDA number, and this is largely because there is some one-off here of around 30 odd crore rupees owing to the labor code charges that they had accounted for earlier. They have reversed it right now, and hence you can see the net profit number higher. But again, even if you remove that, it's a clear beat compared to what the street was anticipating. But do remember that the order book number is yet to come out, so we need to still watch out for what is the order book and management commentary on how they are looking at things for FY27, because commodity prices have increased, so their raw material costs must have also increased. So that is something that we still need to watch out for. But on the number front, it's a clear beat, and that is what has led to this 9% move in the share prices of Cummins today.
Yep, you're seeing this spark on Cummins, but that caveat that Somit has talked about is important. Order book details are awaited. But let's now talk about stock of the day. In a sense, has to be Hindalco, because of everything that we've been seeing with aluminum prices. Joined now by Sharad Dubey for more. But before that, should we talk about Techno Electric?
Exactly, and for the last 2 days, Tamanna and Alex, the stock has been in a free fall, a little bit of concern coming in for the investors. But let me decode the reasons for it, why this is happening, why the sell-off is happening for Techno Electric, and of course the volumes is also picking up in terms of selling. Let's put out the reasons also. First and foremost is the Middle East disruptions. That's where the concern is there. Just a half an hour ago, the con call was also over. The supply chain issues is something which is there, and the street is not liking it. And this is expected to sustain going ahead in the first half also as well. Higher raw material costs further, and that's where the impact is coming in. And the revenue recognition which is there, a large project which was there, I just checked the accounts, notes to accounts, and that's where a large deferral has happened for this, especially from a Middle East, is what the channel checks are suggesting. Execution risk is likely to come in H1, and that is why that sell-off has intensified. It's down almost 11% right now. The stock, and looking at the stock itself, last 5 days the stock is down 16%. Last 1 year also the stock is in the red, but it has been a multi-bagger for the last 5 years, giving returns of almost more than 3.5 times. But let's look at the long-term story. Is it intact or not? A strong demand coming from the power segment. We have seen it all across happening right now. Apart from that, if you get into more detail, strong queries for the data center and the AI theme, and also if you look at it, the large renewable segment and the HVDC segment, that is where the bullishness is also coming in. Apart from this, the order book that stands at roughly 9,600 crore rupees. And if you get into more details about it, the 7,000 crore comes from the transmission segment, and also minor awards coming in, especially around 400 crores of award post March. Of course, this number is lesser than what the street was estimating, and 15 to 20 megawatt of live capacity is expected to come in by December 27. And the capex plan is around 1,000 odd crore rupees planned for the next 1 to 2 years. So these are the important key guidances which we are talking about. But of course, the street is concerned, especially on the smart meter business, because that's where the execution risk is coming, the payable issues is coming from the government, and that's a little bit of concern coming in. So this is the entire picture for Techno Electric, why the stock has tanked by more than 15% in the last 2 trading sessions.
Yeah, it's quite the comprehensive look at the stock. Samir, if you've got an opinion on this, what would you do if you're holding the stock? Obviously, you've seen quite a bit of a slide in erosion in your capital. What's your view on Techno Electric?
Yeah, so, I wouldn't worry about the short term. And yes, there have been certain issues which were flagged up when it comes to execution of certain orders and also the cost of raw materials, which are probably a little bit higher. But if you look at the long-term growth trajectory of this company, it still remains very, very strong. We've been saying on your channel for quite some time that the entire energy space is a space that is going to see huge capex in India over the next maybe 5 to 7 years. For the transmission lines coming up. We think Techno Electric is one of the companies that will also be getting its fair share of orders. KEC International will be the other. There are multiple of them, which will do that. So for me, these corrections, consolidations are important to happen. The stock had run up far too much over the last period, because of which valuations have moved up. So now with this consolidation, what you're basically seeing is that the valuation multiples are consolidating and allowing earnings to catch up. We do believe that 1 or 2 quarters could continue to be subdued. So in the near term, the stock will be sideways. But over the longer term, we remain very constructive and positive. We think the stock will move up. So dips like this are buying opportunities, and one should add on to these stocks over the next, say, 3 months to 6 months. And I think that there will be great returns to be made over a period of time.
Just while we're on the subject, and because such sharp cracks have been seen in the stock, Nilesh, on the charts, what according to you is a good level to consider going long, particularly on the back of what Samir has just described on the fundamentals?
Well, Alex, that level would be somewhere around 23,800. So still around 70 to 80 point fall can be seen from the current level. See, we did see a gap up opening on Monday, so that gap area is getting filled. So there's still some more room left, around 30 to 40 point to fill that particular gap. But ideally, a good entry point could be somewhere around 23,800. Then the stop loss will be coming around 20,000.
Nilesh, are we talking about the same stock? Because Techno Electric is trading at what? Can we pull the chart up, please? Just above 1,077. So are we talking about the same stock?
Well, Alex, sorry, I was talking about Nifty index. But anyways, see, Techno Electric, big crack we have seen today. It's a kind of structural breakdown. Reason being, see, counter has broken below is 200 DMA, 50 DMA, and also 100 DMA. So all these 3 moving average has been taken off decisively in today's trading session. And if you see volume spurt, that is also higher than the average volume that we have seen in the recent time. So given this kind of crack, I believe there will be another leg on the lower side. A follow-up move can be seen, and counter may test the levels of 1,000 to 960. So it's an avoid taking any contract at current level. It's a kind of sell-on-rise structure, and till time it doesn't take out 1,200 level on the upside, ideally one should avoid taking any contract.
Okay, before we go to anything else, just pull up the Brent July futures if you can. We're at 96.27, 3.5% down. Now, here's what's happened, because in case you're wondering, and this becomes a very important hour to track what's happening on the West Asia war front as well. Iran has put out a statement saying they do not think the war will escalate. They obviously go on to say after that, but if it does, the whole coastline will turn into a graveyard, etc., etc. But the key part of the statement, at least what the street is reading, is where they see it unlikely as the war escalating, which is why you're seeing that cool off in Brent prices right now adds more to the pressure that ONGC is facing, I suppose. But But if you just pull in your HPCL, BPCL, IOC, I just want to quickly see what some of your OMCs are doing. ONGC is suffering anyway because of its results and more. But look at the kind of climb up you're seeing on some of these oil marketing companies right now. All of them in the green as a result of this. Meanwhile, let's talk a bit about Hindalco. It's one of the top, or it is actually the top Nifty gainer in trade today. Parth is joining in to tell us what is causing that sharp rally, Parth.
Right, so this rally in Hindalco is driven by a sharp increase in aluminium prices. They have actually reached a 4-year high due to the Middle East tensions that are going on right now. So first, understand why are these aluminium prices rising. So there are two main reasons behind this. The first one is what everyone knows, the Iran conflict that is going on. It is disrupting the global supply of aluminium, and the risk of blockade of Strait of Hormuz will tighten supply even more if it happens. And the second reason is the China factor coming in, which is the largest producer of aluminium worldwide. They are already running their smelters at full capacity, and now with the Chinese government scrutiny tightening up even more on their energy use and emissions front, the aluminium supply could tighten even more globally. So these are the two reasons why aluminium supply is in pressure currently. Now let's see how this aluminium supply will impact Hindalco. So the higher aluminium prices directly improve the company's profitability. The stronger revenues and the improved performance which Hindalco already reported in Q4 is already supporting their sentiment, their current market sentiment. And lastly, Morgan Stanley has an overweight rating on the company with a price target of 1325, which implies an upside of almost 20%. This is mainly due to the higher global aluminium prices supporting their earnings going forward. And not just that, they expect the Hindalco's India business to deliver strong growth while Novelis continues to improve its capacity, ramping up after the disruptions that we saw due to the Oswego fires in the last and the quarter before that. This is the main reason why Hindalco is rallying today. In fact, in the last 2 months, the price is almost up 30% in trade.
Got it. All right. Thanks so much for that. But by the way, Nalco doing incredibly well as well. In fact, if anything, doing better than Hindalco. There you go. Both those stocks up and about because the underlying aluminium prices are in focus. Let's take a quick check from Nilesh Jain on not just these two counters, but the metal pack as a whole. It's been doing particularly well in the recent past. What is your specific call on some of these counters, Nilesh?
Well, Alex, we remain constructive on the Nifty metal space as a whole. Today as well, we have seen a fresh record high that Nifty metal index has hit about 13,700 mark. So overall, we expect this momentum to continue, specifically within aluminum space, as you rightly pointed out. Both Nalco and Hindalco are looking strong on the chart. Nalco, we expect a further uptick to continue towards 445 to 450 in the short run, and keeping a stop loss below 425. Nalco is a buy. Yes, Hindalco will be our second preferred bet within this particular space, and we expect further uptick to continue. And on the upside, we may see the levels to continue. Another 5 to 10% kind of move can be seen in Hindalco as well. As far as levels are concerned, 1200 plus kind of levels we are expecting in Hindalco. So stop loss should be placed at 1120.
Okay. 1120 is a stop loss for Hindalco. Let's get to that segment this afternoon where we get you all of the khabar. Samit Sarkar joining in with chatter from the dealing room. Samit, what's on your agenda?
Well, firstly, it's APL Apollo. Now, there are some sell flows on institutional desk in trade today. Delivery volumes are expected to be on the higher side for this counter. So, keep an eye out for APL Apollo. For Bharti Airtel, dealers are indicating that a large long-only FII is buyer in trade. The stock was up, but right now it's largely flat. But a large long-only FII is a buyer in trade is what dealers have highlighted. For Pine Labs, there was a big block deal that happened in trade today, and dealers are indicating that a private equity was a seller here, and multiple mutual funds and a prominent family office was among the buyers when it comes to Pine Labs. For HBL Power, multiple dealing rooms are recommending buy calls to their clients. Dealers are expecting a large order win announcement very soon when it comes to HBL Power, And lastly, for Amber, there are buy flows on the large HNI desk and PMS desk. Dealers are expecting a positive news flow in this counter very soon. And as you were speaking about Hindalco and Nalco, yesterday it was part of our segment where we did indicate that there are buy flows on institutional desk and some capacity curbs in China are expected to push aluminium prices higher. And today aluminium prices are at a 4-year high and both the stocks are up around 4% in trade.
Got it. Thanks so much, Somit, for that. So quite a few khabars and khabar confirms as well. By the way, let's focus in on Zee Entertainment because that stock is absolutely buzzing, perhaps single-handedly pulling the media index higher, double-digit gains today. And you know what this is about, right? It's the launch of 4 new channels and the re-entry into the sports segment for Zee Entertainment. Remember, all of this is happening ahead of the start of the FIFA World Cup. And we're just days away from that moment and we haven't yet seen the rights in India being given out. So that's certainly something to watch out for. It is launching its presence through Unite 8 sports channels, 4 dedicated sports channels to build what they want as a robust linear sports bouquet. Unite 8 Sports is set to offer key events across football, kabaddi, cricket, as well as badminton, wrestling, boxing, and combat sports, among others. So the whole bouquet is what they want to offer. Maybe it could start with the FIFA World Cup, which is why there's interest in the stock. Samir Dalal, Zee Entertainment has had quite a few issues to contend with, but this could well be a shot in the arm. What do you think?
Yeah, so I think we are jumping the gun too quickly. Let the news get announced that they are actually the ones who will get the rights for the FIFA World Cup. Then how they turn profitable over that period, because this is not going to come cheap. It's going to come at a price, right? And eventually, at the end of the day, look, they've not been able to do very well with advertisement rights over the recent past. Their profitability has come under pressure. Their TRPs have not been that great. So looking at all of those factors, we want to actually see these things come in. So the only plus side or the only advantage you have is that, look, you're getting rock bottom prices. Really, given the kind of content that they own, given the channel bouquets that they have, they should be able to do better. So hopefully, if things improve, yes, the stock can go up, but till this news comes, till we see that in the numbers, it becomes very difficult from a fundamental point of view to recommend a buy.
Yeah, okay. Stay on with us. We're putting the focus on Indegene. Their Q4 performance was broadly in line with expectations with strong revenue growth overall the numbers were good, but margins did remain under pressure due to continued investments and a one-off legal provision. However, the company's business momentum remains intact. Gen AI is a big driver as well. But to talk about all of that and more, we have the company's CFO, Suhas Prabhu, in our studios. Suhas, a very warm welcome to you and great to have you here in the NDTV Profit studios.
Thank you. Pleasure to be here as well.
Okay. Since we're talking about the numbers first, like we said, most of the metrics look great. Revenue up 33%, EBITDA up about 11%. This is year-on-year figure that we're looking at. What was the picture with the margins? Was it because of this one-time provisioning or was there more to it?
Yes. So there was a one-time charge that we explained, but it was also because of investments that we did starting second half of the year, looking at the momentum that we are seeing in the market and the opportunity provided with Gen AI becoming more and more prominent. And therefore, we are investing ahead of the curve, which has a near-term margin impact. But we believe over the next 4 quarters, we would see the margin coming back up.
What is the quantum of investment? And this is AI investment that you are doing because you're anticipating the requirement and then you're investing in advance.
Yes. So with the opportunity that the market is, that we are seeing in the market with this Gen AI-led changes, we are investing both on the business side as well as the go-to-market side. And we believe that the growth in the coming quarters would get reflected coming out of these.
Yeah, but how much? How much? What is the quantum of investment, the nature of
The
investment?
quantum of investments was about $6 million from an annualized perspective, which is an impact of about 1.5% on the margin.
Interesting.
Sorry, so just
please go
one
ahead.
point on the Gen AI bit, and just wanted to connect it to something which has been reported now. Uber, for example, has come out today, and you would have read that story, saying that we are pulling back on our AI investments because we are seeing no link between, or not enough of a link between AI and efficiency that we thought would happen. And one would argue that some of these companies are ahead of the curve compared to India. Just, your thoughts on that. Is there a sure shot connection you as CFO are able to draw at this point that this is the investment we'll make in AI? Yes, we'll take a hit of 1.5% on our margins for now, but this is exactly what it's going to yield.
Well, that is the intent, and things are evolving, right? It is important, as you said, keep a tab on the things as they are evolving, right? And arrive at the right balance between what is the cost of innovation versus the impact and the speed of innovation. And it will be a constant endeavor to keep a balance between all these three vectors so that we also do not have surprises on the investment and therefore the margin front.
When do you see that panning out, though, those investments?
And the investments that we have specifically made, the 1.5% impact on our margins, we're looking at a payback over a 6-quarter period, and 2 quarters are already up. So I would say over the next 3 to 4 quarters.
Speaking of your business mix, it's been pointed out, and we've got a research analyst that tracks this very closely, and what they were pointing out was that the enterprise commercial is growing significantly faster than your other businesses, creating a shift in the mix as a whole. What is the thinking behind this, and what are the implications for margins? What is the implications for top line growth as well?
Yes, a good observation. Enterprise commercial is growing at a faster tick related to enterprise medical or other segment. One of the factors is the inorganic growth. Biopharm is entirely part of our enterprise commercial business. The other dynamic that is playing out in the market is that there is more momentum that we are seeing from an immediacy or the currency perspective in the enterprise commercial, with customers taking faster decisions, with they launching more and more products in the market, and therefore a little bit more momentum. But I would say that's a very near-term shift. Over a 2 to 3 year period, I would say it would play out equally on both the segments.
Is there a learning that you're seeing on the size of the deals that you're getting here? Because the interpretation in certain other segments where you're talking about adoption of generative AI is that the volume of deals that you can take up would be significantly higher, but the size of the deals would be relatively smaller. Is that something that is visible here as well?
While I would also argue the other way around, we are moving away from the experimentation phase to the actual deployment and the outcome phase. And therefore, experiments by nature tend to be of a smaller size, versus implementation and deployment would be a larger scale. So we are seeing that shift. We announced the number of $1 million plus deals, and even a $10 million plus deal in the last quarter, in our Q3 earnings call. So many of these are having Gen AI embedded in them. So we are also seeing a shift from experimentation to real life deployment, actually increasing the size of these deals.
Just a quick follow up on that. What is the kind of concentration that you have in terms of clients that you're getting in these large deals?
Yeah, so our focus is the life sciences segment, the innovator segment, which means that our top 20 global pharma are about 60% plus of the market, and our concentration would also be similar. Our top 10 clients, which are largely the global innovator pharma, would constitute 51% of our revenues and so on. Even on the new business that we are winning, we are seeing equal traction. Of course, we see speed being higher with the smaller companies in this sector. but then the scale obviously comes from the larger customers.
What about biotech? How big a portion is that panning out to be for you?
Well, biotech has been traditionally a very small segment of our business, under 3%, and that actually reduced to under 2% over the last couple of years. But with the increased funding to this segment and improved prospects of this segment, we are seeing momentum back in this industry. We have won business from 2 customers north of $5 million each during the last fiscal year, and the percentage has crept back up towards 3%. And we remain bullish because a lot of innovation is actually coming out of the emerging biotech,
no doubt.
say.
So what is the breakup like right now between enterprise medical solutions, enterprise clinical solutions, omni-channel? How is it all broken up in terms of your revenue contributions?
Yes, so enterprise commercial is the largest segment. We have collapsed omni-channel into enterprise commercial over the last year, and that is north of 70%.
Okay.
And enterprise medical is about 25-26%, followed by enterprise clinical and consulting, which is the balance 4%.
And that's the mix that you see continuing?
We see this to be largely in line with enterprise commercial being north of 65%, even as we go ahead, followed by medical in that 25% range, and clinical and consulting on the small base will grow at a faster pace. But
I'm talking about revenue contribution, not in growth.
I do want to check, Suhas, on how you're seeing FY27, because ultimately, if there's one sector that globally is being looked at as something that is not really affected by various other issues, is the pharmaceutical sector and the healthcare sector. And so from that perspective, there's good news for you.
Yes.
How does FY27 look? What is the kind of growth that will keep you and the rest of the management happy?
Yes, so there are no headwinds in terms of geopolitical or any other US policy matters. The industry is seeing significant momentum in new launches and looking forward to growth. And that gives us the confidence that FY27 would be better than FY26, both organically and inorganically. And we would strive to be north of 20% from a growth perspective, even in the current fiscal year.
Top line and bottom line?
Both. And I would say more accelerated on the bottom line, because as we said, some of the investments that we have made will be ideally playing out during the year.
Okay, as early as FY27.
Yes, and more importantly, from a margin in H2 of this year, more pronounced, but the growth should be fairly visible through the fiscal year, quarter on quarter.
Okay, thank you so much, Suhas, for coming in and speaking with us, answering
Pleasure.
all of
Thanks,
our questions. That's the CFO of Indegene, who was talking about his company. Let's just track what's happening very quickly across the board. Sameer Dalal of Natvarlal and Sons Stockbroking still with us. Sameer, just wanted to get your take on the pharma and the biotech pack. Of course, we were speaking specifically about Indegene. I don't know if you track that company, but on the pharma side, what are you liking right now?
Yeah, so I unfortunately don't track Indegene, so I can't comment on that. But having said that, on the pharma space, we remain very constructive. What you rightfully said, what you were discussing with the management was that, look, there are no hurdles that are coming up in the space for pharma companies, at least that are visible to us, right? The opportunity to grow is quite strong. Now, the way we look at it is growth is going to come from new drug launches in the US that will keep happening as some of them come off patent. We have a lot of large companies that have filed these ANDAs, which are getting launched. And then you have companies like Sun Pharma, which are differentiating in the sense they're doing branded generics, which has an opportunity to scale up quite nicely. Plus, they have this acquisition which they're making, which will make them very large in scale, the opportunities to grow. So for us, Sun Pharma remains the top pick at this point of time in the large cap space, followed by Dr. Reddy's, which also we think has an opportunity. And then if you want to look at an India-specific, more India-focused company, then you can look at something like a Mankind Pharma, which is capturing more market share. We think the opportunity is quite strong there. Yes, the stock has seen a huge correction recently, but we think the company can do well over the next 2 to 3 years, and there's a huge opportunity for growth for them.
Yeah, absolutely. On that note, Samir, thanks so much for staying by. It was good to get a view on the pharma space before we head into the break. So thanks so much for that. We have to slip into a break. We'll be back on the other side to take you through the top strategies to bear in mind heading into the end of the week. Remember, we've got a market holiday tomorrow. Stay tuned. We'll be talking about a lot more on the other side.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
And the award goes to
Tamanna Inamdar, Managing Editor, NDTV Profit.
Leading the newsroom, shaping the narrative, from stories to impact, a voice that matters. Tamanna Inamdar, among India's most influential, power, purpose and perspective recognized. NDTV Profit's editorial force gets industry-wide acclaim. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer.
All right, let's quickly look at the markets before we move to our next set of conversations and what's happening this afternoon. We're going into a market holiday tomorrow, and that listlessness is showing on the screen. But that's only if you look at the Nifty. If you look at the advanced decline ratio, you look at the small caps, you look at individual stocks, that's where the action continues. Dilip Bhatt, founder Pedigree Advisory, joining us now. So is Shivangi Sarda, analyst equity derivatives and technical at MOFSL. Welcome to both of you. Shivangi, is there any point getting a Nifty view from you? Are you looking at the bank Nifty more closely?
Very good afternoon. Thank you for having me. So we've seen that the indices have, shown a very good comeback of the bulls. And even though we have kind of shown a little lackluster move in the first day of the June series, but overall the rollovers have been significantly fair. And looking at the overall structure, support-based buying is still intact in the index. We're looking at 23,700 as an important support here for the Nifty index for an upside move towards 24,200. Of course, a lot of unwinding is still required at 24,000, where call writers need to shift their position for the next leg of rally to commence. So some bit of consolidation move, but buy on decline overall to continue over here in the Nifty index. Of course, talking about the Bank Nifty, we've seen a good amount of action here earlier in the week, but from the last 2 days, we've seen a little bit of profit taking. Now, Bank Nifty, it needs to hold above 55,000. If it manages to cross and hold above these levels, then we would expect a kind of a good up move here, or else we would see this index again moving in a lackluster move. So 55,000 would be an important make or break zone here with the support of 54,750. It's a very near support, but it will decide the stance for the market, for the Bank Nifty for the next few sessions.
Just wondering what your picks are this afternoon, Shivangi?
So on my radar, of course, was Cummins, which has broken out. But similarly, I have my eyes on Siemens, which is, again, holding quite well. It has shown a price volume surge here with a very healthy bullish engulfing candle formation. The kind of closing that we're seeing at the day's high is quite positive here. And with the sector tailwind, of course, we'll be expecting a lot of action-packed move here. So this is one stock which is on radar for the next up move towards 4,020 levels and a support of 3,800 levels.
Got it. Okay, it's time for the NDTV Profit Spotlight. And this is on a couple of stocks that are absolutely buzzing, Exide and Amara Raja. And I'd love to get a view on the fundamentals of these two. But before we do, let's set the context. And Puneet had this report earlier in the day. Listen in.
Well, Exide and Amara Raja now back in focus. You're seeing a sharper move on Exide today and likely some reaction post the results of Amara Raja yesterday as well. And we're putting the focus on them. Given that a 7% up move on Exide, Amara Raja also continues to be in the green. But is the stronger re-rating trigger largely because of the higher growth in the OEM business is the key question. Now, you're seeing battery makers actually support and show a very strong growth in the OEM side. And basically the OEM business is for the car makers as well as for the two-wheeler makers as well. So Amara Raja reported a 30% growth in the OEM business, while the other businesses continued to show a decent mid to high single-digit growth. Telecom has actually continued to fall at this point of time, as the company highlighted that a lot of that business has moved from the lead acid to the lithium-ion battery business. But the OEM business continues to show a strong growth. Exide also reported a 25% growth in auto OEM growth, and hence maybe that could be one of the key triggers. You also have to look at the growth guidance both companies have now given. Now, Exide post Q4 had mentioned that a high single-digit to low double-digit growth is what they're expecting for FY27. Amara Raja has also given a similar growth for the industry as well. But why the sharper up move on Exide is also one of the other key question. Success in the new energy business, of course, remains a key for Amara Raja at this point of time. But Exide already has a partnership with Swolt for the lithium-ion battery business of the company, while Amara Raja is still awaiting a technical partner. They had a partnership with Goshen, but because of the Chinese nature of the ownership of that company, they're still awaiting some approvals and some more certainty in that business, what they said in the con call yesterday. You also see that Amara Raja is going first for the older NMC battery technology for the EV space versus LFPs, which is the more latest technology that Exide has preferred to go through as well. Finally, in terms of Amara Raja, Nuvama also now downgraded the counter today, with saying that the 25% surge in the last 2 months captures the growth momentum as well. And when you look at Nomura, they also maintain a neutral rating and highlighted that the lead acid business is the cash cow. But now with EVs progressing, you could see a reduction because EVs don't have lead acid batteries. So there's a lot to watch out for from this space, but clearly Exide having a much better faring in Q4 as well as on the share price today compared to Amara Raja.
Yeah, absolutely. You say, that's exactly the point that I was going to make. Amara Raja gaining about 1.8%, 1.9%. Exide is up and about, right? It's significantly higher, 7-8% higher. Dilip, the question to you then, you listened to my colleague Puneet list out the reasons why the stocks are in focus, but what do you make of the fundamentals? Do you think that this is something that an investor should add to their portfolio?
So first and foremost, I think let's understand that both the companies from their basic core business has always had cash flow from operations substantially good. So free cash flow was always generated for the business all throughout, especially for the lead batteries business is concerned. And I think just to take that point, that this time there was a good OEM growth that we have witnessed for both Amara Raja as well as for Exide. I think that can be against the backdrop of what we can understand is that there was a GST push which was given that led to a massive increase in the sales of some of the cars, I mean, in the entire automotive industry. So I think that partly possibly explains the bump up in the OEM sales. But really for all these companies, the replacement is something that matters the most. But if the sheen in these companies have to continue, it is obviously going to be the new energy batteries, the EV batteries. And what is the capital intensity of this business and how quickly they will start making returns on that? And that is something which will drive the future valuations for this company. So if you ask me from the current level, whether the investor should buy, I would say yes. At least there seems to be a good momentum. And maybe from here on also, there seems to be something like another 20-25% a rise very much possible if you invest for next 8 to 12 months. So I would say yes, the investors for an 8 to 12 months period can think of investing in both Amara Raja and Exide.
Okay, so at current valuations, at current prices as well. I just want to quickly look at what's happening with FDC and that spike that you're seeing in the stock. This is the first cut coming in. Net profits at 103 crores versus 38.7 crores. Big jump over there. Revenues have gone up about 19% at 585 crores versus 492 crores. And EBITDA is up 96.5% at 106 versus 54.1 crore. Just pull up that intraday chart if we can. And I'm going to quickly ask Shivangi for a view on it. Even the margin figure is robust, right? 18.2% versus 11% at this point. You're seeing the stock cool off after that initial spike, but still doing well. There is another income figure, which was there last time as well, 50 crores versus 16 crores. So it's come down to some extent. Shivangi, how do you look at FTC on the charts?
Looking at FTC, of course, from the last two sessions, this stock has kind of moved quite a bit. Even on the monthly basis, we've seen that the closing is kind of very positive, up by around 17% in this month so far. Now, the good part is that it has negated its lower top, lower bottom formation on the larger time frame, which does decide the new stance for the stock. But I would still recommend maintaining a stop loss here with a level of around 415 for the upside move towards 450 levels.
All right, so that's the view on FTC, continuing to hold with gains of about 5%, but losing a little bit of steam even as we speak. Varsha joining in to talk about stocks that are buzzing in trade, and quite a few of them actually. We mentioned this at the start of the program. Stocks that are up as much as 6, 7, 10%. Varsha, what's on your list right now?
Well, I would say a mixed set of companies that I'm going to cover today on the back of earnings. Let me start with, Morpen Lab, wherein overall weak set of numbers company has seen. If you see, there was a manufacturing scale-up and strategic investment which impacted, near-term profitability for the company. Overall revenue was up only 4%, but if you see, EBITDA was down 42% and margins were at 5% versus 9%. Even net profit was down 22%, so weak set of numbers there. Then you have AstraZeneca, again, a weak set of numbers posted by a company. If you see, so there was a revenue growth, good revenue growth, but lower other income impacted profitability for the company. Higher cost of material impacted margin, and if you see, margins were only 11% versus 18% last year, and you see net profit is down 23%, though revenue was up 20%. Then you have Gujarat Fluorochemicals, again weak set of numbers. If I were to talk about bulk chemical segments, witness a decline quarter on quarter. EBITDA and margins decline on higher operating expenses. Also share of export revenue, if you see, have declined, and the PAT is down almost 32%. So weak numbers there. Then lastly you have Phenolics Industries. If you see, overall revenue was up 12%, good set of numbers. A good spike in EBITDA margin as well at 25% versus 14%. Now the revenue growth that you are seeing is led by a higher or better realization, and hence the margin uptick also. EBITDA improved to 25% and strong liquidity with free cash flow. So overall, three stocks which has given weak results. Phenolics is the one which has given strong results, and hence the stock is up almost 7%.
Okay, Phenolics Industries in focus. I want to look at two more stocks. I want to look at Coal India. Its OFS has already been subscribed 2x. Once the news of its OFS came, that stock opened quite low this morning. So remember, we've been giving you exclusive details on the whole Coal India story, and now it's a 2x subscription. If you had joined in on India Market Open this morning, you would have heard Kush Bora saying that at lower levels buy Coal India, there's an opportunity there. We'll ask Shivangi Sada and Dilip what they think right now. The second stock I want to look at is LIC. Now, a Bloomberg report saying, and remember we have reported that there is going to be an LIC stake sale soon, but the Bloomberg report says the government may sell up to as much as 10,000 crores in LIC. They will begin marketing that stake sale in June. Remember, there is this overhang of when that stake sale will happen. Once we know it's happening, does it become an opportunity? I'm going to go to Dilip first, ask him about Coal India and LIC. Dilip.
So I think as far as Coal India is concerned, if there's an opportunity in the OFS segment, I would say yes, one should buy, most certainly, because the way the things are stacked up in Coal India, I think next 1.5 to 2 years looks pretty good, pretty interesting. Though it's very difficult to take a call on the commodity, as I always maintain, to take a very secular long-term view. But still, the way the things are stacked up, I think Coal India on a consolidated basis will still continue to do very strongly. And that's what we think. This certainly merits investment in the OFS without any doubt.
Dilip, if you don't get the OFS already 2 times subscribed, like we said. So without the OFS option also worth taking right now, as you see it, cash market, current rate.
So what I would say is that without, even if you don't get it in OFS, if you buy it from the open market, I would still say that there is a reasonable 15 to 20% appreciation that is very much possible over next 8 to 12 months is what I would think. And not to forget the very high dividend yield that it offers, which is a huge attraction for anyone. So I think all in all, yes, it merits an investment in the open market as well as in the OFS.
Okay. I'm going to get a quick view from Shivangi on Coal India before we ask Dilip about LIC. That's the second stock we were discussing. Shivangi.
Coal India has been quite a trader stock for that matter, and we've seen that a lot of good action can be seen here. This would definitely be on my radar, but of course it's a highly volatile stock, so one has to play the swing with a strict stop loss itself. Positionally, the stock looks quite positive, but on an immediate basis, we might continue to see swings here. Of course, the stock is up massively in the recent times, but we could see an up move to round about 480 odd levels on an immediate basis, and 450 would be an important support to watch out.
View on Coal India. Let's go across to my colleague Danish. She's standing by to get you an interesting story. Airlines are apparently trimming their capacity as demand softens, and that's according to sources. Air India and Indigo planning calibrated flight cuts between June and August. Let's find out what exactly they're saying, though. Danish, what are you picking up?
Well, that's correct. Both these airlines are going to cut certain frequencies on certain domestic routes, and these are especially going to be those routes which are short haul and which are like under 90 minutes flights. These could be the ones that could see frequency going down. Besides that, both industry sources have clarified to NDTV Profit that despite the reduction in frequencies, there will not be any impact or any kind of a strain on the overall flight operations of these airlines. And moreover, Indigo sources have also informed that the cut that is planned for the next 3 months is as per the yearly practice, because usually these 3 months see very less demand, and hence the flights are going to be cut. And very lastly, Indigo sources have told NDTV Profit that as the festive season approaches, these flights will be reinstated. So overall, if we see, while Air India is going to cut flights because of the West Asia impact, for Indigo, it is more of a seasonal reason why Indigo is going to cut flights for the next 3 months.
Got it. All right. So that's certainly something to bear in mind. By the way, there's clearly an update that you have to pay attention to with regard to the weather, and this is an India Met Department guideline, or rather warning that has been sent out. Heat wave to severe heat wave conditions are likely to continue over central and northwest India over the next 2 to 3 days. A reduction in the maximum temperature, abatement of heat wave conditions likely from the 29th of May onwards. Isolated heavy to very heavy rainfall is expected over northeast and adjoining East India during the next 2 to 3 days, and over South Peninsular India today, that is the 27th of May, and over Tamil Nadu, Puducherry and Karaikal during the 27th to 29th May time frame. Moderate to heavy or severe thunderstorm activity is expected, with squally wind speed reaching as much as 70 kilometers per hour over northwest India, central India and East India during the 28th to 30th May period. But the most important part, of course, has to do with the heat wave conditions over the next 2 to 3 days. Let me hand it over to Tamanna to see how the markets are closing now.
Not hot at all. Tepid. There is no heat wave happening here. At least you've dipped a toe back into the green territory. Closing completely flat before that midweek market holiday, and that's where the Nifty lies. But at least you're not closing with any great losses. We'll pull up the Nifty heat map as we go into the last few minutes of the closing bell and see what's happening there. Tata Motors PV zooming to the top spot. Once again, it's all about autos for some time now. Bajaj Auto also has been steadily doing very well, because now you know that the promoters are not going to come back into that buyback. That's excited the market. Eternal has been having a good run. Hindalco, we talked about. ONGC, it gets worse and worse, right, for ONGC after its results, and of course with crude cooling off. HDFC Bank, ITC and HDFC Life, I think also following HDFC Bank, they're in the pain point. Can you quickly pull up Nifty contributors, because it's pretty much a couple of stocks which are pulling down the market largely. Just look at that. 65 out of the 121 points that are in the negative are only from HDFC, and then the rest made up between ITC and ONGC. So this is the pain point over here. But in the broader markets, it's a slightly better picture, isn't it?
It is. And just to the point on auto and metal, right? So these two sectors are in focus. Mid-cap index is up 0.4%. Small cap index will be approximately that as well. The Nifty Next 50 really is the star of the day today. But pull up the heat map for the sectoral indices, and you will see that on the top you have media index on account of Z Entertainment. That was one of the stories. You have auto that once again is gaining for the 7th straight session, 1.7%. Just a short region behind that is the Nifty Metal. It's interesting because you have Hyundai that has announced price increases today of up to 12,800. They're having to pass on input prices, but because demand is robust, you have customers that are absorbing those price increases, which is good news for the steel companies as well.
But it's actually going to be a positive, as not just Hyundai and auto majors, even as FMCG players start passing on prices from an investor perspective, it's good that that's actually happening. Nifty Media up thanks to Z. But how are we closing this Wednesday afternoon? You're closing pretty mild, I would say. Pull up the top gainers and losers on the broader markets before we wrap up on the show today. Adani Total 14% up. Cummins on the basis of its numbers. PNG held again. Good set of numbers. Delta Corp, that Supreme Court hearing is on, and that could be important from them from a policy perspective of what's happening with gaming. Finolex again, numbers coming in, earnings coming in. Z Entertainment, of course, with the hope that they might get FIFA rights. On the losing side, you have an AstraZeneca, a Polymed second day in a row actually after its numbers, seeing that pain, GE Shipping, Easy Trip, some of those that are coming in.
So, but broadly, this is what you'll close Wednesday at. I wonder what the action will be at the start of Friday, because a lot can happen over the course of 24 hours. And I think I'd watch the crude oil prices very, very closely. But that's all on this edition of India Market Close from Tamanna and myself and the team that put this show together. Thank you so much for watching. Stay tuned. Lots more coming up on NDTV Profit.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all in.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबां केसरी.
And the award goes to
Tamanna Inamdar, Managing Editor, NDTV Profit.
leading the newsroom, shaping the narrative. From stories to impact, a voice that matters. Tamanna Inamdar, among India's most influential, power, purpose and perspective recognized. NDTV Profit's editorial force gets industry-wide acclaim. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Good evening, you're watching Market Express with me, Shreyanti Singh, and this is the show that gets you a roundup of everything that has happened in today's trading session, as well as news and updates from within the country and across the globe. But first things first, let's talk about markets. Then markets in fact lacked direction today, and the Nifty is the one that hovered near 23,900 even at close, as you can very clearly see on your screens as well. Just 7 points higher than that level that I mentioned, while the Sensex also slipped slightly as cautious sentiment kept bulls and bears in a tight tussle. And let's also talk about the sectoral picture. Then broad-based buying supported the market today. Most sectors closed in the green, with energy and metals really leading the charge, while financials and oil and gas were the top laggards on the other side. Let's also talk about metal stocks with a sharper focus, because you do have global aluminium prices that moved higher, lifting sentiment across the sector. So something like a Hindalco or even a Nalco really led the gains on the Nifty Metal Index, as you can very clearly see on your screens as well. About 4% plus uptick coming in for both of those counters that I mentioned, with all constituent stocks for this particular sector as well trading firmly in the positive territory during the session. Let's also move on and talk about Just Engineering, that posted a strong set of numbers in the fourth quarter, with profitability improving sharply despite a modest rise when it comes to revenue. And that particular counter was gaining in trade, with that 6% uptick coming in. Margin expansion, better execution and operating leverage really helped cushion global headwinds, while higher other income further boosted bottom line growth during the quarter. When you talk about the word coming in from the management as well, they've in fact told NDTV Profit that they do expect margin expansion to remain sustainable. Let's move on and talk about Gujarat Fluorochemicals, that reported a subdued set of numbers in the fourth quarter, as weakness in its bulk chemicals business and rising operating expenses weighed heavily on earnings. The company in fact also saw a decline coming in when you talk about the export revenue contribution during this particular quarter, adding further pressure to profitability. EBITDA margins contracted as costs remained elevated, while the profit after tax also dropped sharply and by over 30%, reflecting the challenging operating environment for the chemicals player despite steady revenue trends. Let's move on and talk about Landmark Cars, that delivered a strong set of fourth quarter numbers, and the street was unimpressed though, with the company's after-sales segment clocked its strongest ever quarterly performance. Some bit of profit booking that you saw on the back of this strong set of numbers. You do have the profitability that was driven up higher as well, and the auto retailer also reported its highest ever annual EBITDA for FY26, supported by healthy demand across segments, benefits from GST rationalization, and even momentum really coming in from some of those new launches. Better cost discipline also further strengthened this particular quarter, with employee expenses and other operating costs remaining below internal targets, helping margins improve despite a competitive environment. Let's also move on and talk about Finolex Industries, that reported an improved operating performance, really reflected through in the stock price as well. That strong fine print, 8.5% uptick coming in, supported by better realizations during this particular quarter. And when you talk about the earnings a little more, EBITDA margins also strengthened to somewhere close to around 25%, reflecting improved profitability and operating efficiency. Now the company has also continued to maintain a strong balance sheet position, ending the period with free cash and net liquidity of somewhere close to 2,500 crore rupees, providing financial flexibility for future growth and expansion opportunities. Let's move on and talk about Translate Lighting that reported a softer set of numbers for the fourth quarter as execution challenges and cost pressures really weighed on the profitability. When you talk about this particular counter, about 5.5% downtick coming in, and the revenues declined marginally on a year-on-year basis, while EBITDA and margins also came under pressure. The weaker operating performance, in fact, impacted the bottom line, with net profit falling sharply during the quarter amid margin compression across projects. Let's move on and talk about Siemens India that reported a mixed set of numbers for the fourth quarter. The street was quite impressed by some of the good parts of this particular earnings fine print. Now, the revenue growth remained rather healthy, but profitability is the one that came under pressure. EBITDA margins weakened sharply during the quarter, while net profit declined significantly, reflecting cost pressures and softer operating performance, and that's despite higher top-line growth. Let's also move on and talk about Hindalco. Now, shares of Hindalco Industries jumped as global aluminium prices climbed to a 4-year high amid escalating Middle East tensions and fears of tighter global supply as well. So concerns over possible disruptions around the Strait of Hormuz, along with restrictions and some of those risks coming in terms of production cuts in China, have sharply boosted sentiment across metal stocks. You do have that uptick really that we've talked about earlier as well. So investors really betting on stronger realizations when you take a deeper look when it comes to some of your aluminium producers. Let's also move on and talk about the update coming in when you talk about Morgan Stanley in terms of them initiating coverage with an overweight rating and a target price of close to 1,300 rupees. The brokerage, in fact, believes that tighter global aluminium supply and sustained demand strength could really keep prices elevated for longer and supporting earnings visibility. Morgan Stanley, in fact, also highlighted Hindalco's strong free cash flow potential, ongoing capacity expansion plans, and some of your long-term value unlocking opportunities is something that they've highlighted, while expecting Novelis to see a recovery phase led by expansion from FY28 onwards. Let's move on and talk about the government launching an offer for sale when it comes to Coal India, and that particular counter was buzzing away in trade, but it did give up some of those gains as well, with a base issue size of 5,000 crore rupees along with a green shoe option of another 2,500 crore rupees. NDTV Profit's news break has now been officially confirmed though, with the indicative floor price set at 412 rupees per share, nearly a 10% discount to the current market price. The OFS, in fact, is expected to draw stronger investor interest given the company's dominant market position and attractive dividend profile. Let's also move on and talk about CleanMax Enviro that has raised $575 million to accelerate expansion across renewable energy projects, marking a significant funding boost for its clean power ambitions. The company, in fact, has also successfully commissioned 351 close to megawatt peak capacity, and that's at the Bikaner solar park as well, strengthening its presence when it comes to India's fast-growing renewable energy sector. Let's also move on and talk about Ramco Industries that was in focus on the back of a strong set of numbers in the fourth quarter, as you can see on your screens as well. About a 4% uptick is what you had coming in for this particular counter. And robust growth across revenue is one clue hidden there, and operating profit and net profit also. You've seen good performance coming in. EBITDA margins improved sharply during this particular quarter, supported by better operating leverage and improved business performance, while profits also received a boost coming in from a one-time gain. Let's also move on and talk about Hitachi Energy that is seeing stronger brokerage optimism after Jefferies maintained its buy rating and sharply raised the target price to somewhere close to 43,000 rupees from 25,000 rupees earlier. The brokerage, in fact, believes that the company is entering a multi-year structural growth phase driven by rising demand when it comes to HVDC projects, data centers, and export opportunities. Also, something that they've highlighted here, Jefferies, in fact, has also upgraded FY27 and FY28 estimates, citing some of that improving visibility, stronger margins, and fresh capacity expansion plans. Let's also talk about Morphin Labs that reported a mixed set of numbers, and that stock was trading with a downtick of about 4%, with the revenue growth remaining modest, profitability coming in under pressure due to manufacturing scale-up and strategic investments. When you talk about EBITDA and margins as well, they declined sharply during the quarter, reflecting higher operating costs linked to expansion initiatives, even as the company continued investing for future growth. Let's move on and talk about AstraZeneca's pharma. The company's strong sort of performance coming in on the back of revenue growth in the fourth quarter, but profitability that actually remained weakened sharply due to higher material costs and lower other income as well. So about 3.5% downtick coming in on this particular counter. EBITDA margins also nearly halved during the quarter, while net profit also declined despite healthy top-line performance, highlighting rising cost pressures across operations. Let's also move on and talk about tax authorities that have accused Pernod Ricard of misdeclaring the composition and age of imported Scotch whisky to reduce customs duties in India. In fact, the allegations are part of an ongoing investigation into tariff payments and import practices. The company is yet to publicly respond in detail to these claims. Let's move on and talk about some business news now. Baiju's founder, Baiju Ravindran, has been sentenced to 6 months in jail by a Singapore court in a contempt case linked to investor disputes and even asset disclosure violations. Now, the court has found him guilty of breaching multiple directions issued since April 2024, including orders related to ownership disclosures. For some of the companies, the ruling marks another major setback coming in from the beleaguered tech company amid mounting global creditor action and legal scrutiny as well. Let's move on and talk about Hong Kong, that has overtaken Switzerland as the top global booking center for cross-border wealth, a force that is unlikely to be reversed as hubs in Asia, in fact, grow faster than some of their European peers. According to Boston Consulting Group, wealth from China and an IPO boom in 2025 helped Hong Kong rise to $2.95 trillion offshore behemoth for the world's rich, narrowly surpassing Switzerland's $2.94 trillion in cross-border wealth as well, according to BCG's 2026 Global Wealth Report. Let's move on and talk about European Central Bank in terms of the word coming in there. And the Vice President, in fact, has warned that Eurozone banks must step up investments when it comes to cybersecurity as advanced models really become increasingly capable of identifying software vulnerabilities. The ECB, in fact, has cautioned that financial institutions need stronger safeguards when it comes to faster deployment of security systems to manage emerging risks linked to artificial intelligence and even digital infrastructure. Let's also move on and talk about the artificial intelligence boom that is creating a fresh wave of trillion-dollar technology giants, with SK Hynix and Micron Technology really crossing the $1 trillion market valuation mark. Surging demand for AI data centers and advanced memory chips has fueled a sharp rally when it comes to semiconductor stocks, with investors betting heavily on some of these companies supplying the infrastructure behind next-generation AI systems that you and I talk about. The rally also reflects intensifying global demand for high-performance chips amid persistent supply shortages. Let's move on to national news now. The Enforcement Directorate has carried out raids linked to the CMRL payoff case, including searches at premises associated with former Kerala Chief Minister Vijayan as well. And the action is also part of an ongoing money laundering investigation connected to alleged financial transactions involving the mining company. The development has intensified the political heat in the state. Let's move on and talk about the word coming in from health authorities in Bengaluru that have confirmed that a traveler from Uganda who was isolated over suspected Ebola symptoms has tested negative for the virus. The passenger had been kept under observation as a precautionary measure, mind you, after arriving from the affected region. Officials are saying that there is no cause for concern at this point in time, but monitoring protocols remain in place. Let's also talk about the CBI making a major breakthrough when it comes to the NEET UG 2026 paper leak investigation, identifying what it calls the actual source of the leaked chemistry, biology, and physics question papers. 2 more people have been arrested as the probe really widens into the examination controversy that sparked nationwide concern over the integrity of the medical entrance process. On to Air India now, that had a flight that was headed to San Francisco that was forced to return to the national capital after a technical snag was detected mid-flight. So the Boeing 777 aircraft carrying around 230 passengers remained airborne for more than 8 hours before safely landing back in the national capital. And the airline has also said that the aircraft returned in line with standard safety protocols and will now be undergoing a detailed technical inspection going forward as well. Let's also move on and talk about a very important update coming in. A massive forest fire near the Air Force Station in Kasauli triggered a large emergency response, with the Indian Air Force in fact deploying Mi-17 and Chinook helicopters to battle the blaze. Officials said that the fire spread rapidly across some of the forest areas, forcing aerial firefighting operations in inaccessible terrain as well. Water was lifted from the Sukna Lake as teams from the forest and fire departments continued efforts to contain the flames amid rising temperatures across the region. And on to international news now. A massive fire has broken out at a Jewish supermarket in London's Golders Green area, prompting a major emergency response. Around 100 firefighters have been deployed to control the blaze, with nearby buildings evacuated as a precaution as well. Authorities are investigating the cause of the fire, while no immediate reports of casualties have emerged. Let's also talk about war updates then. Israel has launched one of its heaviest waves of strikes across southern and eastern Lebanon since the April ceasefire, after PM Netanyahu in fact vowed to intensify military action against Hezbollah. And you do have Lebanese authorities that said at least 31 people, including children, were killed in the bombardment, while the Israeli military claimed it targeted more than 100 Hezbollah-linked sites and firefighters as well. And fresh sirens were also triggered in northern Israel after a projectile was launched from Lebanon overnight, further raising fears of a broader regional escalation. Let's move on and talk about Pope Leo then, who's voiced concern over the worsening conflict in Ukraine, condemning what he called a sharp escalation in violence and rising civilian casualties. Addressing pilgrims during his weekly audience at the Vatican, you do have the first American Pope who said that war only deepens suffering and hatred instead of delivering security or solutions. So that's some strong wording coming in there for the first time there. And his remarks in fact come amid renewed attacks and growing fears of a prolonged conflict in the region. Let's move on and talk about South Korea, that has said an attack on a cargo vessel operated by local shipper HMM in the Strait of Hormuz earlier this month likely involved an Iranian anti-ship missile as well. And investigators found debris inside the damaged vessel, indicating components linked to Iranian-made turbojet engines, with officials confirming the ship was struck twice during the attack. The incident has added to growing concerns over maritime security and escalating tensions around one of the world's most critical energy trade routes. Let's move on and talk about some sports news. And Royal Challengers Bengaluru are through to the IPL final after defeating Jos Buttler's Gujarat Titans in a high-pressure clash. You do have RCB that delivered a strong all-round performance to seal their place in the title match, keeping alive hopes of a maiden IPL trophy. Gujarat, meanwhile, falls short despite another key contribution coming in from Butler. Let's move on and talk about chess now. D. Gukesh and R. Pragnanda endured a difficult outing at the Norway Chess in Oslo, with both Indian stars suffering setbacks after promising starts. In fact, Gukesh also failed to convert his advantage against Wesley So before losing in Armageddon, while France's in-form Alireza Firoza also outplayed Pragnanda to move to the top of the standings. Meanwhile, defending champions Magnus Carlsen survived another major scare against Germany's Vincent Keimer, eventually clinching an Armageddon win, also coming in to register his first points of the tournament after yet another intense battle. And with that, it's a wrap on this edition of Market Express. Thank you so much for tuning in.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
And the award goes to
Tamanna Inamdar, Managing Editor, NDTV Profit.
Leading the newsroom, shaping the narrative, from stories to impact, a voice that matters. Tamanna Inamdar, among India's most influential, power, purpose and perspective recognized. NDTV Profit's editorial force gets industry-wide acclaim. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New Year. New power panel. India Market Open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Nifty holds firm above 23,900 level, but bulls stay cautious today. Benchmarks trade in a narrow range as the Lal Street catches a breather after yesterday's sell-off. HDFC Bank and ITC add more pressure to Nifty. Rupee too remains muted at 95 rupees 70 paise against the dollar. Oil prices pull back nearly 4% as investors keep a close watch on peace negotiations in Iran war. Iran guards the official says low possibility of renewed war with US. Reports suggest Trump to meet his cabinet to end the 3-month-long conflict. Iran's nuclear dust blurs clarity. Cabinet gives nod to 25,000 crore rupees overhaul of Sarthak public distribution system, a digital push for India's food security network. Shares of HDFC Bank fall over 2.5% after media reports raise governance concerns. HDFC Bank allegedly camouflaged crores as marketing spends to pay higher interest to state firm. But the bank rejects any wrongdoing in response to NDTV Profit. Byju's founder Ravindran mounts defense against Singapore court sentencing him to 6 months in jail in a contempt case, adding to the edtech firm's growing legal troubles. Middle East crisis hits aviation sector. Air India and Indigo to cut domestic flight operations between June to August amid weak seasonal demand and rising fuel costs. In a landmark ruling, top court upholds the government's decision to impose 28% GST on online gaming, delivering a major setback to the gaming industry in the massive 2.5 lakh crore rupees tax dispute. Auto demand remained strong in the month of May, with Vahan registrations rising over 11% annually and nearing record highs, signaling broad-based momentum across the vehicle segments. Inside track on Karnataka, Chief Minister tussle. Sources tell NDTV that DKS swearing in is likely this week. New government to have more than one deputy chief minister. All eyes on tomorrow's breakfast meeting. Sources tell NDTV that Siddaramaiah is likely to resign after DKS meet. Tamil Nadu Chief Minister Vijay's maiden Delhi darshan. As Chief Minister, Vijay likely to meet Prime Minister Modi in Delhi. Vijay looks to reset Tamil Nadu centre ties. Hello and welcome. You've tuned into Profit 360. I'm Nisha Podar. Let's take you through all the top stories that you need to know at this hour. Now, let's first begin with the market action today. After yesterday's sharp bout of profit booking, well, markets took a breather today and traded in a narrow range, and the benchmarks ended largely flat, with the Nifty near 23,900 mark and the Sensex above 75,700. Now, the broader markets, however, showed relative resilience today. Mid-cap as well as indices really avoided any major swings and also slightly outperformed the benchmarks through the session. In fact, my colleague Parth is joining in to give us the entire market roundup for the day. Tell us, Parth.
So Nifty ends on a flat note, down just 0.03% today. Tata Motors and Hindalco were the top gainers in Nifty, both up by over 4%, while ONGC and HDFC Bank were the top losers in Nifty, with ONGC falling over 4.5%, followed by HDFC Bank, which was down over 2.5% today. The broader market has outperformed the benchmark today, with the Nifty Midcap 150 ending in green for the fourth day in a row, up by over 0.4% today, led by Adani Total Gas and Cummins India, both of which were the top gainers in Nifty Midcap 150, up by 11% today. Nifty Small Cap 250 also ended in green for the third consecutive day, up by over 0.5%. This was led by JP Power and Z Entertainment, which were the top gainers in Nifty Small Cap 250. JP Power jumped almost 20% today, while Z Entertainment was up by over 10% today. Now moving on to the sectoral indices, they ended on a mixed note, with Nifty Energy being the best performing sector, up by almost 2%, led by JP Power and Adani Total Gas. Adani Total Gas was up by over 13% today, while JP Power gained almost 20%. Nifty Financial Services, on the other hand, was the worst performing sector, down by almost 0.5%, which was led by BSE and HDFC Bank, both of which were down by almost 2.5% today. Nifty Financial Services, Nifty Bank, Nifty Oil and Gas and Nifty IT have fallen for the second day in a row, while Nifty Energy has gained for the third consecutive day. Nifty Metal also gains for the sixth day in a row, while Nifty Auto has gained for the seventh consecutive day.
All right, thanks Parth for getting us the entire market action for the day. Well, the oil prices, they cooled off today as traders closely tracked the developments in the ongoing US-Iran negotiations, and Brent crude slipped nearly 3.5% to around $96 a barrel, while US WTI fell about 4% to near $90 a barrel. Now, as the market now tries to really assess whether diplomacy can still move forward despite rising tensions in the Middle East, well, rupee too remains under control today, and there was hardly any change in the rupee value today, keeping the domestic currency tightly near 95 rupees 70 odd paise against the dollar. All right, moving on to one big corporate development then of the day, and shares of HDFC Bank remained under pressure after reports raised concerns over the bank's governance practices. But the bank, in response to NDTV Profit, has rejected any wrongdoing. In fact, my colleague Piyush gets us the full account of the development. Piyush, tell us.
Right, HDFC Bank in a statement to NDTV Profit said that in response to the Indian Express report, they have said that the bank maintains robust internal oversight. There are set processes. All the any investigation that is being done is done through a process, already laid out process, and they take corrective actions in cases necessary. The bank has rejected assumptions of any wrongdoing by any of its executives. Now, this comes on the back of HDFC Bank has seen a slew of negative developments over the last couple of months, ever since its former chairman, Mr. Atanu Chakraborty, resigned, citing certain differences with the business practices of the bank and his own policies. Now, the Express report had said that HDFC Bank provided MSRDC savings account, which typically the rate is at 3.5%, but they were promised 6.1%, and to fill that upwards of 2.5% interest rate, they routed this additional 45 crore payment to MSRDC via their marketing budget. Now, sources in the banking industry say that this is sort of a common practice that some of the lenders do, but in HDFC Bank's case, the quantum is slightly higher, and hence this needs highlighting, and also the fact that the board was aware of such practices and did not really take corrective actions immediately. This is something which has resulted in HDFC Bank stock, reacting adversely. And over the last couple of months, the bank's share price actually has risen quite sharply, giving pain to both retail and institutional investors.
All right, so biggest dragger there, HDFC Bank, on those news reports. Now, in a landmark ruling, the Supreme Court has upheld the government's decision to impose 28% GST on online gaming, delivering a major setback to the industry in the massive 2.5 lakh crore rupees tax dispute. Now, the court calls it a valid imposition of tax, meaning that GST can be levied on the full value of player deposits and not just on the platform's revenue or commission earnings. In fact, my colleague Nimit joins in with all the details on the court observations and what the order means. Nimit, tell us.
Yes, so the Supreme Court has upheld the 28% tax GST imposition that the government put out last year against all these gaming companies. Now, this has been a dispute that's been ongoing for about about 9 years now. Since 2017 notices have been issued, and till date these notices pile up to about 2.5 lakh crore. Most of these numbers outweigh even the market caps of a lot of these gaming companies, which say that they will not be able to survive, and now that likely is going to become the case because the Supreme Court has upheld the GST application by the government to 28%. And the important part is, what is this 28% upheld on the platform fee or on the revenue? The companies argued that they should be only levied on the revenue that they generate, because that is what they're making and that is what they should be taxed on. But the Supreme Court upheld the center's argument here that it should be levied on 100% of the fee, that is, or the amount put in by the participant on the platform. Now, this was the big point of contention. The second big point of contention was about when this tax notice should apply from, because these tax notices, the 28% law change was first proposed only in 2023. Now, because of this, they said that these claims that go all the way back to 2017 should not apply, because that's retrospective application of law, which is generally not allowed. The Supreme Court has said here that this law in 2023 was only clarificatory in nature. Means it was not a new law, it merely clarified the position that this will be payable, 28% will be payable on the entire amount. So the notices from 2017 onwards were upheld here. Now, a few of the big companies here that will be affected are Delta Corp, which has a 33 lakh crore, I apologize, claim there. And these other companies, Dream 11, for example, Games 24, Nazara Tex, Gamescraft, MPL, Winzo, have all been appealing in the Supreme Court, and they've all been turned down here today in one complete judgment. Lastly, I'd like to say that the Karnataka and Tamil Nadu bans on online gaming were also upheld in a separate point made by the court.
Yeah, some important points there, and thanks Nimit for breaking it down for us. It's a big blow coming in for online gaming companies. Let's understand this implication and also the judgment with a corporate lawyer. Khushbu Jain joins in. Khushbu, what do you make of the sense that you got from this particular order in terms of deposits versus the actual revenue and commission, GST applicability on that? Khushbu, can you hear me?
Yeah. See, the bench specifically ruled in favor of the government, deciding on two major parameters. And both the parameters are, number one, the first parameter, that they have let go of the skill and the chance, which is irrelevant when it comes to tax perspective. They say that even if the game requires heavy skill, like rummy or a fantasy sports or etc., once the real money is staked on an uncertain outcome, the set of functions as a taxable, actionable claim under the betting and a gambling framework. This was the first aspect, that skill or chance has no relevance when it comes to taxation part of it. The second was, the retrospective aspect that we're talking about, that backdated demands stand. What is the stand? The court here also confirmed that 2023 amendments were indeed a clarifactory part of it, not an act itself. This makes the retrospective tax demands legally valid, allowing authorities to process massive backdated tax demands which are being looked upon or has been looked into. Now, if you see this, it can be pursued in two manners. It can be pursued in a manner that one side of it which says very clearly that there is an industry or a valid, which is not a gambling industry but a betting industry, which were valid, and such heavy taxation at the retrospective stage will be very detrimental for their same time. If you look into the present condition where PROG Act is applicable and the rules that has come in this month, these two make it very clear that whatever said done, whether you're a skill or a chance, anything which has to do with the online gaming where money is involved, it's itself completely banned. So I think it's a combination of a lot of things that we are seeing today. The order that has come today with the retrospective part is much after the central act that has come, which has let go of the state-related laws which were there when it comes to skill and chance, and what they have to allow and not allow. So if you look into a holistic manner, today's judgment after PROG Act and the rules that have come in force, which has let go or completely ban on any kind of online gamings which involve money, complete ban on it, is something which has to be looked upon along with this, with a retrospective aspect where they're saying that this is not retrospective, because retrospective for a law which is made, to be applicable from an after date, actionable claim on a retrospective manner, they have said that there was no law. It was just a clarification that came in existence in the year 2023.
That's right. So there is no retrospectivity over here. But Khushbu, very quickly, what is the precedence that it sets, and what will be the impact? Very quickly.
So precedent part, see, if you have to look into it on the GST part of it, see, it's a very peculiar case. It won't be considered as a precedent in itself, because precedence comes only when the aspect that this is gonna create any kind of precedent. But this is a very, very peculiar case in itself, where they have clarified that this was just a clarification. This was not a law.
That's right. There was no law. It's also a new sector in India, Khushbu, and there is not much. So it's a unique case, but definitely it's a setback for the industry, with the court really upholding the government's understanding on this. But thank you so much for joining in with your expert take on this particular matter. All right, let's take it forward to another important development of the day, and the cabinet has approved the 25,000 crore rupees Sarthak PDS scheme, a major digital push to really modernize India's public distribution system over the next 5 years. Now, the platform aims to streamline food grain movement, improve the delivery efficiency, and also strengthen food security operations across states. Union Minister Ashwini Vaishnav said that the move is not a replacement of the existing PDS system, but part of a broader structural reform to really make the delivery mechanism much more efficient. Let's listen in.
ये रिप्लेसमेंट नहीं है एग्जिस्टिंग पीडीएस का, और इसका संबंध प्रधानमंत्री गरीब कल्याण अन्न योजना के एक्सटेंशन के साथ भी इसका कोई संबंध नहीं है। ये सुधार है पीडीएस के सिस्टम में, पूरे डिलीवरी सिस्टम में, लॉजिस्टिक्स में, ट्रांसपोर्टेशन में, मटेरियल हैंडलिंग में, और पीडीएस के बेनिफिशरीज की ग्रीवेंस के रिड्रेसल के लिए उसमें बहुत बड़ा ये स्ट्रक्चरल रिफॉर्म है।
Right, the legal troubles for Byju's founder Byju Ravindran has really deepened further. A Singapore court has sentenced him to 6 months in jail in a contempt of court case. Now, making a major escalation in the edtech firm's ongoing crisis. This adds to their trouble, really. And Nimit Dixit is here with more details on the court order, Ravindran's response, and what legal options that remain available to him going forward. Tell us, Nimit, will he go to jail, and what is the legal recourse here?
In a contempt proceeding like this, where 6 months jail sentence has been granted, Singaporean legal experts tell me that a person can only be arrested if they are within the territorial jurisdiction of Singapore. That means within physically present in Singapore. Beyond that, it's very difficult to enforce this. There is, of course, the extradition proceedings, but that usually doesn't apply for small cases like this. India does have an extradition agreement with Singapore, but that doesn't apply for cases where jail time is under 1 year. So Singapore legal experts tell me that it's going to be very difficult, firstly, to put him in jail unless he voluntarily comes and surrenders or flies into Singapore for some other work. So that's that. But to understand why this has happened, this is a case that arises out of an arbitration proceeding. A judgment came in 2024. It was by the Qatar Investment Authority, and an arbitration award came where it froze about $250 million worth of assets of Byju's and Think and Learn, which is their holding company. Now, after that, there was an asset disclosure requirement because these assets needed to be frozen and then liquidated for the purposes of serving this award. Now, once this asset disclosure was required, this asset disclosure is what Byju Ravindran did not adhere to over the span of 2 years. Many requests have been made to disclose these assets, specifically certain different assets over different jurisdictions, but Byju Ravindran has not disclosed those assets, and that's why a contempt of court order has been filed by the Singapore court, and then now sentenced Byju Ravindran to 6 months in jail. Now, what he says is that he's not been attending these proceedings or been making these disclosures because they're actually very close to a settlement, and he's actually shocked that Qatar Investment has approached the Singapore court for this kind of an order.
All right. Thanks, Nimit, for putting all that into perspective. Yes, it's a big legal trouble for Byju's founder. Now, Mphasis has launched Mphasis Traya, its new enterprise AI platform aimed at helping businesses deploy the autonomous AI agents and drive better outcomes. In fact, CEO and MD Nitin Rakesh said one of the biggest challenges for enterprises today is the agency gap, where AI systems still require human intervention. Let's listen in to what he had to say.
Today, AI is a hammer looking for a nail, especially agentic AI. We launched a first of its kind enterprise agency platform. That isn't giving you a set of tools that you can use as you wish, but it's actually connecting the insight that sits within your enterprise systems to the foresight that we will give you the ability to drive, and connecting that to the execution where you can actually have these autonomous agents operate on your behalf.
All right, moving on. Airlines are trimming capacity as demand really softens, according to sources. Air India and Indigo plan calibrated flight cuts between June and August, citing weak seasonal travel and also high fuel costs. What are the reasons? My colleague Danish explains, and also how big a hit could it be for travelers like you and me, Danish?
Well, that's correct. Both these main airlines have decided to curtail their frequencies and domestic flights for the next 3 months. And while for Indigo, this is happening as per its yearly exercise, because usually in the span of these 3 months, the seasonal demand is quite low, and hence Indigo will be cutting back its flights this year as well. In fact, last year during the same time around, Indigo had reduced its flights by 10%. So the final number is yet to come from the airline, but it could be somewhere in single digits. Whereas on the other hand, for Air India, this domestic flight cut is largely in line with the international flight cuts that it had announced earlier. So this is going to happen for the next 3 months. Moreover, Air India has clearly said that one of the major reasons why this flight cut is happening, it is because of the high ATF cost, and hence this flight cut is taking place. But as far as the impact on the passengers is concerned, both airlines have reassured that while the frequencies will go down, but it will not impact or create any kind of pressure on the operating on the entire operations of the airlines. So all in all, if we see this practice is also being done in line with the usual industry practice when there is a lean particular period, and that's when these flights are trimmed. Both these airlines are expected to soon issue the details that which cities will see the cut in frequency.
Stay with us. Even corporate India is tightening its belt, and travel is the first casualty of that. Industry data suggests that corporate bookings are now down in double digits, with cancellations as well as rescheduling also rising sharply. Danish, also break down that for us, and also the reasons and how enormous is the impact.
Well, the corporate travel has gone down, especially in the past 3 months, and this data is coming from Ease My Trip and Faith, which is an industry association. So they're saying that this moderation in demand was there from the past 3 months, and it actually began just after the West Asia crisis started. Besides that, as far as the domestic cut by corporates is concerned, it is kind of in a much larger scale. And on the other hand, even the international flights, the corporates that usually fly international routes, even that has been reduced in double figures. The main reason is because of the West Asia crisis and the impact. But on the other hand, the experts are saying that this is happening because the corporates and the businesses are already facing a lot of challenges because of the high oil prices and its overall impact on inflation. So that is why we have also seen that very recently, big corporates like Maruti Suzuki, which recently yesterday announced that it has ordered its employees to cut down its unnecessary international and domestic travel. Similarly, we are seeing that Finance Ministry also some time back had issued these directions. So overall, this particular moderation is expected to continue for the next few months until and unless the war is not over.
Right. Thanks, Danish, for taking us through all those important details when it comes to how India flies. Now, the banking industry has really raised concerns over RBI's proposed curbs on digital payments aimed at tackling the cyber fraud. And the bankers have really opposed the proposal to really introduce a 1-hour delay on online transfers above 10,000 rupees, saying the limit is too low and could really impact UPI growth. In fact, the industry players are urging the RBI to raise the threshold to at least 25,000 rupees, while also seeking exemptions for emergency and tax-related transactions. Payments executives have also flagged practical challenges in implementing some of the proposed controls there. And the push comes as digital fraud cases really rose to 28 lakh in 2025, with the total value of frauds really crossing 22,900 crore rupees. All right, moving on to some political developments of the day, and suspense over Karnataka Chief Minister is near its biggest climax that we are seeing. As per sources, Siddaramaiah might step down tomorrow and DKS likely to really take oath this particular week. Rahul Gandhi will be attending DKS swearing-in ceremony is what we hear. When asked about whether he will accept Rajya Sabha role, well, the Karnataka Chief Minister Siddaramaiah said that he will speak tomorrow about it. As per sources, DKS is really reported to be staying put in Delhi and will go to Bengaluru tomorrow. Furthermore, a breakfast meeting between DKS and Sidhu is scheduled for tomorrow. Following this particular meeting, also sources suggest that Sidhu is slated to resign soon. All right, so that is a lot of politics happening in the state of Karnataka. With that, completely out of time on this edition of Profit 360. But do keep it with NDTV Profit. Thank you so much.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
India's unshakable news habit. NDTV.com is India's #1 English news website. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
And the award goes to
Tamanna Inamdar, Managing Editor, NDTV Profit.
Leading the newsroom, shaping the narrative, From stories to impact, a voice that matters. Tamanna Inamdar, among India's most influential, power, purpose and perspective recognized. NDTV Profit's editorial force gets industry-wide acclaim. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300
Hello and welcome to KYC. I'm Sharad Dubey and you are watching one of the best shows in the town, and we get you interesting companies, their stories and the outlook ahead. And today also I've got a very interesting company for you, the company in focus. I'll give you those details, but try to use your mind a bit. I'm going to give you a little bit of hints. The first hint, it's a healthcare tech company. There are 4 or 5 of them in the listed space. So let me make it easier for you. They recently acquired Arai and TrueBridge. These are some important AI related acquisitions which have been happening in this space. Of course, it's not a recent listing, but I would say that from December 19, 2024, the listing has been there. And if you look at the numbers from the March lows itself, there has been a good up move coming in. That's almost 29% of up move going ahead. But which stock is in focus? Try to guess. And the stock in focus is IKS, Inventurous Knowledge Solutions. This is the company we are talking about. But why are we talking about this company? That's the first question to be asked. First reason is definitely going to be on the acquisitions. इसमें synergies क्या बनती है? 2 बड़े acquisitions company ने किए हैं. One is ARIA, another is TrueBridge, and of course we'll try to understand, because last time also the management did speak with NDTV Profit, but we'll try to understand what's the integration looking like for this, what's the addressable market for this outsource segment. That's what also something which we'll be focusing on. And also if you look at it, the margin and revenue growth outlook going ahead. Remember, fourth quarter was a seasonally weak quarter as well. But question arises is how big this market is and what benefit comes in. Remember, इनका जो सबसे ज़्यादा धंधा है US से आता है, हेल्थ केयर सर्विसेज को ये प्रोवाइड करते हैं, एनेबलिंग प्लेटफॉर्म जो है उसे कहा जाता है. बट लेट्स सी अदर क्वेश्चन ऑल्सो which is important is AI, agentic AI, how much solutions comes in and what are the benefits from this segment. So we'll try to understand the business model, the growth perspective and also the market share. Market कितना ग्रो कर रहा है और कंपनी क्या उससे ज़्यादा ग्रो कर रहा है, अगर कर रहा है तो क्या मार्केट शेयर गेन है. And to put everything in perspective, we'll be joined in by Nitya Balasubramaniam. She is the whole-time director and the group CFO at IKS. But IKS है क्या? What is this company all about? I'm going to give you all those details. No matter how technical a company is in KYC, we simplify it for you. It's a platform as a service, PaaS company. Interesting. Let's understand more about this. And it caters to the US healthcare provider segment. Also focusing on outsourcing routine course of physicians. तो physicians के धंधे को digitalize कर लेते हैं. ये है कंपनी का जो है overall मोटा मोटी definition है. Offerings include of course admin offerings and clinical offerings. पेशेंट के जो पूरी जर्नी होती है, that's what is covered digitally to put that in perspective, and the companies behind it, 700 healthcare organizations. That's one of the important reasons. Let's also talk about the employees. This is the employees number you're looking at, 13,331 of them. And then let's move on and see other key parameters. 90% plus revenue actually comes in from the repeat customers, so that is an important point to talk about. Also, let's look at the other key reasons to be focused. They have almost 450 plus enterprise level customers, and going ahead, if you look at it, there's a seasonal weakness. आप देख रहे हो फोर्थ क्वार्टर में जहाँ पे इम्पैक्ट आया है, वो देखिए, this is coming because of the seasonal weakness and of course the winter impact. Headcount largely up 5%, declined by 19% on a sequential basis. Operational numbers ठीक ठाक आए हैं. Tech employee cohort, that is actually growing, going ahead. और जिस तरह AI आ रहा है, ये नंबर शायद और ज़्यादा बढ़ सकता है. But important thing, the first acquisition, RI Solutions acquisition, this is what we talk about, and over here we see their ontology segment is doing well. Roughly इस पूरे acquisition को $1.2 million upfront cash होगी. IP is your integrated property rights, which you are seeing on the screen, and also there will be a discounted ESOPs for the 4 years to align with the long-term interest. Apart from this, there is an $8 to $12 million of a build cost as well. Seems technical, लेकिन ये सिर्फ एक डील है. इसका फायदा क्या होगा वो आगे जाके बताएंगे. एंड दिस इज द सेकंड एक्विजिशन I'd like to talk about. It was done in the month of April, a $565 million acquisition from TrueBridge. This is also a very important one. Why? Because इसमें सिस्टम ऑफ रिकॉर्ड पे फोकस रहेगा. पहले वाले AI पे था, दूसरा वाला रिकॉर्ड पे था. And of course, this will be looking at for the rural and the community segment. The combined pro forma adjusted EBITDA margin as per the calculations comes at 26%. So there's a very massive acquisition by the company for this. US healthcare enablers, of course, looking at the industry, that's expected to grow at 12%. That's what the management commentary has been coming. देखा जाए तो $5 trillion का ये पूरा US healthcare expenditure is there. So such a big market, and there is everything for a lot of Indian players, not just for this company as well. The TAM is nothing but total addressable market. That's around $260 billion. And if you look at the outsourced market, that's roughly $34 billion. So there's a lot of coverage left for companies like IKS and its peers. And this is the numbers looking at the growth over the next, we could say from 2023 to 2028. This amount, of course, comes to 8% or 12%. So this is how the industry looks. But what are the key triggers ahead? और इसमें क्या मैंने positive भी रख लिया है, मैंने negatives भी रख लिया है. सबसे पहले, it's cautious but optimistic. That is what I'm going to say about this company. The debt and the return ratios, they are improving. So that is something to look forward to. But yes, it's not fully debt free yet. Integration risk is there of these large acquisitions. इसमें समय लगता है, and that is why clear timeline is very important when you're analyzing this. But the valuation, that seems expensive when it's compared to peers. So we will be looking at those numbers as well. Analysts are bullish, especially on the the synergistic acquisitions to play out. So yes, Street is hopeful for this counter, but क्या ये भाव में दिखेगा? That's the big question. So let's try to understand, and to put that in perspective, let's get in the KYC ratings to show you 8 ratings where we track a company in the KYC segment. This of course includes your income statement, balance sheet, cash flow, and I'll say the return ratios as well. बहुत important होते हैं. Street cred, shareholding, that also comes in, and valuations, a very interesting take. I have got around 4 peers where we'll judge whether this company is expensive or not, and of course the outlook. What are the numbers looking like, especially the TrueBridge acquisition? We'll try to understand that. But let's start with the income statement and let's see what's happening here. Largely the numbers are pretty strong, but the thing which you need to look at is this: 47 to 45% the growth which is coming in, that is showing a lot of strength. And ये पूरे long term basis पे जो CAGR आंकड़े आप निकालेंगे, वहाँ पे देखेंगे कि अच्छी growth आ रही है. But let's talk about Q4 numbers. Q4 is seasonally a little bit of weaker quarter. So of course you look at the numbers, it's kind of slight miss as per the broking houses, but net the numbers do show a good strength. आते हैं margins पे क्या movement आई है, and largely it is back to where it belongs, that 32-33% plus margins, and currently it's at 35%. So you're seeing the margins, the way they have moved
is pretty much decent and they seem to come back. Remember, दो बड़े acquisitions हुए तो margins में और return ratios में pressure आया था. So it's a strong thumbs up when it comes to the income statement. Balance sheet, I had mentioned you the debt is reducing. That was one of the positive points, and this is what we are talking about. 2 साल पहले IPO आया था, almost 1.5 साल पहले, और अब देखिए 275 crore rupees this borrowings is there, and it's a decent funded 192 crores cash balance is there, and the business model is such that यहाँ पे cash में उतनी तंगी नहीं होती है. They have US clients, they do not have government clients, so balance sheet is quite strong. So it's a strong thumbs up. So we spoke about income statement, we spoke about balance sheet. Let's talk about cash flows, and interestingly the cash flow conversion has been strong. If you look at these numbers, they seem really pretty good. Almost 120% cash flow conversions coming in, and those benefits are coming in. और याद रखिए integration का जो benefits है, जो acquire किए उसके benefits अभी तक आए नहीं है, तो it's expected to improve going ahead in FY27, FY28. Also, it's a strong up move from this segment. Let's talk about the return ratios and see what's happening here. Largely return ratios, a slight pressure is there because of the acquisitions, and that's largely known, but ऐसे business model में भी 30% से ज़्यादा का ROE मिल रहा है, तो यहाँ पे आपको strength देखने मिल रहा है, and look at that. This is the momentum coming in, so I would be giving this, the entire business model itself, a strong thumbs up. So we did 4 ratings. Let's understand the shareholding, and remember shareholding का history थोड़ा कम ही होगा. 2024 के एंड में कंपनी जो है लिस्ट हुई है, and if you look at it, the promoters have kept their stake around 64% and it's almost same out there, but FIs and DIs have started lapping up, and this is a good sign. Post IPO also good follow on buying is happening, and if you look at it, around from 5% it has gone to 8%. From DIs also it has almost jumped 50% to 6%. So this is a very good sign, so I'm going to give this a strong thumbs up as well, and this is how the picture actually looks right now. So it's quite even Stevens, and post IPO also institutional interest has been there, so that ticks mark on my analysis. So of course shareholding is a strong positive as well. But let's talk about street cred. IPO के बाद क्या पैसा बना है, और if somebody has entered recently, have they made money? From March lows everything went up, and of course the company also did well. So if you are a trader on this stock, you must have made 29% if you had come on the March low segment. But if you are an investor post IPO, this stock has tested your patience. 1 year is just 5% returns coming in from this lifetime high levels, especially during its IPO time, where there was a definitely hype on the sector. That stock went up pretty high, but from these levels it's still down 23%, and from the IPO price 1.5 साल हो चुका है, it's around 24%. So it's a decent return if you're holding it right from the IPO, but after that, if you're an investor, the stock is testing your patience. So right now, let's give this a neutral rating from both the sides and keep it balanced. Now my concern comes in valuations. Is it the high priced IPO, or is there some other reason why these valuations are on the higher side? Compare IKS with their FY28 P numbers. JM Financial के broking house के report से लिए 20.5 times. This is the higher valuations coming in, but let's compare them with others. There is First Source, there is Sagility, there is Indegene. These are also the stocks, but there most of the averages is ranging between 13 to 16 times, and interestingly, other peers are also there if you'd like to focus on, and they themselves are trading on a lower side. So the average is around 15 to 16 is industry, so definitely stock is trading at premium and it is not cheap. So it's a thumbs down when it comes to IKS. Let's talk about the outlook, what's happening here. The TrueBridge integration, that remains a key monitorable, but integration इतना बड़ा है कि समय लग सकता है, delays हो सकते हैं. So that risk you need to keep it, and that's of course the execution risk as we call it. Also, let's looking at the operational parameters, they are expected to improve going ahead as well. आपके free cash flow yields में भी improvement आए, and there's a lot of synergies and cross-selling also because of these 2 acquisitions which we are discussing. The company is saying it's growing faster than the market. That means there is market share gains also. The commentary in the con call was strong. Also, let's look at the outlook. Apart from this is the AI-led initiatives, especially जो ARIA का acquisition हुआ है, वहाँ पे agentic layer company के पास already था, but अब जो है एक smart R&D और AI का angle भी आता है, and it comes on the same product stack if you are a technical viewer for this. So this is the entire outlook coming in. but take things with a pinch of salt. Execution risk for these large acquisitions is always there. The finance costing and how things move ahead, that is also something which we'll monitor. So right now, I'm going to give this a neutral rating. The stock has done well in most of the parameters which we have discussed. So let's do a revision. एक revision करते कि इसको कितना मिलना चाहिए KYC के ratings में. Largely, income statement, balance sheet, cash flow, return ratios, all of them have been top notch. I really like the shareholding also, where the DIs and FIs have shown interest in the company. Just the concern comes in is after its IPO, money hasn't been made if somebody has actually entered. So very minor returns have come in as per the expectations. Was the IPO expensive? That's the question. Valuations, that is where the expensiveness still is there if I compare it with with its peers. And outlook, two important acquisitions. Let's see what happens next. That's the big question. So overall ratings for this is 6 out of 8. It's largely one of the higher numbers at an average we give for a company in KYC. But to get more perspective in this, we'll be joined in by Nitya Balasubramaniam. She's the whole-time director and the group CFO for IKS as well. An interesting take. She's 16 years industry experience in Cipla, McKinsey, and also she is of course one of the we could say a larger equity analyst, also a very respected one at Bernstein as well. Education coming in from IIM Bangalore. So it'll be pretty much interesting to have a chat with Nitya and try to understand the growth prospects of IKS. Now we are joined in by Nitya Balasubramaniam, whole-time director and group CFO at Inventurous Knowledge Solutions. Good afternoon, Nitya. It's always a pleasure to have you. And of course, the first question I would like to ask is, a lot of acquisitions are at play and a lot of numbers, it's mind-boggling and a lot of crunching is happening. Just I wanted to understand and simplify it for our viewers. First, the recent acquisition of ARIA, the rationale about it, and what are the key numbers about it. There's a lot of data thrown around. If you could just simplify it for us, and what does this mean for the company?
Thank you for having me, and happy to talk about the acquisitions. So ARIA acquisition was more towards acquiring specific IP as well as the talent that came along with the company. What ARIA brings to the table is actually proprietary ontologies that the team has actually built. These ontologies are very simply knowledge graphs. And what these knowledge graphs are able to do is able to harmonize the data between EHR, the disease profile of the patient, the genomic profile of the patient. It's able to put it all together in a manner as to enable better clinical decision making. So that's the reason we're very excited about the ARIA acquisition. Of course, the two founders as well as the two chief scientists will be joining IKS and be contributing to our AI product development. And their technology and their skill set becomes even more important in the context of the other larger acquisition that we've announced, which is of TrueBridge, right? Remember I said it's able to harmonize data from the EHR and multiple other sources. With the acquisition of TrueBridge, now we actually have a business where TrueBridge, 40% of TrueBridge business is actually selling EMR EHRs in the rural community health segment. So we now get access to the data behind the EHRs.
Right, Nitya, I try to understand the synergies are there, but it's just such a big size of the acquisition you have announced for TrueBridge, and of course there are some critics, about how the execution plays out. Especially everybody wants to know is what is the timeline looking like, and if any integration, if it happens, by when it happens, and by when we can see that in your numbers also.
So again, TrueBridge is a transformative acquisition for IKS. You will appreciate that it's two very similar sized organizations coming together. We did about $364 million last year. If you look at 2025 numbers for TrueBridge, that's another $347 million. So two very substantial organizations coming together, and any such large transaction, there is going to be a lot of work that needs to happen to be able to integrate the two companies. Integrate the systems, the processes, the people, the culture, which is possibly the most important ones. Yeah. But when we think about how we think about value creation with the asset now in the hands of IKS, we've actually put out what we believe will be IKS's true north for the next few years. What we have communicated to a street is what we are aspiring towards in terms of EBITDA as well as net debt position. EBITDA last trailing 12 months was in the zip code of 1,000 crores. And we are saying by FY30 through the synergy generation and being able to accelerate the growth of the combined entity, we should be able to touch 3,000 crores in EBITDA in FY30. And in the same time frame, while we are starting by assuming a debt of $600 million, we hope to be able to pare that down to net debt levels that we enjoy today. So as of FY26, our net debt levels was about $26 million, and we hope to be able to pare that down to similar levels by FY30 through cash generation.
All right, so that is how you're going to maintain your debt equity ratios. And I was just checking the numbers also. There has been an improvement in your cash flows, operating parameters and KPI as well. But let's talk about something short term. We spoke about acquisitions and long term, but short term Q4 is a largely seasonally mild or a weaker quarter for you or your industry as a whole. Just wanted to understand for the next 2 quarters how things are looking like. New billings start coming in, new clients come in, and of course now AI agentic orders are also coming in. Or is that order flows actually at delayed right now because of so much changes happening? Just wanted to give us a feel about the first or the second quarter now.
Yeah, I think every quarter we actually talk to the street about new deal wins and new client wins that we have acquired. And you will see that the deals that we announced since Q1, Q2, Q3, and more recently Q4 as well, these deals will start to ramp up in the coming quarters. And when it comes to AI as well, I think we're very excited about the kind of products and automation levels that we have been able to deploy in our features. And that is also something that we continue talking to the street about on an ongoing basis. So more recently, we have launched a fully automated front-end platform. We have also launched a fully automated clinical documentation product. And there is definitely more and more to come with the kind of investments that we're making. So again, we don't normally talk about specific Q1 guidance or Q2 guidance. What we've always said is that we should be able to grow faster than the market given the differentiating features in our platform. And I think I will maintain that guidance.
So Nitya, let's just talk about market since you mentioned you will be going faster than the market. So by theoretical definition, you gain market share. So just give me 2 numbers, how fast the market is growing and what kind of growth you can expect. Maybe the market is 12%, so are we expecting 15 to 20% from you?
The market is growing at 12%. As I mentioned before, we should be able to grow faster. We really haven't put out a specific number out there. So there is also TrueBridge's the acquisition closure to look forward to in Q2. Of course, several regulatory approvals are now underway. Work is underway. And we're hoping that the closure happens in Q2. And I think once the integration happens, we will talk to you again about what the combined entity looks like and what will be our guidance for the combined entity.
Fair enough. So that gives a lot of clarity because of course a lot of investors are there. They have asked post IPO, larger acquisitions have come in, institutional interest is there. But definitely the clarity is something which the street still awaits, and hopefully in the matter of some months we'll be able to get it from you as well. But till then a little bit of uncertainty would be there, and maybe for large deals, it takes time. There might be an execution risk also. But let's talk about the addressable market. You have been bullish on your presentation. I was just seeing the numbers also. On the outsourced service provider operations, does new markets open up for you now, or are you looking at something new apart from that? Because I know that your acquisitions quota seems to be full because a lot of balance sheet pressure can't be taken. But I'm just trying to understand, if you have to do something new, what will you do?
So what TrueBridge brings to the table is their ability to expand the addressable market. IKS traditionally has focused on the ambulatory segment or the outpatient segment. Physician clinics have been our primary customer group. TrueBridge, on the other hand, is always focused on the rural and community health hospitals. So with this acquisition, this provides us an entry into the rural and community health segment market, which we didn't address before, right? And also in terms of new products and new features that get added onto our platform, we did speak about how the RI acquisition actually could potentially create, again, new product suites for us. And I think the most important thing with TrueBridge's acquisition is now our ability to create this AI training corpus, which will draw from the data sets that's sitting in the EMR EHR of TrueBridge.
Fair enough. Fair enough. Yeah.
Mixed data for us to watch.
Right, Nitya. Very nicely explained, and it's a very technical industry out of which the acquisitions are quite technical, but you have simplified it for our audience at KYC at NDTV Profit. Thank you very much, Nitya, and best of luck for the future. And hopefully we get the numbers which we want going ahead for IKS. It's always a pleasure to talk with you at NDTV Profit. So that's the management of IKS. 2 large acquisitions, but we are still awaiting important guidelines or deadlines or the integrations. So stay put. That this story continues, and keep watching KYC at NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
India's unshakable news habit. NDTV.com is India's #1 English news website. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
And the award goes to
Tamanna Inamdar, Managing Editor, NDTV Profit.
Leading the newsroom, shaping the narrative, from stories to impact, a voice that matters. Tamanna Inamdar, among India's most influential, power, purpose and perspective recognized. NDTV Profit's editorial force gets industry-wide acclaim. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India Market Open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening?
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
Watching Your Money Matters here at NDTV Profit. I am Mahima Vajrajani, and with me today is CA Abhishek Mehta, who's also a CFA, by the way, and he runs something called Investa Capital. So thank you so much, Abhishek, first of all, for joining us. And we are going to discuss a very interesting topic, viewers. We are going to talk about as to how you can optimize as saving on your taxes and how that can be done via a contract route. Now, this is the entire area or point of discussion that we're going to talk about, but we're also going to talk about the old regime versus the new regime and so much more. So it's going to be a very insightful conversation. I assure you on that. So with that, just beginning with the first question, बहुत basic question, Abhishek, with regards to the old versus new regime. I think still people are confused as to what to do, क्या करना चाहिए, what is the a cut-off rate जिसके बाद you should shift your regimes, and how should one go about it?
So I think from this year onwards, 95% of the people, it will be beneficial to go with the new regime only.
Yeah.
I think the biggest question you need to ask yourself is that, do you have an HRA? Because if you have an HRA, then only most of the times your old regime will make sense. Correct. Or else it is better to go with the new regime, because your deductions are very much limited now. You will get probably 1.5 lakh in ATC, 25,000 to 75,000 in ATD, 2 lakh in loss from house property. So more or less that comes to about 3.5 lakhs. If you have an HRA, if you're living on a rented premises, then only I think mostly it will make sense for people to go for the old regime, or just make it very simple, make your life simple and go with the new regime. You don't need to claim any deductions. Just pay the tax as per the slab rates and you are done. There are 2 or 3 things which you can still claim in the new regime. One is your 75,000 standard deduction. Your second is if you have a premises which you have put on rent and you're claiming interest on that. So you can set off that interest against that rent and make your, the income from house property zero. And the third thing is if your employer is contributing to the NPS, then that amount can also be claimed as a deduction. So these couple of things can still be claimed in the new regime. So the biggest question you have to ask yourself, if you are staying on rent, then probably go with the old regime. Just check your break-even point and decide.
Okay, that's the easiest answer that I've ever heard. So thank you so much for that, Abhishek. Now the other thing that's picking up, that's the main point of discussion right today, is contractual agreement.
Yes.
A lot of people today, and in fact I've been getting a lot of comments in our YouTube section as well, कि ये होता क्या, right? What is this contractual agreement? How should one go about it? When should one pick that? So first of all, I think it's important for them to understand as to what a contractual agreement is and how is it different from you being in an employment.
Right. So basically in employment, you sign an employment contract and you come under the labor laws.
Correct.
If you work as a freelancer for the company, it is more or less, if you're a contractual person with the company, there are certain benefits which you get as like in direct tax also and indirect tax also. One of the major benefits is that your TDS rate comes down to 10% as compared to what was there in the slab rate. Second is you can claim lot of your expenses while filing your taxation, because in salary, whatever your income is there, you have to pay the tax.
Correct.
But when you are in a contractual person working with the company, I would call it a contractual employee. The word employee is not the right word, but if I say it as a contractual employee, whatever expenses you are doing, you can claim all those expenses in your profit and loss account. So basically you have to prepare your balance sheet and P&L and books of accounts and file your income tax returns, and that can bring down your profits and bring down your taxation as compared to a salary. That is why a lot of people have started moving from an employment contract to a contractual employee kind of role, where they can save a lot of taxes because of the expenses which they can claim. One very good benefit when you are working probably as a management consultant for a company, there is something called as presumptive taxation. Earlier that section was called 44 ADA, now that section has been called in the new tax act section 58. What does this section say is, if I am earning up to 75 lakhs, I can show 50% of my income as profit and file my income tax return. So for example, if I am earning 24 lakhs, I have to show 12 lakh rupees as my profit, and under the new regime, section 87A rebate, I have to pay zero tax. Even if I am earning 75 lakhs for assumption, I can still go for a presumptive taxation and show profit as 37.5.
Correct.
If my expenses are more, like for in my cases, my expenses are much more higher as compared to a normal person. I bought a car, I have laptop, my mobile, all these can be claimed as an expenses. My internet, if I'm wearing some clothes which are for my office, all those things can be claimed as an expense, and you can go below 50% also. It's not a rule that you have to show minimum 50%. You can definitely go below 50%. The only caveat is you will have to do an audit of your books of account.
Exactly.
There is one more very big benefit is in the indirect taxation. What happens is, if you are earning more than 20 lakhs in this freelancing contract, you have to take a GST number, and your company will give you GST over and above your income. Now, whatever expenses I am doing, suppose I bought a mobile, I have paid 18% GST, I can take credit of that. I have bought a laptop, I can take credit of that.
Correct.
So all these, your expenses of the businesses which are for your business, you can claim the GST input as a credit and save some amount on that GST. So dual benefit, you have to look at direct tax benefit also, you have to look at indirect tax benefit also. I have seen in majority of the cases, this contractual employee works well in terms of if you are able to do your tax planning well.
Very interesting. I did not know about this indirect tax angle, so that's a plus point for me here. But I have follow-ups on this one, right?
Yes.
The first follow-up is that presumptive taxation, if you are taking that expenses, if you are deducting expenses, right, from, let's say it's a P&L, right, for a person, if you're taking deduction of that expenses, like you mentioned, audit is compulsory. But the same rules will apply, right?
Yes.
75 lakhs tak, you can take presumptive taxation, is that correct? But you'll have to take audit into perspective.
So there are two parts. Either you can go for presumptive taxation or you go for a normal taxation. Okay. If you are going for a normal taxation and showing profit below 50%, then you have to go for audit. If you are showing you are going above 50%, then you don't have to go for audit.
Right.
And in presumptive taxation, very simple, you don't need to prepare your books of account. Whatever your income is there, you show 50% as your profit and file your income tax return, and your life is sorted.
Sorted. Perfect. And for GST, just for our viewers' perspective, 20 lakhs when you cross, that's when you get your GST registration.
Yes. So if in a year, probably till the first 18, 19 lakhs, I can still skip GST.
Yes.
And then once I am about to cross 20 lakhs, before that I have to take the GST number and start filing my GST returns. So yes, your compliance increases a bit as compared to employment, because things are very easy in employment. Here your compliance will increase, but the other benefit that you can take you can do more of tax planning as compared to what you can do in your employment.
So then is there a checklist in place in terms of compliance as to what one should keep in mind if they're going through this contractual route and also taking audit into picture?
There are two major things. One is your GST returns has to be filed on time, and second is only at the end of the year you have to file your books of accounts if you are going for non-presumptive, and if you are going for presumptive, it's very easy. In fact, it's more easier than filing your return of salaried class, because you just have to show your income.
Correct.
That 50 lakhs was my income and 24 lakhs, 25 lakhs is my profit. So these are the two major compliances. There are certain disadvantages also of this as compared to your employment contract. One is probably you might not get your mediclaim. When you are in employment, you get some mediclaim benefits. You might get some term plan benefits. So all these, your gratuity. Now gratuity was a negative point before the new labor laws came, but now the labor law says that even if you are a contractual employee, you are still eligible for gratuity in the new labor laws. So these are couple of things when you are drafting your contract, you need to keep in mind that in my employment, maybe I was getting mediclaim, maybe I was getting term plan, maybe I was getting an accidental policy, maybe I'm getting some 21 days leave. All those things needs to be considered while drafting your contract. So you might need some help in the start once you are switching your role from an employment to a contractual person.
Got it. So I think it's important to consult your CA or whoever you're talking to in terms of getting help in terms of drafting this contract, because as Abhishek mentioned, right, it's important that if you're doing this just from a tax perspective, then there has to be clause that protect you in terms of your exit. Also in terms of how your employment security stands, and also from a perspective of leaves, because that is also very important, right, at the same time. With regards to ESOPs, how does that fare? So I believe that somebody who's on contract, especially when somebody was earlier on an employment contract but then shifts to on a contractual basis, how does that work? And secondly, then how does ESOP work then?
So you will not get ESOPs. What usually companies do who are hiring a lot of contractual employees, they give them sweat equity.
Okay.
So that's how people are managing, because ESOPs is only for the people who are on the employment side. So they are managing it through sweat equity, probably giving them on discount or on zero value, and that's how they are managing on the ESOP side. And see, in India, there are very less companies who give ESOPs. Probably if there are 20 lakh companies, there would be 5,000, 10,000 companies who would be giving ESOPs to their employees. So 99% of the companies are not giving ESOPs. So you need to plan those things, and probably as compared to ESOP, you can ask for sweat equity from the company.
Okay. The other aspect is with regards to insurance that you talked about, right?
Yes.
That the medical insurance benefits or term insurance benefits that generally an employee gets might not be available for a contractual employee. So how important is that aspect to kind of take into consideration before switching, if somebody wants to switch from an employment contract to contractual agreement?
That's a very important aspect, because obviously your mediclaim expense will then increase. Usually we always tell clients ki even though you have a employment mediclaim, you still take your own, but still that is an expense, and I have not seen a lot of employees taking a mediclaim separately or a term plan separately when they are employed. So that will increase your expense probably by 25,000 to 50,000. And also, if you are taking a new mediclaim, your pre-existing diseases will not get covered. So ensure that once you are switching and you are probably even thinking of taking a mediclaim, whatever pre-existing diseases are there, you will not get covered for the cooling period of probably 24 months to 36 months of whatever your mediclaim company is giving. So keep that in mind, or probably ask your employer if they can accommodate the mediclaim in the contract and the term plan in the contract. A lot of times I have seen the companies, accommodating those requests.
Right.
See, it's easy for companies also, because they also feel little easy in terms of 10% TDS. They don't have to take the declaration, they don't have to do the submissions and all those things. And sometimes it's easy for firing also for the employer, because contractual employees are usually, they don't take it as a burden on them. So it is very good for an employer also. They make 11 months, 12 months contract, and they keep renewing those contracts till the time the requirement is there. And this norm is there in US and European countries a lot. Slowly and steadily it is coming to India now.
On that, I think firing part, Abhishek, because we were talking about job security, right?
Yes.
Since we're doing it for tax purposes, at the same time, it's also important to keep in mind job security. So this is my opinion that when you draft the contract, you should have a notice period in place, which is going to be beneficial to the employer, and the employer will go for it. But at the same time, you should also have a severance pay clause in case, and a notice period clause from their end as well.
Right.
If they decide to fire you, there has to be a notice period clause and a severance pay clause. So what should one keep in mind while keeping this into perspective?
So this would be called an exit clause basically, or when you want to end the contract, two people want to end the contract, it can be either of the party. So you have to detail it out that how does things will work in case the employer, the person who is giving you the money is, terminating the contract, or probably you are terminating the contract. The only caveat is if there is a fight in this, then you have to go through the Indian Contract Act, and you will have to go through the normal court channel if there is a disagreement in the contract. Whereas in labor laws, things are more simple because there is a labor commissioner, you can go and there's not too many complaints with and the process is a little faster when you approach a labor court. So yes, you have to make your exit clause properly, but keep in mind that if there is any disagreement, you will have to go through the normal channel of the courts, and that might take certain amount of extra time as compared to your labor laws.
Fair, understood. With regards to gratuity that you mentioned, the rules are same for this also, 5 years plus if you're working, you will get gratuity.
Yes. So it's more than, I think probably 4 or 5 months only back now they have included this, because there are a lot of companies like factories and all, they usually hire people on contract basis only, and they deduct 10% TDS. They don't want to go with the submission, declaration, then there is PT, then there is employer contribution. One very important point is, if your employer is contributing to your PF, ensure, see, that is part of your CTC.
Correct.
So don't miss that. Lot of people think I'm getting 90,000 in hand, so I should make a contract of about 1 lakh. But you have to consider what was your employee's contribution to the PF, what was the employer's contribution to the PF, and add that up while making the contracts, money part.
That is very important. That one should definitely
The employer
keep in
can
mind.
act smartly and just delete that employer contribution, but that is part of your CTC.
Correct.
So you can probably put that on table that was the cost to the company, so you have to accommodate that in the contract.
As is. And so for somebody who is adopting this contractual nature of employment, since they're not contributing to the EPF.
Yes.
If you can just give a perspective of what they can do in terms of making sure that their money is being saved and being invested.
So obviously then they have to do their more of retirement planning. PF is more towards retirement planning. You cannot redeem the money for a good couple of years. So you have to plan your retirement. See, why people move to a contractual is they get more in hand.
Correct.
There your PF was getting deducted, so you and plus the tax was more, so you were getting less in hand. Here your in hand increases. So make sure you plan your investments properly, probably SIP, or you can go for a PF also, Provident Fund. The way you are investing in the employee provident fund, you can go for a PPF, Public Provident Fund, and start investing your money there, or probably do an SIP for a longer term and where you don't break it. So that can be done to make sure that you are doing enough for your retirement planning.
Okay, got it. The other aspect is, of course, we covered a lot of it, but any other, aspects in terms of legal compliance that one needs to keep in mind before going for this contractual employment, and especially when one is shifting from an employment contract to a contractual agreement?
So the length of the contract will be important, I guess, because if it's a 12-month contract, then there is a question on your job security, because every 12 months then you have to renew your contract. So probably you can make a contract of 4 years, 5 years, or a long, see, it has to have a definite period.
Correct.
It cannot be indefinite, like in employment contracts are indefinite. Till the time the contract is not broken, it will keep working. But usually the contractual employees are on a definite period. So you can have a probably 36 months, 5 years, 10 years contract. That is very important, and every point of the contract has to be gone through properly. See, in employment, usually you get your money by 7th. That is the labor law also. Here, there might be certain delay also while receiving payments, because that will depend on what your contract says. You have to first submit your invoice.
Correct.
Then the money will be released, probably 7 days, 20 days.
Correct.
GST might be released once your GST return is filed. So certain aspects will get complicated, but you have to wait how much you are saving as compared to how much time you are spending on all these. And it's not always that what you are getting in hand. You have to always consider the other perks what you were getting in your employment, like your gratuity, term plan, mediclaim, all those things. Even for women, like maternity leave is there, compulsory as per the employment agreement, whether that is being accommodative in the contract or not. So all those aspects has to be seen, and then only you jump into this. It's not that because 10 people are running behind that you also jump into it.
Correct. So I think all of those terms are very important to be kind of incorporated in the contract that you're doing. Because you mentioned a long-term contract, right? Let's say if somebody is doing a 4 to 5 years contract, how does the increment then change? Does that clause also have to be in the contract? How does that work?
So maybe there will be a certain, that has to be vague. That this much bonus will be given to you, or there will be incentives, or there will be some commission which will be paid to you. But in employment contract also, most of the time it's vague.
Correct.
Okay, there is a certain percentage, 5% to 20%.
Correct.
So here also you can make those clauses applicable. But again, if there is a disagreement, then there is a long route as compared to what you have it in a employment contract. So you have to bear a lot of things in mind while going to this route, and your compliance increases. Every month GST, I've seen people struggling with those things on filing GST every month, then claiming the GST amount from the government. And a lot of time people think once the GST money comes into the bank account, they feel the pain of giving it back to the government. So it's not your money, you should know, it's government's money. You can claim the input credit of whatever expenses you are doing, but end of the day, that's government money and you have to pay it by 28th of the month.
You know, that brings me to the point of savings that we were talking about, right? Say in terms of retirement planning. I think it's also very important that if you're doing this, you should have 2 bank accounts, and whenever your monthly income gets credited, you shift a certain percentage of your amount to the other bank account, which just does your savings.
Yes.
You make sure that there is no expenses done from that, so that will inculcate a habit of saving for you, and then the benefit of EPF is kind of available to you as well, so you can do that, do it via this particular method. Abhishek, I had this question in mind. Does this particular nature of contract has anything to do with age? Do you think more youngsters should adopt it? Or it just depends on the amount that you're making?
So it's more or less amount. See, if I'm earning 10 lakh rupees salary, then it's stupid to go for contractual, because as it is, I'm not getting any taxed. 10 lakh and up to 12 lakhs, it's tax free. So it's more with the amount of what you're earning. Because if you're earning supposedly 1 crore, 2 crores as a professional income, so, and whether you have those expenses in place, to claim the deductions.
Right.
So that is what makes it more sense. But yes, I'm seeing more of matured people are taking this because they are more mature to, take care of the compliances. They are well aware of, what expenses can be claimed, what cannot be claimed. So I have personally seen this with more matured or more informed people are taking this route as compared to the newer generation, because they are still not aware of the lot of aspects on the tax system.
Got it. Okay. Is there a particular myth in place for both of these contracts that one needs to keep in mind before choosing which one to go for?
No, I think the biggest myth is this only. You have to check the perks of what you are getting in your employment contract. People I have seen, they are not checking and they are just blindly going because they are getting more in hand. And a lot of companies are also pushing them. You take this route because their compliances also reduces. But you need to weigh the perks what you are getting in terms of an employment and your job security. If you are with a company which is not more stable, then better you go for employment, because if you don't get your salary on time, you can approach the labor court easily as compared to going for the contract.
This just reminds me of the fact that labor code mein you now also, if you're on an employment contract, 50% of your basic pay is kind of calculated for the PF contribution.
PF contribution,
as well,
yes.
right?
So now your PF has increased and your in-hand has reduced.
So then now this option becomes more attractive, right?
That's why more people are going, because this increases your in-hand. But at the same time, you have to take care that you are investing properly. You go for things like Sukanya Samruddhi, you go for PPF. Don't do 100% of equity. That would be my suggestion. Go for some fixed return products also, like PPF, Sukanya Samruddhi. Probably if you have parents, you can invest in their senior citizen saving schemes and all those things where you get a certain amount. So do your asset allocation right before jumping into. If you are getting more in hand, probably you might expense it out more. But you have to be a aware investor and do things properly.
Just one last question in terms of somebody who is working maybe part-time somewhere and doing freelancing in the other half, has two different nature of services, then does things change in terms of taxation?
No, nothing changes. Nothing changes. In fact, this is more good for, like, if I want to work for 2 companies, 3 companies, you can probably work, because the contract cannot limit you. To do only one job. If there is a point, you can probably tell them that I don't want this point, that I'll work only for you. I will give my 8.5 hours to you. Rest of the hours, probably I can use it for some other companies. So better than using the word moonlighting. And you can actually legally work for 2 companies and earn money without having any hindrance.
Just one more question on the top of my mind, that is there a best of both the worlds, or no, it's either this or that?
It is either this or that, because usually in employment you cannot then go for any contract.
Correct.
But and for contract you can have multiple contracts. I can have a contract with 10 employers also.
Correct.
So that it is either of the one.
Perfect. Okay, Abhishek, thank you so much. I think we've very comprehensively discussed this entire topic, and I'm sure everybody who's watching this now probably will have to make their decision and probably would have made their decision as to kya karna chahiye aage. So thank you so much, Abhishek, for taking out the time and especially coming to our studio.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
India's unshakable news habit. NDTV.com is India's #1 English news website. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
And the award goes to
Tamanna Inamdar, Managing Editor, NDTV Profit.
Leading the newsroom. Shaping the narrative. From stories to impact. A voice that matters. Tamanna Inamdar, among India's most influential, power, purpose and perspective recognized. NDTV Profit's editorial force gets industry-wide acclaim. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
When others are warming up and raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Said. What's happening?
Let's get in. Saurabh Gupta, IDN Group CEO, CFO Dixon Technologies, of course, director on the board as well. Saurabh, great having you as always. Thanks so much for taking the time out. We didn't get a chance to talk to you on your numbers, but before we do that, your sector and your business in particular, by you guys being in a leadership position, are always in news. Let's try and peel them off and try and understand one news after the other. First, the PLI scheme, right? Nearing an end. Is there a sense that the next one could be could happen without there being a gap between the ending period and the benefits accruing to companies like yours? Two, could the PLI come to brand owners, not necessarily to back-end manufacturers? What's happening out there?
Neeraj, thanks for having me. Absolutely, Neeraj. We feel that the PLI 2 should definitely come in. We are very closely engaged with the government. Government is working on PLI 2 because clearly mobile PLI has been a big success for the government. From a net importer of mobile phones in 2014, India started exporting almost $30 billion plus mobile phones. And we feel that that should definitely come in. We feel that it should be linked largely to exports and localization. One has to see the final guidelines as and when it comes out. Not sure about exact contours of what the guidelines would be, but we feel that it should come out and it should be retrospective. It should be prospective, not retrospective. So there will be a gap between the sunset of the earlier PLI and the new PLI.
Okay, so Saurabh, what happens in such a scenario? I mean, again, one hopes that it comes in sooner rather than later. But if there is a gap and if it is prospective and not retrospective, what does it do to players like you versus smaller players who are trying to gain that market share at cutthroat prices? Is there a market share shift in that interim? And even if there is a market share shift, is that a perma shift, or do you believe that somebody who's lost out may be able to recoup that market share once the PLI benefits accrue to them, if they do?
No, Neeraj, I think so. We have maintained our market share. So if you look at this year, because of this memory price inflation and the shortage of memories, which has been there for the last 6 months, and we feel that that scenario should continue for some more time because a lot of these memories are getting allocated to AI-based applications. So despite a lot of this reports projecting a 13 to 15% drop in smartphones this year, we are still maintaining an outlook whereby we are maintaining a flat growth. So 33 million smartphones is what we did in 25-26, and we are maintaining a similar number despite the contraction in the industry volumes. So we have 5 deep relationships, anchor relationships with 5 of the largest brands, and we are working towards it, not only sustaining that numbers, we are working with them to increase our numbers with them. We are also working with some more addition of volumes for some large brands, some more ODMs, and we feel that as and when the PLI comes in, there can be an upside of anywhere between 3 to 5 million volumes, which will happen on the smartphone volume, on the export volumes. So clearly, we feel that if we are able to maintain even a flat volume at a much higher selling price, clearly we feel that we have done a good job.
Saurabh, hi, Tamanna here. What's happening with Vivo? Any visibility there? It's sort of, when we speak to you, sort of striking off all the laundry list, because there's so much anticipation and waiting with all of the things you have up in the air. So people want to know where all of those things have landed. So let me ask you about Vivo. What's happening there?
Yeah, Vivo definitely has been delayed much beyond our expectations. You're absolutely right. Your colleague mentioned that we had mentioned previously that it should come in soon. So Tamanna, we still maintain that stance that there is no bottleneck as such. Government is absolutely, we are very deeply engaged with the government, and we still maintain that it should come in soon. And because there is no bottleneck as such, there is no, and all those things have been well settled and agreed with the government. So my sense is it should come in soon.
So, I mean, that is always a hope, and it could or it could not. We don't know. Just want to understand, what is the impact that you will see of potential delays and further delays in Vivo being tied up? Because if all had gone as per the plan and as per the timeline, the Vivo opportunity coming in right now, even as PLI scheme and this version of it is ending, would have been ideal, isn't it? So what is the impact that you will see of this delay?
Yeah, as part of the understanding with them, so Vivo is the number 1 smartphone player in India. They do almost 37 million smartphones out of the 153 million smartphone market. And our understanding with them is the JV that will be formed, almost 67% of the volume should be transferred to the JV. So on an annualized basis, we were looking at a volume of closer to 22 odd million with a much better selling price as compared to the selling price that we have for our existing portfolio. So clearly, assuming that it comes in couple of weeks, months, and then we'll take another 45 days to consummate this transaction. So we will have a proportionate impact of those volumes for this financial year. But on an annualized basis, it should give us almost 25-30,000 crore revenues, which will possibly happen in next financial year.
Okay, Saurabh, just a quick clarification here now. You're saying that the volume will pick up in terms of FY27, and if you have to look at ex-Vivo volume growth, what will that look like in terms of FY27, taking the assumption Vivo is not on the cards right now? Once it comes in, we will see that addition coming in. What will those two numbers look like?
Yeah, so the numbers, as I mentioned, should be on the lower side, should be closer to 33 million, which is flat. Okay. And on the upper side, we feel 37 million. which will potentially get triggered once the PLI 2 comes in, because PLI 2 we understand will be largely linked to exports and localization. So we feel that with some of our anchor customers, we can look at getting those additional volumes for exports. So this should be the number 33 to 37 million. But I feel that the selling prices should be at least 12-15% higher, mainly because of the memory prices going up, and memory prices now constitute almost 20% plus value of the overall bill of material.
Okay, and overall, Saurabh, the other aspect over here is, will there be a change in terms of pricing strategy as well with the clients? Because as Neeraj was mentioning, you have a lot of smaller players who are coming in. We have seen the market share erosion that has happened for a Dixon as well. I think from a 37%, it's come down to 30 to 33%. So is there a strategy shift on the pricing front, number one, with the clients? And two, in terms of the inflation that the semicon industry is facing, the inflation that is coming in over there, what happens on that front? Because both of them are like a double whammy.
Yeah, so this is a prescriptive business for us. So any change in the price of commodities are passed through to the customers. As I mentioned, the revenues go automatically. The margin can optically reflect lower because we get a per piece kind of a conversion charge, or MVA, which we call in our industry. So the margins can optically marginally look lower because of the increased selling price. But we feel that Dixon, being the largest player in this EMS industry, the mobile phone industry, we have the largest capacities. We have a great team, and we have of course, we are now increasingly putting more money and investments in the backward integration strategy of our displays and camera modules, which again enhances our stickiness with the consumers. So we feel that as compared to the competitors, we are far more frugal in our cost structures, and we have been able to maintain our market share, except for something. And we feel that this year we should be able to take our market share up. So we are not worried about the competitive intensity. Of course, competitive intensity is is most welcome in any business. But clearly we feel that we should always continue to take higher share of wallet from our existing customers.
Saurabh, one of the beliefs, and because you mentioned backward integration, one of the beliefs is that the backward integration could actually, after this 1 or 2 or 3 quarters period, would actually boost margins for you. So if FY27 margins may come off optically or otherwise, would you believe FY28 to be a year wherein actually there could be a margin recoupment or a margin outperformance?
Yeah, absolutely, Neeraj. So clearly both this play on camera modules as well as display. Camera modules already will get ramped up by Q3 of this financial year. Display should start from Q4, and then the ramp up should happen from Q1 of next financial year. So next year, Neeraj, we feel confident that we can expand the margins by 50 to 70 basis points from FY 25-26 level, which had a PLI element included as well. So we feel absolutely confident about it. And not only in mobile phones, also in IT hardware, we are focusing on displays, we are focusing on SSDs, power supplies there. That also will have a positive impact on our IT hardware business margins as well.
Just one last point, Saurabh, is about the EMS opportunity. And I think this is something, and actually appreciate that it was a very honest commentary coming in from the management, that was a bit of a missed opportunity on EMS. How do you aim to recoup? Because the volumes on the mobile handset business are there, it'll come in with Vivo, but how do you now recoup some of those, I would say, dark spots in opportunities in the larger space?
So what we are doing, we are putting up an infrastructure for that. We have already had a very senior person on that from the industry. We are working with a global consultant. So the idea is to work on this high-end specialty EMS business, which includes your aerospace, defense, space, medical, and the precision components. So we are evaluating some M&A opportunities there. We are also working on some JVs partnerships there. So clearly we feel that we are working towards it, and we feel strongly about it that in next couple of years we can scale up this business, and this business of course will come at a much higher margins for us. Our balance sheet is in a much better shape. We're sitting with a good cash balance. So clearly we feel that we can deploy that cash balance to get into these opportunities.
Saurabh, a question I have again on the backward integration that Neeraj spoke about is, now the display plant trials, which I'm not mistaken, are slated for June 2026, and there is a Press Note 3 approval which is on the cards as well. So with this, in terms of the display plant trials, what's the kind of margin benefits that you're seeing, and do you think post the trials, that integration will happen immediately and start benefiting, from FY27 onwards?
Yeah, so that display business for us has been delayed. So as against June 26, now we are looking at a trials in Q3, and the production should happen in Q4 of this fiscal year, and then the ramp up should happen by next financial year. So we feel that the display full impact should come in 28-29, but 50 to 60% of that impact should start reflecting in 27-28. As far as the camera modules is concerned, that would largely get reflected from 27-28. So full year impact should start coming from 28-29 is what we feel.
Okay. And lastly, in terms of the non-mobile segments, Saurabh, I know 90% of your revenues do come in from the mobile segment, but that scale in terms of, say, IT hardware and laptops, your washing machines and consumer electronics, how big a business is the plan? What's the plan in terms of scaling this? And do you think it could start garnering a larger chunk of the revenue pie or the profitability pie over 3 to 4 years from now?
Yes, so apart from mobile phones, which contribute 70% to our business, IT hardware, last year we closed at somewhere closer to 1,500 odd crores. We have acquired all the large four marquee brands who have a 60-65% market share in India. And clearly we are looking at almost a 3x growth this year. And we feel in the next couple of years, IT hardware can potentially become a $1 billion plus kind of an opportunity for us. So after mobiles, that should be the second largest trigger for our growth. Also, and it will be linked and it will be focused more on the backward integration as well, which will help us expansion in margins. Our telecom business, which is a JV with Bharti Airtel, has in the last couple of years has increased from 700 crores to last year we closed at closer to 5,500 crores, and this year we are already looking at a 7,500-8,000 crores. So that business also continues to do well. We continue to do more volumes for Bharti Airtel, and increasingly we are now moving to beyond Airtel and beyond the CP products that we do for Bharti Airtel. So that business also continue to do well and will continue to show a double-digit growth for us. As far as the other business is concerned, refrigerator, washing machines, lighting, again we are significantly expanding the product portfolio, getting into more premium products, focusing more on backward integration. So all those businesses will also witness a double-digit growth with expansion in margins.
Okay. All right. A strong track record for this company, for Dixon, and a lot of it came because of the tailwind of PLI. But is that trajectory going to continue is the question. Saurabh, thank you as always for coming and taking all of our questions. We always enjoy our conversations. Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
India's unshakable news habit. NDTV.com is India's #1 English news website. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Vinod Karki joining in, Senior VP Equity Research at ICICI Securities. Vinod, great to have you on. We always enjoy our conversations. What are you making of the ongoing result season? Are you discounting the fact that things have changed dramatically for a lot of companies and around the world after the quarter that is being reported right now? Or are you seeing some solid green shoots?
Yeah, thanks for having me on the show. I think two, three things are clearly coming out from this results season, which are in fact encouraging. One is what was expected and what the results are. So clearly there are more beats for sure. But if you look at the fundamentally, is the demand showing up in terms of volume growth, especially. The volume growth has been quite robust across manufacturing companies, and the credit growth has been quite robust overall. And the best part is that the outlook so far given by these companies, both manufacturing and the lenders, where the bulk of, if you see when the crisis started, what really sold off big time was financials and some of these domestic cyclicals, industrials and all. But going by how their numbers have panned out in terms of volume growth or the outlook for FY27, things look encouraging so far. Let's see. So I think I remain optimistic about the overall the growth and outlook demand. But what is also helping, I think, can help, which is kind of not looked deeply, is that we had very low inflation earlier, which was bringing down the nominal growth to 8-9% odd overall, which was reflected in earnings growth also, 8-9% thereabouts. So if we have this environment where the volume growth remains reasonable, and you get some kind of a catalyst from the inflation, nominal numbers will start looking quite robust in FY27. But this all hinges on the fact that demand doesn't collapse. So far, there are no signs that demand is collapsing.
Vinod, Hiral on this side, demand is not collapsing. Okay, that's one part of the story. Where do you see that value? Where do you see that growth coming in from? Because that's the next thing that investors want to know, that if there is something positive in the markets from here on, if someone is positive on the markets, where should we look at?
Well, see, as I said, started my opening remarks, it's all about this crisis. The biggest drawdown was in financial companies and industrial stocks and some of the domestic cyclical consumption stocks like auto and all. So I think if you make this argument that demand is going to be reasonably okay and you're going to get some kind of a catalyst from higher inflation, which means that nominal numbers will be good, then it is very clear that opportunity has been created in these spaces where demand is going to be reasonably good. But because of this crisis, there was a big drawdown in stock prices in these areas. The rest of the market more or less remained where it was, So that's how I look at it.
Vinod, what happens in that period? Because you look at cycles and multiples very closely, what happens over the course of the next 2 or 3 quarters? I'm deliberately choosing a short-term period where the outcome of the conflict is not quite known. The outcome of or the way funds will move towards the AI trade or away from it finally is also not known. So do markets like India, which at the receiving end of both sides, continue to get the bitter end of the stick, or is there a turn underway? Because already people are talking about how tokenization or using tokens is getting expensive. Can we see the anti-AI trade play out?
So this AI trade, in my view, started when the big tech in US bottomed out in 2022, when the big rate hikes, jumbo rate hikes started in the US, and some of these big tech stocks were in single-digit P, like Meta and all, at one point in time. So it's almost like 3-4 years of continuous performance, and now the Asian AI story is also taking part in that. And some cracks have started developing. on the fundamental and valuation angle on this. But it's very hard to say. I mean, if you see historically capital markets, momentum when it breaks, it's very hard to say basically because these companies still don't have any bankruptcy risks or thereabouts. The balance sheets are pretty okay that way, and they are able to raise capital. So it's very hard to time it basically, But clearly, what is important to note is that the at least the US big tech may be losing steam in terms of their outperformance. So if you see every year, 23, 24, 25, now this year, the absolute performance of the US big tech is slowly fading away. And this year, at least till some time ago, the S&P 500 X tech, big tech was actually doing better. So I think clearly momentum is losing over there, and there are some fundamental cracks developing, but no one can time it perfectly. But whenever that happens, India should get some close.
Yeah, but usually you time these things very well, which is I was hoping for an answer from you. Chalo, if you also don't have that answer, then it's fine. In which case, the other question that I have is, Vinod, in that ensuing period, what within India do you reckon has both the cycle, the multiples and the flows on its side? Which are those 2 or 3 themes?
Well, see, I think flows angle, if you see the FII flows have been something which is kind of, a big problem for India's performance, especially on the financials side, large financial companies. So while the financial space, in my view, because of the Gulf crisis, there was a big drawdown in stock prices across the board. So if the crisis is not going to lead to NPAs for the lending space, and the credit growth and the NIM compression cycle is done, I think this is something which was sold down, and the outlook is better. So that clearly seems to be the one space where I think alpha can be created. And similarly, some of the other stocks and sectors which got beaten down because of the Gulf crisis, be it in some of these discretionary consumption space, auto, and some of the industrial companies, which actually will not get much impacted by this going forward. I think these are spaces where this crisis has created opportunities, in my view. So I think these are the spaces, and discretionary consumption, industrials, and financials. Notwithstanding the FII outflows in some of these areas still continue, at least the large financial space and all. So I think that these are spaces I would be more positive if this crisis slowly fades away.
Okay, so Vinod, what are the spaces that you are finding exciting right now? One thing is for sure, even when this ends, it's not a matter of if, it's a matter of when, there is going to be lessons learned, and this will include getting more self-dependent. We just had a conversation before we got you on solar modules, which will now, you don't need to improve domestic requirements. We spoke with Dixon talking about the next leg of PLI schemes, etc. What are the themes and opportunities there that are investable today, in your view?
Absolutely. So from so we just actually released a note yesterday where post this Q4 results, companies which have given a robust capex outlook for FY27, so obviously if they're giving a robust capex outlook, obviously they see demand. So what we observed was 2-3 themes were coming out very clearly from that. One is that this, recurring geopolitical issues, right from Russia-Ukraine war, then tariffs, and now this, and something else keeps coming up. I think this has resulted in a secular demand for one, defense, second, energy reliability, and ensuring reliable supply of critical minerals, raw materials, and all. So I think these areas, which is basically power, energy, defense, and chemicals, and those kind of metals, I think we have clearly seen in this quarter, the FY27, 28, and there and beyond, the capex outlook actually strengthening, getting better. And the other theme is basically the areas where capex is being, the capex has been hiked, is in areas which are autos, EVs, and some of these new age areas like data centers and semiconductors. We've heard of those projects. So I think so that chemicals and all. So I think these are the spaces where I think the growth is there clearly. Growth outlook is improving, and companies are willing to invest, going by their guidances so far during this quarter.
Thank you so much for speaking with us. We hope that enthusiasm continues. Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
India's unshakable news habit. NDTV.com is India's #1 English news website. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
And the award goes to
Tamanna Inamdar, Managing Editor, NDTV Profit.
Leading the newsroom, shaping the narrative.
Good evening. Hello and a very warm welcome. I'm Vikram Oza, and this is The Big Question. Our focus this evening on the AI boom that has now run into a hard and uncomfortable reality. Uber, we all know it as the ride-hailing service, right? It's one of Silicon Valley's biggest adopters of AI. And Uber has just sounded that alarm bell on AI adoption. So its entire 2026 AI tools budget, it's burned. It's burned through in just 4 months is what they're saying. And that's a word that is coming in from the president and CEO, Andrew McDonald. Very importantly, the company is admitting that higher AI usage is not yet translating into better products or even faster innovation or real value for end users. So that's a serious red flag, because across the world, companies are not just spending billions on artificial intelligence, they are restructuring around it. So jobs are being cut, roles are being redefined. In labor-intensive markets like India, stakes are getting far higher. So if AI does not deliver measurable returns, the question is, are we looking at a future where jobs are lost first and then valuation upgrades happen, the value creation happens, it comes much later, if at all. But going by the signs, it could take some time. We're already seeing early signs of this pushback happening. Hiring reversals at Klarna, policy rollbacks at Duolingo, cost-cutting as well at Microsoft. So the gap between the hype around AI and the actual outcomes, now that seems to be widening. And companies are starting to ask, are we investing for productivity or are we just participating in what is turning out is an expensive AI arms race? So is this an AI revolution or is it the beginning of an AI reckoning of sorts? And crucially, what does it mean for the future of work, especially in economies like ours? Which is why the big question that we're asking tonight, now that Uber is sounding this alarm bell when it comes to AI, and yes, they are big adopters of AI, then about the cost factor, it's asking and begging for this fundamental question, is it worth the kind of costs involved? And we've got a great panel to discuss this with. Let's just invite them over. Joining us on the show tonight is this sharp and diverse panel to unpack the story from both a cost and jobs lens. But before we go to them, let's set the context with tech industry veteran Mohandas Pai. He's joining us, former Infosys CFO, now chairman of RN Capital, one of India's most influential voices on technology and investment. Good to have you with us, Mr. Pai. You know, sir, how do you read these concerns that Uber is raising about the costs that AI takes, Mr. Pai? We're seeing billions getting poured into infrastructure around AI, around the chips, around the tools. Uber is saying it has become difficult to justify these rising costs. So are these concerns valid, the returns on investments?
You know, the big AI companies have sold their story that you can use Claude, you can use ChatGPT, plug it in, everything works for you. You don't need people, employment will fall. Especially the CEO of Claude has been going round and he has been fear-mongering to create valuation increases for him. Now, users and enterprises have bought into the story and are finding that when they use Claude, when they use many of these apps, they're finding that they're burning through and spending much more money than earlier. And that's because I think they changed the model from a normal subscription to paying on the basis of tokens used. And when people use a tool like this, they try to do too many things. They try to boil the ocean all from the beginning, and it costs money. Possibly this is reflecting the true cost because ChatGPT is still making losses, Claude is making losses, all of them are making losses. They had to make huge investment, they committed huge revenues. So when enterprises see that Claude and others are costing them much more money than they budgeted, or what they budgeted is being spent in a short period of time, I think they're pulling the plug. Microsoft is reportedly withdrawn from 100,000 licenses of the Claude and gone back to using his Copilot for his work, and which is a good thing because there has to be a balance. And I think now the voices are saying that don't sack people, don't remove people. Use Claude as a productive tool, wait for the productivity to come, and you need people, which I think is the right balance. The right balance has to be look at it as a productivity tool, increase productivity, do all the backlog of work, do it properly, and then don't overuse it and don't believe that AI can replace everybody and work by itself because it's not yet proven. But what is proven is definitely it reduces time of work, it reduces the effort that you put into it, it probably does it better and faster. The key is what is the set-off between productivity increase and cost.
Right.
And that's what enterprises are finding out.
So about that productivity point, Mr. Pai, I want to ask you how many companies today you think are genuinely becoming more productive with AI? Or like some suspect, are companies simply spending aggressively because they fear on missing out, or maybe doing it just to stay relevant in the market narrative around AI? Because everyone wants to say we're integrating AI in our processes.
Well, I think most of them are spending, most of them are not seeing the productivity increase that they want. But in some area they're seeing, for example, if you're an analyst, you've got a lot of analysts, you can write analyst report very easily. If you're doing R&D research, you can do an enormous amount of search and discovery very fast. You want to do a financial analysis, you can do that very fast, much better. In multiple areas where there's discovery, analysis, data ingestion, In all these areas, you're finding it out. In writing code, some are finding it out, especially if you have a startup because you got no legacy. And in many applications, you're finding it out. So it is not as universal as people think. It is very stark in multiple areas. It depends on the kind of work you do and the kind of effort that you have to put in, because human beings have to put in a lot of effort for discovery, to find out many things. So I think, is an important lesson for everybody, because the reality has to meet the hype.
It certainly does, but there is so much hype around AI. I want to ask if you think AI has improved efficiency. Many CEOs have claimed that it is going to improve efficiency, and that for most employees, that translates actually, especially in our part of the world, into loss of jobs, leaner workforces. So India's IT sector, as we know, it's been built on manpower-led services until, of course, AI came along and fundamentally disrupted that model. But now with these AI costs involved, the ROI, which is in doubt, how does that really change the future of work, Mr. Pai?
Well, it does change the future of work, because the one-sided narrative is now becoming more balanced. It takes time for AI to penetrate businesses and to demonstrate productivity. Look, many of the CEOs are playing to the markets. These LLMs and others created hype. Jobs will go, 60% will disappear in 1 year, like the CEO of Claude, right? CEO of Claude, whatever he did, right? Anthropic. Everywhere he goes, jobs will disappear, everybody will go, this and that. They keep on talking, people bought into it, analysts bought into it, they gave them very high valuations, and they beat up the company. So is analysts playing the games in the market that this disruption is coming, buy AI long and short all of the companies. Remember, they shorted the SaaS companies, and now the valuation is going up again. But these people are playing a valuation game in the market. And now now reality is hitting them to say, hey, hang on. Yes, it is a disruption. It's going to happen, but it's going to take time. And it'll be more in certain areas, less in certain areas. We got to go through. Now, I think all the analysts have to ask all the CEOs, show me the productivity. Show me the saving. Show me what you've done. Have you become more efficient? I'm sure end of this quarter, they're going to ask the questions. So a semblance of balance is going to come back. And reality is now coming back. And as for Indian IT companies, so many people in Bombay, analysts and pseudo-analysts and all kind of people, think they're the smartest creatures in the world and say they're gone, they're dead, etc., which is a joke. These IT service companies work with the biggest companies in the world. All right? They've been working with them for a long period of time. They're writing the system, maintaining the system, they deal with them on a day-to-day basis. All those companies are looking at AI. They're seeking the help of these companies. And two, this company top management are talking to Anthropic, talking to ChatGPT and others on a daily basis. They know the tools, they know what is happening, they're working with them. They trained all the people in the use of AI for productivity. They're doing a lot of projects using AI. The AI business is growing faster and things are coming out. They know what they're doing. It takes time for everything to be seen and to adjust, because it doesn't happen overnight, which many analysts believe that you buy this and put it in and everything changes immediately. It doesn't happen, because most of the large enterprises globally have multi-year legacy systems. I estimate over the last 10, 12, 15 years, all the global enterprise spent from $20 to $25 trillion of code. 20, $25 trillion of software. They're sitting on it, using it, they return it off every year. And all that is there. And, it's not going to change overnight. Many of them have got multiple databases where you can't use AI. AI requires one single database, right? And you don't know whether AI will hallucinate. It hallucinates. And we've seen horror stories of how databases were eclipsed. Removed. We've seen mistakes like in Starbucks, etc.
Yes.
So look, it is a disruption. It's a great tool. It's a real big change. And it's going to impact everybody. And all are going to start using it. The impact, what kind of impact, intensity of impact is to be seen. And we must not jump the gun immediately. You still need people. People are going to become more productive. The pace of growth of people in technology may come down, but you still need people. And you can't do without people, especially for global enterprises. For new age companies, some startup kid will come and say, I don't need anybody. I asked Lord, I wrote a code in 3 hours, 4 hours in the business. Okay, we'll see about it 1 year from them, 1 year from now, 6 months from now, how it works, right? Because we don't know. But definitely is a disruption. That is undeniable. Definitely is going to change. And the pace of change and how it's going to change is to be seen.
So it's a very important point that you're making, Mr. Pai. That disruption is happening. how much time it's going to take, and in the meantime, can the cost be justified, is going to be the ultimate question. But thanks for setting the context for our debate on the big question. Mr. Pai, I appreciate you joining us this evening. Always a pleasure getting in your perspective on all things related to the world of technology. But when we talk about AI and the kind of disruption that it's causing and the costs that are rising as well, let's put that in perspective with our panel. Karan Taurani is joining us, Executive Vice President at Elara Capital. Let's get his perspective on valuations. That's around the AI-driven businesses especially. He's there with us along with Dr. Sujata Seshadrinathan. She's co-founder and director for digital transformation at Basis Services, which of course is an AI-focused IT company. And Vijay Pal Singh is also with us, co-founder and CEO of Karta. And he's going to tell us about this shift, what it could mean for jobs as well when we're talking about and raising question marks on the costs involved in AI adoption. But Karan, Uber's saying that it has burnt its entire 2026 AI budget in a span of 4 months, just 4 months. So does that expose a serious kind of gap between the kind of hype around AI and the actual financial planning around it? Or do you think this is simply the cost of staying competitive in what is a fast-moving tech race?
Hi, Vikram. I think very clearly we are moving from a hype model, from an exciting time wherein we saw disruption because of AI and we thought AI could actually replace humans and just go one way. I think it's time to be more rational, more logical in nature. Every business model does require an ROI. I think what goes to see here is that close to 80-90 companies which are using AI right now or spending in terms of AI cost are not able to break even. So this includes everything. It includes your wastages, your token, the kind of people cost that you have. I think models have to be reworked right now. And there has to be a perfect blend in terms of the people cost and the cost you are using for AI. We need to move towards a model which gives us a proper ROI than just, kind of burning money into AI cost and the company not getting any efficiency in ROI. So I think that's the first thing. Second, I think, the people who are using AI need to use it more diligently, more efficiently. But just kind of using AI time and again for the same thing or to kind of do that same exercise, people can save the data, reuse the data, rework in terms of the way it is used. They will probably need the help of IT services companies to guide them in a better manner in terms of using AI efficiently and managing this entire thing of ROI and cost. So I think I clearly agree with our earlier panelists that AI is here to stay. The disruption is there. How much time it takes for transition to happen, whether it's 2 years or 5 years, that's anybody's guess. But yes, there has to be a perfect blend. And I think last but not the least, you will have certain winners here. So I think certain large organizations which operate at a very large scale will be able to spend incrementally more amount of money into AI and also drive higher efficiency.
But will that increase
so you will have
the gap?
certain winners and losers.
Will that increase the gap between the large companies that can afford it and the smaller companies that can't?
Yes, absolutely. So, if the efficacy with AI were to go up and if the efficiency were to improve and the people are trained to use AI effectively, you will see larger companies becoming larger because of their efficiency, because of their margin levers. Right. And smaller companies will struggle here. So I think that gap will definitely emerge.
Let me take that across to Dr. Seshadrinathan. Ma'am, Uber's own engineers are saying that the higher AI usage is not really translating into more useful product features. So when you consider the technology part of this, is the problem with the tools? Is it the implementation? Is it the way the companies are using AI? Where exactly is the problem where we are seeing this gap also increase, like Karan is pointing out, between the large companies that can afford to burn cash and those that can't?
Thank you for that question, Vikram, and thank you for inviting me to be here. Well, the gap may or may not increase. That depends to be seen how well we use it. So when we techies were being taught how to code, we were always told that coding or programming is only 80% of the job. The rest of the job is planning around it. We have to study the requirements. We have to see where exactly are we going to use technology intervention. What happens in technology adoption, in innovation adoption, is that you don't just blindly adopt any innovation. You have to adopt that innovation that is going to be useful to you in the quantum that it is going to be useful to you. So what is a business use case to which you're putting AI to? Does it justify it? I heard the words ROI, but I also heard you mention the word FOMO. I basically feel Uber got into a huge FOMO out there because what exactly was Uber trying to achieve? What was it seeking to improve when it was putting AI into use there? That should have been defined first. And in the investment world, we always have something called a stop loss. Can we define that for AI also? We need to be able to do that. AI models have yet not been defined there. See, Uber has got its own data sets. It was working on data that it had with itself. Everything that it needed was in its capacity. Still, it exceeded the budgets within 4 months is quite alarming. It obviously means they overused it. If Microsoft engineers can overuse Claude, well, that was news that just disappeared last 3 days that happened. Claude has been withdrawn for use for most Microsoft applications because they overused it. Their own people overused it. So, this is what is happening. We don't know where to use it. FOMO cannot cause us to get into areas and try to use it where it cannot be used.
So is there a lot of FOMO? That is an important question that you're raising. 11% of Uber's backend code, I understand, now fully written, fully deployed by AI agents. So are we moving too quickly towards automation without fully understanding the risks and limitations? Is that the point you're making, ma'am?
Exactly. See, we need to be able to define where are we going, what are we seeking to achieve. See, Uber, after all, is a ride-sharing app. What was AI to that extent doing there? AI can be used there where you have got its application. The use case must be defined, must be apt for AI. Uber may use it to an extent, but not to the extent that who's going to pay the price for it? Is the rider ready to pay the price? Is a person using Uber ready to pay the price for using AI in your Uber? Do they really want to do it? Does it justify it there? Well, if you are saying you're using AI for some very, very complicated surgeries, it can be understood that you're trying to use the knowledge that has been gathered from a lack of other doctors. But in Uber, what exactly was it trying to achieve? Does the cost match that? That is a question that Uber needs to answer by itself.
Indeed.
Until that is defined, you cannot justify. AI is very expensive to develop and to deploy. That is something where people started with saying AI is going to bring in operational cost efficiencies. That myth has been burst now.
Right.
AI is very expensive. Are you
Has
ready
it been
to
burst or is it just taking longer? Is it just taking longer?
It's a very long gestation period.
Too long, you think?
Sorry.
You're saying it's taking too long, the gestation period. But
The gestation period of AI is long.
Right.
You have to be able to have that tolerance, and if you're able to afford it, only then go for it.
Mr. Singh, what do you say? Because there's a price to pay that ma'am is bringing up as an important part of this, the jobs angle. That's where the price is partially getting paid. So if companies are spending heavily on AI, they're not seeing the returns. Does that increase the risk of hiring cuts, especially in the labor-intensive market that we have here in India?
Firstly, thanks, Vikram, for inviting me. Right. And I would like to little point out, we've been working with AI for quite some time.
Yes.
And the adoption has happened too fast, right? If you take any technology, right, it has taken its time to penetrate to all use cases and customers, right? And AI today has found success in a few use cases and not all use cases. So what happens is, if you're trying to apply AI to all use cases, you will not see a good return. But if for some use cases, if you're using it, you may be able to see some returns, right? That's how the AI is able to do today. The second problem with AI is probabilistic. It is not reliable today. So a lot of effort has to be put to make it reliable, and that takes some time, right? So if we do not invest in it for longer term, so I totally believe that it's going to take some more time for AI to be more reliable and to get the outcomes that we need. Right now, it is not there yet.
But what does this tell you about how prematurely companies may be cutting human jobs right now? We've already seen Klarna replace 700 workers, then reverse course due to quality issues as well. So are we doing the layoffs prematurely?
100%, right? You still have to make AI work reliably across use cases and for longer time to take any action like that, right? All those actions are slightly premature. You have to wait for it to be live with other customers and reliable, and only then can you take such measures. But I don't think AI is ready for that today, right? In my mind, that day is still 5 years or 10 years away.
Karan, Microsoft reportedly cutting external AI costs, moving in-house as well. So now, do you see cost rationalization going as the next big phase of this AI cycle? Is that what is likely to happen, this rationalization of costs?
Yes, rationalization of cost will happen. As I said, a lot of AI is not being used efficiently and diligently, leading to a lot of use of token wastages. And ROI is not measured, break-even is not happening. So whoever's using AI is actually making losses, right? Now, the thing here is that it's quite a mixed bag in terms of the valuations of this company. The question asked was that, will valuations of AI companies sustain?
Yes.
Right? So my bet here is that valuations of AI companies will sustain selectively. So there are private AI firms who have raised capital where the cost of equity or the cost of raising funds is higher. And if they are not able to generate any kind of ROI, you will see kind of lower capex from their end. But if you look at specifically the companies like Meta, Amazon, Alphabet, which have got very healthy free cash flow, which have got very healthy operating cash flow on their books, I think they will continue to invest aggressively on AI. And again, people or rather companies who are able to generate good amount of cash and invest aggressively will become the winners here. So again, within the AI firms as well, I think if larger companies have the capability to invest and if they're able to scale up on the AI business, they can even become bigger right now in the medium to long term. Another point to note here is on the penetration part. So I think very clearly, if you look at the .com, if you look at e-commerce, all these things took at least 5 to 7 years to penetrate, right? So AI from that perspective has taken a very short span of time and penetration has been quite sharp without realizing what the ROI could be, right? So I think putting that thing into perspective, any new technology that comes in, whether it is online shopping or .com, does take 5 to 7 years of transition. So I think it's a corrective phase right now or a correction phase. I don't even see a situation where, AI is a write-off, AI is a big bubble as such. You will see selective companies gaining on efficiency because of AI. You will see selective larger firms becoming winners on AI because of the kind of cash flow that they have. And adoption is real. Adoption is here to stay. It can just take some longer amount of time versus what one was expecting earlier.
Well, on those points, Dr. Sujatha, as far as this bubble theory is concerned, if AI takes 2 to 4 years to deliver real ROI, then in that case, if this is not going to be that bubble that we've seen in the .com phase, then what should companies realistically prioritize at the moment? Is it experimentation or a certain kind of discipline in approach?
So, see, let us be very clear about this. AI is one of the most transformative progresses of the IT line. AI is here to stay. So we are not going to have to write off AI, and the 2 to 4 years window that you're giving is very, very short. AI will take much longer than that to prove itself. So as I said, companies will have to define clearly where they want to adopt AI first, rather than generically. See, everybody wants AI. Customers are they're asking for AI. The job losses may not be completely because of AI. They could also be because the redundancy in the person himself or herself, because there are many people whose skills are not matching up nowadays to the employment requirements. That could be one of the reasons. So therefore, let us be very pointed about where we want AI in our business zone. Every business is different. They are going to have to go back to the drawing board and sit and design and decide where AI intervention will give them the best return. So smaller companies should approach it this way. That place where ROI is assured by the use of AI, go in there and go in very, very cautiously. Larger companies, of course, have far more flexibility out there. All that being said and done, in my experience, and as we have seen, AI is here to stay, but AI returns take much longer than 4 to 5 years. They are going to take that much. That is going to take that much time because the initial investment is that much. Also, the technology itself is progressing very, very rapidly. So we are going to have to give it some more additional time in order to consolidate and also be cautious in our adoption approach.
Well, the AI story, that is clearly no longer just about possibility anymore. From everything that you're saying, what we heard from Mr. Pai as well earlier, this is turning out to be about accountability. Companies are spending. They're spending unprecedented amounts on AI and its adoption, but the link between investment and the kind of impact, that is still weak at this stage. And it's going to take a couple of years, maybe not 2 to 4, but maybe longer, like Dr. Sujatha is pointing out. But in that gap lies the real risk of capital getting misallocated and, more importantly, of jobs getting disrupted before new opportunities get fully created. So this is not the end of the AI revolution. In fact, we're only at the start of it, but it may well be the end of any kind of blind spending. And I believe discipline and not hype, that is now going to decide who actually conquers the AI revolution by staying in the race, so to speak. But my thanks to Karan Taurani, Dr. Sujatha Seshadrinathan, Vijay Pal Singh. Thank you for joining us on this crucial conversation. And for you, the viewer, the takeaway is quite simple. Yes, there is going to be disruption, but of course, you need to stay the course. As far as the costs involved are concerned, one has to be mindful of that not hitting right out of the park. You need to keep that balanced approach when it comes to AI adoption, and it has to kind of solve real-world problems. That is going to be the key to AI adoption. We'll keep our focus on this, but for the moment, that's all we have on this edition of The Big Question. Thank you for joining us. Now we have breaking news on the channel. I understand that Iranian state media has released what it describes as the initial details of a proposed memorandum of understanding. This is an MOU. It is an MOU for a possible peace agreement between Iran and the United States. And it outlines a series of military and maritime de-escalation measures that are centered around the strategically vital Strait of Hormuz. So this draft MOU says that the US will lift that naval blockade of the Strait of Hormuz. And that draft also says that Iran will restore the traffic in the Hormuz Strait. The flow of traffic will be restored. Let's put this news in perspective. And for that, we have Professor Dr. Kivrat Jangid joining us. He's Professor and Director at Jindal Center for Israel Studies. Great to have you with us on this crucial development, Professor. In your understanding, the significance of what this could be, is it a peace deal in the making?
Well, thank you very much. The word MOU is quite common in the university life, and this is what universities sign with each other. Now the word MOU will mean something very significant in diplomatic terms when these two countries would really start a real, peace making with MOU. I think we have been aware of this MOU for the last 2 weeks. I think it's a very welcome development. No matter, few of the Iranian issues will not be now addressed, like the nuclear issue or the Lebanon issue. But I think Donald Trump knows how to back off. One of the good qualities of his, abrasive diplomacy is that he knows how to correct his own steps. So I think he is going to sign this, as we expected, around Hormuz. The other Iranian issues will be dealt maybe in different times with different means. But I think for the rest of the world, for countries like India, this is much needed relief if this MOU succeeds in another week.
So how quickly do you expect this entire sword of Damocles that has been on the Strait of Hormuz and the flow of traffic to get restored, even if this gets signed forthwith?
Well, the conservative estimate is that it would take something like 30 days to restore the kind of traffic Hormuz had. So if Iran will work, let's say, from the next week, we cannot assume normalcy before 30 days. Another important point is, which can really destabilize this MOU and the day it will be signed, is very aggressive fight that's happening between Israel and Hezbollah in Lebanon. I think Donald Trump already told Benjamin Netanyahu not to go more aggressive in Lebanon so that Iran can agree to this MOU. But I think there is a problem with Israeli concerns in this MOU, and Israel is in a way in a situation where it cannot oppose Donald Trump, but it is also not so comfortable to let this MOU pass without two things in it. A, that Iran commits not the use of the proxies against Israel, like Hezbollah, stop financing them. And second, that Iran will agree to some kind of a nuclear, abatement.
So as far as the nuclear issue is concerned, Professor, how crucial is that going to be? Can that be a point on which this MOU can derail still?
Well, we understand that it's no more crucial to Donald Trump. It is very crucial to Israel. But it's Donald Trump who would end the war. So I do think that Donald Trump is right now listening more to the concerns of the Arab allies, to the rest of the world, to the Europeans, to the Asian markets, and he is not taking the risk of destabilizing world economy and earning a very bad legacy for himself. I think he will have to find another way to reassure the Israeli concerns. So I don't think nuclear issue will spoil this deal, because Donald Trump really wants this deal.
I believe the draft is also talking about American forces withdrawing from Iran's vicinity, Professor. Perhaps you can correct me if I'm wrong, but doesn't that fundamentally shift the regional balance of power, particularly when it comes to Israel and the Gulf states?
That's a very interesting point you raised. I'm very happy you noted that down. So vicinity is without any name of it, right? And that's, I think, the middle path. They don't want to say Qatar, they don't want to say UAE, they don't want to say Bahrain, because these are the most closest, let's say, places to Iran where Americans have their military bases. I think it has been Iranian demand for a very long time that these are very, very and too close American installations, and America should not have such a built-up against Iran, because it in a way takes away Iranian sovereignty. I think by all means Iran is salvaging a deal which is more favorable to its wishes, and hence Donald Trump is agreeing without naming which base will be, let's say, thinned in the coming days. But yes, there would be some thinning, because that's also something that will restore some kind of a working relationship with the Gulf countries and Iran, because this is the pending demand of Iran against them, that Iran can attack them unless and until they don't stop these military bases to operate against Iran in their territories. So you're right. It's again one of those sensitive issues where Donald Trump seems to be compromising for the sake of opening the Hormuz.
So when you talk about compromise, Professor, who has compromised more in this case? With this
I think Donald
draft?
Trump has. And Donald Trump is a rational man at the end of the day. Iranian Ayatollahs are not rational to me. I think this also establishes some kind of a trust in international the cognitive rationality. I mean, just understand, Iranian revolutionary guards would let the whole world burn for the sake of Shia revolution. Forget about the Iranian people who are really at the mercy of this regime soon after this MOU will be signed. But Donald Trump knows that he cannot afford reckless American aggressive, egocentric foreign policy. If he needs to accept defeat, he will. And let's remind ourselves, he did back off from the Greenland fantasy. He did, back off from the fantasy of Gaza being a area of the Middle East. So the guy knows how to back off, and I think that's what makes him more successful than any other diplomats at the moment.
Very well put, Professor. And of course, more developments on this are going to be very closely tracked. We will decode this memorandum of understanding. Pleasure having you with us and your perspective on the breaking news that Iran state media has released now what they're describing as the initial details of this proposed memorandum of understanding for a possible peace agreement that is going to be signed between Iran and the US. And it outlines a series of military and maritime de-escalation measures, but they are primarily centered around the strategically vital Strait of Hormuz. How quickly we can expect traffic to be restored in the strait and for those energy lines to get restored is going to be closely watched by our country, and that's going to be top of the agenda. We'll keep tracking this news, but for the moment, I'm Vikram Oza from me and the entire team. Thank you for joining us on this breaking news.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
India's unshakable news habit. NDTV.com. is India's #1 English news website. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
And the award goes to
Tamanna Inamdar, Managing Editor, NDTV Profit.
Leading the newsroom, shaping the narrative, from stories to impact, a voice that matters. Tamanna Inamdar, among India's most influential, power, purpose and perspective recognized. NDTV Profit's editorial force gets industry-wide acclaim. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad.
Good evening, you're watching Market Express with me, Shreyanti Singh, and this is the show that gets you a roundup of everything that has happened in today's trading session, as well as news and updates from within the country and across the globe. But first things first, let's talk about markets. Then markets in fact lacked direction today, and the Nifty is the one that hovered near 23,900 even at close, as you can very clearly see on your screens as well. Just 7 points higher than that level that I mentioned, while the Sensex also slipped slightly as cautious sentiment kept bulls and bears in a tight tussle. And let's also talk about the sectoral picture. Then broad-based buying supported the market today. Most sectors closed in the green, with energy and metals really leading the charge, while financials and oil and gas were the top laggards on the other side. Let's also talk about metal stocks with a sharper focus, because you do have global aluminium prices that moved higher, lifting sentiment across the sector. So something like a Hindalco or even a Nalco really led the gains on the Nifty Metal Index, as you can very clearly see on your screens as well. About 4% plus uptick coming in for both of those counters that I mentioned, with all constituent stocks for this particular sector as well trading firmly in the positive territory during the session. Let's also move on and talk about Just Engineering, that posted a strong set of numbers in the fourth quarter, with profitability improving sharply despite a modest rise when it comes to revenue. And that particular counter was gaining in trade, with that 6% uptick coming in. Margin expansion, better execution and operating leverage really helped cushion global headwinds, while higher other income further boosted bottom line growth during the quarter. When you talk about the word coming in from the management as well, they've in fact told NDTV Profit that they do expect margin expansion to remain sustainable. Let's move on and talk about Gujarat Fluorochemicals, that reported a subdued set of numbers in the fourth quarter, as weakness in its bulk chemicals business and rising operating expenses weighed heavily on earnings. The company in fact also saw a decline coming in when you talk about the export revenue contribution during this particular quarter, adding further pressure to profitability. EBITDA margins contracted as costs remained elevated, while the profit after tax also dropped sharply. and by over 30%, reflecting the challenging operating environment for the chemicals player despite steady revenue trends. Let's move on and talk about landmark cars that delivered a strong set of fourth quarter numbers, and the street was unimpressed though with the company's after-sales segment clocked its strongest ever quarterly performance. Some bit of profit booking that you saw on the back of this strong set of numbers. You do have the profitability that was driven up higher as well, and the auto retailer also reported its highest ever annual EBITDA for FY26, supported by healthy demand across segments, benefit from GST rationalization, and even momentum really coming in from some of those new launches. Better cost discipline also further strengthened this particular quarter, with employee expenses and other operating costs remaining below internal targets, helping margins improve despite a competitive environment. Let's also move on and talk about Finolex Industries that reported an improved operating performance